Syngene lost its way by not doubling down on CDMO.
Yes.
And now we realize that CDMO is a very low-hanging fruit for Syngene.
Yes.
And given the new leadership change that we've made, we are now going to really focus on biomanufacturing and generally in CDMO.
Yes.
Which I think is our forte, is Biocon's forte. And the new CEO of Syngene,
yes,
who is an old-timer, knows this business very well. So I think, given the new focus, I think you will see a turnaround by the end of this.
Do you think the management needs to be bolstered? There have been some teething problems in the overall setup as well.
I don't think so. We made a lot of key management changes because I think we were, staffed with people who were trying to offer services,
yes,
which were not really required. And so we made many of those changes. I think I've always believed in offering differentiated services, and they had lost track of that. They started getting into commodity services, which according to me is not where we should be.
Right.
So you're going to see a lot of changes in the way Syngene is going to rebuild itself. And I'm very confident that by the end of this fiscal, you will not only start seeing green shoots, but you will see a strong turnaround next fiscal.
Next fiscal turnaround, strong turnaround of Syngene. That gives a lot of, clarity about that business revival plan. Kiran, looking at the overall portfolio and the strategic shift, looks like it's a new version of Biocon that is really emerging. Also, with you spelling out in the right corporate governance standards, going by that, the succession planning, which could really come 5 to 6 years from now. But the path has to be really set from today itself. So how is that onboarding of Claire really going to take place? Is she going to join the board soon?
Absolutely. I mean, that's the first step. So Claire has to join the Biocon board for sure.
When is that happening?
And that should happen quite soon. And once that happens, obviously I will take her under my wings. She will start really getting to understand the Biocon business directly.
Yes.
So far, it's always been through me and my discussions with her.
Yes.
But I think once she gets on board as a board member, she will start learning the business very rapidly, because I know she's someone who picks up things very rapidly.
Yes.
And at the right time, obviously, I will get her to step into my shoes. So I have no doubts about it. She's a very smart business leader. She has built Bicara from scratch.
Yes.
She has raised a lot of venture capital. She has taken the company public. Today, Bicara is almost a $2 billion market cap company. What more can I ask for?
And you have also mentored her throughout the journey as well. But, Kiran, we have had this chat a lot of times in terms of the vision of the country, in terms of innovation, R&D, and putting Indian companies on top of the chart when it comes to the global sphere. Now, a lot has been done by the government as well now, with the R&D given a thrust, where the business community like yourself have also lobbied very intensely with the government. How do you see India's thrust towards that innovation bit, and where are we lacking?
So first and foremost, I must congratulate the government, because they have put in place a number of mechanisms to boost and support innovation.
Right.
Whether it is, the ANRF, whether it is RDI, whether it is Bioshakti and PRIP. I think all these are going to really help companies and researchers in the academic environment to start focusing on innovation. But if you really want innovation to take off, I think there also needs to be patient capital, and you need an ecosystem that allows follow-on venture capital into biotech. this is not happening as yet.
Yes.
You know, government has done its bit, angel investors have done their bit.
Yes.
But the follow-on capital from venture capital is still lacking because venture funding in India is still very risk averse because
Yes.
of the lack of the ecosystem. There is no exit for them.
Yes.
Right? So the moment you provide them an exit onto capital markets, you will see a huge rush of investing in innovative companies.
So where is the mindset difference really coming in? Because there are loss-making, very long-haul patient capital really coming in the technology side.
That's the problem. There is this conundrum saying that when there is a herd mentality of investing in a certain sector, for example, AI, people don't care about whether it's loss making or profitable.
But biotechnology can also.
But in biotech, they want predictability, they want guarantees, and it's not fair. So I just think they are not thinking and imagining what biotech can offer. For instance, I believe that biology is going to play a very important role in AI. It's not going to be artificial intelligence.
You need to
it's
expand
going to
on
be
that.
Biological intelligence.
You need to expand on that from your scientific, lens on this particular
So
bit.
I think biology holds the key to many computational models to begin with, which I think is being explored very seriously. Okay? And therefore, large language models might offer one option, but I think computational biology will offer much more powerful models.
So that's the vision going forward? Yeah.
The second thing is we are talking about data centers, and today there's a big backlash of data centers because of the energy consumption.
Water, energy.
And rare minerals.
Yes.
DNA-based data centers could solve some of these problems.
When can that be a reality?
Well, it's blue skies thinking at the moment.
Yes.
But we should never shy away from blue skies thinking.
Right.
And these things can happen much faster than ever.
If you have to just say one thing to all the visionaries like yourself to take that tough road in terms of really manifesting something new, what will it be?
Don't think of the short term. Don't keep looking at near-term returns.
Yes.
I think you have to look at the long-term opportunity and the huge returns it can have.
Right.
That's the vision we need.
Right. Always inspiring. Thank you so much, Kiran.
Thank
you. It's great chatting with you. Thank you so much. We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the company.
Welcome, you're watching NDTV Profit. I'm Mahima Vachrajani, and today we thought of doing something interesting and exciting. We're going to talk about, of course, everybody knows that Odyssey has been released today, and there's a lot of interest coming in for this movie, and we'll try to understand as to what trends are looking like, what are theatres experiencing in terms of bookings, how has the booking flow been like, what is the pipeline going ahead in terms of where Bollywood stands. All of that we're going to talk about in this episode, and to talk about this and take this conversation ahead, we are now joined by Ashish Mishra, who's the head of commercialization at Cinepolis India, joining us now. Ashish, thank you so much for taking out the time. A pleasure speaking with you. I'll start with asking about Odyssey first, because that's where the interest is right now, right? How big is this? I mean, what is your expectations in terms of what box office could this hit, and what does this mean for theatres as a whole?
So of course, this is a big one, right? We're seeing that there's a lot of hype, there's a lot of chatter about this movie, and of course, this is directed by Nolan, right? So he, of course, comes in with his own, you can say, the things that he has done in the past, the movies that he has directed, and this seems to be just carrying forward that legacy of him. And it's already tracking as a big blockbuster. And these are the kind of movies which basically transcend from just being a movie to becoming something far more cultural, right? So what we are expecting is that this would be one of the biggest opening weekends for Hollywood in this year. We are expecting it to be opening at about close to about 20-22 crores.
Okay, all right. And do you think that this is the kind of movie that brings back people to theaters? Because nowadays we've been talking about this as to how a lot of platforms like Netflix, etc., have kind of taken away that vibe or taken away that joy of going to a theater and watching a movie. Do you think these are the movies? Because it is a movie that needs to be experienced in the most premium way possible, right?
Yeah, absolutely. It is that kind of a film, right? And one thing that I would like to point out that, of course, audiences have a lot of choices today, but there are certain movies which feel absolutely unmissable on the big screen. And today we have one of those kind of movies coming in and made for the big screen experiences. Nolan has been very vocal about how important the theatrical part of the business is and how important that it is to him that he delivers a film for the big screen, and has come out again with a fantastic film. We've already seen the initial reviews come out and all of them are glowing, and we do expect that this would be a movie which would be shattering all records here in India. One thing is that it's not just that Netflix's or the OTT platforms are impacting this cinema attendance. We have had many movies. I mean, Durandar is a recent example where we saw of late we have seen Obsession in Hollywood do really well. We have seen Welcome to the Jungle, and even movies have been doing well recently. So what I feel is that the common thread which joins everything is not really the language or the genre. It's basically the promise of that experience that you can't just recreate at home or in a small space. So the films and the communal experience that the films bring is just another example which we are seeing today in form of Odyssey.
Got it. The other aspect, Ashish, was to understand as to how important are these, Hollywood tentpoles, because we've seen how, good Hollywood movies have come in, swept in, and seen a lot of traction, right? So how important is it for the theatre business and for Cinepolis India as well?
So very important, right? Hollywood currently contributes about 10 to 15% of the overall box office for the country. For multiplexes, it's slightly higher than that percentage, but Hollywood is very critical, right? It has now, of late, what we have seen is that the reach of Hollywood has gone beyond just the metros and the tier 1 cities. And as India is becoming more and more contemporary, we do expect that this share will increase.
Okay. The other aspect, Ashish, is that, we've seen as to how things have fared so far. Just want to get a sense as to, if at all, if you can give us those numbers as to how you've done in FY26 and how you plan to grow in FY27. Anything in terms of where numbers go, top line, bottom line, margins, etc.
So we are a privately held company,
Correct.
so we're not... I'm not the right person to share any kind of public information, but we continue to grow. India is a key market for us, and we will continue to expand in India. It's something that I would like to say at this moment.
Got it. And what is competition looking like then? Do you think that, because it's ideally essentially a duopoly right now, right? So how is competition shaping up, and how is it that you are showing strength to us?
So I think like any industry, competition is healthy, right?
Absolutely.
It motivates each and every player to do their best, and we don't see it any differently in this industry. We want to grow and grow profitably, and that's what I would like to say at this moment.
All right, just one last question, Ashish, from my end, and that's with regards to the release calendar. What is it that you're looking forward to? How strong is it going forward for the calendar year 2026?
So the release calendar looks pretty promising when we look at the kind of movies which we have seen right throughout the year, not just one genre, multiple genres performing, and that's something that really sets the ball rolling for us in this year. And going forward, what I do expect is that August is looking good with a couple of biopics in form of Prahar and Ita. Apart from that, we also have Batwara and Avarapan 2. In August, we also have Toxic, which is going to be a big release. So that's something that is setting the pace from August and going till December, where we would have King coming in, and in between of that, we were going to have probably one of the biggest Indian films for the world, which is Ramayana, which we feel has the potential to be the biggest ever Bollywood film, which is releasing in this year.
All right. Yeah.
Talking from the Hollywood point of view, of course, we have Spider-Man come up, huge anticipation for this movie as well. And we have got a consistent lineup towards the end of the year. So we do expect that 2026 is on track to be a record year for the Indian box office.
For sure, and I look forward to speaking to you once all those box offices are hit and that your numbers fly. Thank you so much, Ashish, for taking out the time and speaking with us at NDTV Profit.
Thank you so much for having me. Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, especially right now. Earnings season is on and I've picked up a very interesting company. This is the second time coming in KYC this year. Earlier they had come in the month of January. But before that, try to guess this company. I'm sure you'll try to understand and guess it very fast. It's a Kolkata-based specialty chemical company. Also, the second hint I'd like to give you is a very strong Q1 numbers. Yes, it has recently come out with its numbers. And if you look at the stock, it's a multi-bagger, 13x in last 5 years. Also, interestingly, FIs and DIs have been increasing their stake in June quarter. Smart money flowing in. We have seen that momentum in the stock. And lastly, another key hint is a 1600 big capex has been announced. Try to guess the company which I'm talking about, and since last KYC till now, the company has jumped more than 50% of returns already. So you see, we have identified good companies at good prices. The company in focus is Himadri Specialty Chemical. This is what I'm going to talk about, especially curious on the Q1 numbers. That's the first question. We'll try to understand what led to this growth. Is it the specialty segment, which is, kind of pushing the numbers up? Why the outperformance? We saw that in third and fourth quarter also good outperformance was there. Will this continue margin, the revenue outlook, this is one of the most important things to see as the company is transforming into a specialty player. The capex expansion plans, a 1600 crore announcement coming in from the company. Carbon nano plant and specialty carbon plant, ये नई चीज़ है, ये क्या है, कंपनी का प्रोफाइल क्या बदलेगा? We'll try to answer all these questions. And West Bengal sentiment revival, will that benefit? This is a very important macro trend coming here. Lithium ion battery ties, what's the India story looking like and where is the company placed in this ecosystem? And also we'll understand the mitigation strategies, because yes, China is always a pressure for the Indian chemical companies. And to decode that, we'll have Anurag Chaudhary, the chairman and MD of Himadri Specialty Chemical, talking about this. But let's try to understand ये company करती क्या है. And a lot of times viewers write to me in KYC that the specialty chemical companies are very complex to understand, and trust me, I'll make it very easier for you. Of course, we know this, it's a Kolkata based specialty chemical company and it manufactures largely carbon materials. ये वही chemical होते हैं जो आपके टायर में लगते हैं, टायर के ancillary products में लगते हैं, but नए industries is also there. Lithium ion batteries, electrical mobility, paints, defense, they are going into a lot of new sectors going ahead. So there's one side core business, other side there's emerging business. Exports across 61 odd countries, they are a global player. So we'll try to understand what's the global outlook looking like. Also, operating their world's largest fully integrated carbon complex. So that itself is a very important point. But let's get in more details. Around 6 lakh million tons per annum of coal tar distillation capacity is there. Ye inka core business hai. This is the capacity of it. But we'll understand more on their capex plan also. And they are setting up India's first commercial CNT facility. Of course, we'll make you understand what this industry is and why this is the future. Also, they own almost 20% stake in international battery company, and these are some important positions they are taking as JVs and acquisitions for the future. Let's talk about the other names. A strategic partnership with Sicona battery technology as well. And one more important tie-up is there, and this is for advanced battery materials R&D. So the company is moving towards future, and the specialty chemical and future chemical is something which we'll talk more about. Highest ever quarterly revenue was driven by specialty products. Q1 numbers were bang on, very strong set of numbers coming in. Let's look at the other detail for the first quarter, and this is the higher share of specialty carbon black. VAP. VAP is nothing but value added product. PAT margin also stable due to other income. So a little bit of volatility that's getting offset by higher other income. The capex pipeline, everybody's interested. Let's go a bit slow on this. 1125 crore capex for cathode materials, and this is something in the lithium ion. It will be coming across. The second capex announcement after this comes is a 248 crore investment in the specialty chemical business. That's what we know. It's an extension of the capex coming in, but two other capex is there where the interest is there. A 70 crore investment in the carbon nanotube plant. This is the first one in India, and it's the CNT full form which you are wondering. This is that carbon nanotube plant. And the last one, 170 crore investment in the super specialty carbon black segment as well. तो लगभग 1600 करोड़ रुपए का जो है कैपेक्स नए अनाउंसमेंट किए गए हैं. लार्जली दिस विल बी फंडेड बाय देयर ओन मनी, द इंटरनल एक्रुअल्स. बट हु आर देयर क्लाइंट्स? वेरी लार्ज प्लेयर्स, सीएट, योकोहामा, नाल्को. Largely they have a lot of tire clients, and also we have Pidilite, Hindalco and Vedanta as well. So you can imagine they have international as well as domestic clients, and which are marquee players. But moving on, the story, the industry क्या कह रहा है? The global battery consumption, that is where my interest lying. That's expected to go up almost, you could say, 3x or even slightly more than that, and the company might be a key beneficiary for it. But enough of the industry. Let's talk about what may work for the company. There's a strong earnings and a guidance which they have given. Vision 2028 तक इन्होंने दिया है guidance. That is strong, so that may work for the company. DIs, FIs are increasing stake little bit, but yes, there is an institutional participation at play. The third reason you should focus on, and you can note it down, take a screenshot, share with your friends, is the government interventions that might aid the sector. Some anti-dumping duties or some important moves might be coming in. The new age segment entries, carbon nanotube, super specialty carbon, that's what the street is quite bullish on. But of course, this takes time as well. It's a strong capex pipeline, which I had mentioned you earlier. ये 5 reasons तो थे why things can be positive for the company, but let's look at the other side also, and the execution risk. They are doing so many things, that so much muscle is being used, is there any execution delay? And that happens. This is a normal course of business. The second reason, threat from China. No matter which chemical business you do in India, there's always a threat from China. How much will they mitigate? That's the key question to be asked. But to be honest, there's a lack of analyst coverage in this counter. So we need to understand more, and because of that, I get these companies in KYC for the entire stakeholders, the retail investors or even funds who watch our show. And the valuations, it seems like it's fairly placed right now because the stock has run up. पिछली बार जो KYC था वहां से लेके अभी तक 6 महीने में the stock is up more than 60%. So valuations little bit expensive. But let's look at the KYC ratings where we are going to judge the company, and I am sure our most viewed viewers, they generally know our ratings. But for the new income statement, balance sheet, cash flow, these are basic financial statements which we have to get them. Return ratios also we get for you, and over the period of 4 to 5 years we see how the shareholding pattern or the street cred has changed, so that you understand whether the stock has made money or not. Valuations, we'll try to get a 5-year average and a peak level and compare them with the current levels and the outlook. I'll share the FY28 strategic vision with you. We want a long-term vision, so we have taken the FY28 numbers, not FY27. Income statement is the first rating, and let's talk about that, how that growth is coming in. And largely, you should see the EBITDA and net profits levels of chemical players, because of course the revenue, there is a lumpiness involved, but the CAGR growth has been really strong. The company has been working towards its margin profile, and that's what we can see. Q1 numbers have been pretty strong. The street is rewarding it also. And if you get into the details about it, कि भाई margin में क्या चल रहा है, क्या धंधा है यहाँ पे, तो यहाँ पे देखेंगे now it's a proper 20% plus margin business. And imagine you could say the specialization versus the commodity, how the story has changed, and this is how the story has changed. So this is a really wonderful graph if you are tracking this sector as an analyst or even as an investor, and I'm going to give this income statement a strong thumbs up. Balance sheet, they are doing expansions. Of course, they have their own money. That's 735 crores you can see. That is why they are putting most of them via their internal accruals, but there might be chances of stretch. So let's take a neutral stance when it comes to the balance sheet right now. Also, apart from your income statement or the balance sheet, cash flow, that's also comes in, and if they are spending, there will be a little bit of stress on the investing cash flow activities and at times financing also if they take any kind of loan. But cash flow from operations, if you look at it, there is a dip, so a little bit of seasonality does come in this industry at times, and that is why we're seeing a little bit of operation, cash flow to operation numbers, the conversion, it's coming down slightly, but you need to take things with a pinch of salt, and that is why I have also given this rating a neutral one when it comes to the cash flow. But the story has changed. I mentioned you the margin profile, how things have changed, and that's actually impacting the ROC numbers also. Look at that in FY22, it was a single digit ROC coming in at just 6%, and then slowly each year there has been a good momentum coming, and it's holding up. 30% plus ROC numbers are there. So definitely the company has changed its return ROC profile. Going ahead, they are focusing on more value accretive strategies. So it's a strong thumbs up for the ROC as well. Let's talk about shareholding. And shareholding, we see from the last time which we had the company with us, it was a December shareholding pattern. After that also there is a good lap up happening from FIs. They have increased the stake by 2%, and largely DIs, it has been a slight profit booking coming in, but nevertheless we can see the participation is rising, and channel checks are suggesting that post June numbers also in July there is a good fall on buying from the institutions, khas karke DIs. So it's a strong thumbs up for shareholding segment. But street cred, let's see how much money the stock has made, and since last KYC the stock is up 50%. That I can tell you that because we had tracked the company. Last 1 year the stock is up 34%, and 2026 so far is up 41 odd percent. A good momentum coming in, but the biggest number to look at, stock 13 गुना बढ़ा है 5 साल में. That's the number I'm talking about. That's a multi-bagger return if you have invested and stayed with the company. That's the benefit of a long-term investor. In the long run, you make a lot of money. This is what has happened for the investors. So I'm going to give this a strong thumbs up as well. But valuations, because the stock has run up, the valuations are not that attractive right now. Current valuations is at 52 times its 12-month forward P ratio. But you compare that with the peak, it went as high as 111 times. and the average से अभी भी सस्ता है 5 साल का. It's around 56 times. But let's take a neutral aspect because the risk reward ratio may not be that attractive right now if you're thinking for any position. So it's a neutral rating from my side. Now I had earlier explained you about the FY28 vision, and let's get those statements in, and the entire focus is coming especially on the specialty carbon black entry. They're going into this segment, announcements are coming in, capex is there. Let's look at the second important point of the vision 28, Birla tire production scale. That is where the revival is happening, but the timeline is something which we'll try to understand or study in the future. Anthraquinone and carbazole, ये नए products हैं. अब stress ना लें, इसका मतलब क्या? But these are high margin niche products. That's all you should know, nothing much. Another outlook is the commercial plant for the cathode active material. That is where the lithium ion battery story is going on. We'll try to decode that with the Indian context, and the naphthalene balls, the Durofresh TM. That is where also the momentum is coming in. So the overall outlook is strong since the last time also we had judged the company. But let's revise the KYC ratings. Stock ko kitna KYC rating mila hai. Let's get in the key ratings where we judge the company. Income statement was pretty strong, margin profile we saw was good, cash flow and balance sheet need to take some time because there is a company at an inflection point. खर्चा भी होगा, अपने से भी होगा, शायद बाहर से भी आ सकता है. Valuations we could say is neutral right now, but a multi-bagger if you're holding 13 times in 5 years, and shareholding FIDI interest is there in the counter. And outlook I had mentioned you. So the total KYC rating finally comes at 6.5 out of 8. This is the number I'm talking about, and last time the number which we had given was 6 out of 8. So yes, it is increasing, it's on the higher side, but the question is, will it continue going up or will it stabilize? That's the key question. And to understand more, we'll be joined in by the management of the company, Anurag Chaudhary, the chairman and MD at Himadri Specialty, and he has been holding the fort for the last 40 years in the company, 4 decades almost industry experience coming in, and he joined the company at the age of just 18 and expanded into the specialty carbon black and the lithium ion battery setup. So from a traditional player to a modern player. We are joined in by Anurag Chaudhary, the chairman and MD at Himadri Specialty Chemical. Good afternoon, Anurag ji. It's always a pleasure to have you with us at NDTV Profit. Last time in KYC until now, stock is up more than 50% and Q3 numbers are strong, and this time Q1 also the number is quite strong. I want to understand what led to this growth, and of course, what are the key factors to watch in the first quarter?
So, sir, as I told you earlier also, we have transformed our journey from low value added to niche and high value added product company. The focus is on value addition. That is the game changer. So quarter on quarter, you see improvement in top line and bottom line, particularly bottom line. This is basically because we are moving into high value added products.
That's the entire story of Himadri, and that's what the placement is. But I want to understand a little bit more. We have given a big capex and expansion plan, almost 1600 crores of it. I just added all of them up. It's in the new segment, it's in the specialty segment. If you could just break it down, and also how will you be funding this capex plan? Will it be internal accrual?
Yes, it will be an internal accrual. So this quarter, we have announced a fresh capex plan of 368 crores. If you look at this capex plan, 70 crore is carbon nanotube. So carbon nanotube is a revolutionary material which for the first time any company is going to manufacture in India. We will be among the select few companies globally to do this. It's effort of relentless hard work of research and development team of Himadri which has made this happen. So while we are setting up the plant, it is to make it very simple for everyone to understand. Graphene rolled into seamless cylinder is carbon nanotube. It is 100 times stronger than steel with conductivity of copper. That's the game changer. Stronger than steel 100 times with conductivity of copper. So it finds wide applications from lithium ion batteries to semiconductors to capacitors to aerospace. Huge applications, and application is still being developed. So the product has huge potential for future. The next product which we have announced is super specialty carbon black. So we have been in the field of carbon black for more than 15 years now. We started with commodity, transformed into specialty. Now the new journey starts. This is super specialty, where the real value addition lies. And this is something on which we have been really focused and working for years. And now the time has come to come up with a commercial plant for this facility. So we will be converting our existing carbon black facility, 6,000 metric ton, to super specialty carbon black. It goes to very niche market. Then the third is anthraquinone and carbazole. We are already in the process of setting up plant for 2,600 metric ton at a capex of 120 crores. We have just doubled it because the product has very strong value addition and margins.
Fair enough. Anurag ji, I want to understand the revenue outlook, because now the revenue profile of the company has completely changed if you are looking at a 4-year view. So our stakeholders want to understand, from the management, what's the margin outlook looking like, or the revenue growth outlook, if you would give. It can be for 1 year, 2 year, it's up to you.
So if you look at the revenue, all these businesses are going to start in phased manner, starting from FY28 to FY29. So if you ask me for revenue for 5 to 6 years, each segment will give you very strong revenue numbers in terms of battery materials, will give you in 6 years a top line of 30,000 crore with 100 gigawatt of capacity coming from lithium iron phosphate, anode, silicon carbon. Then existing business will also give you very strong top line. Plus all these specialty chemicals will add up to that.
Sir, and one more question is on West Bengal. There is a massive revival of sentiment in the businesses. You are one of the key beneficiaries also. So how does it pan out for you as an industry? You have huge plants located in the supply chain systems also. So your view on the West Bengal revival sentiment?
So now, actually, to be very honest, it's a game changer for us and everyone in West Bengal. So looking forward, we tend to invest more in our state, where we have grown from scratch over the last 4 decades. Now is the time for West Bengal for next 10 to 20 years that completely belongs to our state, and a lot of investment which we are looking at different states. Now we will come back and look at our state as most important destination for our future investments.
That's a very big statement. Next 10 to 20 years belongs to West Bengal. I want to understand the India story also, and you're a very key player in the lithium ion battery segment. Where is your company placed, and right now where is India placed?
See, if you look at the lithium ion space, this is something in which we have to really work hard and take our country to different league altogether. If you go back and look at all the industrial evolution which has happened over the years, we have been somehow doing assembling only. But with the government support now this time, in terms of PLI, government is giving unparalleled support to manufacturing, which has never happened in the past. So now the time has come with India will become the manufacturing base of all future innovations. And same is coming with lithium ion. And Himadri is going to play a very critical role in this, because today, if you look at lithium ion cell, 65% cost of a cell is anode and cathode. And Himadri is going to set up facility for both. And unless you have raw material component manufactured in our country, we can never be self-reliant and Atmanirbhar. So to make our country really Atmanirbhar, this is the right step, what we are doing, setting up facility for component manufacturing for lithium ion batteries. Today, China is the leader in this with almost 90 to 100% market share. So there is a big opportunity for India, for everyone to look at this space.
Ragji, you just mentioned the China angle also, and that's a very key strategy against China, because they, as we know, the industry at times, the pressure comes in, the government is also helping in incentives, and now the manufacturing power should remain with India. So that's a very interesting take you have given on India, West Bengal, your company, industry, fair enough. But it's the season of FIFA World Cup also, and only 2 countries remain, Argentina and Spain. Just wanted to end our interview with that. Which team are you supporting?
I support Argentina, basically.
All right, so you're a Messi fan. That means it's wonderful to talk with you, Anurag ji, on the company and the industry as a whole, and best of luck for the future. And we'll be waiting for you for your third appearance in KYC in future as well. Thank you very much, sir. So that's the management of Himadri Specialty Chemical, coming out with a very strong Q1 numbers and focusing on the new wave of growth and a quite bullish commentary coming on West Bengal and India's growth story and mitigating the risk factors against China. Interesting story, right? For more of this, stay tuned to KYC and keep watching NDTV Profit.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision, and a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what.
US benchmarks closed lower on Friday amid a fresh sell-off in chip makers and renewed geopolitical tensions. The major stock benchmarks notched weekly losses, with the S&P 500 off 1.6%. Nasdaq underperformed with 2.9% downtake. Dow fell about 0.9% on the week. Crude extends gains, reaching its highest level in a month. Meanwhile, the Wall Street shrugs off global headwinds, with both Nifty and Sensex closing the week with gains as earnings gather pace. Sidetracking oil volatility, broader markets close mixed, with banking stocks gaining the most. Meanwhile, Reliance reports an inline set of numbers in the June quarter, and the stronger performance coming in from its oil to chemicals and oil and gas businesses drove earnings growth as well. Retail business, however, posted weakest sequential performance in 5 years. All eyes on banking sector today as behemoths like HDFC Bank, ICICI Bank, Axis Bank, Kotak Mahindra Bank as well to announce their financial results for the first quarter later in the day. And Skyroot Aerospace eyes to create history today with the launch of its first orbital rocket launch, Vikram 1 as well. And you do have PM Modi praising the maiden venture, describing it as a historic new frontier. Good morning, you're watching Profit 360 with me, Shreyanti Singh, and I'll get you updates from within the country as well as across the globe over the next half an hour or so. But before we do that, let's take a very quick look in terms of the handover coming in from the global markets and then the Indian markets. Now, global markets first, let's talk about US markets that ended lower on Friday, extending weekly losses as investors wait some of those fresh earnings and weakness coming in terms of some of those semiconductor stocks. So as you can see on your screens, it's actually the Nasdaq that really underperformed, and that's the case on the weekly basis as well. But when you talk about Friday's close as well, you're looking at about 1.5% odd downtick coming in for the Nasdaq, S&P 500 about 1% thereabout lower, and Dow Jones just about managing to stay a little bit resilient in comparison. When you talk about the entire US futures picture, it's actually 1.5% downtick coming in for the Nasdaq as well, and about 1.1% for S&P 500, a similar order that you've been seeing in terms of US futures as well. And when you talk about the entire weekly picture as well, you're looking at about a 1.6% downtick coming in for the S&P 500. It's the tech-heavy Nasdaq that really underperformed, sliding about 2.9 odd percent. And when you talk about Dow Jones, that was relatively resilient, but still ended the week down about 0.9%, reflecting some of that cautious sentiment on Wall Street also coming in. So that largely is the global handover, but that said and done, let's also talk about oil prices also that climbed more than 4% to their highest in more than a month on Friday as well. And that's after the US and Iran really stepped up some of those attacks across the Gulf, with shipping threatened by a potential Red Sea closure on top of the restricted traffic through the Strait of Hormuz. So you do have some gains coming in, at least as far as WTI is concerned. Brent, they're about flat, even at close as well, so unchanged. That's the Brent picture for you right now. But you know, when you talk about the entire picture coming in for WTI, about 4.5% higher as well. So largely that's the kind of move that you have coming in terms of oil prices. On a weekly basis, you did see some great performance coming in from Brent as well, and that was of course a key drag coming in on the market as well. Let's also move on and talk about the benchmark indices, though, that ended the week on a stronger note, on a resilient note as well. Nifty gaining over 1%, and that's despite geopolitical headwinds and sort of higher oil prices, with Brent hovering very close to $85 a barrel for much of the week as well. So you do have Sensex rising nearly 1,000 odd points as well, and robust earnings that really outweighed some of those weak global cues, like I mentioned sectorally. It was a sea of green coming in, so only metal and pharma really ending in the red as well. So that's the kind of handover that you have coming in. As far as the Indian markets are concerned, it's actually TCS and Tech Mahindra that were the top gainers for the week as well. It's also the broader market that really underperformed the benchmarks as well. And like I mentioned, Nifty IT in great shape with that over 4% thereabout gain coming in at close. On a weekly basis, Nifty Realty, the top losing sector on the flip side, with that 2% downtick really coming in. But that entire picture aside, let's also talk about the entire concept of the entire gamut of earnings that we had this week as well. So you do have Reliance Industries that posted an inline set of Q1 earnings, with its revenue rising, aided by the OTC and the Geo segment as well. In fact, Somit is joining in with the fine print when it comes to this one.
Well, Reliance Industries reported pretty much in line set of numbers in the first quarter of FY27. Revenue and EBITDA were up around 5 to 8% on a sequential basis. Margins came in at close to 15.4%, while net profit jumped by around 23% on a Q-on-Q basis. If you look at the segmental performance, the O2C segment EBITDA was up 17% and was the star performer, and this growth was largely led by expansion in the petrochemical spreads and also because of the benefits that SEZ refinery saw from higher GRMs. The retail EBITDA, that was a dampener, down around 9%, the biggest drop that we have seen in the last 20 quarters, owing to lower revenue and higher investments in the digital business. The oil and gas exploration EBITDA, that surprised positively. It was up 19% on a sequential basis, largely owing to stable production and lower costs that we witnessed in the first quarter of FY27. When it comes to the telecom business, Reliance Jio subscriber addition and ARPU numbers are pretty much in line with analyst estimates. On the bottom line front, higher other income aided, while higher finance cost also weighed on it. Now, finance cost was up nearly 27%, while other income jumped nearly 47% on a Q-on-Q basis. And the increase in finance cost could also be because of a weaker rupee that we had seen. Overall, if you look at the balance sheet, that net debt decreased slightly to close to 1.23 lakh crore rupees as against 1.25 lakh crore that we had seen in the previous quarter, while the leverage that remained largely stable, that is net debt to EBITDA, at around 0.6 times. Overall, it was pretty much in line with O2C and oil and gas exploration coming up ahead of the street estimates, while retail was a dampener and Jio was again bang on in line with what the street was anticipating.
All right, then thank you so much, Sound, for getting us all of those details. So there you go. That's the entire picture coming in as far as Reliance Industries is concerned, and that's the one that you should keep in mind. But let's also keep it going with earnings. Talk about RBL Bank, for instance, that reported the first quarter profit surging 27%, while its net interest income rose above 1,600 crore rupees as well. So you do have profitability that very much remains in focus as well. The street, of course, is paying particular attention coming into the credit quality trends or even the credit card slippages and the management's outlook on growth in the quarters ahead. The question is that, is the stress point now behind the bank, or is there still some distance to cover on the road to recovery as well? Let's also talk about RBL Bank just a bit as well, because, you know, when you talk about the entire gamut of your the earnings that you've reported, you do have a very interesting set that has been coming in from some of those banks. First, let's go across and listen into the commentary coming in from RBL Bank CEO R. Subramania Kumar as well.
The credit card is concerned, it is not the stress of the book, it is the transitional issues which we have been facing for the last 1.5 years. It's getting culmination point. That's why you see this spike as far as the slippages in the card is concerned. See, we will not be growing for the sake of growing. We will be doing very responsibly. Our execution is what we will be focusing on. And we have been growing in the range of around 20-25%, which will be the minimum basis on which we will be growing it. See, approximately 200 crores is what we have done it under this scheme.
All right, then there you go. So that's the commentary coming in from RBL Bank. Now, what really stands out in terms of the profit is that it was up about 27% led by that steady NII growth as well. And that's the same theme that you're seeing coming in for something like a federal bank as well. That's also outlined its growth priorities after reporting its first quarter performance as well. The management really highlighted some of that credit expansion, or for that matter, ECLGS 5.0 loan support and the margin outlook as well. And you do have the profit that's also risen about 37% led by sharp NII growth even for this bank. Let's go across and listen in to Federal Bank's CEO and MD talking about their results.
Primarily, this will be driven by customer needs, and depending on customers that require that kind of support, we will offer that. We don't have a target on that. We had earlier last year, towards the end of the last year, we had given a general guidance that our NIMs, we expect, at least for the next 3-4 quarters, we expect it to expand by 5 to 6 basis points a quarter.
All right, and that's the commentary coming in for something like a federal bank also, but let's also put the spotlight right where it belongs to be when it comes to the entire banking space today. Now, you do have HDFC Bank and ICICI Bank that are all set to come out with their numbers in the first quarter as well. Now, when you talk about this entire set, the NIM growth is broadly supposed to be stable as well, and that's something that we're penciling in. But let's also delve into a little bit more detail as well. Piyush is joining in with some more details in terms of what we should be penciling in.
That's right. Banking heavyweights, top private banks are reporting the results today. HDFC Bank and ICICI Bank, the largest and the second largest private bank, coming out with the earnings for Q1 FY27. Now, when it comes to HDFC Bank, according to Bloomberg estimates, the bank's profit after tax may rise 9% year on year. The NIM, however, is likely to decline by 6 basis points quarter on quarter. The net interest income is also likely to grow by around 9% year on year. year, whereas the business growth both on credit and deposit side is supposed to be healthy in double digits. The non-interest income though may go down because the bank had gained one-time gain in Q1 FY26 because of its stake sale in HDB Financial, which is its NBFC, which is not here this quarter. So non-interest income may go down a little bit. But the key monitorables when it comes to HDFC Bank is first is on the CEO reappointment, whether the bank's board decide to recommend Mr. Shashidhar Jagdishan for another 3-year term. Second is on the FCNRB deposit, and third is on NIM outlook that the bank gives, the guidance that it shares on the NIM. When it comes to ICICI Bank, according to Bloomberg estimates, the profit after tax is likely to grow by 5% year on year. The net interest margin though is likely to fall by sharply by around 14 basis points quarter on quarter. The net interest income is seen rising by 10% year on year, and the business growth for the bank is likely to remain strong. The fee income will also be stable. However, the treasury gains may be a bit muted. Analysts will watch out for any seasonality impact in its agri portfolio, which is usually typically there in Q1 for banks, and the commentary of course on net interest margin and the business outlook for the full year will be high.
No, absolutely, and thank you so much, Piyush, for joining us with all of those details. But that's not all, because today is, of course, a banking heavy day. Let's talk about Axis Bank and Kotak Mahindra Bank that are also set to report their first quarter earnings. In fact, Shivam is joining in with some of the key expectations on that front as well. Shivam.
Starting with the Axis Bank first, the margins are expected to decline due to seasonally higher slippages in quarter 1 of FY27, and credit growth is expected to be led by the corporate and MSME segment. However, on the retail disbursement side of loans, the growth pickup is expected in the retail segments. In terms of credit cost, it is expected to decline, and operational expenses of the bank is also expected to be steady, which might lead to a decline in cost to income ratio. In terms of financial metrics, the net interest income is expected to be increasing by 11.7%. NIMs are expected to be down somewhat at 3.5%, and operating profit might see a growth of around 1.4% on YOY basis. Apart from that, if we talk about the asset quality, that is expected to take a slight decline. And talking about the second bank, which is Kotak Mahindra Bank. So in Kotak Mahindra Bank, a credit cost might see an marginal uptick. In terms of stress in lower in MFI and credit card segments, we can see a lower stress in those, and in terms of margins, we can expect margin declines on a sequential basis. Talking about the loan growth, it will be led by retail and MSME segment, and also we might see a recovery in unsecured and corporate lending segments. In terms of OPEX, the OPEX growth is expected to be contained, and due to proper cost control, and in terms of cost to income ratio, it is expected to remain in a stable zone. In terms of financial metrics, the net interest income is expected to be increased by 10%, and margins to be declined by around 17 basis points to 4.5%. Operating profit to increase by around 8%, and PAT to increase by around 21% on YOY basis.
And thank you so much, Shivam, for joining us with that entire update also coming in. So there you go. That's what you're penciling in when it comes to something like an Axis Bank and Kotak Mahindra Bank. And it's a historic day for Indian space industry as well. Skyroot Aerospace, a Hyderabad-based space startup, is going to be creating history with the launch of its first orbital rocket. That's Vikram 1 from Sriharikota in Andhra Pradesh as well. And the launch is named Mission Agaman. It's seen as a major milestone for India's rapidly expanding private space sector. The rocket is going to be taking a special message printed on a commemorative card from the Prime Minister as well into space, which says Vande Mataram. So that's the update that you have coming in. Let's also go across to NDTV Science Editor Pallav Bagla as well, who's reporting from Ground Zero in Sriharikota for more details on this defining moment for India's space ambitions.
I am at the rocket port of India, Sriharikota, the Satish Dhawan Space Center, and behind me is the Vikram 1 rocket, fully loaded, fully armed, ready for launch. This rocket creating history for India, the first private space rocket to be launched from India. Skyroot Aerospace is India's first startup a $1.1 billion valuation company, a unicorn with 1,000 plus employees, and in the world, only a handful of countries do private space launches. Among them, SpaceX is a big player. Can Skyroot Aerospace create history and, as they want, have a launch of a rocket one per month and then go on to have a human space flight as they desire? But for this, first of all, the Vikram rocket has to go into the orbital phase. For the first time, silver, gold, and diamonds are being launched along with scientific payloads. So, India's private space ecosystem creating history.
Absolutely, a big push really coming in. So that's the ground report also coming in. But let's also get you some more insights when it comes to India's space moment as well. Dr. G. Madhavan Nair, former chairman ISRO, joins us on the show right now. Thank you so much, Dr. Nair, for joining us right now. And a very good morning to you. It is a very good and bright morning for us as well. Just wanted to try and understand how significant do you think this particular launch is for India's private space ecosystem, and how does it really reshape the country's space ambitions, according to you?
Well, it's a very great moment for all of us in the country. We know that in 1980, we had launched the first SLV-3. From there, ISRO has come a long way. Now we have the GSLV Mark III, carrying about 10 tons of payload door. In that, for a couple of years back, the space industry has been thrown open to the private entrepreneurs. And it is heartening to note that the Skyroot team has really come up with a unique solution. And now they have their rocket sitting on launch pad, ready to hurt a few satellites into orbit. Certainly, it's going to be a remarkable achievement as far as the private sector in space is concerned. And I wish that it's going to be a grand success and a good beginning for the private space industry in the country.
No, absolutely. And taking a leaf off of what you said, right, I just wanted to try and understand what you think about the public-private collaboration evolving after this particular milestone as well. It's, of course, a landmark moment, like you mentioned. But what role do you think startups can be playing alongside ISRO in future missions as well?
Well, certainly, the private sector has to play a very major role in the coming years. ISRO has an ambitious program for Gaganyaan, then afterwards the space station, and then later a man landing on the moon and returning safely back to Earth. So these programs demand a huge rockets to be developed, not the present tiny ones. Already we have 10 ton capability. This capability has to be increased at least about tenfold in the coming years. So that demands the investment in the semi-cryogenic engineering, boosters of large thrust, and also sophisticated controls and avionics systems. And the space station is very unique. Creating a habitat for long duration in space is going to be a big challenge. Again, the rocket to go to moon and come back is going to be much bigger than what we are imagining now. Perhaps this is where the industry has to take a major share. They have to make major investment in the sector, and the public-private partnership has to evolve. It is not that the private can do everything. The ISRO is a technology storehouse, and there's the expertise which is available is unparalleled in the world. So that technological expertise has to be exploited by industry, and industry's capability to manage repetitive work and production tasks has to be harmonized. And we have to see that a private, public-private partnership setup evolves in the country in the coming years.
No, absolutely. And, just hold on for a bit, Dr. Nair, as well, because, let's also hear out some commentary coming in from the man of the moment as well, Pawan Chandana, CEO, Skyroot Aerospace as well, in conversation with Pallav Bagla. And let's go across and listen into some bit of conversation coming in from them in terms of this landmark moment.
I'm at India's rocket port at Sriharikota. The rockets you see behind me are familiar to all of us. There is a novelty at Sriharikota. There is a private sector rocket ready to be launched. I have with me Mr. Pawan Kumar Chandana. Namaskar, sir.
Namaskar.
He is the CEO of Skyroot Aerospace and somebody who's masterminded this along with his colleague Naga Bharat. Is the rocket ready? Is it safe?
Yeah, so the rocket is ready and it's very safe. It's in good health, and we're targeting to take off as soon as possible. And we've done everything possible within our best wisdom. We're taking care of all the systems well, and we've been, in fact, the rocket parts have started coming several weeks ago, and a phenomenal team was here in the campaign, building the rocket, stacking the rocket on the launch pad, and then we're now ready to take off.
What does this liftoff of an orbital rocket mean for Skyroot, for India, and for the world?
In fact, it's a historical moment, because a private company starting from scratch by a young team. In fact, the average age of Skyroot is 28 years, and all of them coming together with a big mission and designing a rocket, manufacturing a rocket, assembling, testing, coming to the spaceport of India and stacking the rocket on the launch pad and ensuring that the rocket is in great health for launch itself is a phenomenal milestone. And the moment it takes off, I think it's going to be an unprecedented event in India's space, where a private company has attempted an orbital launch where very few companies in the world are operating.
Alright, and there you go. So that was a slice of the conversation coming in from the man of the moment as well. Let's also get back to some of those insights that we were talking about earlier as well with Dr. Nair. Dr. Nair, I just quickly wanted to try and understand, if you heard Pawan Chandana also talking about it, he says that the average age of, the company's employees is about 28 years. So what message does today's launch really, in your opinion, send to global investors and also the next generation of Indian space entrepreneurs?
That shows the strength of Indian technologies. In fact, when we built the first rockets from scratch in the 70s, the team was a similar age group. We were in our 20s and 30s. Now we got up the plan, we built the rocket. We built up this technology step by step, and we have really mastered it today. And today, if you ask for a solid propulsion, or making propulsion, or cryogenic propulsion, we are masters. Semi-cryogenic, we have made some designs, and perhaps ISRO is spearheading this actually. Probably, instead of duplicating and replicating, perhaps the industry is to join hands with ISRO to multiply the effort and bring the solutions to the future program in a cost-effective manner. In fact, there's no point in making offers with the man that we are working capacity today. We have to aim at targeting 10-ton, 100-ton capability for the future. For that, what is required to be carried out in the rockets, in the satellites, and associated technology has to do. For this, investment are required. And it is not feasible for the government alone to take up this load. So here, that's where I'm stressing the need for having a joint collaborative activity between ISRO and the private companies so that we can have a proper ecosystem. You take the private company Elon Musk, how he has succeeded. He has had a vision of setting up everything in one group, almost like the Skyroot, what they're doing. It's good. But the major funding and the program are coming from NASA. NASA investing huge amounts in the space related projects. They are surveying on their projects. At the same time, they are contributing to NASA's strength also and making big boosters, recoverable modules, the Dragon capsule, and so on. And again, they are talking about the spaceship, this can travel to Mars, and so on. So perhaps that's the kind of model we have to evolve to the country in the future.
No, absolutely. And I also just wanted to try and get in a word from you in terms of India's, just to play the devil's advocate for just a moment right now, in terms of can India, in terms of the private space companies, really compete globally in the small satellite launch market? What are some of the key challenges that you foresee that could need to be addressed here?
I'm not really seeing a great opportunity in the small satellite launches. It was actually a hype created when they had a lot of excess supply of the outdated missile and they want to market it, and they created that this can bring a big market share for launches and so on. But today, India has proved that 100 satellites can be launched in one shot in PSLV. Elon Musk has again shown that about 300 satellites could be carried in one launch. So that way, the small satellite launcher by itself cannot be a good workhorse or a good marketable product globally. So I see the future for large boosters, reliable boosters, reusable boosters, and perhaps multiple launchers. That will be the model which will evolve for the future.
No, absolutely. And, we'll take a very, very short break at that moment as well and come back with more insights on the other side of the very short break as well.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, we are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened? Why?
Welcome back. Thank you so much for staying tuned in. You're watching the special coverage on Mission Agman as well. And let's go across and take a look at everything that is happening on ground zero.
Stand by. We will communicate regular updates to you. So please stay tuned with us. Can you check if they can queue us and we'll talk trivia?
ट्रिविया वाला खोल दो एक बार
कहाँ है वो the last trivia
एक सेकंड टाइम लगेगा रुक जाओ
There you go. So that's the next frontier coming in terms of Skyrospace undertaking the maiden orbital launch of Vikram 1 as well. And you do have a major milestone right now in India's space sector. You did hear out some insights also coming in terms of the next steps as well and how this is going to be really reshaping the space for India's space entrepreneurs as well. It's, of course, a significant moment coming in. And when you talk about some of the commentary also coming in, you do have the PM also saying that this is a historic new frontier and that it is for India's space journey. He said that this 4-stage rocket is designed to provide rapid and on-demand launch services as well. So you're definitely looking at a very important moment really coming in terms of skies of space as well, and also just in general, in terms of Skyroot Aerospace and in terms of some of the other private players as well. It just opens up all of those frontiers. And when you hear out some of that commentary also coming in, you do have Pawan Chandana who's gone on record to say that when he started out his venture, he just was preparing for the worst as well and also planning out for that. Let's also go across and listen into that bit of commentary coming in. It's of course a very young team that he has that he also talks about.
I'm at India's rocket port at Sriharikota. The rockets you see behind me are familiar to all of us. There is a novelty at Sriharikota. There is a private sector rocket ready to be launched. I have with me Mr. Pawan Kumar Chandana. Namaskar, sir.
Namaskar.
He is the CEO of Skyroot Aerospace and somebody who's masterminded this along with his colleague Naga Bharat. Is the rocket ready? Is it safe?
Yeah, so the rocket is ready and it's very safe. It's in good health, and we're targeting to take off as soon as possible. And we've done everything possible within our best wisdom. We're taking care of all the systems well. And we've been, in fact, the rocket parts have started coming several weeks ago, and a phenomenal team was here in the campaign, building the rocket, stacking the rocket on the launch pad, and then we're now ready to take off.
What does this liftoff of an orbital rocket mean for Skyroot, for India, and for the world?
In fact, it's a historical moment, because a private company starting from scratch by a young team. In fact, the average age of Skyroot is 28 years, and all of them coming together with a big mission and designing a rocket, manufacturing a rocket, assembling, testing, coming to the spaceport of India and stacking the rocket on the launch pad and ensuring that the rocket is in great health for launch itself is a phenomenal milestone. And the moment it takes off, I think it's going to be an unprecedented event in India's space, where a private company has attempted an orbital launch where very few companies in the world are operating.
Alright, and that's a commentary coming in from Pawan Chandana as well, where he talks about how the rocket is in good health. And, that's before the launch, of course. Right now, the launch is paused. But let's also talk about the mission as well. Of course, it's called Mission Agman, which really means the arrival, or the flight really marks the first attempt by a privately designed, developed and built orbital class rocket to launch from Indian soil, signaling the beginning of a new chapter in India's commerce space ambitions. And let's also get you some more insights in just a bit as the launch restarts. But, before we do that, let's also talk about the 10 key things why Vikram 1 is a historic mission as well. The number one on that list, of course, is India's first private orbital launch attempt. And that's why it's so significant. That's also some of the commentary that you had coming in from Dr. Nair that also highlighted the same in terms of this being the first attempt from an Indian private company as well. So it's really a landmark moment coming in for that reason. But other than that also, it's also first in other ways as well, because India's first privately developed orbital rocket as well. So unlike Skyroot's Vikram S, which was a suborbital rocket, you do have Vikram 1 that has been designed to place satellites into the orbit. Of course, on your screens right now, you do have all of those visuals coming in, pouring in right now, in terms of all of the excited children who are waiting for this landmark moment really to restart as well, and quite excited. The excitement is quite high for a mission that marks a major shift in India's space ecosystem as well, with private companies now developing complete launch systems instead of only supporting government missions. And that's why it's also very significant. It's also the first orbital rocket with an all-carbon composite structure. So that's why it's very significant. Of course, right now on your screens, you do have those live visuals really coming in from ground zero in Sriharikota in Andhra Pradesh as well. But you do have India's first orbital launch vehicle that was built entirely using all carbon composite structure as well. And that's why it's also quite important in terms of the composition of the rocket as well. So it's lightweight, but also highly durable in terms of the material that's stronger than some of your conventional rocket grade steel as well. So that really helps improve the efficiency as well, while allowing the rocket to carry more payload as well. So that's something that you're watching out for, and it's India's longest monolithic carbon composite rocket stage as well. Everyone's really waiting with their eyes peeled on the screen, as you can see, and waving the arrival of this really landmark moment for India's private space sector as well. But you do have the rocket's first stage. That is also, like I mentioned, India's longest monolithic carbon composite rocket stage as well. It's built as a single integrated structure, really. So that's rather than a multiple assembled section, you do have one particular integrated structure as well. It showcases advances in the indigenous aerospace engineering and composite manufacturing. So for some of the science geeks as well, this is quite important in terms of it being the first fully 3D printed engine on an Indian orbital rocket as well. So it's powered by a 100% 3D printed liquid engine as well. It's the first fully 3D printed engine to be used on an Indian orbital launch vehicle. And it's quite complex in terms of the structure there. It's going to be helping position the payloads accurately after the main stages complete their task as well. And that's why it's also quite important to, talk about some of those advancements as well. A lot of firsts when it comes to this one. The planned pause is just coming in before the launch right now, and everyone's just looking at their watches and of course their screens. When you talk about some of those live visuals showing on your screens as well, it's the advanced low shock separation technology as well. When you talk about just the technical specifications as well coming in, so it uses an ultra low shock pneumatic separation system that really detaches the rocket stages and payload fairings. So this technology, what that basically does is it reduces some of those vibrations and mechanical shocks as well. So helps really protect the delicate satellites during deployment. So a lot of thought, a lot of planning has gone behind building Vikram 1 as well. And, this is why it's very important as well. And we'll keep getting you all of those details after that planned pause really goes away in terms of Vikram 1's launch as well. But let's also take a look at some more updates also coming in terms of the space debris removal technology demonstration as well. A lot of things that are key to watch out for when it comes to this launch. Some other important technological specifications, of course, you do have all of those children really waiting by very patiently for that planned pause before the launch, and it's a lot of complexities that really need to be working, lots of moving spokes to this wheel as well, and that's why it's important to have that planned hold as well before the launch of Vikram 1 as well. And of course, it's very important in terms of India's landmark space moment. Alright, then that's the entire update coming in as far as Vikram 1 launch is concerned. It's a planned pause before the launch, but let's also talk about Axis Bank. And we've mentioned before this that Axis Bank, as well as some of the other banks, are going to be coming out with their earnings. And right now you have Axis Bank numbers flashing on your screens, at the bottom of your screens as well. So you do have all of those numbers in terms of the net profit coming in, with about a 0.6% uptake also coming in. We'll get in Piyush as well in just a bit in terms of the commentary also coming in from the sort of earnings fine print that you have also. But when you talk about some of the other numbers as well, you do have the gross NPS that are at 1.28% versus 1.23% on a quarter-on-quarter basis as well. And that's something that you're looking at. The net profit figure, like I mentioned, about 0.6% higher at somewhere close to 7,100 crores as well. Let's talk about some of the other numbers as well. Net NPA, like I mentioned, about 0.4% is what you're looking at, 0.39% versus 0.37%. And let's also get in Piyush, like I mentioned, he's standing by with the earnings fine print when it comes to Axis Bank.
That's right. Axis Bank has come out with above expectation sort of a result for Q1. However, the fine print when we see both in terms of margin, the bank's net interest margin is actually down 16 basis point quarter on quarter to 3.46% in Q1. Further, if we see the Q1 profit was mostly driven by lower provisions. The bank's provisions have actually gone down quite sharply. It stood at around 2,223 crore versus 3,522 crore last quarter and versus 3,948 crore in Q1 FY26. So there's a sharp fall in provision. This quarter only 2,223 versus almost 4,000 crore of provisions which were made the last year. So NIM is down. PAT is basically led by the lower provision. The net interest income, like you rightly mentioned, has risen, is at around 14,646 crore, which is again below the estimate of 15,147 crore according to Bloomberg estimates. So a mixed sort of a result. NIM is down. However, the bank has been able to bump up its profit essentially because of lower provisions.
Absolutely, and thank you so much, Piyush, for getting us all of those insights as well. You know, it's Axis Bank that's quite important right now. And when you talk about some of the other commentary coming in from some of the other banks as well, when it comes to NIMs, right now, of course, a little bit sort of weakness that you're seeing coming in when it comes to Axis Bank. But when you come to HDFC Bank in terms of what we're penciling in, the update seems to be that the NIMs are going to be broadly remaining stable around that 3.5% mark. When you talk about ICICI Bank as well, the NIMs are going to be remaining stable, and that's also something that we're watching out for. But let's also talk about Axis Bank in greater detail in terms of some of the key themes that we have so far across banks as well. And you do have the loan growth that continues to remain healthy across banks as well. So that's really the update that you have coming in thus far for some of the banks that have reported their numbers, something like an RBL Bank or Federal Bank as well. You do have the deposit growth that's really improving, and the NIIs are largely resilient despite that rate environment as well. And that's why it's quite significant, to say the least. When you talk about RBL Bank, you do have the PAT really rising on the back of the sharp NII uptick also coming in. So that's really supporting some of the numbers as well. And when you talk about Axis Bank particularly, you do have the fine print really reflecting that the profit is the one that is up about 0.6%, and it's also above estimates, just as Piyush mentioned as well. In just a moment, we'll get you some more insights. But before we do that, let's also take a closer look at some of the provisions numbers as well. And like Piyush mentioned, it's somewhere close to 2,200 odd crore compared with that 3,948 crore figure on a year-on-year basis as well. And when you talk about the profit, that's really the one that is standing out right now. The NIIs are the ones that are a little bit, higher as well on both a quarterly as well as a yearly basis. But that said and done, the story, of course, this morning has to be Vikram 1 launch as well. And that's something that we're really keeping an eye on. Let's cut across some of those visuals as well from ground zero in Sriharikota in Andhra Pradesh.
To the payload. 1205.
So the payloads usually carry very sensitive electronics and instruments. So if you have a shock event come about, it may damage some of the sensitive instruments. So that's why we specifically made it a point to develop this pneumatic ultra low shock separation mechanism.
Like, for the knowledge of our viewers, I would also like to reiterate, most typical rockets, they use pyrocords, which use explosive charge to shear out the bolts and separate or jettison the entire stage, which could be catastrophic for some sensitive payloads. That is very costly and could be like, you might lose some data from the satellite and affect its workability.
Control here, go ahead.
Definitely.
Still external hold mode is coming.
Right.
Noted.
Now, even after the payload fairing has separated, the job isn't done yet, right? The climb is still going on. Stage 3 steps in and it generates quite a large amount of thrust to essentially power the vehicle into orbit. It keeps pushing it to near orbital velocities. And then comes something different, like we talked about earlier. We have the orbital adjustment module that kicks in. And this is the stage that I got to work on very closely. Like I mentioned earlier, it was a team of very ingenious, multidisciplinary members. We had teams from systems, propulsion, dynamics, quality, safety, reliability, CFD, design. I mean, you cannot count these fields on the fingers of your hand, and they all had to work in unison
Control to all ground stations.
build this stage.
All ground stations to
And
note.
then once
Revised
it starts
T0
working,
is
it
at
will precisely
12:05
place
30 hours
all
IST.
of these satellites into its intended orbit. And you might feel like all of this is happening. There's so many things happening, right? But it's just 16 minutes. That's all it takes.
It's so
minus 20
fast, but it seems really long. Like it took us like 1 hour from the entire bus stand to reach Sriharikota. But as Suyash you pointed out, so it's such a, we can say the entire rocket engineering, the complexity, looking at the complexity of it, it's like an entire opera house. You have to be like a soprano. You have to be so perfect. Every system, every individual, and every component should be in tune to engage all the systems at the right moment so that we can have even a small ignition. And now we have Avikram 1, which has close to 1,000 subsystems, and almost 2/3 of it will be utilized just even at liftoff. That's really fascinating.
So we've gotten confirmation, and you might see it on your screen shortly as well. The countdown has restarted. We are resetting to T minus 20 minutes, and we are at T minus 19 minutes for the information of all our viewers.
Other ground stations about the new T0. Please confirm on that.
Timing in external hold mode.
CNC copied, new PGM files shared.
Roger.
Coming to control timing in external hold mode.
Roger.
Skyroot LCC to all, S2 and S3 HMS is event number 97 completed.
Roger. Control to LCC, MCC and RSO. Please note timing confirmed, external hold mode.
Skyroot LCC to all station. New T0 is 12:05 30 seconds.
All right, we are hearing from the mission control that the new T0 time or the liftoff time for mission Agman is reset to 12:05 p.m. So stay tuned. We'll be with you, and we'll give you some more space trivia. We have a lot of those, and we'll also take you through the journey of the rocket as well. You know, many of the times, one of the questions that comes is why space? You know, it's so hard. Getting to space is hard enough. Getting to space on the first try is even
All
harder.
stations to note.
So if
Mission
it's so
Director
hard,
authorized the launch
why do
of
it at all?
Vikram 1 mission Agman.
What does it hold?
Alright then, there you go. So it's almost T minus 20 as well, and we'll keep getting you all of those important details. But speaking of important, let's also talk about Axis Bank as well. That's right in focus as well. You do have Aditya Shah, founder, Hercules Advisors, joining us right now on the show. Thank you so much, Mr. Shah, for taking time out and joining us. First things first, just wanted to try and understand what you think about the first cut here in terms of the numbers. What's your first reaction coming in?
That bit of disappointing numbers. Loan growth at about 18%, deposit growth also at about 18%. But the slippages have risen. Slippages credit cost has risen if you compare it sequentially. And it is in contrast to all other banks who have reported a decline in credit costs. So we need to understand from the management why the credit costs have increased quarter on quarter and year on year as well. Last year, this time, Axis had a special one-time provision that elevated the credit cost. So credit costs are not something that I'm happy with. Other than that, numbers seem to be okay.
Absolutely, and you know, when you talk about the net profit figure as well, just wanted to get your views on that as well. You've seen a little bit of an uptick coming in as far as the net profit is concerned. What do you think about that? Because that seems to be above the estimates as well.
As I said, so the credit cost, so if you look at other banks, as the provisions were down, it aided the net profit, and companies like Federal Bank, companies like RBL Bank have reported good set of profitability numbers. That's not so with Axis. That provision has taken out whatever profitability increase could have happened. From my perspective, not so happy on that.
No, absolutely, and that's quite important as well. Just also very quickly wanted to get your word in terms of the NII change as well, and the trend that we've been seeing in terms of some of the banks that have reported the numbers earlier as well, RBL Bank as well as Federal Bank. You do have that NII figure that's been quite important as well. Going forward, what are you expecting when it comes to some of the other banks as well, and how are you putting that into perspective with what Axis Bank has reported?
So if you look at NIM has declined for Axis from about 3.6% to about 3.4%. You need to understand from the management as to what are the levers, and that consequently had its effect on the NII. So from my perspective, if NIMs continue to deteriorate for banks, then NII will obviously get hit. From my perspective, the NIM hit and the asset quality, those are the two important questions that one needs to ask the management as the management comes to a discovery.
Absolutely, and going forward, just wanted to also try and get a sense of what you think about the other numbers that are going to be reported. It's actually the banking behemoths that are going to be in focus. So you do have HDFC Bank as well as ICICI Bank. What are your views in terms of what's being penciled in there as well?
Yeah, so HDFC Bank and ICICI Bank, I expect them to report stable set of numbers. NIM expansion for HDFC Bank will be something that will be watched out for. ICICI Bank, again, stable set of numbers, nothing to complain about as such is what I expect. Again, Yes Bank and Kotak Bank, for Kotak Bank, stable set of numbers with who is going to lead the bank going forward, given that Ashok Vaswani is supposed to end his tenure in December 2026. So those are the important things to watch out for in the results today.
No, absolutely, and I just also wanted to get a sense of put the spotlight right back on Axis Bank and try and understand what you think about the slippages in terms of the key drags there as well.
So a lot of Axis Bank's book is also on the corporate side of it. You need to understand if this slippage was coming from the corporate side of the book or the retail side of the book. Haven't been able to read the presentation, so we'll need to see that. But highly likely that corporate slippages would have increased for us.
No, absolutely. And just very quickly, just wanted to try and get a sense of what you think about the outlook coming in terms of the loan growth as well for some of the other banks that are going to be reporting their numbers as well. Anything else that you're watching out for on that front in terms of loan growth or any other parameters? We've talked about NIMs, of course, but other than that.
Yeah, so systemic loan growth is at about 15 to 20%. Axis generally does not go too fast, but they also reported 18 to 19% loan growth. So I expect most banks to report loan growth anywhere close to 15 to 20%. In the last fortnight, the systemic loan growth has gone up to 18%. So from my perspective, 15 to 20% is what I am looking for all banks.
No, absolutely. And we also have Piyush joining in the conversation right now.
Yeah, Aditya, I just wanted to understand, the provisions essentially seem to have driven the bank's Q1 net profit up. In terms of lower provisions that the bank has made, how do you see, especially because, banks are also supposed to meet with the ECL guidelines. Some banks are also making provision with regard to West Asia conflict. How do you see, lower provision, this strategy that the bank has chosen in Q1?
So if you look at Q1 of last year, there was a one-time provision that Axis Bank took. With respect to that, the provisions are lower. If you look at the credit cost, the management has published the credit cost. And if you look at the credit cost, that credit cost has increased to 0.92% from 0.75% last quarter and 1.02% the quarter before that. So from my perspective, slippages or credit cost has not abated for the bank. Of course, the ECL norms will start to kick in, so the bank has to make provisions for that as well. And I don't think most banks are not creating provisions for the West Asia crisis. I think portfolio has been stable for most of these banks. So from my perspective, not happy on the credit cost. We need to understand more as to why Axis Bank is creating lower provisions. The management has to give a guidance to this.
Aditya, we have also seen, a couple of lenders who had come out with the results yesterday reported a sharp, around 150 million odd mobilization under FCNRB deposits scheme that RBL Bank alone did. In terms of Axis, what is the amount do you think the bank would have garnered? Also the leverage that they could provide on this particular scheme? Is FCNRB, do you feel that because the presentation is, has just come out, so the bank's management is also yet to address the media. Later today they'll do that. But under the FCNRB scheme, do you think the bank must have mobilized around 200-300 million odd deposits?
Of course. So if you look at the deposit growth, it is particularly strong for Axis. The deposit growth is at about 18%, which is really very strong. I'm sure due to the FCNR scheme that RBI had come up, even Axis would have garnered good amount of deposits per se. So from my perspective, I think all banks would garner good amount of deposits, given the FCNR scheme that RBI had come in with.
Right. And just one last thing, the top banks are reporting the results today. There is some expectation on HDFC as well with regard to CEO reappointment. In case that does not come through this meeting, how will the markets look at it in terms of succession planning? Because Sashidar's, Mr. Jagdishan's term ends in October this year.
I think the CFO is in place. I think the bank will go back to RBI to seek a reappointment for Sachidhar Jagdishan. That is the base case scenario that the market is working with right now. Any other case will only lead to a further delay of any return on the stock per se. I don't think that the market is looking at anything other than the reappointment of Mr. Sachidhar Jagdishan.
No, absolutely, and thank you so much, Aditya, for taking out time and joining us right now, not just when it comes to Axis Bank, but also HDFC Bank and ICICI Bank that are also set to announce their Q1 numbers. It's T-8 right now. We're going to be looking at the Vikram 1 launch shortly, but it's time for a very quick break. More news and updates on the other side.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Gyro compassing.
T-minus 5 minutes.
And now we have confirmation that mission computer mode has been successfully changed to flight mode, and we are very jubilant and everybody is really happy that this stage has been successfully transitioned, and now we'll move towards the next check, that is HMSA disarming.
As we enter the final few minutes of countdown, another key safety milestone is underway. The head mount safe arm mechanism will be activated in a while, and till now it was ensured that the ignition chain has remained safely isolated.
That's right, Vaidehi. For the viewers who are very curious for this, the head mount safe arm mechanism, which we refer to as HMSA,
T-minus 4 minutes.
is a safety device which is mounted at the head of our solid rocket motors. And the whole job of this device is to safely isolate the pyrotechnics from the rest of the solid grain. And the reason why we do that is for safety, to prevent any accidental ignition from, let's say, lightning strikes. We do have a cloudy day today, and of course, we have lightning suppression systems. We have 4 lightning towers on the first launch pad. But there can also be some form of electrical runaway. There can also be static discharge. So to safeguard all these devices from electrical discharges, we have a mechanical separation between the pyro devices and the solid rocket motor.
Right, so yes. So till now, the ignition system, it was in a protective, non-firing state, but now it's going to move on to a state wherein once the mission computer gives the ignite command, it can initiate a pyrotechnic chain of events.
That's right. And we're at T-minus 3 minutes, and we have confirmation that the stage 1 head mount safe arm mechanism, or the stage 1 HMSA, has been successfully armed.
This basically means that our motor is now ready to ignite.
That's really great to hear. Along with this HMSA safety mechanism, we have one more layer of safety which we call the FTS or the CDS, Command District System, or the Flight Termination System. This is utilized when if the vehicle during its flight mode tries to or deviates from its intended flight trajectory, then the range safety officer can take a call to destruct the vehicle to safeguard the resources around it.
T-minus 2 minutes.
That's right. As is with the case with any launch vehicle, we always prioritize safety, and with that in mind, we have all of these systems set up on the vehicle.
All right, in less than 2 minutes from now, we expect the liftoff of the rocket that you see on your screen, the Vikram 1 rocket, Skyroute's date with destiny. It's a private Indian unicorn, the first in the space sector. In just about 2 minutes from now is when it's all going to happen. The countdown now stands at T-minus 1, 23, 1, 22, 120. Let's just stay put with these pictures and let's hope that this is a resounding success. A new part of our economy, the private space sector, led by young engineers and entrepreneurs.
T-minus 1 minute.
All stations.
And
stand by for the timer.
We will leave you with the views of Vikram 1 and join you shortly at liftoff.
Minus 55 seconds. Minus 50 seconds. Minus 45 seconds. Minus 40 seconds. Minus 35 seconds. Minus 30 seconds.
Real-time programs activated.
Minus 25 seconds. Minus 20 seconds.
Minus 20 seconds is the call out now.
Minus 15 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
And we have liftoff of Vikram 1, India's first private orbital launch vehicle. And we have great views coming from the tracking cameras. And isn't this quite something?
विक्रम 1 ने अपनी उड़ान भरी, प्रथम चरण का प्रज्वलन प्रारंभ हो चुका है। विक्रम 1 ने प्रक्षेपण पथ को लांघकर आकाश को भेदने का निर्णय ले लिया है, एक ब्रह्मास्त्र की तरह।
That's very true, Suyash and Akhil. I am awestruck at the sheer power that stage 1 is producing. With this, we have two of our major prime mission objectives completed, which was successful ignition and safe tower clearance.
That's right, and we're coming up on max Q now, which is the period of maximum aerodynamic pressure, where the vehicle faces its largest aerodynamic loads as it flies through this zone at Mach 1.5 at an altitude of nearly 9 kilometers.
विक्रम 1 ने सफलतापूर्वक मैक्स क्षेत्र पार कर लिया है और दल काफी उत्साहित है इस समय, और विक्रम 1 प्रथम चरण के आगे बढ़ रहा है और हमें श्रीहरिकोटा व पोर्ट ब्लेयर पृथ्वी स्टेशन से मजबूत दूर संकेत मिल रहे हैं, जो बहुत ही अच्छी खबर है।
That's right. We are at a downrange distance of 22 kilometers with an altitude of 34 kilometers. And on your screens right now are excellent onboard camera views from the vehicle.
And we can also see quite nominal chamber pressure values on the MCC screen.
The vehicle is currently at an altitude of 50 kilometers.
और यहाँ पे प्रथम चरण का प्रतिकरण हो चुका है और द्वितीय चरण का प्रज्वलन भी प्रारंभ हो चुका है।
This is quite a major achievement for the nation, with the vehicle successfully separating stage 1 and the ignition of stage 2 as well.
द्वितीय चरण अपना सफलतापूर्वक कार्य पूरा कर रहा है और प्रथम चरण का दहन अथवा प्रतिकरण समाप्त हो चुका है।
The vehicle is at an altitude of 89 kilometers, traveling at 2.6 kilometers per second. Of course, our target velocity for today is 7.6.
S2 performance normal.
We've just heard call out that the S2 performance or the stage 2 performance is nominal.
ये एक ऐतिहासिक क्षण है पूरे भारत और निजी अंतरिक्ष यात्रा का।
This vehicle has crossed 100 kilometers of altitude, which is the notion of edge of space, and we have reached space, guys.
Congratulations, Vikram 1 is in space.
हमारा यान अंतरिक्ष तक पहुंच चुका है।
And we've had callouts of separation of the payload fairing. We have successful payload fairing separation.
It's nearly at an altitude of 120 kilometers, and the protective fairing is no longer required and has been cleanly separated from the launch vehicle.
और यहाँ पे द्वितीय चरण का भी प्रतिकरण संपन्न हो चुका है और तृतीय चरण का प्रज्वलन भी प्रारंभ हो चुका है।
That's right, Akhil. We've had successful ignition of stage 3. The vehicle is currently at 157 kilometers above the Earth's surface. It is 355 kilometers downrange, traveling at nearly 4 kilometers per second. Now, the telemetry will switch over from Shar to Port Blair and further to Bogor.
अब यान अपनी अंतरिक्ष यात्रा पर निकल चुका है। तृतीय चरण का प्रज्वलन चालू है और उस की प्रतिक्रिया नियमित रूप से चल रही है।
And as you can see on your screens, we have near exact following of the intended trajectory. The two lines on your screen essentially indicate the current performance of the vehicle, and it closely matches with prediction. This is on your screen on board from stage 3. What you see is the rocket plume and the nozzle, and Earth, our home.
What a beautiful view. क्या सुंदर दृश्य है हमारी पृथ्वी का.
S3 performance normal.
और तृतीय चरण का परफॉर्मेंस अब नॉर्मल है, या कि सामान्य रूप से तृतीय चरण का संचालन प्रारंभ हो चुका है और चल रहा है.
That's right. We've had call out that the stage 3 performance is nominal.
Plus 5 minutes.
So stage 3 has a propellant loading of 2.5 tons, and we've had burnout of the stage 3 motor as planned at T plus 5 minutes. Yes, we've gotten confirmation that S3 has burnt out, and now we're entering a planned coast period, something that lasts for 140 seconds, in which it's called as combined
coasting is normal.
Right, so we've got call out that the combined coast is nominal. This will last for roughly 140 seconds, where stage 3 is not producing thrust, but it's connected to the vehicle and it's going to coast as a single body. All of this is done to manage the altitude of the vehicle and also control where the stage will re-enter the Earth's atmosphere before splashing in international waters in a safe and planned manner. And jubilant views from the Launch Control Center, where the teams are extremely elated and excited.
और मिशन नियंत्रण केंद्र और लॉन्च नियंत्रण केंद्र से आपको दृश्य दिखाई दे रहे हैं. सभी यान परीक्षण दल अत्यंत ही प्रसन्न है, और यहाँ पर जो प्रसंग है वो एक उत्सव का प्रसंग बन चुका है. एक ऐतिहासिक क्षण भारत के निजी अंतरिक्ष उड़ान का. विक्रम-1 यान अब अंतरिक्ष में स्थापित हो चुका है. तृतीय चरण अब अपने कोस्ट फेज पे है, और ये कोस्ट फेज अभी आप कैमरा व्यूज देख सकते हैं अपने प्रक्षेपण पर्दों या मोबाइल स्क्रीन्स पर, जहां पे आपको धरती का एक सुंदर दृश्य दिखाई दे रहा है.
As we can see on our screens right now, it's really amazing to see that Vikram-1 as of now is going along its intended trajectory exactly as expected. Our plots are really overlapping. The predicted velocities and the current flight velocities are exactly matching. And aren't you guys speechless right now?
I mean, yeah, मेरे पास शब्द ही नहीं है. मतलब ये मैं निशब्द हो चुका हूँ.
That's right. We are approaching another point wherein S3 will separate.
S3 is separated.
और तृतीय चरण का प्रतिकरण भी हो चुका है.
And you see wonderful views of S3 separating, and now we have combined coasting has ended, and stage 4 will now coast on its own for the next 130 seconds. So stage 4 will now fly on its own, essentially, and
the control thrusters on the OM will be continuously turning on and off to maintain the attitude of the stage, making sure that it is pointing the right way. This also ensures that the antennas can maintain connection with the ground station and the satellite can be pointing in the right direction.
That's right. So one unique thing that has been done during separation is we've essentially fired all 4 of our Raman Mini thrusters to sort of push stage 4 away from stage 3. And that just sort of guarantees that there is some minimum separation between the two.
अब आने वाला जो चरण है वो द्रव्य प्रणोदन पर आधारित होगा, जिसको हम कक्षा स्थापन या समायोजन खंड ऑर्बिट एडजस्टमेंट मॉड्यूल के नाम से भी जानते हैं, जिसमें द्रव्य प्रणोदन की अवस्थाओं से संचालन होगा, जो मोनोमिथाइल हाइड्रोजीन और डाइनाइट्रोजन टाइटाऑक्साइड पे आधारित है. उसके साथ यान के घूर्णी नियंत्रण के लिए, जिसे कंट्रोल थ्रस्टर्स कहते हैं हम लोग, उन रामन मिनी 50 न्यूटन, वो भी मोनोमिथाइल हाइड्रोजीन और डाइनाइट्रोजन टेट्रा ऑक्साइड पर ही आधारित है. उसके अंतर्गत हमारे पास छोटे कोल्ड गैस थ्रस्टर्स जो कि नाइट्रोजन गैस पर आधारित हैं, वो भी कक्षा समायोजन खंड पे स्थित हैं।
S4 ignited.
And we've heard call out that S4 or stage 4 has ignited successfully.
और चतुर्थ और अंतिम चरण का भी प्रज्वलन हो चुका है।
The liquid engine has come alive over 400 kilometers above the earth, beginning a burn that will last for more than 6 minutes. During this phase, the vehicle will steadily accelerate from about 6.68 kilometers per second to nearly 7.64 kilometers per second, delivering the precise velocity needed to achieve its planned 450 by 450 kilometers circular low Earth orbit at a 60-degree inclination.
और यहाँ पे आप देख सकते हैं कि प्रक्षेपण नियंत्रण केंद्र में उत्साह का एक प्रसंग आ चुका है और आपके ऑन बोर्ड प्रक्षेपक पर्दों पर हम देख सकते हैं कि पेलोड्स या जो उपग्रह हैं उनका एक चित्र, यहाँ पे सारे उपग्रह अपने स्थान पर स्थित हैं।
That's right, Akhil. We've also had seamless transition from the
S4 performance normal
to the Bogor station, and now we are receiving strong telemetry from the Bogor as well as the Yatharga stations in Indonesia and Australia respectively. The current altitude of the vehicle is 426 kilometers. Our target is near 450. We're traveling at 6.5 kilometers per second. And like we said earlier, OAM is essentially going to fire its Raman 2 engine for a cumulative burn time of nearly 6+ minutes. So this is the longest burning. It's the smallest in thrust, but it burns for the longest period of time. And it's all given to us by Raman 2, our main engine for this mission.
So Yash, it must be a really amazing feeling, right? I mean, you and your team worked on this engine to get it going, and it is finally taking us to space.
Yeah, it's a feeling that's really hard to describe. Me and my team, we worked on this engine to get it going, and it's finally taking us to space. This engine wasn't an easy design. Raman 2 generates 1500 newtons of thrust, and it employs 3 different types of cooling. As if one wasn't enough, we had to put in 3. So we have regenerative cooling, then we have radiative cooling, and we have film cooling. And all 3 of these need to work seamlessly in sync to deliver this phenomenal outcome. So I'm kind of glued to the screens right now. You might just see me peeking over to try to see what the chamber pressure, what the thrust, and what the temperatures are like. But I think I might have to hold for a bit and look at that data in a little while. So while I was talking about Raman 2 and how difficult it was to essentially design an engine this small, like I said, it's a relatively small engine, and the cooling design on this was exceptionally difficult to manage because the engine has to generate a lot of heat during combustion, and the temperatures can reach up to 2700 degrees. That's pretty hard for any metal or any material to sustain. In fact, many metals would just vaporize into thin air at those temperatures. So to make all of this work, we employ something known as regenerative cooling.
S4 performance normal.
Yeah, and we've gotten call out that the S4 performance is nominal. And so I was mentioning about the regenerative cooling, and the best way to understand this type of cooling is to imagine
14 minutes.
Multiple tubes joined side by side and then arranged into a circular fashion to form the thrust chamber. And these tubes, they need to be very, very thin to exchange heat effectively, which means that manufacturing is usually a challenge. And even after the temperatures would still be too high for normal metals to handle. And for this exact purpose, we employ something known as film cooling. And even though it sounds like a fancy name, it just involves injecting fine jets of fuel along the walls of the chamber to effectively add a barrier of colder gas between the combustion chamber and the metal walls. And essentially, one question I get asked very often is, if it's like that, then why is it called regenerative cooling, right? The whole thought process is the tiny tubes that we just talked about. Those tubes
performance normal plus 15 minutes.
और यहाँ पर हमको मिशन नियंत्रण केंद्र से संकेत मिल रहे हैं कि चतुर्थ चरण का भी परफॉर्मेंस सामान्य है और अभी यान 450 किलोमीटर की ऊंचाई तक पहुंच चुका है जो कि उसका निर्धारित कक्षा है और कोस्ट फेज प्रारंभ है।
जी हाँ, and it's traveling at 7.3 kilometers per second at an altitude of 453 kilometers right now. So coming back to the regenerative cooling point of things, the tiny tubes around the thrust chamber of the engine essentially have fuel pumped through it.
S4 thrust cut off.
And we've got confirmation that we have cutoff of the Raman 2 engine, which means
Solaris satellite separate.
And we have separation of the Solaris satellite and the Scope satellite. Both satellites have been deployed successfully. And we have reached space on our first attempt successfully.
इतिहास में पहली बार एक यान ने अपने प्रथम परीक्षण उड़ान में ही उपग्रहों को उनकी निर्धारित कक्षा में स्थापित कर दिया है।
And now comes something very, very interesting. You can see on your screen from on board the cosmic bloom and the micro art. And we have sun rising behind it. It is the dawn of a new space era.
ये एक नए अंतरिक्ष युग का प्रारंभ है। सूर्य के किरण ने ये प्रकाशित कर दिया है।
Skyroot has actually completely redefined orbital flights, I guess, forever.
Yes, अवश्य। ये कथन बिल्कुल
plus 17 minutes.
So right now we are awaiting the Cosmoser satellite to
Vikram
perform.
1 Agaman mission is a grand success.
And we've heard call out from the mission director that the Agaman mission is a grand success.
सफलतापूर्वक प्रथम मिशन आगमन ने इतिहास के पन्नों में अपना नाम अंकित कर दिया है।
Hello space, we have arrived. Thank you for joining us today.
Thank you for being with us on this historic journey today. With Raman 2 and Vikram 1 now safely in orbit, we are not just reaching space, we are opening space for all.
आज की इस ऐतिहासिक उड़ान में हमारे साथ जुड़ने के लिए आपका हार्दिक धन्यवाद। विक्रम 1 ने सफलतापूर्वक सारे उपग्रहों को कक्षा में पहुंचा दिया है और भारत के अंतरिक्ष सफर में एक नया उज्जवल अध्याय खोल दिया है। धन्यवाद। जय हिंद, जय भारत।
गुड आफ्टरनून। Good afternoon, everyone. We'll let them celebrate. Good afternoon. I am privileged to formally announce that the first ever Indian private sector launch has been successfully completed. Not only did Vikram 1 meet its mission objective, which was simply to clear the tower. It went all the way up to 453-kilometer orbit, successfully completed all the tasks, and something that is way beyond expectation for the very first orbital launch ever taken by India private company. There is not much more that I want to say on this occasion. I would like to invite Pawan and Bharat to talk about their journey and how they feel today, this momentous milestone that Indian private sector space initiatives have had. And I would like to thank everyone involved in this. Of course, the Skyroot team. The Skyroot team has worked day and night to make this day happen, ably supported by the team from SAR, from Extended ISRO, and from InSpace. So thank you, everyone, for giving India this proud moment. Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating, and they are keen to create value. And to me, that gives me the optimism of what India can become.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hi, my name is Siddharth Sharma. I'm your NDTV Automate, and this is a show that is your ultimate guide into the world of automobiles and mobility. We've got a power-packed show lined up for you guys this week, so without any further ado, let's get started.
On the show this week, NDTV Automate brings top insights and comments of industry experts from the Fuel and Future Summit. We drove the Sierra EV in variety of road conditions. A performance sedan that can be practical as well. Meet the Audi RS3. Uber ups the safety game and adds new features in the app.
Now, first up on the show, we've got for you a hot topic that is debated across the country. What will power India's mobility scene by the year 2030? On NDTV, with Automate, we did the first Fuel and Future Summit here in New Delhi. And up next, we get you the highlights from the show. Let's get straight into it. If we look ahead to 2030, what does a realistic Indian fuel mix look like across passenger vehicles, commercial vehicles, two-wheelers, and public transport? Mr. Deepak, if we begin with you.
Thank you for having me in your wonderful show. Congratulations for putting up such a nice event and very timely. By 2030, I feel, we are a huge country. We cannot look at one solution alone. We have to look at multiple clean pathway solutions. Obviously, today we are only seeing EVs being really taking a lead. But EV alone cannot provide a single solution for surface mobility. We have various other pathways. For example, Niti Aayog has come out with a report which also says that the flex fuel vehicle is one of the clean mobility solutions with net zero emissions. So I believe going forward, we will have to look into EVs along with FFEs, which is the flex fuel vehicle. We'll also have to have CBG, which is coming up in a huge way in the country. And a lot of OEMs have started launching their CBG vehicles. And in future, we'll also see the green hydrogen.
So, when we talk about the fuel mix, I'm looking at EVs being a part of it. We've obviously got the hybrids coming out and flex fuel vehicles, all of that. Hydrogen is the one that I feel will be not by 2030. I think that there's a lot more research that needs to go into hydrogen-driven or hydrogen-powered vehicles. But the mix will have to be with hybrids and EVs coming up, especially in the passenger vehicle segment.
One issue that everybody's been focused on, which is around readiness of electric vehicles. There's been a lot of focus around it. But how ready are we when it comes to electric vehicles? Are we giving enough attention?
I think right now we are pretty much in the phase 1, which is getting everyone ready for the EV and getting everyone accustomed to the fact that they need to start buying and start owning an EV vehicle. But of course, that's the first step. But I don't think we are that ready yet. With the infrastructure, with the grid, with the battery backup, the battery warranties, the resale values. There's a lot, I think, that one needs to think of. But that is definitely something that I feel that the government is working on, and it's a plan in action for the phase 2.
Sharvari, we hear a lot about electrifying everything, but realistically we can't transform every vehicle and every segment overnight. So if you had to pick one segment where India should put its maximum effort right now, which one would it be and why?
If we have 100 vehicles on the road, just 5 are commercial vehicles. If you talk about road transport emission, these 5% contribute to 34% of emission. So very clear, disproportionate emission benefit can be reaped. Let's now go towards the energy security aspect. If we are importing 100 liters, around 50 liters of the fossil fuel is consumed by these guzzlers. When I talk about its commercial vehicle. So in terms of energy security, it's very clear, again, disproportionate benefit. The third aspect, I'll bring to logistic efficiency. We have been hearing that the logistic cost of India is pretty high, even compared to some of the Southeast Asian nations.
Are OEMs building products around the market, and is the demand, or are they trying to just shape the demand through new technologies? But
the success of those technologies, whether they're sustainable or not, it all depends upon Indian consumers. And if I compare the Indian consumers as compared to other global markets, they're very value conscious. And please take it with a pinch of salt. It doesn't mean they're price conscious. The affordability has gone up. Premiumization has gone up. I mean, we have about 45% of consumers who are buying about more than 1 million cars. So, and you have people buying SUVs, people buying CVTs or automatics. Imagine about 5 years back, it used to be just 13% of automatics, and now we have about 30% of automatics. So, I would say technology, whatever OEMs introduce, it's finally how consumers respond. India can buy any technology. India can buy at the right price, and India can buy the right use case. And as OEMs, we have to be very responsible what we are trying to introduce for the Indian buyers.
If you look at the charging infrastructure in India, there are about 7.5 million cars, not cars, a number of automobiles, 7.5 million, and there are 30,000 chargers. That is a ratio of 1:250. That means for 250 vehicles, there is one charging point. If you look at China or other developed countries, the ratio is about 1:10 or 1:20. So we are probably far behind, but for the first time, Indian government in the last budget, they have announced 700 crores investment into charging infrastructure. So we have a long way to go from 250 to, let's say, 20. I would say let's not look at 20 right now, let's look at 40 or 50, and we'll be able to solve it.
Next up on the show, we get you the first drive review of one of the most awaited EVs in India currently. Yes, we're talking about the Tata Sierra .EV. Ankur Taneja drove that one, and up next tells you whether it's worth your money or not.
Buying a new car in 2026 is harder than choosing something on Netflix. Petrol, diesel, hybrid, CNG, EV, then comes the ethanol compatibility. And by the time someone is done researching, you don't feel like buying the car anymore. Now, the powertrain that seems like the safest bet in current scenario is an electric vehicle. And this is the latest entrant in that space, the new Tata Sierra EV. I've driven it through city, on highway, and did some off-roading as well. So whether this new Tata Sierra EV deserves a place on your shortlist or not, let's talk about that. Now let's start with what matters the most. How it drives, how's the performance and comfort, and how does it drive in different modes that are there in this Sierra EV.
The Sierra EV is easy to get comfortable with. Power delivery is smooth, and being an EV, you get instant acceleration the moment you press the throttle. If you need quicker responses for an overtake, there's a boost mode which unlocks the full performance. Ride quality is definitely one of its stronger points. Broken roads, expansion joints, and potholes are absorbed nicely, making it feel comfortable both in city and on highway. Push it harder through some corners though, and you will notice some body roll that's expected from an SUV of this size. Thankfully, the seats offer good support and keep you planted. Seat comfort is another positive. Like most recent Tata cars, the Sierra gets supportive seats that should keep occupants comfortable on longer journeys. One area that still needs improvement is braking. The stopping power is there, but the pedal feedback doesn't feel as reassuring as it could. I also drove the Sierra through Tata's off-road obstacles with the dual motor setup and terrain modes. It tackles steep climbs and uneven surfaces without much fuss. But if you are expecting to have a little fun on the loose gravel, there's one limitation: you can't completely switch off the traction control, so wheel spin isn't really an option.
This Charge Zone fast charger is a reminder of how much India's charging infrastructure has grown. But even with better infrastructure, anxiety about the range still remains. But how does the Sierra EV performs when it comes to range? Let's talk about that.
When I picked up the car, it showed 500 kilometers on a full charge. During my drive, I covered around 88 kilometers, driving almost entirely in city mode with region level 1. I crossed both city roads and highways. After that, the indicated range dropped to 373 kilometers. Based on this drive, expect somewhere around 370 to 380 kilometers in mixed real-world conditions. Of course, your driving style and traffic will influence that number.
Now I know the looks are subjective, but the Sierra EV is one of those cars that will probably split opinions.
Some people will like the design immediately, others may need few days before it starts making sense. It has clear upright stance and plenty of road presence without relying on unnecessary cuts and creases. Inside, the cabin feels noticeably premium. The dashboard is dominated by 3 screens stretching across the width, and unlike some cars where extra displays feel gimmicky, this layout actually feels well integrated. The feature list is extensive: ventilated power seats, panoramic sunroof, JBL audio system, augmented reality, heads-up display, air purifier, auto park assist, summon mode, and plenty of ADAS features mean there isn't much left to ask for. That said, I did notice a couple of things. During the drive, a TPMS warning popped up even though there wasn't any actual tire issue. Since these are early drive vehicles, it could simply be software. Also, the touch controls on the steering wheel are easy to press accidentally while making tighter turns. It's not a deal breaker, but it's something you'll notice.
So should the Sierra EV be on your shortlist or not? I would say yes, but not for the reasons you might think.
Forget the badge for a moment. If you judge it purely as an electric SUV, it gets a lot of important things right. The ride is comfortable, performance is effortless, the cabin feels modern, and the equipment list is among the strongest in the segment. It's not perfect. Better brake feel and improved steering controls would make the driving experience even better. But if your priority is spacious, comfortable, family EV with enough performance and technology for everyday use, the Sierra makes a convincing case for itself.
Next up, we get you an exclusive drive of the Audi RS3, which is a tuner's delight. This is the Audi RS3. It's an automated car in focus. It has 4 doors, almost 400 horsepower, and a 5-cylinder, very special engine. This is exactly the kind of car that India deserves, but will never get. Let me tell you why. There are fast cars, and then there are cars built around an engine so unique that enthusiasts talk about it long after the ignition is switched off. The heart of the Audi RS3 is a 2.5-litre turbocharged 5-cylinder engine producing 394 horsepower and 369 pound-feet of torque. 5-cylinder engines are rare today, and that's exactly what makes this one special. The firing order creates a soundtrack unlike anything else on sale. It's part rally car, part performance sedan, and entirely addictive. Power is sent through a 7-speed S-tronic dual-clutch transmission and Audi's Quattro all-wheel drive system. But this isn't just traditional all-wheel drive. The RS torque splitter actively distributes power across the rear axle, allowing the car to rotate far more naturally through corners while dramatically reducing understeer. In simple terms, it makes the car feel playful without losing the confidence Audi performance cars are known for. Well, the numbers are impressive. It can do a 0 to 100 km/h dash in 3.6 seconds, which is faster than the BMW M2. But it's not about how fast it goes. It's about how encouraging it is when you want to do that. Driving through Toronto, the RS3 immediately reveals its dual personality. At low speeds, it feels civilized, comfortable, refined, exactly where premium Audi sedans should be. But the moment you lean into the throttle, the character changes completely. The 5-cylinder engine comes alive, acceleration is immediate, and suddenly you're traveling at speeds that would make many exotic cars uncomfortable. Yet somehow the RS3 remains composed, stable, and predictable. This is where the RS3 starts making a lot of sense. Because unlike many performance cars, it doesn't ask you to compromise. You still get 4 doors, you still get rear seats, and still
get a usable boot space with 321 liters of luggage capacity. You're still getting Audi's premium interior experience as well. The virtual cockpit remains one of the best digital instrument clusters in the business. Material quality feels genuinely premium, and the overall cabin experience is exactly what buyers expect from a luxury performance sedan. This isn't a weekend toy pretending to be practical, it's a practical car pretending to be a supercar. And it does both remarkably well.
Now this is where it gets frustrating. The Audi RS3 is fast enough for the enthusiast, practical enough for a family, and compact enough for the Indian roads, but sadly, we may never see an M2 competition in India.
The Indian performance car market has matured significantly. Buyers today want cars that are exciting but still usable every day. The RS3 fits that brief perfectly. It offers practicality of a sedan, the confidence of all-wheel drive, and the luxury expected from Audi. The performance that can genuinely challenge cars from a much higher segment. There's also a massive global tuning community built around this platform. The engine has become famous for handling significant performance upgrades while maintaining reliability. For enthusiasts, that's a huge part of the appeal. And for everyday users, it remains one of the easiest performance cars to live with. The only real compromise, fuel efficiency. But then again, nobody buys an RS3 expecting to save fuel. Now, if there is one criticism, it's that the RS3 almost hides its performance too well. From certain angles, it can look like just another premium sedan. Some enthusiasts may want more visual drama.
The Audi RS3 reminds us that performance isn't about chasing big numbers. Sometimes it's about putting a smile to your face every time you start a car, and that feeling is becoming increasingly rare.
The Audi RS3 is proof that sometimes the most exciting performance cars aren't the biggest or the most expensive. And the RS3 does exactly that.
Next up, it's time for NDTV Automate News of the Week, the biggest headline makers, movers and shakers from the world of automobiles and mobility, all in one place.
India-UK FTA has now kicked in, bringing British luxury cars into sweeter spot for Indian buyers. Import duty on eligible UK-built models has dropped sharply, and brands like Rolls-Royce and Jaguar Land Rover are among the expected beneficiaries. Taking Brezza in a new direction, Maruti Suzuki has opened bookings for the 2026 version ahead of its launch this month. The updated compact SUV is expected to bring refreshed styling and new features while adding a turbo petrol engine. On the side of electric cars, Kia has revealed the Ceros EV. Highlights include 526 kilometers of claimed range, 2 battery pack options, 5 trim levels, and presence of features like ADAS. Rivals include Tata Nexon EV and Mahindra XUV 3XO Electric. In a bid to expand its model lineup, MG has unveiled its new ADAPT platform for future electric and hybrid models. The architecture will underpin multiple upcoming products as the brand expands new energy vehicle lineup.
Next up on NDTV Automate is our safety buddy. Anirban Mitra checks out a few new features that are added for additional safety on your Uber app.
India's largest ride-hailing service provider has taken definitive steps to improve safety. So every time you book a cab on Uber, you should rather be focusing on the business pitch, or maybe work on the project that you need to submit in the office before deadline, or dropping your kid for the next swimming class. Who doesn't want an extra layer of safety? Part of the Uber Surakshit program, there is a fourfold emphasis. Record My Ride. Both drivers and passengers can now record a video in case they feel unsafe during the trip. But the most important update has to be the quick call button to avail ambulance service in case of need. One click on the app and the driver or passenger can reach out for an ambulance.
privacy has been a core design principle of these products from the very beginning, meaning that the rider, nor the driver, nor Uber can access any of these recordings. And it's stored locally in an encrypted fashion within the Uber app. Nobody can view the recordings, nobody can look at the recordings, nobody can access it, edit it. And if it gets submitted to Uber as part of a safety report, so if someone says that I faced a safety issue on this trip, and if this recording is sent to us, it's only then can Uber even access that recording. So from a privacy standpoint, nobody has to worry about anything. If no report is made, this recording gets automatically deleted for 7 days.
Press a button, book a ride. That has been Uber's simple mantra across more than 125 cities in India. Amid this diverse need, two-wheelers play a major role, especially for the last mile connectivity. But it is about finding a balance and not falling for shortcuts. Uber ensures a multi-level checkpoint system for its rider partners. Helmet, headlights, brakes, and several key aspects are taken into account every time a rider commences the journey.
So we focus a lot on telematics and we identify behaviors that may be considered risky, like example overspeeding. So if we see that a vehicle has been overspeeding, we will send alerts to the drivers to change their behavior. So it's all about understanding those signals and being able to use those signals to intervene at the right moment and then promote safer behavior.
If you are traveling alone, feeling concerned, you can update your live location with your loved ones. In fact, it can be put as default through the Uber app. With over 40% market share in the ride-hailing services, Uber is actually showing commitment towards safety with equal importance. I think it's all about a matter of time that rivals also pick up features like this in the Department of Safety.
And with that, it's time for us to say goodbye on this edition of NDTV Automated. Don't forget to follow us on our social media handles. And for the latest news, views and reviews, don't forget to log into ndtv.com/auto. Always remember, wear a seatbelt, follow speed limits, respect the drivers around you. This is your Automate Siddharth Sharma signing off. I'll see you guys in the next one.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
afternoon. Thank you so much for tuning in. This is a show that's going to get you a roundup in terms of all the banking behemoths that have reported their numbers thus far. In fact, let's begin with just that. Take a very quick look at some of the numbers that have come out. When you talk about Kotak Mahindra Bank, in fact, you do have an inline set that you're looking at largely, and you do have the net profit that's jumped slightly on lower provisions. So you're looking at the NII that's up about 9.2% operating profit up about 10.2% as well. And let's also talk about the net profit that's also up about 26%. In fact, let's get Piyush in for all of those details. And it's looking like quite an inline set, first things first when you talk about it, Piyush.
Yeah, absolutely. In fact, Kotak has done quite well, in terms of margins. Also, it has improved 2 basis points quarter on quarter. If we see the asset quality remains stable, the GNPA is almost flat at around 1.18 in line with the expectation. Then the NII growth has also been steady. In this quarter, at least with Axis, we saw a little bit of pressure on margins, but Kotak seems to have done well here. In terms of provision, the bank's provision were lower on a year-on-year basis, but on a quarterly basis they were slightly higher than the last quarter. Operating profit has jumped because of this lower provision. The slippages of Kotak have risen slightly to 1,321 crore versus 1,118 crore in the last quarter. Overall, a decent set of numbers for Kotak. Double-digit growth in both loan and deposit, and margin has also improved.
No, absolutely. And, it is a very heavy day for you, Piyush. Let's also talk about Axis Bank that's reported its numbers as well. When you talk about the results largely looking to be in line with estimates, and you do have that modest growth coming in. When you talk about the net interest income, the margins have declined, asset quality has also declined. Let's talk about the fine print here when it comes to something like an Axis Bank as well.
Shreyanshi, Axis Bank, if we see in terms of Q1, they have reported a net profit. But if we look at the fine print there, it is essentially driven by the lower amount of provisions that the bank has made. The provisions have actually fell sharply from around 4,000 odd crore last fiscal to only 2,223 crore in the current quarter, Q1 FY27. So there's a sharp decline in the provisions. If we see on the other metrics as well, the gross slippage ratio for the bank has increased to 1.79% as against 1.63% the last quarter. The bank's net interest margin again, it has been stable at around 3.46, but it is lower if we see if we compare it Q on Q from 3.62% last quarter. So in terms of margins, the figure look bad. The profit essentially seems to have been driven by lower provision. NII growth is in the single digit. So a little bit of a mixed sort of a thumbs down sort of a quarter for Axis Bank in Q1.
No, absolutely. And let's also, speaking of single digit NII growth, let's actually talk about PNB as well, Piyush, because it's looking like quite an interesting set. About 4% uptick coming in on a quarter-on-quarter basis. When you talk about NIIs, it's the profit figure that's also in focus.
Interesting thing about PNB, Shreyanshi, is the fact that the bank's profit has risen, and very handsomely the bank has been able to cut down on its operating expenses. Operating expenses, in fact, have fell sharply for Punjab National Bank. It's down by 13% year-on-year to 7,613 crore. The NIM has risen for the bank by around 3 basis points quarter-on-quarter. The provision, of course, last year in this quarter, Q1 FY26, the bank had to set aside massive provisions for the wage revision that the government had brought in. So this year, the provisions have fell sharply from 5,000 odd crore last year to around 1,675 crore in the reporting quarter. So OPEX is down, provisions are down, the NII growth is stable. Overall, a strong set of results from PNB this quarter.
No, absolutely. And let's also get in Aditya Shah, founder, Hercules Advisors, joining us right now on the earnings fine print when it comes to all of these banks as well. Aditya, thank you so much for taking time out again for us. Just wanted to try and understand what you think about Kotak Bank in terms of the first cut here. How are you looking at the numbers?
So for Kotak Bank, just give me out. Yeah. So for Kotak Bank, the loan growth at about 16%, the deposit growth at about 12%. Looks really very good from a asset quality perspective. The credit cost at about 0.46%, a tad bit higher than last quarter. That also seems to be steady. So from my perspective, steady set of numbers from Kotak.
Yeah, Piyush on this side. I wanted to understand Kotak has been able to report 2 bips rise in its net interest margin, which is a very key indicator of bank's profitability. Do you feel the bank will be able to continue growing its NIM Q on Q in this fiscal?
I don't think there's a limit to which a bank can grow its NIM. If you look at the NIM from my perspective, in Q4 it was 4.67%. Right now it is 4.53% as much as I can see from the presentation. So from my perspective, Kotak historically has been able to maintain the NIM between 4.5% to 5%, and that's where it should be at this stage.
Yeah, we have seen the fresh slippages. If we compare it with the last quarter, fresh slippages in Q1 stood at 1,321 crore rupees as against 1,018 crore rupees, in the last quarter. Slightly up. How do you see this? In fact, we have seen this with Axis also, slightly higher slippages. How do you see this?
Yes, so credit cost both for Axis and Kotak have increased. This is contrary to what other banks have reported. So we need to understand what is the reason for this higher slippage that is coming in.
No, absolutely. And we also have Mayuresh Joshi, Head of Research at MarketSmith India, also joining us right now on the show. Thank you so much, Mr. Joshi, for taking time out and joining us. First things first, wanted to try and understand what you think about the first cut coming in as far as Kotak Bank is concerned, and we'll come to the other banks in a bit as well.
Very good. I think the update that had come through from Kotak was obviously a little bit on the softer side. In terms of the slippage number, it's a tad bit higher in terms of a sequential performance. And therefore, I think it will be interesting to know whether the number stabilizes at this level going forward. And the second element, obviously, in terms of the provisioning that might be required, which might also be a tad bit higher as we head into Q2. So I think a little bit soft, which was expected in terms of the updates that Kotak has probably delivered in this quarter.
Absolutely, Aditya. I just wanted to come back to you in terms of the profit figure that you have coming in, the net profit figure, about a 26% uptick coming in for Kotak Bank. Just wanted to quickly get your take in, and we'll talk about the other banks in a bit as well.
No, as I said, it's a steady set of numbers. Profitability is outcome of various things, including the slippages and the NPAs. So the only thing that we need to see in the result is the credit cost. How did the credit cost move? Where did they see a lot of NPAs? And also, secondly, as I said before, the management. What is the pointer on the management? Who is going to take over? If any guidance on that, that would be something that we need to see on the Kotak figure.
In fact, Aditya, yesterday our Federal Bank had also released their results, and we had asked Mr. Manian, because he was the ex-deputy MD at Kotak, whether he'd be interested. He declined to answer on that front, which is correct. For Kotak, we have seen even in cards portfolio, if we see Q on Q, there's a little bit of a degrowth there. Is the bank being cautious on that front? Overall, on the unsecured front, how do you see the bank, moving ahead?
So right now, per se in the market, I have not seen any bank reporting any meaningful rise in the slippages on the unsecured side of it. The unsecured side of the market is extremely risky, but we are coming from a phase where we had very high slippages on the MFI and the unsecured side of the market. I think those will start to pull off. Many banks will be cautious in lending to unsecured retail solely from the perspective of slippages. So I understand what Kotak is really doing, but we are coming out of a time where high slippages were there on the unsecured retail side as well as the MFI side. I don't think over the period of next 1 or 2 quarters we will see those high slippages. However, you never know, if the war continues to elongate, there could be a problem across the industry. So we need to monitor the situation.
Absolutely. And talking about higher slippages as well, let's also talk about Axis Bank. Mayuresh, wanted to take this question across to you. Just wanted to try and understand what's your first cut coming in when it comes to the numbers. Largely looking like an inline set, but higher slippages seem to be biting here as well.
No. So I think it seems to be in line with what the street probably expected the bank would deliver. But the slippages quotient is obviously coming a tad bit higher. And that is what we probably need to understand for the larger banking space as a whole. Is this somewhere where you're looking at a component of trending towards more riskier assets that have probably happened in the last few quarters, which are coming up on the balance sheet, and whether this is going to get capped off at some point of time in Q2. I think that concern is something that the management will probably have to allay, because if that probably persists in some manner, the credit costs of the bank go higher, the provisioning of the bank start going higher, and then that has immediate short-term impact, at least from a near-term perspective, in terms of return ratios and diluting the book value. So I think it becomes extremely pertinent to understand both these aspects, whether slippages are going to probably get capped off at this level, and whether lending to more riskier, unsecured assets might actually probably just taper off as we head into the next few years.
Hi, Mr. Joshi, Piyush here. I wanted to just follow up on this front on Axis asset quality. See, the slippages have risen, but the bank has, cut down on its provision quite sharply. It was around 4,000 odd crore Q1 FY26. It has come down to 2,200 odd crore. So quite a, sharp fall that we have seen in the provisioning, which has also aided them, reporting a healthy bottom line. How do you see this, especially when slippages are higher? You're supposed to make more provisions, and also ECL is also coming up. So how do you see this move by the bank?
So I think we just need to understand that line item a little bit in introspection. Is there some amount of adjustment that has been done of excess provisioning of the last year, and that has probably got adjusted in terms of the provision figure on an absolute basis? It is something to be watched out for. So I think might need to just delve into a little bit deeper whether this has been the case for that reported number.
Also, Axis has seen the margin compression happening in the reporting quarter. The margin is down 16 basis point quarter on quarter. What may have led to this decline, and do you see the bank's margin improving going ahead?
No, so I think this is again a classical case where the repricing between assets and liabilities comes with a lag. And therefore, I'm not so perturbed because I think the lag always persists for a quarter. And therefore, if there is no significant move in terms of the interest curve, which I don't think so that the RBI is going to probably do, and the yield is expected to be around the current level, my own sense is that this repricing imbalance which happens for a quarter might start stabilizing. So I think the margins should stabilize in a range. I don't see that to be of an hindrance, and this basically turning out why the margins might have been a little softer as we speak.
Absolutely, and Aditya, I wanted to take it across to you when it comes to Axis as well. Just wanted to try and understand what you think is important to watch out for in terms of the management commentary as well.
With respect to Axis Bank?
Yes.
So on Axis Bank, as I said, the quantum of slippages out, from where did those slippages come from? That is something that is the most important thing to watch out for. And also the ECL norms, how are they going to slowly and steadily provide for that? And top management stability. We've seen a CFO moving out from Axis. So top management stability is something that we will watch out for.
Aditya, on PNB, I wanted to get your views. The bank has been able to cut down on its OPEX very sharply. The results of PNB, the PAT has grown handsomely, essentially because of lower provision. In same quarter last year, there was this wage-related provision that they had to make. So the provisions have fell down quite sharply in this quarter, aiding their bottom line. But what interested me the most is the way the bank has been able to cut down on its OPEX, 13% down year on year at 7,613 crore. Is the bank becoming more efficient? Do you, what may have led to this sharp cut in OPEX? And do you in general also feel that PSU banks are improving their efficiencies and OPEX is likely to fall further for PNB and other set of peers, public sector banks?
So as scale comes in, obviously operating leverage is something that will kick in. So from my perspective, it is nothing but operating leverage. As profitability continues to keep improving, as loan growth comes in, slippages continue to be lower. Of course, the operating leverage will mean that the OPEX continues to move down. I think we are at the peak operating leverage for almost all PSU banks. From my perspective, as credit costs will continue to rise from here on, the operating leverage as well as the profitability will start to come down a little bit. So from my perspective, over the next 2 to 4 quarters, they will be the peak profitability quarters for most of the PSU banks.
Aditya, while these efficiencies come, for PSU banks, PNB, if we see the headline net interest margin figure continues being, it has improved 3 bips, but it's still at 2.50%, which is very low in comparison with similar sized private peers. Do you feel, the bank will be more savvy with regard to its, ALM, the pricing that they do? Some banks are on FCNRB front, some banks are offering handsome deposit rate, and the leverage structure is also very high. I just want to understand, where do you see PNB's NIM going by the end of the fiscal?
So from my perspective, I don't think PSU banks like PNB ever have a deposit problem. They have a very strong franchise. So from my perspective, deposits should never be a problem. NIM, I think for PNB, though I don't track, should be in the similar range. I don't think any positive or surprise on the NIM should be there.
No, absolutely. Mayuresh, also wanted to take it across to you when it comes to PNB as well. You do have that OPEX figure that's declined some 13% as well, and the NII is in single digits just about. Just wanted to try and understand what you're thinking of the numbers. Looks like an inline set first cut.
It looks in line, but I think the bias would be largely with more qualitative banks, in my opinion, at least at markets with India. Because our belief is that the consistency that you probably need in terms of how the asset quality movement is probably expected to play out. And therefore, I think the expectations in terms of stronger balance sheet growth probably still persist with a few of the mid-private sector banks as we see it, and maybe the larger PSU universe as this is.
No, absolutely. And what else are you watching out for in terms of the commentary as well, all in all, when it comes to all of the banks that have reported their numbers thus far? Anything that you haven't mentioned of what you?
Well, I think generally, it should be pretty steady state in terms of how they are looking at advances growth, the overall deposit accretion as well. Asset quality is largely expected to be stable. Provisioning seems to be reasonably placed as well. Slippages might seem to be of a concern, and therefore two things to be watched out for: whether slippages are capping off, as I said. Are they looking at more riskier elements in the balance sheet? And therefore, I think these two aspects will play a critical role in terms of defining the return ratios. NIMs, as I said, more or less the repricing lag is out, but largely expected to stay in a range. I think if they address the issues in terms of tackling slippages or slippages getting backed off and riskier elements of the market being backed off as well, though it might restrict to a certain extent balance sheet and aggressive balance sheet growth. I think this is what the street would ideally like to watch out for. Valuations, risk reward broadly remain in favor of banks as we speak.
Aditya, just my final query to you. There is this expectation that FCNRB deposit scheme is likely to pick up in a meaningful manner, bringing substantial amount of inflows. We have read, reports mentioning how after the initial bump, the inflows have sort of, gradually slowed down. Do you feel banks will, report, especially the larger ones, HDFC, ICICI today, they will report meaningful inflows, or you feel this scheme will take some time to pick off, because this is a very, beneficial for both the bank as well, because RBI is bearing the hedging cost, and the client as well, because they are getting, of course, the higher returns, and leverage makes it even better.
So deposit growth is the raw material for a bank. System-wide, we've seen banks really struggle for deposit growth. We've seen Union Bank report about 3% deposit growth. So banks are really fighting out for deposits. We've seen HDFC Bank already report the deposit number in the quarterly update at about 10%. FCNR is just one bit of the story. It all depends on where the retail money really moves. If you see the stock market not giving returns for longer period of time, obviously a lot of money will also start to chase deposits again. So from my perspective, FCNR is one part of the story. The other part of the story obviously is how does the retail money really move, and from there on we have to see. So from my perspective, deposit growth in the system will continue to remain a challenge. Banks growing their deposits above 10% have done pretty well We've seen only few banks grow their deposits above 10%. Axis was really strong at about 18 to 19%. So from my perspective, 10 to 15% of deposit growth should be fine for it.
Absolutely, and thank you so much, Aditya, as well as Mayuresh, for taking time out and joining us this afternoon. When it comes to the first cut coming in for some of those numbers as well, and Piyush, it's looking like, just as Aditya, really rightly summed it up, FCNRB is just one part of it. There's actually a lot of moving spokes to the wheel, a lot of commentary that we're watching out for. It's definitely the highest slippages, and that's one line item that Mayuresh, mentioned that we should be watching out for in terms of how the banks also justify that as well. Lots to watch out for in terms of the commentary.
Absolutely, like you mentioned, slippages, where are these coming from? Like Aditya said, Mayuresh also referred to it. Which segments of loans are being stressed? Whether the unsecured cycle, that adverse cycle we saw, whether it is coming back in the vogue. Separately, also, we need to be careful about the margins of banks because, Axis has reported a decline. Kotak has been able to report a slight uptick, 2 bips sort of uptick Q on Q. The margin trajectory is very important to watch out, and of course the bank's broader commentary with regard to the West Asia conflict, its subsequent impact on the bank's loan book, how many loans it has given under ECLGS 5.0 banks have given, because ECLGS is meant for MSMEs who are affected by the West Asia conflict, and the FCNRB deposit inflows like we just discussed. These are some of the key metrics that we need to watch out for. What is the guidance on both credit and deposit growth for the full year?
No, absolutely. And Piyush, the good news is that it's an inline set of numbers largely that you're looking at. NIIs in low single digits, barring that Kotak Bank as well. If you've just tuned in, it's inline set of numbers coming in for all three of those banks. But let's also recap and talk about some of the other banks that have reported numbers and some of the commentary that has already come in terms of RBL Bank as well. The Q1 profit surged about 27%. The net interest income rose above 1,600 crore rupees as well. And the profitability definitely remains in focus. The street, of course, is paying particular attention to the credit quality trends, credit cards, slippages as well, and the management's outlook coming in terms of growth. Let's go across and listen in to slice of that commentary.
The credit card is concerned, it is not the stress of the book, it is the transitional issues which we have been facing for the last 1.5 years. It's getting culmination point. That's why you see this spike as far as the slippages in the card is concerned. See, we will not be growing for the sake of growing. We will be doing very responsibly. Our execution is what we will be focusing on. And we have been growing in the range of around 20-25%, which will be the minimum basis on which we will be growing it. See, approximately 200 crores is what we have done it under this scheme.
Alright, and that's the commentary coming in as far as something like an RBL Bank is concerned. But let's also talk about Federal Bank, and they've outlined their growth priorities after reporting the first quarter performance as well. The management is really highlighting the credit expansion, the ECLGS 5.0 loan support, and the margin outlook. And when you talk about the numbers as well, the NIMs, of course, have expanded, and the asset quality has improved sharply as well. Let's go across and listen into the management commentary now.
Primarily, this will be driven by customer needs, and depending on customers that require that kind of support, we will offer that. We don't have a target on that. We had earlier last year, towards the end of the last year, we had given a general guidance that our NIMs, we expect, at least for the next 3-4 quarters, we expect it to expand by 5 to 6 basis points a quarter.
Alright, then that's the commentary coming in from Federal Bank as well. So largely an inline set of numbers coming in for something like a Kotak Bank, Axis Bank as well as PNB as well. And the line item to really watch out for is higher slippages as well. And we'll get to that commentary when it comes in from the managements as well. But from one sector to another now, let's talk about Reliance Industries that posted an inline set of numbers in the first quarter with its revenue rising, aided by the OTC and the Geo segments as well. In fact, Somit is joining in with the fine print here.
Well, Reliance Industries reported pretty much in line set of numbers in the first quarter of FY27. Revenue and EBITDA were up around 5 to 8% on a sequential basis. Margins came in at close to 15.4%, while net profit jumped by around 23% on a Q-on-Q basis. If you look at the segmental performance, the O2C segment EBITDA was up 17% and was the star performer, and this growth was largely led by expansion in the petrochemical spreads and also because of the benefits that SEZ refinery saw from higher GRMs. The retail EBITDA that that was a dampener, down around 9%, the biggest drop that we have seen in the last 20 quarters, owing to lower revenue and higher investments in the digital business. The oil and gas exploration EBITDA, that surprised positively. It was up 19% on a sequential basis, largely owing to stable production and lower costs that we witnessed in the first quarter of FY27. When it comes to the telecom business, Reliance Jio subscriber addition and ARPU numbers were pretty much in line with analyst estimates. On the bottom line front, higher other income aided, while higher finance cost also weighed on it. Now, finance cost was up nearly 27%, while other income jumped nearly 47% on a Q1Q basis. And the increase in finance cost could also be because of a weaker rupee that we had seen. Overall, if you look at the balance sheet, that net debt decreased slightly to close to 1.23 lakh crore rupees as against 1.25 lakh crore that we had seen in the previous quarter, while the leverage that remained largely stable, that is net debt to EBITDA, at around 0.6 times. Overall, it was pretty much in line with O2C and oil and gas exploration coming up ahead of the street estimates, while retail was a dampener and Jio was again bang on in line with what the street was anticipating.
No, absolutely, and thank you so much, Samit, for joining us with that earnings fine print. So it's the retail EBITDA that was the dampener. Overall profit rose about 23% as well. But let's also end this power-packed show on a very good note. The World Cup has always been a stage where stars become legends. Let's talk about that as well. This tournament has been no different, with young sensations announcing themselves and seasoned champions delivering when it mattered the most as well. You do have Argentina and Spain preparing for the biggest match of them all as well. And here's a look at the 5 players whose brilliance has defined this World Cup.
Just 18 years old, but already one of the biggest stars of the tournament, Lamine Yamal has been the creative heartbeat of his side, constantly troubling defenders with his pace and vision. He won the decisive penalty in Spain's semi-final victory over France and is the front-runner for the FIFA Young Player Award. The final match will also make him the 3rd youngest player ever to feature in a World Cup final. England's campaign may have ended in the semi-finals, but Jude Bellingham's performances stood out throughout the tournament. He scored 6 goals in 7 matches, with 4 coming in the knockout rounds. His brace against Norway in the quarterfinals powered England into the last 4 and underlined his importance to the team. Norway's historic run to the quarterfinals was driven by their prolific striker, Erling Haaland. He finished with 7 goals in just 5 games, scoring in every single group stage match before adding goals in both the round 32 and round of 16. His remarkable strike rate was the best of any player at a tournament. France fell at the semi-final stage, but Kylian Mbappe delivered another outstanding World Cup. 8 goals and 3 assists meant he was directly involved in almost 69% of France's goals. Even in defeat against Spain, he remained the biggest attacking threat on the pitch. At 39, Lionel Messi has once again dominated the biggest stage. He heads into the final with 8 goals, leading the race for both the Golden Boot and the Golden Ball. During this World Cup, he also became the highest scoring player in World Cup history and set up Argentina's dramatic late comeback against England with 2 crucial assists. Rika Roy for NDTV.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names. chose India's best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Thank you for taking out time and speaking with NDTV Profit. Sir, could you please take us through that the India export to UK after this UK deal coming to force today, that's July 15, how they are going to take the zero duty access on an immediate basis compared to those who are getting in a phased manner?
I think from India's exports perspective, most of the goods we are getting it from day one. So all the Indian exports, majority, like more than 90% of the exports goes zero duty on day one. So from India's exporters perspective, it is a good deal for them and they should be able to take advantage. This is something that they have known for last 1 year after the agreement was signed. And I think Indian industry has also been preparing for this deal. That should be good for them. From UK industry perspective, yes, we are giving them a clear line of sight that which are the areas they can look at. India is a fast growing market, a major economy, but there are sensitivities in multiple sectors. So there is calibration in some of the duty opening up and there are certain exclusions that they will have to live.
Sir, as you just rightly mentioned, just to follow up on that, all those sectors which you're talking about, your gems and jewelry, apparel, etc., if you could give a timeline in 6 to 12 months, how much benefit are these sectors going to see?
See, immediate tariff benefits are there, like gems and jewelry sector gets an immediate benefit of 4%. Textiles gets an immediate benefit of somewhere between 8 to 12%. That's the same figure for around leather and footwear also. So there's an immediate benefit and there are existing supply chains. Our industry has been exporting to UK market in a small measure and these supply chains will start taking advantage of these duty benefits. Building on these duty advantages, because our exports will become more competitive and we believe that will help them grow market share in the UK market, which is like for labor intensive sector, it is more than $50 billion. It is $30 billion for textiles, it is $8 billion plus for leather goods. So this is a huge opportunity which they will be able to leverage upon in months and years to come.
So do you have any additional conservative estimates essentially to kind of capture the UK market after this, of course, deal, and any bilateral trade sort of in mind by 2030?
Our expectation is that today we are around $56 to $60 billion of bilateral trade between the two countries, goods and services combined. By 2030, we should be somewhere around $100 billion. And that's a good jump for in both the bilateral trade between India and
Okay.
Right. So, services sector is a big pillar of this FTA, and going by how our exports are also growing, services have already eclipsed merchandise exports. Talk to us about this social security agreement that is a part of this, and also talk to us about the various professions that Indians can now engage in the UK with, in terms of how much employment is generated abroad for Indians as well.
One, UK is also a strong services economy. Their services imports are more than $400 billion. Our exports are in the vicinity of around $20-21 billion. And the commitments that UK has taken under this agreement is one of the most aspirational and ambitious. They have given policy commitments under 137 subsectors as compared to India opening up for 107 odd sectors under this agreement. In addition to that, there are commitments around mobility, there are commitments around inter-corporate transferees, there are commitments around some professional services, some professionals like musicians, chefs, also some special visa categories have been created. So these commitments will help our companies to plan better. And both these economies, Indian economy is also a services-driven economy in a big way, with more than 50% of the GDP coming from services. So I think this will actually help both sides to grow services trade also in a big way. The double contribution convention has been a very important ask of India for years now. Every Indian individual who goes on for temporary work to UK or working for 6 months to 5 years, they end up paying 23% of their salary as part of social security cost, which is kind of a sunk cost. They are not able to get any benefits out of it. Through this double contribution convention, now they will be able to contribute that money in their social security accounts in India and be exempted from doing the same in UK. That is a good plus for them. It will make our employees, our officers, our professionals also very competitive. Our companies also very competitive in this market, and that will also, we are estimating, will lead to savings of around $450 million annually for 75,000 professionals on an average which were working in UK.
And this is annually.
It is.
It will go up as well.
This is and in case there is more mobility, more professional go on, the savings will be much.
That's a significant number, sir. I would say quickly wanted to check, because I'm curious on this part, that how this UK-India deal is different from all those deals which India has signed, and what exactly lesson have you learned from all those existing deals and those are in the pipeline to shape up India-UK deal?
I think there are two aspects of India-UK deal which positions it differently. One, both major economies coming together, 5th largest and 6th largest economy coming together. Two, I think the market access agreement or commitments on those sides are aspirational. This is the highest that India has done beyond its FTA precedents, and this is one of the best that UK has also brought to the table. And on the second front, I think from the India, it is a first in the kind that we have agreed and we have negotiated many policy areas which are a first, which are now becoming important for trade. We have negotiated trade and labor, trade and environment, trade and gender. So there is multiple new policy areas which we have. IPR, we have. So there are areas which we have negotiated which is first for India, but that also goes on to say how the new India is a bold India, new India is a more confident India.
So there were also, of course, every FTA comes with its sticking points. For this FTA also, there was the carbon tax and the steel safeguards, both of which came out later thanks to the EU, similar rules with the EU as well. Talk to us about how India has navigated the steel safeguards that the UK has come up with. We are hearing that exports will now go up to cross $1 billion on that front. And on the carbon tax, I think that is still in works. Talk to us about both those aspects.
See, the steel safeguards came after the agreement was signed. So when the safeguards came, and this is a policy decision of a country. So like every other country, we also got into negotiations and we have figured out solutions outside the agreement. We have not touched upon and opened the agreement, and if you look at our solution is a combination of two, wherein we have worked with UK side to help them to work together to have a higher quota for India, which helps us to serve the market we were having for last few years and also have some scope to grow. And at the same time, we worked around under the double convention contribution convention to see that if we can add on to the additional 2 years which was the pending ask of India and which means value for us, then I think there is an even trade-off and we can proceed in. So that was how we discussed, and this enabled us to find solutions outside inked, signed and approved. So that helps us to reach to this EIF on 15th July today.
That is their point. My final two quick questions. One, what's your outlook on the merchandise export for FY27 given the kind of heightened geopolitical uncertainty and of course renewed Iran conflict? So what's and of course you're signing deals, so of course you will get, India export will get access opportunity. How are you seeing FY27 for exports?
One cannot guesstimate and see because you can't predict geopolitics, you can't predict externalities that impact trade. But at the same time, you heard my minister multiple times in media that the aspiration and the target that we have put before ourselves is that we should aspire to reach 1 trillion in goods and services by the end of FY27. That's the aspiration. We'll keep working towards it and we'll see where we land.
give me this, liberty to ask this final question. There are a lot of course, India is tapping all the major economies and US among one of them, and very, very crucial for India. Everybody, looking forward to that. Just what's the brief update on that, if you're comfortable, sir? Share.
I think I shared with media a few days back also that both sides know completely each other's expectation. And the agreement, the framework deal that we announced in February is ready. But if you are aware, that the IPA tariffs against which the deals was announced, that has been removed by the Supreme Court. And after that, the new tariff structure that is being stitched together is under works. So both sides have got the deal ready at the right time. When both sides are ready and feel it is the right time to sign the deal, I think it will be done.
We all wait for that right time, as all of us actually eyeing on India-US deal. Thank you so much for speaking with NDTV Profit. Always pleasure talking to you.
Thank you. Thank you very much. Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards from jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Great time to get in Shreyas Devalkar. He's head of equity at Axis Mutual Fund. Shreyas, good having you. Thanks for taking the time out. Good morning to you. How are you approaching the investing process currently? Because the Q1 results thus far seem to be okay, but if the bogey of oil had gone away 2 weeks ago, it has certainly come back, even though it's not in the same ferocity, because oil prices are not at 105 but at 85, but still they are no longer at 70 either. Is this a good time, despite the uncertainty, to bet on the names which are giving out results? Or would you sit on a bit of cash waiting for the conflict to be completely out of the way?
Actually, as far as this conflict is concerned, expecting that it will be completely out of the way will be very demanding assumption to make. So we like it or not, we have to make our assumptions around it and move around accordingly. So whether you go ahead with the assumption of crude being 80s to 90s or 100 plus or closer to 70s, obviously that makes a difference in the way you would build a portfolio. We would like to believe that yes, we should build a portfolio around 80s to 90s assumption on a steady state basis. Any positive news with crude growing closer to 70s the way it happened is definitely a positive outcome. As far as the growth is concerned, and you're rightly highlighting that yes, this quarter, if you notice the previews which are coming out, already the Nifty growth rate for this quarter expectation as per various brokerages is around 17% on top line front. Now, this number actually is one of the highest in last 3 years when it comes to top line growth. However, when it comes to bottom line growth, because of the margin contraction in many sectors, like from in autos, it is there in some of the consumer staples, some of the pharmaceuticals. So because of the margin compression, probably the bottom line growth is not as great. It is hovering around 5 to 8% as per various estimates. But top line growth, again, this is, as I said, it is one of the great news. Because historically, what we have seen, especially when it comes to large cap growth, it has been dependent on the nominal GDP growth. Now, average CPI plus WPI for this quarter is around 7%. Again, it is one of the high number in last 2 to 3 years. So net, as far as numbers are concerned, top line trajectory looks good. Even underlying parameters like the volume growth in auto, the impact is not as high as what everyone feared when the war started in Iran. You take multiple categories. The impact is not as much on the volume, and that's where we see that more stability. Again, if the crude goes above 90, 100, then obviously I would call out that yes, then that is a situation to be considered, and which may have a negative impact.
I'm just wondering what you're making of, and of course it's very early days in this earnings cycle, but this conversation that we're having more and more repeatedly about the distinction between the trajectory of the large cap names on the earnings front and the broader markets, where you can see 15, 17, 20% earnings growth in the broader markets, but in the large caps it's restricted to single digits. Is that something that will continue to pan out in FY27 in your opinion?
If you see the construct of large cap, it's not actually not about the large cap versus mid and small. It is about a construct of large cap. It is, if you take around 30-40% of large cap is financial services. Now, here in the lending, the credit growth is improving already, right? It is about 17%. The NIM pressure continues. So even in this quarter, the joker in the pack is the NIM, because as far as the credit quality is concerned, as well as credit growth is concerned, both are actually tracking very well. So if there is a rate hike, which actually supports NIM, especially in case of bank, but once that NIM pressure is behind, then generally even this pack will do good. FMCG is another sector, and IT. These are the two relatively larger sectors. I would call it closer to 15-20% of the index. Here, the growth has not improved. Beyond that, there are sectors like oil and gas, which generally don't tend to grow as much if it's depend only on the commodity prices. All in all, in my opinion, if the financial services, the banking pack, here the growth is delivered and NIM pressure is behind, then probably this may lead to the improvement in the large cap growth rate. Mid and small cap growth rate has been around 15% plus. But if you look at the challenge in the market has been, since last for 2 years also, the mid and small cap growth has been 15% plus. But when it comes to returns, because of the valuation, the returns has not been that great. They outperform large cap, there is no doubt, but absolute returns has not been commensurate to the earning growth. And that's where when it comes to the large cap versus mid cap, the debate, which I generally don't want to get into, because it's more to do with the construct than anything else. So in case of large cap, in my opinion, if the financial services does well, and the valuations are reasonable compared to their pre-COVID level valuations, there is a good risk reward available here.
How are you looking at some of the private bank majors ahead of the results this Saturday? What would you be watching out for, and will this be a very important quarter from that perspective as well, because it will capture some of the turbulence we've seen in the economy and globally?
So for bank and NBFCs, especially lenders, so there are two things. One is about the result and one is about overall macro environment, because that also bears a broader impact on this sector. So as far as growth is concerned, as we all of us know already, the result previews are out, which are given by the companies themselves and the banks themselves and NBFCs themselves. The credit growth numbers are really good across the board. There is no question on that. The commentary on the asset quality has been great. So that is again a good news. As I highlighted, in case of banks, the NIM pressure has been the concern for the market. Actually, for bank, the increase in the interest rate should be a positive as far as the NIM pressure is concerned. But let's not take a call whether it happens or not. So once that is behind, in my opinion, banks are in the good position as far as growth is concerned, and likewise NBFC. So both the lending part. The other aspect which always works as far as the sector performance of lenders is concerned, which is to do with broader market liquidity. Generally, if you would have observed, there is a correlation between rupee depreciation, there is a correlation between the expectation of interest rate, etc. On that front, the coordinated effort of central bank and central government to arrest the impact on the rupee depreciation, to attract foreign flows in that has been a good news. Let's see how much money we get. The estimates has been right from $50 billion plus to as high as $80 billion as well. If we get good money in that and the liquidity is good, as well as the pressure on the rupees also off because of this, then I think even that will be a good news for the banks.
Okay. Shreyas, a lot of chatter around the need to invest in precision manufacturing and multiple businesses out there, right, which are doing this under various verticals. Where are you present? Where do you find favor in this space? And are valuations still attractive, or now they are uninviting? I mean, you can hold them because you have them, otherwise buying afresh might become a problem.
Valuations, yes, I agree. It is high everywhere. So not only precision manufacturing, if you take entire manufacturing space. So generally, when it comes to discussion around manufacturing, I normally include everything in it. So it is right from auto ancillaries. If you notice, many auto ancillaries, they are now no more pure play India OEM auto ancillaries or India OEM oriented auto ancillaries. They are doing defense, they are doing exports, EMS, and so on. And one of them is precision manufacturing. So there are multiple such segments. In case of capital goods, obviously there are segments right from the bearing to gears to lights and so on. So the entire manufacturing piece we are really positive on. And yes, valuations are high. But most of this piece has presence in mid and small cap segment. I don't think many of them are in the large cap, and that's where again comes the debate between the large and mid cap. Now, this entire opportunity is there in the mid and small cap space. The growth is good. The kind of orders they got is good. So multiple orders companies got, even for transformer exports, engine exports, and such things we are hearing from multiple companies. And one more important point is rupee depreciation, the way it has happened so far. That also adds to added advantage as far as exports is concerned or import substitution is concerned. So, but generally in case of manufacturing, it takes a lot of time to really play out, because in the services sector, historically, you must have seen that whenever rupee depreciate, people used to buy IT or pharma, because there the translation into business or the positivity is really straightforward and in shorter period of time. In case of manufacturing sector, generally it would take longer period, because people will decide, then the capex will happen, then the orders will come, and then you get the benefit. So it is a relatively long gestation process. But in my opinion, as far as markets is concerned, and that's where you are rightly highlighting, that as far as markets is concerned, we are in the mid cycle. We are no more in the up cycle of the manufacturing as a theme. So we have to be very calibrated on what you want to really buy. We have to really assess. The way we are doing is we are assessing what are the optionalities available, because today at high valuation, you actually price in the option value. In a particular company, this company will get into this new area and the potential is so much. So that optionality we have to assess really well, because if you go wrong on that, then these valuations may hurt us.
That's a good point. Absolutely. All right, Shreyas, absolute pleasure as always speaking with you. Thanks so much for taking the time.
Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business owners? Find out at the NDTV Profit Business Leadership Awards.
Let's get in. Alin Saxena, Executive Director and President, Strategic Initiatives and Growth Markets at L&T Tech, to join in. Welcome to the show, Alinda. Always a pleasure to speak to you. Strong first quarter. The question is this kind of growth sustainable through the rest of FY27?
It's a good question. And obviously, you've gone through the results. You have an understanding. See, I would break up that question in three parts. So one is you got to look at when we look at our organization, we break it into three segments. So that's mobility segment and tech, and which is how I would answer the first part. The second is I will talk a little bit about the things that we are doing differently in these sectors, which are making us happen. And third is we'll talk a little bit about the customer behavior. So if you look at our story for this quarter, we have shown positive growth, 2.3% growth in our mobility sector, and which I think is very encouraging. And then you must understand that when we look at our mobility sector, for us, the diversification strategy helps. So we are not just talking about automotive, which is of course the most visible part of what we do, but also trucks and off-highway and aero and rail. And all three of them make tremendous contribution towards the mobility as a segment. So we are seeing traction in two of them. And the third one is also that we are seeing traction, maybe not to that greater degree, but it's still a very positive story that we see. So mobility will remain positive, that would grow. If you were to look at the next sector, which is our sustainability sector, so sustainability sector has been a story for, I would say, the last 4, 5, 6 quarters. And we grew year on year, as well as we grew about 4.3% this quarter as well. So that's a continuous sector growth strategy which is there. And you got to look at it at the back of the fact that there is enough demand in the market, especially because of data centers, the modernization of the refineries which is happening, and also the energy consumption which is going up through the roof. So all three of those are creating that demand, which is a good tailwind for us as we are going through, right? So that's on the sustainability side. And then on the tech side, if you were to think about tech as semiconductors and communications, so we are going over there. There is software and platforms where we have seen things move. Part of that because of the acquisition that we did. So things are moving. We had one program which came to a logical end, and a slight delay in picking up the next one, which we're very confident that we should be talking about it very shortly, and there'll be a couple of deals that we will announce shortly in that area. So we remain positive about all the three sectors which go back to the growth story.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to just get a point of view as to how different jury members were looking at various participants, and, the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered.
US benchmarks closed lower on Friday amid a fresh sell-off in chip makers and renewed geopolitical tensions. The major stock benchmarks notched weekly losses, with the S&P 500 off 1.6%. Nasdaq slid 2.9%. Dow also fell about 0.9%. On the week, crude extends gains, reaching its highest level in a month. And the Wall Street shrugged off global headwinds, with both Nifty and Sensex closing the week with gains as earnings gather pace, sidetracking oil volatility. Broader markets closed mixed, with banking stocks gaining the most. Kotak Mahindra Bank, meanwhile, reports in-line set of first quarter numbers, with net interest income rising almost 9% on a year-on-year basis. Axis Bank, on the other hand, sees flat operating profits as asset quality declines. Punjab National Bank delivers healthy numbers with improved NPAs. Skyroot Aerospace creates history with the launch of its first orbital rocket, Vikram 1. This marks India's first privately developed orbital class rocket to take flight. Good afternoon, you're watching Profit 360 with me, Shreyansi Singh, and this is the show that over the next few minutes is going to get you highlights in terms of everything that is happening in the country as well as across the world. But first things first, let's talk about our top story at this hour. It's AI-powered fraud that is emerging as a new threat for businesses and investors. SEBI and NSE, in fact, have issued fresh warnings over deepfake CEO calls, fake trading apps, and phishing attempts designed to trigger unauthorized fund transfers. Regulators are urging companies and investors alike to strengthen verification processes at the moment as cyber scams also become more sophisticated. Now, before we get you some more insights from our guest as well on the show, let's get in Nimit to set up all of that context right for us. Nimit.
Picture the scenario where it's 6:30 in the evening. You are the head of a listed financial company's finances, and you're about leaving office when your CEO calls. And then a message follows from your CEO. Then there's a video call. There's an important transaction. It's confidential, and it has to happen immediately. You have to send across the money. And you, of course, can't discuss it with anyone else. The payment is made. A few hours later, you discover that the CEO never made that call. Now, that is the scam market regulators are now worried about. In the space of 2 days, the Securities and Exchange Board of India, as well as the NSE, have issued cyber security advisories warning that fraud is entering a new phase. Not because hackers have found better ways to break into computers, but because they're finding better and easier ways to manipulate people using AI. SEBI has flagged what's known as the boss scam, where fraudsters impersonate senior executives using AI-generated voice clones, deepfake videos, emails, messaging apps to pressure employees into transferring money. This attack isn't on a company's systems, it's on the trust that you have with your boss. At the same time, the NSE has warned about fake trading apps, cloned websites, phishing links, and social media accounts designated to look legitimate, all with one objective: getting investors to hand over money or sensitive information. Different victims, different methods, the same modus operandi, using AI to scam you into sending your money. Now, what makes these warnings significant is that for years, cybersecurity was largely about firewalls, passwords, software. Today, it's no longer about that. It's about human manipulation, and AI is making it easy for scamsters to do that. The advice from both regulators is simple: slow down, verify independently, and don't let urgency override common sense. Because in the age of artificial intelligence, the most convincing scam may be the one that sounds exactly like someone you trust.
No, absolutely, and thank you so much, Nimit, for joining in with that update as well. In terms of the entire context to this discussion as well, let's also take all of this forward and get you some more insights when it comes to this. In fact, Sriram Subramanian, MD and founder in Governance Research, joining us for the show right now. Thank you so much for taking time out and joining us this afternoon. This is a very interesting one, right? If your boss calls and it's actually a scammer behind the line, it's a deep fake at that. This is actually quite interesting, but given all of that, let's also talk about how significant the rise of AI-enabled fraud really right now is. Are deepfake, do you think, the scams, are they becoming the next major cybersecurity risk then for corporate India?
Good afternoon. Yes, I think so, because at the end of the day, AI brings in newer capabilities to the fraudsters. And as you said, not just video as well as audio can be morphed. So this boss scam, which is morphing some senior executives, this or video can be used to fraud employees of any company. So these fraudsters take care of study the company in detail on LinkedIn, and then subsequently they use the data to and AI to perpetrate the fraud. As it happens, see, this is just another variant of the digital arrest scam. So, of course, the one of the first frauds that was perpetrated was a deepfake, was about $50 million, which a CFO called an employee and got him to transfer in the US. So that was a very telling case. So companies need to be very aware that this kind of boss fraud is being happening.
And off late, we've been hearing about some of these cases as well when it comes to some of the retail investors as well. There's a lot that's been in the news right now. But, when you talk about the speed at all of this is happening right now, do you think that regulators are prepared, sir, for the speed at which AI-driven scams are evolving?
No, I don't think regulators themselves need to be prepared. It's more of the companies which need to take into account, or people, the sensitization of all involved. So obviously the onus on the regulators is to educate companies. The MCA, the RBI, the SEBI and all can of course educate the companies. They can send out emails. They can educate companies through industry forums, etc., about these deepfake videos and the possibility that these bring about. Even banks can also get involved in these, educating the companies and the employees. So that would probably disseminate or ensure that these frauds are mitigated to some extent.
No, absolutely. And not to sound like an alarmist, sir, but when you talk about the current measures that are in place, do you think that above and beyond what you've mentioned, currently the state at which companies are operating in terms of the approval systems, do you think that needs to be getting a little bit of a reset in the era of AI impersonation as well?
No, I don't think. See, eventually it is the education of people. If people can confirm that somebody who is supposed to call or everything, they don't act in haste, there is an education of people, the employees of companies. I think that would mitigate to some extent. Of course, two-factor authentication is one way to mitigate it. Banks have enabled it. I think there is more need for two-factor authentication so that a single approval doesn't transfer funds, etc. So I think that is the next stage. I would think regulators can act and more banking systems, etc. Because funds transfer is a crux in any of the corporate scams.
No, absolutely. And speaking of some of those scams as well, just hang in there while we play out this bit of commentary also that we had coming in from Sulin Bharti Mittal as well in terms of how an employee of his nearly got scammed as well. Let's go across and listen into that bit of commentary and then we'll come back for some more insights.
I can give you one personal example. Just not too long ago, one of my senior finance persons in Dubai, which handles our Africa headquarters, got a call in my voice, my tone, directing for a money transfer, a fairly large amount of money. And he was sensible. He immediately realized that I wouldn't call anybody in my company to make that kind of a deal. But when I heard that, voice recording, I was quite stunned. It was perfectly articulated as I would speak. And anybody who would have not been vigilant may have done something about it.
That's incredible.
And so you will have now...
Did you track down where it came from? Was it possible to do that?
I mean, we put our complaints and all to the police and all that, but I'm sure this is now a daily routine. One will have to be vigilant. Tomorrow you will see not just a voice, you will probably see your digital signatures, you'll see your face on a Zoom call. All these things will have to be protected. I mean, we'll have to protect our societies from the evils of AI. And yet we have to use the goodness of AI, because those companies, nations that will not adopt AI will be left behind.
All right, the evils of AI definitely in the spotlight, but let's also talk about what else is in the spotlight, and it's actually PNB management talking in terms of their Q1 results. Let's cut across and listen into that commentary.
30th June 2025. So thereby 100 basis point decrease in the gross NPA performance. And net NPA improvement 0.28% as on 30th June 2026 from the level of 0.38% as on 30th June 2025. This reflects our disciplined credit and recovery framework and keeps us well on track to achieve our financial year 26-27 guidance for both GNPA and net NPA. As of now, we have not seen any material impact of geopolitical tensions on the bank's asset quality. Our slippages remain contained, SMA accounts are stable, and the overall credit portfolio continues to perform well. Our PCR, that is the provision coverage ratio, stands at 97.23% as on 30th June 2026, which is well above our guidance of more than 96% for financial year 27. Total fresh slippages during the Q1 was 2,080 crore as against 1,886 crore in Q1 of last year. Our guidance for our slippages ratio was to remain below 0.9% in financial year 2027, and we are well within our guidance level as slippages ratio for this year is at 0.68% as against 0.71% last year. Total recovery stood at 2,789 crore for Q1 of this year. Our recovery is 1.34x of the slippages in Q1 of this year, reflecting our commitment towards improving asset quality. We have made additional floating provision of 390 crore on prudential basis in Q1 of this year, making our total floating provision at rupees 2,435 crore. There is consistent improvement in the SMA book, and overall SMA stands at 2.9% of the overall loan book. One major highlight I will mention here, that is the asset quality underwriting, how it has happened in the last 6 years. From the 1st July 20 to 30th June 2026, that is the 6 years period, we have sanctioned around 14.74 lakh crore loans, out of which we have disbursed 12.92 lakh crore loans. The outstanding in the loan is 8.94 lakh crore as on today, which is close to 70% of our loan outstanding book. The NPA in this book is hardly 5,486 crore, which is only 0.42% of the disbursed amount under fresh underwriting. So this speaks about the underwriting standard of our bank. Now I will touch upon the capital. Our capital adequacy is 18.13% as on 30th June 2026 compared to 17.5% as on 30th June 2025 against the regulatory requirement of 11.5%. Our CET1 capital stands at 14.52% against a regulatory requirement of 8%. Tier 1 capital stands at 16.03% against a regulatory requirement of 9.5%, and Tier 2 capital stands at 2.10% as on 30th June 2026. More than 86% of the total externally rated advances above 25 crore are above A rated, and more than 52% are AAA rated, which indicates our balance sheet strength from risk point of view. Bank is doing very well in the digital front, and I will highlight some of the performance and what bank is doing about the digital transformation. Digital banking continues to be a strong growth driver for the bank. After crossing the milestone of 1 lakh crore in cumulative digital loan sanctions earlier this year, we are on a track to add another 1 lakh crore during the current financial year. In Q1 alone, our digital credit sanctions are more than 19,000 crore. This growth is being powered by innovative solutions such as DG Lakpati Didi scheme, Prime Minister Swanidhi scheme, our newly launched emergency credit line, helping us to expand credit access and improve customer convenience. Digital adoption is accelerating rapidly. While every third loan was sanctioned digitally in the last quarter of the previous year, today every second loan is being sanctioned through digital channels. On the transaction side, over 95% of the customer transactions are now digital. We are also actively supporting the RBI and the government initiative on the CBDC and other digital public infrastructure projects, reinforcing our commitment to India's digital transformation journey. Artificial intelligence is emerging as a key growth and transformation driver for the bank. We have already deployed AI-powered solutions across customer service, employee engagement and productivity, learning, and credit processes, delivering tangible business benefits. Going forward, we are scaling AI and GenAI, machine learning across operations, analytics, risk management, and decision-making with a strong focus on responsible AI, governance, and regulatory compliance. We believe AI will be a key differentiator in making our bank more agile, efficient, and customer-centric. PNB is taking early steps towards becoming quantum ready. We have deployed quantum safe encryption in customer-facing applications and developing quantum-based banking use cases such as mule account detection. This reflects our commitment to staying ahead in quantum-safe banking environment and innovation. I will touch upon the human resources part. The bank has partnered with 29 professors of practice and 4 premier institutions, namely ISB Hyderabad, MDI Gurgaon, IPE Hyderabad, and UNext Learning by Manipal Academy, to strengthen capability building through specialized training, research, and future-ready learning. The bank has introduced augmented reality and virtual reality-based training modules available in 8 languages to deliver immersive learning and strengthen workforce capability through technology-enabled training. In partnership with Microsoft, the bank has launched an AI training and certification program for all officers to build future-ready digital capabilities. The bank is strengthening its core franchise by expanding its CASA base and accelerating growth in the retail, agriculture, and MSME portfolio, laying the foundation for sustainable growth, stronger margins, and improved operational efficiency. Our disciplined risk management approach, supported by prudent underwriting, controlled slippages, and focused recoveries, continues to strengthen asset quality, while digital and workforce transmission are enhancing productivity and customer experience. Credit cards, cash management services, and supply chain finance continue to emerge as key growth engines, delivering a strong business momentum and supporting diversification of our revenue streams. With a strong balance sheet, disciplined execution, and multiple growth drivers in place, the bank remains well positioned to deliver consistent and sustained value creation. Thank you very much. And I myself and my top management team is here to answer any question related with the financial performance of our bank.
Thank you, sir. We'll now begin with the question answer sessions. Anyone who wishes to ask any questions may raise their hand. We'll wait for a queue to line up. And I will request all the participants to have 2 questions, just seeing the timeline. Thank you. Yeah, Mr. Shishir from Hindu Business Line.
Sir, good afternoon. Am I audible?
Yeah, good afternoon, Shishirji. Yeah, you are audible.
Sir, my question is that your profit has gone up by almost 3 times, more than 3 times, if we go by Y on Y. Can you just give us a basic reason for this kind of increase in this quarter performance? Number one. And number two, we are finding that the CASA growth has, slightly on a lower side. It is below 40% of your total book. Is it giving some comfort, or is there something which is troubling you? Thank you very much, sir.
Yeah, first of all, the profit part. In fact, if you recall, last year in the very first quarter, we had moved from the old tax regime to the new tax regime. And thereby, around 3,200 crore, we had paid the tax because of the DTA calculation and movement from old tax to new tax regime. And I had also indicated last time that this is a one-time activity that happens if any organization moves from the old tax to new tax regime. And afterwards, if you would have seen the Q2, Q3, and Q4 of last year, every quarter we had a profit of more than 5,000 crore. That is the continuity we have maintained in this quarter also. So the 3,200 crore, if you add in the last year's profit of 1,652 crore, I think we are on the same pace of 5,000 crore of quarterly profit. That is one reason why it looks like a 3 times the profit has gone up. It's because of last year's movement of old tax to new tax regime. Second, your question is related with the CASA. In fact, if you see the CASA growth and seeing the activity which is happening in the entire ecosystem, I think bank has reasonably done well, and especially from the individual growth point of view, there are 3 components in the CASA. One is SB individual, SB institutional, and third is the current account. So bank has done well in the current account. We have shown a growth of 12.3% in the current account deposit. So 9 to 10% growth in the present situation in the CASA or in the segments of the CASA, it treated as a good growth. Saving deposit, individual saving deposit, we have grown more than 9.9%, 9.3% actual growth is there. What we have lost is, and it is across the industry, is the institutional deposit, because all the government deposits which the bank used to keep it in the CNA and SNA account, now it is moving to the just-in-time management, and through RBI, it goes to the bank directly for the payment. But the institutional account, there is a drop of 6.7%. There is a drop in the institutional account. Otherwise, if there would have been a growth in the institutional account, I think our growth would have been more than 11 to 12% in the CASA. So as of now, with this type of performance, we are quite comfortable in maintaining the cost of deposit. And if you see my cost of deposit, that has also gone down in both cost of deposit and cost of fund.
Thank you, sir.
Yeah.
Yeah, I will take next Mr. Dipankar from PTI.
Sir, good afternoon, sir.
Good afternoon.
Sir, congratulations on almost more than threefold jump in your net profit. I think this would be the first quarter highest ever profit numbers for you.
Yes. Yes.
Sir, my question is with regard to the NPA part. Your NPA has seen decline. However, if one looks at your balance sheet, the provision has doubled. If you could explain the reason for that. And my second question is with regard to FCNRB deposits. FM had a meeting with you guys earlier this week. What sort of mobilization target you have in your mind, and so far how much collections have been made as far as FCNRB deposits are concerned?
Yeah, first the provision part I will touch. This quarter we have made a NPA provision of 566 crore, and we have kept a floating provision. If you remember, in the every quarter I used to mention about that. Since we have a good net profit, so we thought that we will build up the migration which is going to happen in the ECL. So for that we have kept a 390 crore provision for the ECL migration. So both put together, it looks like that provision has at a elevated level. But actually, if you see the NPA number, that itself speaks that it was not required that much provision. It is only because of the floating provision which we have made of 390 crore. The provision number has gone up now. Now coming to the FCNRB deposit, bank has already mobilized till yesterday 425 million USD. And in fact, various occasions I have already committed that around 2 to 2.5 billion USD we are going to mobilize. And I am standing on that figure. A lot of strategies bank has already adopted. And by end of 30th September, I think we will be reaching around 2.5 billion USD to the FCNR road.
Thank you, sir. Thank you.
Yeah, we'll take next one. Miss Manju from Financial Express.
Can you hear me?
Yeah, good afternoon, madam. Please go ahead.
I just wanted to know, you said that the fresh additions to the NPAs is about 2080 this quarter. Can you tell me from where this fresh additions are coming from?
Yeah, I will give you the breakup. Retail, it is 402 crore. Agri, 752 crore. And MSME, 825 crore. All put together is 2080 crore is the total things that has come.
And on the retail side, from where is the stress coming? Retail side?
Retail, see, we have a large portfolio, almost 2 lakh crore plus portfolio is there under the retail segment, constituting the housing loan, vehicle loan, and some other mortgage loans and all. So most of these slippages in the retail segment is towards the housing loan. And we have a security for that. So I think we don't much bothered about that, because realization will happen by sale of those properties through the SARFAESI route, or subsequently the customer also comes forward and they will repay that loan.
So out of the 402 crore, how much would be the mortgage delinquencies or the stress from the mortgage side?
No, it is all, see, retail, almost all are through we have the securities. So housing loan is there, mortgage loan is there, the LRD will be there. So it is all having a full security in that retail.
Okay. Why is the stress coming in the mortgage book? Any reason? I mean, I'm not saying that it's alarming. I'm just saying that why is the stress coming there? Is there some due to some job losses? Or?
Nothing. See, sequentially also in every quarter, if you see, retail will be in the range of around 400 to 500 crore. Last year, during the same period, it was 463 crore. Last quarter also, it was in the range of 500 crore. See, when we are doing the banking, this type of fall will happen. We are mindful of those things. And it is very, very reasonable fall that is happening against the size of the bank and the size of the portfolio which we are holding it. You can't say that no, nothing will slip. Things will slip when we take the decision and we go for the exposure. Nothing, no alarming situation is there.
And you gave some numbers about that 5-year period, about 14.7 lakh crore. Can you just repeat that? Because the NPA numbers are really low there.
Yes. I will tell you, this is absolutely, it is exactly for 6 years period. From 1st July 2020 till 30th June 2026, 6 years period, we have sanctioned 14.74 lakh crore. That is the sanction we made. And disbursement in that sanction is 12.92 lakh we have disbursed. Outstanding in that book as on today is 8.94 lakh crore. NPA under this book is 5,486 crore, which is 0.4342%.
Okay. So on the corporate book also, there's been a good growth, no? Corporate book.
Yeah.
So where is the corporate?
We have grown more than 10% in the corporate loan book, and it is a very diversified sector. It is infrastructure is also sector. Within infrastructure, road is also there. Their ports are also there. Airports are also there. So that is one area. Renewable energy bank is has taken it as a champion sector. So we are taking good exposure in the renewable sector. Data center also bank has taken some exposure. LRD is also there. The steel industry also some financing we have done. Then the real estate, warehousing, metals and minerals, a lot of activities, agriculture, trading, petrochemicals. So very diversified sanctions we have done in this quarter also and last financial year also.
Okay. One last question on the AI. What is your expense? What is the money you have set aside for your AI expenses?
Total IT and the digital budget, which we have kept it in this financial year is around 3,500 crore. Last year also it was 3,500 crore and 82% of the utilization happened. And that is the budget which we have kept for this financial year also. That is for augmenting the entire IT sector, IT digital, AI, GenAI, lot of activities which the bank is doing it. That is the sanction and that the approval bank has, board has given.
As a result of AI, will there be any job losses or reductions in employee,
No, madam.
No. Thank you so much.
Thank you.
Yeah, we'll take Miss Archishma. Yeah, Miss Archishma from Money Control.
Sir, congratulations on a good set of numbers. I just had one question. I just wanted to understand the traction that the bank would have gained from the ECLGS 5.2 scheme. How much has been dispersed, and how many people have sort of approached the bank for these applications, and what is the pipeline for the future?
See, we have eligible base is around 40,000 crore, which the people are eligible. And total application which we have received up to 20,300 crore now, up till now.
Right.
In that, we have given the sanction up to 15,856 crore.
All right, then there you go. So that's the update coming in terms of PNB numbers, and that's the management talking about that as well. Some places where they don't see some concerns about line items, but let's also talk about HDFC Bank that's reported its numbers. Now, when you talk about the net profit figure, there's an uptick of about 5% coming in on a year-on-year basis that you're looking at. When you talk about NII, that's risen 6.7%. So healthy growth coming in terms of the NII as well. And that's when you talk about the gross NPA figure as well, 1.17% versus 1.15%. Net NPAs at 0.41% versus 0.38% as well on a quarter-on-quarter basis. And when you talk about just the provisions as well, you're looking at somewhere close to 3,000 crore rupees versus 2,600 crore on a quarter-on-quarter basis. And when you talk about on a year-on-year basis, that compares with that 14,400 crore odd figure on a year-on-year basis for provisions as well. So that's the number that you're looking at. When you talk about HDFC Bank as well, and there's ICICI Bank that's also reported its numbers. But, first, when you talk about HDFC Bank, it's quite in focus on the back of that profit figure as well, with that 5% uptick really coming in. And when you talk about some of the expectations as well in terms of the numbers, now what we were expecting in terms of the credit deposit growth was to be in double digits and the NIMs to broadly remain stable around 3.5%. Some of the key monitorables, of course, are the NIM guidance. That's something we're going to be watching out for, and the CEO reappointment as well. But before we do that, we'll also get in Piyush with some of those details as well in terms of how the numbers are looking broadly, Piyush. And it's looking like a very interesting set right now. When you talk about that profit figure as well, that really stands out in terms of that 5% uptick there.
Absolutely. HDFC Bank, strong set of performance. In fact, NIM has risen as against the expectation that it could contract by a few basis points. So the bank has been able to grow its net interest margin quite good in this quarter. The estimate was 4.18. It has come at around 4.36%. Now, the bank has also beat the estimates when it comes to the net interest income, which is the difference between interest earned and expended. The estimate was that the NII could come in around 23,813 crore, and the actual NII growth was NII stood at around 24,385 crore. HDFC Bank's this was for ICICI, my bad. HDFC Bank's NII grew 6.7% to 33,534 crore in Q1. The provisions also have risen. It is at around 3,060 crore versus 2,610 crore. Gross NPA, a slight uptick, like we have seen in the case of Axis as well. Even in Kotak, gross NPA ratio has risen slightly, but this is also, we have to understand that, over time, the private banks' GNPA, the headline numbers have gone to such low level that, a few basis point uptick, we can't really, and HDFC Bank has a lot of loans, on its book. 20-30 odd lakh crore. So relatively a strong performance. NII growth is strong, NIM has improved, and asset quality largely stable.
No, absolutely, and that's what you're looking at in terms of some of the numbers as well. Now, Piyush, like you mentioned, it's actually quite important to watch out for that NII growth number as well. That's remained quite resilient at nearly that 7% despite the rate cut environment. So that's something that you're looking at. And we'll get you some more insights in terms of the NIM trajectory and what's the kind of expectation that's really building up when it comes to that as well. When you talk about asset quality as well, you do have the gross and net NPAs, like Piyush mentioned, that inched up, sequentially. But the emerging stress in specific portfolios is something that really needs to be looked at closely as well. That said and done, let's also talk about ICICI Bank, because this is the day when you do have some of those banking behemoths reporting their numbers. And when you talk about the numbers in terms of the comparison versus estimates, it's shaping up to be quite an interesting set for ICICI Bank as well. When you talk about the net profit, that's risen about 16%, and that compares with somewhere close to 12,700 odd crores in terms of the year-on-year figure. When you talk about NII, you're looking at 13% uptick coming in, so quite the double-digit uptick coming through. When it comes to this one, gross NPA, it's about 1.38% versus 1.40% as well, and compares with an estimate of 1.45%. When you talk about net NPA as well, you're looking at about 0.35% versus an estimate of 0.37% as well. Quite the interesting set of numbers here when you talk about this one as well, Piyush. Let's talk about the fine print and how it really compares, measures up against some of these expectations.
So above estimate results again for ICICI Bank. The gross NPA, this has come down below the expectation. It's good. It's at 1.38 against the estimate of 1.45%. The net NPA also has come down below expectation. It is at 0.35%. The operating profit has risen handsomely, which is before the provision, pre-provision operating profit has improved to 20,386 crore versus the Bloomberg estimate of around 19,278 crore. NIM again has improved for ICICI Bank, one of the few lenders which has been able to keep up its NIM and post above estimate NIM at 4.36%. Asset quality wise, the bank has done well. The growth in both loans and deposits have been in double digit, and margin has improved. So overall, a good set of numbers for ICICI.
No, absolutely, and that's what it's looking like at the first cut as well, Piyush. When you look at ICICI Bank in terms of some of the numbers as well, it's actually quite interesting to watch out for some of the commentary coming in when it comes to the NIMs as well. That's something that we've been hearing, that it's going to be quite important as well. When you talk about some of the key parameters to watch out for, there's actually a bunch of things that you've seen as a theme also emerging across banks as well. And the deposit growth seems to be improving. The NII seem to be largely resilient, and that's been the case. When you talk about HDFC Bank, when you talk about ICICI Banks as well, some of the biggest banking names also reporting that strong resilience coming in despite the rate cut environment, despite all of the complexities that you had coming in this particular quarter as well, and the asset quality also definitely in focus. So really a lot to watch out for, Piyush, when you talk about some of the commentary as well coming in. Of course, the NIMs, something to watch out for. The business growth for sure is going to be something to watch out for. And when you talk about HDFC Bank, apart from the GNPA and NNPA figure, you do have some of those line items that would remain in focus as well.
In fact, Shreyansi, absolutely. HDFC also has this big overhang on its head that who will be the CEO,
boss.
because Mr. Shashidhar Jagdish and the current CEO's term ends in October, and it was expected that the bank could, recommend his name to the RBI. We are not aware if it has done so. At least it has not reported that on exchanges. But HDFC Bank, sure, the CEO, this clarity is needed. The bank management guidance on NIM, like you rightly mentioned, will be keenly eyed. HDFC Bank has seen a phase of slower growth, after the CD ratio inched up after, absorbing erstwhile HDFC with itself. High cost borrowing had gone up. The bank had seen, the NIM come down. Historically, HDFC's NIM has been above 4%. The bank has been struggling to go to that level. But so the NIM guidance by management, the deposit accretion, whether the bank will open more branches to, mobilize more deposit, and how much it has gained from the FCNRB scheme. These are some of the important monitorables for HDFC.
No, absolutely. And lots of pointers to really watch out for when it comes to this one as well. Piyush, when you talk about the profit growth, that's remained largely robust, and that's across businesses that you're looking at when you talk about ICICI. The NII has outpaced some of those expectations despite the rate cycle. Like I mentioned, the margins are expanding despite some of those easing interest rates as well. And that's why the margin figure is also in focus, in addition to the asset quality remaining broadly stable as well. In fact, we have Mayuresh Joshi joining us yet again. Mayuresh, thank you so much for taking time out. It's a very, very interesting set that you're looking at when you talk about HDFC as well as ICICI. First, let's talk about the expectations that we had for HDFC Bank as well, and how you're looking at the first flush of numbers.
No, pretty much in line with estimates. So I think if you probably look at both the banks, they've delivered in-line set of numbers, and that is what the street will probably take relief from. That there is no significant deterioration as far as asset quality is concerned. NIMs broadly remain in line with expectations, and generally I think the trend probably seems to be on track as far as the street expectations largely as a consensus, if to be believed.
Mayuresh, when we talk about HDFC Bank, sure, the numbers are in line as per estimates. One, do you feel this CEO, uncertainty about this current CEO continuation, will this have an overhang on the bank's shares when trade starts Monday?
No, so I think it will have that is probably an overhang, and that will persist till you hear some announcement. And there is a game of roulette going on as we speak among banks, as there are a lot of there's a lot of shuffling happening as far as the top management is concerned. It remains an overhang, but I don't see that to be a concern on a structural front. So I think as and when this probably gets resolved, I think it should probably revert back to how core earnings will probably move.
On the asset quality front, we were just discussing, the numbers, GNPA, NNPA ratios are so low, even 2 bips uptake, how should we look into it? Because Q on Q, the HDFC's GNPA has risen by around 2 basis points to 1.17. Is there any material, concern over here, or this is business as usual and numbers are still good?
No, I think that it should not be a concern at all. I think it's just a very, very marginal stake. Looking at the base and the size of the bank it operates out of, I think that absolutely will be taken into stride. So I think this number is absolutely of no concern in my opinion.
Right. What would you watch out for from the management commentary, whether it would be on deposit growth or on succession? What would be your focus?
No, so 2-3 things, right? One, the succession plan thereof, I think, and the timeline that they're probably expected to do the same. The second, obviously, I think as a common thread that I discussed earlier as well, I think is also going to be deposit growth, because that is going to be extremely critical at the juncture at which all these banks probably are. The slippages, I think, how are the slippages placed as we speak? The sectoral exposure in terms of risk-weighted assets. And therefore, I think the kind of provisioning and a marginal hit in terms of NIMs that can probably happen in a phase if aggressive riskier lending probably takes place over the next 2 quarters to probably balance growth in a more sustainable manner. And therefore, I think these 2-3 factors is something that will be a common underlying thread for most of these large private banks.
Absolutely. And speaking of common threads, let's also put all of this into perspective as well, Mayuresh. When you talk about ICICI, it seems to be leading on profitability, HDFC on scale. Let's also get in that sense going in terms of ICICI Bank margins as well expanding while HDFC margins largely remain stable. Let's talk about ICICI Bank in terms of those numbers as well. How are you looking at all of this? How do you think they measure up against the estimates as well?
I think very decent set of numbers, and they're having a very calibrated approach in terms of growth versus risks, and that is obviously starting to play out very decently over the last few quarters as well. So I think a very, very decent set that has probably come through. Sort of the large banks, I think, if I have to stack it up, I think ICICI Bank probably seems at this juncture prima facie to be one of the better numbers at play.
Absolutely. And, when you talk about the entire gross NPA improvement as well on a sequential basis, you do have the net NPA that is also edged up. Provisions increased sharply on a quarter-on-quarter basis. Are you looking at this as a prudent normalization then of provisioning, or do you think it reflects a little bit of emerging stress in any specific loan segments, any line items that you're watching out for in the commentary as well there?
So honestly, I think I haven't looked at the broader presentation that the bank has probably given. So I might need to look at that before I probably comment on this. So not really sure in terms of how the sectoral trends are probably played out.
Absolutely. But then in terms of just the commentary as well, and we've been talking about this for a bit right now, Mayuresh, in terms of some of the other banks, and you've highlighted some of the things that you're really watching out for in terms of their commentary as well in the con calls that are lined up later in the day, and there's quite a few of them. But, when you just talk about ICICI Bank as well as HDFC Bank respectively, what are the kind of, monitorables that you have in terms of the management commentary there?
No, so two things. One, I think the banks have got an extremely heavy base now. So I think how and in what aspect is the growth going to come from? Sustainable growth, calibrated growth, so without creating stress and pressure on the balance sheet is obviously something to be watched out for. Second, I think in terms of maintaining their NIMs to a large extent, I think that prudent treasury management is going to be extremely critical in periodicities where volatility will probably be key, at least over the next few months. And the third aspect, obviously, I think we're talking a lot about the management changes, etc. I think you need to have those aspects clear off over the next few months so that you have a very clear vision on the management strategy coming forward. And last but not the least, I think in terms of expectations of growth, are the banks probably looking at calibrated growth and not taking a riskier approach to expand their balance sheet in a very aggressive fashion compared to the competitors and peers who might be doing that? So I think the bank which probably sustains all these factors put together, in my opinion, might actually emerge as a winner in this sector over the next few quarters.
Absolutely. And Mayuresh, right before we let you go, there's been a lot of numbers that you've been passing through as well when you talk about across some of the segments as well of banking as well. And when you talk about your closing comments, just quickly wanted to get a sense of what you're thinking about the key monitorables that we've talked about earlier on the show as well, that being NIIs, NIMs, and some of the trends and what they're reflecting for the entire banking space as a whole, and anything that you're specifically watching out for come Monday.
I think the common thread is pretty clear. It has remained strong. It is expected to remain strong. But at what expense does this credit growth come, right? I think that is one key monitorable to be watched out for. Asset quality largely seems to be stable for most large private sector banks. So I think the risk management probably seems to be on track. Obviously, in terms of implications of how the NIMs will probably play out, in an environment like this and with global volatility around, I think the NIMs are expected to be reasonably stable as we speak, with prudent treasury operations also. I think the expectations in terms of reasonable balance sheet growth for most private banks, or the banks which have probably reported today, seems to be a base case scenario. And therefore, I think the markets will take these results, in my opinion, quite positively as we open up on Monday.
Absolutely, and especially the two biggest names as well, some bit of resilience that we're seeing against otherwise very difficult odds stacked against them. Thank you so much, Mayuresh, for taking time out and joining us this afternoon. So there you go. That's HDFC Bank as well as ICICI. You do have ICICI leading on profitability, HDFC on scale as well. and margins expanding when it comes to ICICI remain stable against an otherwise difficult environment when it comes to HDFC. Time for a very quick break. More news and updates on the other side.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to just get a point of view as to how different jury members were looking at various participants and, the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered on it. They had thought about change, they had thought about resilience in their own businesses. So the soft factors that they eventually chose the winners with is something that stood out for me. In fact, when we were actually doing the work, if there was a governance concern or any of the nominees, they were struck down.
Forward.
First, I will give you the number, which is sanction which we did last year and before the previous year. And in that, how much disbursements are pending. If you recall, we had mentioned that last year, total corporate loan book sanction was 4 lakh crore. And 24-25, the sanction was 2 lakh crore. Out of that 2 lakh crore and 4 lakh crore, the disbursement which is pending is 78,700 crore. And this year also in the first quarter, we have given a sanction of 95,500 crore in the first quarter itself. And there also 58,000 plus, I think 58,800 crore disbursement is pending. So if I see the number which is pending for the disbursement, as on today, it is 1,37,500 crore. That is the disbursement is pending for which the sanctions are already there now. So bank has got a good pipeline, and still we are having around 25,000 to 30,000 crore in the kitty, which we are going to give the sanction in the next week. So weekly our committee sits and give the sanction. This year also we will be crossing more than 4 lakh crore of corporate loan book. And we have shown a growth also. You see the growth is around 10% in the corporate loan book.
Okay. And my second question is regarding the ECLGS scheme. So how much has been lended under that scheme, and any targets for this portfolio going forward?
We have eligible cases under that scheme is 40,000 crore. That is the customers, they are eligible up to this amount. And we have already given the sanction of 15,800 crore. In that, disbursement is already happened to the tune of 12,335 crore. But still, I think another around 20,000 crore is yet to come.
Okay. Okay. Thank you.
Okay.
Thank you.
Thank you.
Yeah. Mr.
There you go. So that's the commentary also coming in terms of PNB management as well, talking about the growth outlook going forward. But let's also shift away from the entire gamut of earnings that we've reported when it comes to the banking space. Talk about the IPO market now that is showing signs of life again after months of being selective. That is, investors seem willing to write checks once more, strong listings, healthy subscription numbers, and a steady pipeline of new issues that have lifted sentiment across the primary market. And it's not just the main board space. You're talking about SME IPOs that are seeing renewed interest as investors are chasing growth stories and listing gains. In fact, Sharad Dubey gets us all of the buzz in the primary markets as well.
So welcome to the IPO jungle, and why I'm saying this is because IPO market is roaring back, right from what it was like a meow 2 years ago. Now it's roaring back. Why is it doing that? That's important. Let's have a look at it. SBI funds, recently we're talking about the IPO. The bid which has come in, that's 3 lakh crore rupees. Again, there is fire in the IPO markets. Of course, Reliance Power was the highest, 7.5 lakh crore, followed by LG Electronics and Bajaj Housing. Another important data I would like to talk about is the SME market. The IPO sentiment is back in the SME space as well. Recently, Millworks Tech came out with its IPO, and second highest ever bids have come in, and the amount is 22,000 crore rupees. Can you imagine that for an SME IPO? And the BSE SME IPO index, interestingly, that has also gone up almost 35% from March lows. That means the sentiment is roaring. Also, what are the factors, helping this primary markets roar back? Strong DIFI support. Companies are focusing more on path to profitability. Even valuation cuts are happening. Astute investors, mutual funds, family offices, they are taking positions in SME IPO. Also, the appetite for larger IPO issues is increasing. That means not so much of a liquidity concern and fairly priced IPOs and the grey market premium, which is what we are seeing in the markets. Also, the merchant bankers, that's where we see that number has also gone up. Just compare that for the last 26 years, the merchant banking registrations is 244, and look at the issues, it has doubled up in the last 26 years. We have been comparing these numbers. But what lies ahead? That's also important. What are the key IPOs to look forward to? And this year is going to be very busy for us as well as the entire ecosystem in the primary markets. And look at the larger names: Reliance, Jio Platforms, NSE, Zepto, Parle Products, Manipal Health. All of them we'll be tracking and showing you that primary market is back and the jungle is roaring.
Absolutely, and the good news is that the jungle is roaring. Lots of work for you there, Sharad, and thank you so much for getting us that update as well. It's time to wrap up the show right now. Quite a power-packed show. Thank you so much for tuning in.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources are all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of the choice that we made.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade. Spots.
Vikash Kumar Jain, Managing Director, Head of Research and Strategist at CLSA India, Johnson right now on the show. Vikash, thank you so much for waiting by. We wanted to start this conversation maybe a few minutes earlier, but I think there's a interview going on which had some technical glitches and therefore we had to finish it. But good talking to you today, Vikash. And I wonder if 3 months is a lifetime in the current scenario, and is your belief around what equity markets the world over and equity markets in India might do as a result of this being out? Because I remember, Vikash, the last time you made this comment that some of the global guys are telling you that, hey Vikash, even if you don't attend the office, we will not notice you, that you've missed the office. So has that changed now?
Yeah, thanks for having me, Neeraj. Yes, it has changed, and the easy part about that answer is you don't have to talk to me to get that answer. You can see that on the screen. And the way you see it is actually not that obvious, because if you look at the last quarter, India is still a rank, April to June, a rank underperformer when it comes to EM and Asia ex-Japan. But that headline hides much more than what it reveals, because if you go a little deeper, then and look at all large markets in the world, and there are of course these two markets which are on their own, in a different orbit altogether, which is Korea and Taiwan. If you strip that off, India has done better than all other EMs, other than Thailand, which is slightly better than India. So every other EM, which is China, Brazil, all the others are right on the other end of the spectrum, did not do very well in the last quarter. India did much better than all of them. So I think from the point of time where if we looked at this same number in the Jan to March quarter, India was the rank underperformer. Only Indonesia did worse than India. So that's a huge improvement. Yes, around the time of early April, when after about 18 months or so we turned bullish, at least when we were talking to our foreign clients, I was finding comfort in the fact that I don't have to put myself into their shoes when they ask me that, will India outperform EM and Asia? And I used to say that my job is to ensure that your India money outperforms the benchmark. The difficult one will be whether it outperforms Korea and Taiwan, and that's how it has been. But our opinion has all from that point on turned that if you want to find anything beyond the very obvious AI trade, when I say Korea and Taiwan, it's largely 3 or 4 companies that we are talking about. So India did better than those largely 3 or 4 companies. is great improvement, the way I see it. So, but a large part of that, in fact, in the June month, India has now outperformed DM and Asia ex Japan benchmark for the first time in 5-6 months. So yeah, we are turning the corner, but we're doing it quietly, and that's why you're not seeing such big headlines yet.
Vikash, hi, Alex here. Just wondering, in the context, and you've spoken about the relative performance of India and South Korea. People are worrying, right? Investors there because of the way that things are devolving very, very quickly. But having said that, the macro setup as things stand right now in the middle of July looks significantly better than it did look even 2 months back for India, doesn't it? And from that perspective, with earnings ramping up with the pace that they're coming through, and if the initial suggestions are accurate and more companies will surprise on the upside than not, then the path ahead for FY27 doesn't look so bleak on the earnings front too.
Yeah, I think some of those reasons, Alex, were the reasons why we turned constructive and quite bullish on India at the start of April. I would say that yes, you make a comparison versus 2 months ago, but I think the macro setup has slightly deteriorated from where it was about a month ago. About a month ago, when we were talking of a peace deal and a clear setup and no worry around that, then the setup was far more clear. We were far more bullish, and it was an easier thing to know the sectors to bet on. Right now, it's got a little bit more clouded because the uncertainty on when this peace deal is off for sure. Now, when will peace actually return? Is that uncertainty? So, from a perspective of portfolio construct, yes, we need to be bullish, but there is a far bigger need to hedge our portfolios than how we were feeling, say, about a month ago, when peace had started and it appeared like it would be more durable. So yes, we've gone through this volatile kind of a setting. Sometime in April, May, things look really, really bad. India did a pretty good job in terms of holding itself together in the middle of that crisis. In fact, we did pretty well in terms of managing that crisis. June onwards, things started looking up quite a lot. And July, it's again got a little bit more clouded, nowhere close to as bad as March, April yet. But yes, we need to be a bit more careful.
Kash, there's an internal debate that we've been having, and I invite you to weigh in on that. My view is that as uncertain as things are, and you're right, it's this current peace deal is off. It's not going to get as bad as it did when you had crude at 120 and fear of nuclear war and the Gulf states getting bombed, etc. We learn to live with this version of it. Do you think that's being overtly optimistic?
So, Tamanna, I would like to say that there are times in the market when you can say that I cannot speak for this in a lot of confidence. I think this is one of those questions, and therefore, I would not want to ignore the implications of that when building my portfolio. So, I would say that I am far less comfortable on the lasting nature of this trouble ending as I was in the middle of June. And the reason for that is we are far less protected now if this continued for another 2 months or so. Because of the way we've aggressively eaten out of the inventories in the developed world. If this continues for the next 2 to 3 months, then I think consequences can be really dire. So we cannot ignore that. The other thing is the intensity of the language and the way it has turned when both of these countries are talking about each other just makes me a little bit more worried. And finally, if, because we're dealing with, on the one side, a democratic nation where there could be important elections coming up, and the other side knows about it, that if it can just hold on closer to that elections, then it might be able to create more trouble. That just makes the situation that much more complicated. So all that I'm trying to say is that I would definitely want to be, I remain optimistic, remain positive, but I would still want to guard our portfolios from those potential risks. Basically, on this point, I would just want to say that maybe I don't want to take a call, and I just want to, I'm a little unsure about it.
Yeah, fair enough. Okay, in that backdrop, so turning constructive on India relatively, this uncertainty prevails. What looks like a good idea to you right now, Vikas? Are you looking at some of the IT results and saying that, hey, maybe there's a turnaround there? Are you looking at BFSI and saying there's a safe spot? Are you looking at sectors maybe that the government wants to give a boost to, like we've seen with EMS players today?
Sure. So if we look at the setup that is likely to sustain for the next few months, there are two parts. One, of course, we just spoke about, which is we need to protect our portfolios from those potential risks. On that bit, definitely, I would say that we need to have some exposure to commodities because at the same point of time, what has happened is some of these commodities, which are, you can say, more war sensitive commodities, which is say crude oil or which is aluminum, they've corrected quite a lot, and some of these commodity related equities are actually pricing in even levels where I would say even if the world were to end, they would not see a lot of downside. So that's the part of the hedge part of the portfolio. Then if you look at the other part of the portfolio where we kind of start seeing a more improved macro domestically, the first thing that comes to our mind is the setup around financials. Now, this is a very interesting point where what might happen is that chances of an RBI rate cut looks quite unlikely. And at the same point of time, RBI might take time to maybe have any kind of a rate hike as well. So we are in a bit of a pause where all the rate action has already got priced in terms of NIM contraction for large private banks. And on the other hand, now, because of some bit of increase in inflation, you could see higher credit demand in terms of working capital, etc. So that's a great setup for private banks. And rather oddly, this is also not a bad setup for NBFCs if the war situation doesn't go out of hand, because that will mean that yields cool off. So we will have no rate cuts, but we will have some kind of a cool off in yields, and that might also help some of the NBFCs as well. So that's not a typical kind of thing which happens concurrently, but that's the kind of setup that we are in terms of financials. So financials is a space that we like. I would say, other than that, selectively trying to pick discretionary names where, number one, the dependence on war isn't really that much, and number two, I would say they are more protected in terms of margins. So that could be some bit of auto names, some bit of quick commerce and retail names where they're not so dependent on war-related inflation. Those could be other areas that we are looking at. And finally, if markets are all right and some beta returns, then we'd want to play that beta through real estate. That's how we are positioned in our portfolio. And that portfolio has done a reasonably good job in the first half of this year.
Vikash, let me quickly ask you, and you've described all of this pretty well and all of the rationale as well, but this whole data center compute, give me a count.
Right, we're joined here by the Ministry of Electronics and IT, the Secretary for the Ministry, Mr. S. Krishnan. Thank you so much, sir, for taking time out for NDTV Profit. We're, of course, here to discuss a myriad of issues. The first and the most recent being the development around the cabinet approval for two schemes roughly worth 2 lakh crore rupees, the larger one being, of course, the Semicon 2.0 that has come out. Sir, talk to us about what learnings we've picked up from the first Semicon and what are we going to implement in the second iteration of this much larger scheme that the government has now come out with.
I think Semicon 1.0, the biggest success was that we were able to establish that India could be a location where advanced manufacturing can take place, particularly of semiconductors. It's the first time that in India, large-scale commercial manufacture of semiconductors is being successfully done. And that actually lends a lot of credibility for India as a location and as a destination for investments in semiconductor manufacture. I think that is significant not just for the country but for the world as such, because it diversifies the supply chain. So that is the first and most important message that I would like to highlight. Further, the need to take an ecosystem-based approach to semiconductors was the other important learning. Third important learning was that in the design-linked incentive scheme, it is essential to provide larger volume of support, not necessarily as a grant or as a subsidy, but even as investable resources. We need to crowd in more investable resources in order to enable some of these companies to really grow. Otherwise, they would just be absorbed by global entities and other companies, and therefore it's important that we provide them an opportunity to truly grow. So these were the 2 or 3 key learnings which we have brought into Semicon 2.0 in its design itself.
To that last point as well, to that effect, the government is also co-investing with certain chip design startups. That is also a difference in approach that has come up, because that is essentially to boost domestic ownership as well in these companies that, like you said, might get absorbed in the larger scheme of things. Very interesting one, sir. The other one is, of course, the MPMS, the mobile manufacturing scheme that has come out. Talk to us about, sir, is this PLI 2.0 that we're talking about when it comes to smartphones? What's the difference now? Why have we gone with a different thing?
No, I think the idea is that the emphasis in this scheme is a little different. The way it is structured is different. Again, we've learned lessons from the first scheme as to what has worked and what has not worked. Okay. And we believe that this would be a more focused scheme intended to build competitiveness in India as a location where manufacture of an advanced electronic device like a mobile phone can actually take place. I think the fact that India is a location, is the second largest mobile phone manufacturer in the world, and many leading mobile phone brands are actually made in India and labeled as such, is something which has truly lifted the perception about the country globally. And I think it's important to preserve that, and it's important to maintain competitiveness in that sector. So I think that is one of the key objectives behind this particular scheme, to preserve the competitiveness. And the second thing that we have sort of focused on specifically in this scheme is to ensure that we try and support an Indian brand, at least 2 or 3 Indian brands to come up. Since, as you're aware, Indian brands did have a role till about 6 or 7 years ago, and then slowly their market share has been declining. Part of it is because they've not kept up to date with the latest technologies. So I think today we now have greater capacity to actually manufacture in India through not just manufacture, but to design an Indian brand and make it sell globally. So in that sense, that is the second pivot that we've made in this scheme. If you look at the way things worked, say in China, I mean, it was after the ecosystem of Apple got built up there that other manufacturers and other Chinese brands developed. There's no reason why India can't follow a similar path.
Interesting. So more brand India, more brand Bharat phones is what we can expect from this particular scheme. Very interesting one, sir. The other issue that has come out in terms of India's digital ecosystem is, of course, the usernames issue. The media has sent out notices. You have received responses, sir. I understand it is currently under examination, but what has been your sort of initial assessment so far? Have you asked for more?
Different companies have given their lines of reasoning and different aspects. So we'll have to consider it in the light of that and seek any further clarifications if we need them before we finally take a call on that aspect.
Right. So with Meta, another aspect on CSAM, child sexual abuse material, has come up, and in an investigation that NDTV did, what we found was that for as low as 50 rupees, access to such material is widespread, and this is across platforms, across all sorts of big tech platforms. Now, we have enough laws, right, to govern all of these. How do we, again, hold them to what standard they should be held to?
You see, there is zero tolerance as far as CSAM material is concerned. The law outlaws it. I mean, there is clearly section 67B of the IT Act, under which it is not permissible to carry material of that kind. There is no protection of safe harbor, etc., when that kind of material is carried. And if anybody finds it, they should immediately report this as a cybercrime, as a violation of the IT Act, and action will be taken, strong action will be taken.
The entire point, sir, is that the fact that the user has to report it means that it has already reached or it has already potentially caused damage to certain people, right? Don't you think with the systems that these companies have already, with the sort of valuations also that they command, that they should be able to nip this in the bud better?
They are expected to do it.
Okay.
And if they fail to do it, then they, as much as the person who posted it, is liable.
Exactly. All right. Sir, what we also have coming up and what you've also hinted towards is a separate law around artificial intelligence. Could you give us some sort of a contour around what the government is thinking around that?
See, I think the important thing you have to realize is globally there is increasingly a belief that there needs to be some regulation on what happens in AI. Now, if you recall, about a year ago, the loudest voice against any kind of regulation of AI was the United States.
Yep.
But today, when they restrict access to certain types of models, then clearly that's an act of regulation. So it sort of gives us a signal, clear signal, that globally we need to start thinking about these aspects, saying what are the kind of safeguards that different models need to have, what are the guardrails they need to follow, and when are they safe to be used, what are the risks if they fall into the hands of bad actors. So all of these aspects need to be considered. So which is why I think increasingly it's a global recognition that some form of regulation would be necessary. Of course, I think our stance still is that regulation should not stifle innovation, and innovation should go on, which is why it needs to be a very carefully calibrated set of measures, and also something which will keep pace with technology, which is not something which will be overtaken by technology very quickly, and at the same time will not stifle the growth of technology. So it's a very, it's a very fine line that we need to tread, and which is why designing such a law is a challenge and will take some time.
So we're also taking very active part in Pax Silica, for example, engaging with the US and that set of countries. We're already in talks with the EU, TTC. Are these AI law conversations that are happening abroad as well? What are we taking from those?
I think we are very much part of global fora which are looking into these issues relating to how technology is used, the way we can collaborate on technology, and an incidental aspect of this is what would be the kind of regulation. So I would not say that regulation is a single dominant feature of these conversations. In the case of Pax Silica, it is basically building capacity and making sure that resilient supply chains are built around semiconductor chips, AI technology, and critical minerals and so on, so that we have a very stable and resilient supply chain. Likewise, with the European Union, many of the conversations are, how do we do capacity building in both countries? How do we share technology? All of those are the more constructive and immediate aspects we're dealing with. Incidentally, as part of these conversations, we also exchange notes on the status of where they are on regulation and what their thinking is and how they go about doing it.
Right. So talking about another global sort of regulation that is coming up, and talking about safeguarding younger users, is the proposed social media ban for those under 16, and a lot of countries have implemented it. The Prime Minister was recently in Australia. He said that India is learning from Australia on that front. What's the thought that the government has on that front?
I think clearly we need to study what the experiences across various countries are in terms of what they have attempted to do with social media. It's a matter of concern. It's a matter of global concern. We find this raised in many fora, globally and in the country. Globally, in our conversations with our interlocutors from Europe and other parts of the world, clearly there are concerns on the way that social media has emerged and the risks that it poses. Within the country, in parliamentary standing committees, with various other organizations tasked with protecting human rights or protecting child rights, all of them have been raising concerns about, exposure to social media and what can be done to limit it and so on. So we will have to, it's clearly an issue which is very uppermost in people's mind. So how exactly this needs to be approached is something that we will have to examine. We are in the process of discussing with a range of stakeholders to understand how this can be handled.
Very interesting. Lastly, sir, you have a lot of, in the past you've mentioned that India will be stress testing its system against these various models that have come up, much more advanced models that detect various flaws in cybersecurity. Where are we when it comes to having already stress tested it with whatever we have access to already?
We have been at that exercise for more than a month now, and Certain has set up a sandbox through which, where they have put in about 9 to 10 models, open source models plus 1 or 2 Indian models, and those are then posed against the various kinds of software and code that we have for many government applications. Close to about 500 different applications have been tested or in the process of being tested. A number of vulnerabilities are identified, then the concerned agencies are informed of the vulnerabilities and they're asked to address them. So it's an ongoing process.
Interesting. All right. Thank you, sir. Thank you so much for your time. Viewers, this was MeitY Secretary S. Krishnan talking about myriad issues, talking about India's electronics manufacturing roadmap as well. Stay tuned to NDTV Profit.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vachrajani, and this is a show where we talk about personal finance a lot more beyond stocks. We talk about mutual funds, insurance, etc. And today we're going to talk about international mutual funds. You know, with every social media post, with every reel, we've heard as to how you can go ahead and invest in these funds. But it's also important to discuss as to what are the routes by which you can do it. But at the same time, you know, as per recent developments, we've seen that international mutual funds have kind of cooled down in terms of where the rally goes. Of course, in the past, they've given stellar returns, but their momentum is kind of cooling off. And to take this conversation ahead, we're now joined by Rushabh Desai, who's the founder of Rupee with Rushabh Investment Services, joining us now. Rushabh, always a pleasure speaking to you and having you on the show. I think I'll ask by, I'll start by asking the question with regards to international mutual funds, right? Ki, if the momentum has been reduced, what is the reason behind it, and what should one look at right now if they are foraying or exploring international mutual funds?
Hi, Mahima. First of all, thanks so much for having me on the show. As you correctly pointed out that, of course, yes, the momentum has been lost, particularly the upwards momentum in most of the emerging and developed economies, including the US. Now, there are 5 key reasons why the upwards momentum has been lost in the international markets. Number one, of course, as you also pointed out that, you know, over the past 1 to 2 years, the rally has been stellar. The returns what international mutual funds have delivered has been exceptional. So number one is the stretched valuations. Okay, valuations have gone way above their long-term averages. Unfortunately, the earnings growth have not been able to catch up as per the current stretch valuations. This is number 2. Number 3, the market breadth has been quite narrow. What I mean by this is that liquidity has been pumped in only a handful of mega tech stocks. Okay, so the overall market breadth, if you see, has been quite weak, but there have been very few sectors and very few stocks within those sectors, particularly the tech sector and tech stocks, where there is a lot of liquidity and there has been an immense upside rally over the past 6 to 12 months. Number 4, Wall Street banks have flagged rising froth in the valuations and the risk of correction. That is why a lot of institutional investors have become quite cautious at this point of time. And importantly, the Iran-US war has spiked oil prices, and the lingering tariff uncertainties, all of this put together has kind of stopped the upwards momentum rally in most of the international funds.
Got it. So I think you mentioned valuations, Rishabh, and that's not just one thing that people are looking at in the international space, right? There's also volatility. I mean, just talking about how Kospi has done over the last so many days, right? There's been so much volatility. That's also one thing that people need to consider when they are considering international mutual funds, and that's because of course, geopolitical developments also happening in a lot of markets. If somebody is looking at these funds, considering that they are losing momentum, what should their decision be right now? Because it's always suggested that at least some portion of your portfolio should have international exposure.
No, absolutely. I completely agree with you that some portion has to be given to international mutual funds, especially the US markets. There are two specific reasons to this. One is that, of course, the uniqueness of the companies what the US markets possesses. US markets are, I don't need to describe, is the mother of all economies at this point of time. And of course, let's not forget that the dollar has been strengthening by leaps and bounds. Today, as we speak, the dollar, if I want to purchase $1, I have to spend 96 rupees to get $1. So of course, the earning growth, the returns growth, what US markets are giving, and plus the dollar appreciation, all of this put together, some 10 to 20% allocation needs to be given, definitely, yes. But at the same time, see, why would anyone want to invest in the stock markets? The major reason is to get returns, right? Now, if someone is unable to get superior double-digit risk-adjusted returns, then there is no point investing in those particular stocks or sectors or that area, right? Now, the best way to get superior double-digit risk-adjusted returns is to time it well. Of course, we cannot predict the market cycles, but we can definitely time it. Now, by timing, what I mean is that when valuations come close to their long-term averages, when there is a price correction pocket, when there is a time correction pocket, that is the time you need to invest in those mutual funds, in those sectors, in those geographies. That is the time you will make money down the line in the next 5 to 10 years. So at least at this point of time, I don't see margin of safety in international economies, particularly the US markets. And I don't see a lot of upside opportunity from this point of time as well. This is the right time to stick with India because India has underperformed over the past 2 years. Indian returns have not delivered that much. If you see, the Nifty 50 has been more or less flat for around 20 to 24 months. So I think if you want to make returns from this point of time, I see immense margin of safety in the Indian economy, and I see immense upside opportunity over the next 3 to 5 years. But at least at this point of time, I'm not recommending any of my clients to invest in international markets because of the stretched valuations as we speak.
Okay, and then for somebody who already has exposure, do you also reckon to the fact that this is not via mutual funds, just deviating a bit, but if they have stock specific exposure, it's time to book out?
Absolutely. If the returns in their portfolio, whether it is mutual fund stocks or any kind of offshore product through GIFT City or LRS, if returns have jumped to around 20-25%, 30% CAGR, then absolutely this is the right time to book profits. But again, if you are particularly talking about the US economy, if your time horizons is another 5-7 years or so, then just stay put. But if your time horizon is coming near, and if you need liquidity in hand, then this is a great time to book profits. Don't delay a single minute.
Okay, all right. The other aspect is, Rishabh, that that people have been talking about is the routes via which, if at all, they want to consider, investing in international mutual funds or international stocks. What is that route? If you can give us that entire perspective to our viewers, what is that route? What are the limits in place? There is, of course, LRS that comes into picture, and what should one keep in mind while doing all of this?
Mahima, there are three main routes to invest offshore. One which you just mentioned, which is the LRS route. Second, under the LRS, there is a unique parallel route via the GIFT City. And third is the mutual fund route. Of course, mutual fund route is the most convenient route for practically all investors out there. But unfortunately, there is a $7 billion limit in mutual funds that all investors put together across all AMCs cannot invest more than $7 billion. If the limit has been exhausted, then you cannot invest. At this point of time, as we speak, that 90% to 95% of international funds are not taking money because the limit has been exhausted. There are very handful of mutual funds, international mutual funds, which are taking money. And even within the handful, most of them are taking money via SIP route, not lump sum. So if someone wants to take proper exposure in the offshore market, in the international market, then the best way to go is via the LRS route and the GIFT City route, because there is $250,000 US of limit per person per financial year. So someone wants to invest, they can conveniently invest $250,000 per person per financial year. But again, as I mentioned before, that if you're investing in the equity markets abroad, this is not the right time. But if you want fixed income instruments in the US markets or in the real estate area, then of course someone can look into it. But equity, international equity is a big no, at least.
Okay, and this is from let's say 1 to 2 year perspective that maybe you are talking about. Correct me if I'm wrong here, but from a long term perspective, because I was looking at this HSBC global report which said that in the last 10 years, if we take a look at how different indices in the world have performed and as to what the 10-year CAGR looks like for Nifty try and BSE try, the average returns have been around 12 to 12.5% right? This is the 10-year CAGR that I'm talking about. Only two indexes have outperformed the Nifty and the Sensex. That is, one is of course Nasdaq and the other one is Nikkei. Nasdaq with around 17% CAGR and Nikkei with around 13% CAGR. So just wanted to get a sense that from a long-term perspective, because we've also talked about this, right, that you must have some exposure to international markets in your mutual funds. So somebody who is doing mutual funds from a long-term perspective, what portion of allocation should they look forward to, and what markets should they explore?
Mahima, this is a great question, because now there is a plethora of mutual funds, international mutual funds, what we have out there, and there are lots of new products via the GIFT City and LRS route which are coming up by different PMS players and different AMC players out there. So I think keep it very simple. I think the key is to keep it very simple, Mahima. There are only two economies what I am recommending to my clients. One is from a core portfolio point of view and one is from a tactical bet point of view. From a core portfolio allocation point of view, I think the US economy is the only economy what I would recommend which has delivered consistent outperforming returns on a 5, 7, 10-year rolling returns basis. So if you're looking from a long-term perspective, then US economy via S&P 500 or Nasdaq 100 should do the job. But if someone is looking for a tactical bet kind of investment, then Greater China region is something what I would recommend, which is China, Hong Kong, and Taiwan. As you would have already observed that Taiwan market on a 1 year basis has given around 150% returns. I mean, if you just look at around 2 months or 3 months back, the returns would have been probably around 200%. But keeping the correction in mind, even with the current correction, the 1 year returns in the Taiwan market has been around 150% or so. So I think tactical bet, keep it simple, China, Hong Kong, and Taiwan. From a long-term perspective, then US economy, which is S&P 500 and Nasdaq 100 is something what I would recommend.
Got it. The other factor, Rushabh, is that when anybody is kind of investing in international markets, there are certain things that he or she should be definitely tracking. Though it's from a long-term perspective and that you might think that you're just going ahead and investing in mutual funds, but I think it's important for anybody and everybody who is taking that exposure internationally should keep certain things in mind. Is there a checklist in place that one must consider?
There are a couple of things, Mahima. Number one is don't get carried away by looking at the past return. That is absolutely very important. See, if you want to make money, then you have to take contra bets, okay? So always play contra across geographies if you want to make returns. Now, what I mean by contra bets is that, say, for example, currently as we speak, US, Taiwan, many other emerging economies have delivered some superior returns. Around, say, 57% on returns on an average has been delivered over the past 1 year. And if you look at the 3-year returns, many of these international funds have given anywhere between, say, 20 to 40% CAGR, which is phenomenal, right? So if you are wanting to invest and make money, look at economies which are underperforming with strong fundamentals. So, for example, currently as we speak, the Nifty 500 index has delivered only 0.5% returns over 1 year, 1 year returns, 1 year point of view. And from a 3-year point of view, the Nifty 500 has only delivered 12.5%. So I feel that at least at this point of time, India is an economy one should definitely look at because it is underperforming. There is immense margin of safety and immense upside opportunity from this point of time. So play contra across different geographies, number one. Number two is don't go overboard. Because see, India is the fastest growing economy. So you will see more consistent returns in the Indian economy and in the US economy. Other economies would be practically more cyclical comparatively, more cyclical and more volatile. So if you are, investing abroad, look into two things. One is that core investment, consistent investment, which should be the US economy. And one is tactical allocation, which should be, China, Taiwan, Hong Kong, and other economies out there. So I think being very clear, not going overboard, playing contra, and I think sticking to your goal, risk appetite, and time horizon is something what I would highly encourage and recommend, Mahima.
All right, Rishabh, thank you so much for, putting those thoughts so clearly. I think for anybody who's looking at an international exposure now probably has answers to all his or her questions. So thank you so much, of course, for taking out the time and speaking with us.
Thank you so much, Mahima.
All right. With that, viewers, it's time to slip into a very, very short break. But on the other side, we're going to talk about two very interesting mutual funds. We're going to compare Bandhan Small Cap and Quant Small Cap. So do stay tuned in.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business owners?
Welcome back. You're watching Your Money Matters here at NDTV Profit. Now we're going to talk about two small cap funds that probably, every other person in India holds in their portfolio. We're talking about Bandhan Small Cap and Quant Small Cap. We're going to try to differentiate between the two and try to understand as to which one is more riskier, which one is more dynamic, etc. And to take this conversation ahead, we're joined by Harsh Kumar, who's a CFA and managing partner at Zwest Financial Services LLP, joining us now. Harsh, always a pleasure speaking with you. I think I'll start by asking the very basic question first, because when I was seeing at both of these, from my opinion, I think Bandhan is something which is more slightly process driven, whereas there's Quant, which is more dynamic in nature. What is it that differentiates the two as to when strategy comes into picture?
Right, Mahima. So just to clarify, both the funds follow a process. So let's start with that. So, so before comparing these two funds, I think it's worth understanding why this category has attracted so much investor attention, because everyone is talking about this category. Now, let's see the flows first. So if I look at last financial year, FY25-26, small cap category received second highest net inflows among all the equity categories, accounting for nearly 15% of the total equity net inflows. and it was second only to flexi cap category. If I go 1 year prior to that, FY24-25, again we saw small cap being among the top 3 net inflow categories. Now, what is the reason? Why so much of interest of investors in this? And the simple answer is recent performance. Now, if we look at the period from Jan 2008 till Jan 2020, which is a fairly long period of 12 years, Nifty small cap TRI delivered a return of only 3.1% CAGR, which is in fact lower than the saving bank rate of interest which you would have got during that time period. However, if you look at the return from the lows of March 2020 to the peak of September 2024, you won't believe the number. The index in itself generated 6-fold return, and which was a CAGR of 48%. So if I look at last 18 years journey, a substantial part of return or wealth creation in small cap has happened in only 4.5 years. And this 4.5 year period which has just gone by is the reason that investors are so excited about it. Now, before I get into these two funds, let's look at the category also. So there are total 36 funds in this category. Total AUM is around 4.3 lakh crore. And the biggest fund in this category is Nippon with an AUM of around 78,000 crore. Now, this category has a fairly long tail. And when I say long tail, let's see the numbers. A handful of mutual funds have become very large in this category, but there are only 13 funds which have AUM of more than 10,000 crore. Now, you may always say that, a lot of funds have been launched in last 2-3 years, and that could be the reason. But even if I look at marquee fund houses, ICICI Prudential, Aditya Birla, Sundaram, these 3 fund houses have small cap funds for last 18 to 20 years, and still the AUM is less than 10,000 crore. So setting this context makes us believe that Bandhan and Quant have done a fairly good job. Now let's understand what similarities and dissimilarities they have. So first look at the similarities. Both of these funds are fairly large in terms of their AUM, not just in terms of absolute AUM, but as a relative percentage of the fund house also, they are fairly big. So for example, if I look at Quant, the AUM of Quant small cap is 33,000 crore, and the AUM of Quant mutual fund in entirety is 95,000 crore. So you see here, this is the fund which is 1/3 of the total AMC. Similarly, if you look at Bandhan at 28,000 crore, it is the biggest equity fund which is with Bandhan Mutual Fund. And that's the reason that these two funds are also managed by the CIOs. Now, in terms of vintage, if you look at paper, you would see that Quant shows that it's a 30 years old fund, but that is not a true picture because the recent investment philosophy and investor association has been only for last 7 to 8 years because Quant acquired Escorts in 2018, and from there on, the philosophy of this fund changed, and from there on, we started the AUM accumulation also. Bandhan Small Cap was launched around 6 years back. So in terms of similarities, they're both managed by CIO. They both have similar kind of an AUM, and the vintage is also similar. Now let's look at where the differences are. So Bandhan follows a predominantly bottoms-up, fundamental, investment approach where they rely a lot on primary research. They rely on companies with strong long-term earning potential. While Quant, on the other hand, as the name suggests, it plays a lot on quantitative methodologies. It is very dynamic, like you mentioned. It has a momentum tilt to itself in the way it's managed, and the fund repositions itself fairly quickly in comparison to what Bandhan does. And if I look at the portfolio construction also, there is a difference. So if I look at Bandhan, it's very, very broad fund. The current holding in this is around 251 or 252, which is even higher than the number of holdings in small cap 250 index. Quant, while on the other hand, manage around 100 stocks, making it a relatively concentrated portfolio. And so is the allocation pattern. So if I look at Bandhan, it maintains 85% in small and mid cap, while the rest is cash and large cap. Quant historically has been more flexible. While we speak, Quant is having 66% in small cap, which is just 1% above the basic regulatory requirement. And the top 10 holding in Bandhan is around 20%. For Quant, it is 36%. So to cut the long story short, while Bandhan and Quant both operate in the same category, they both generate long-term wealth, and they have done quite well. The route which they have taken is very, very different.
Got it. And a quick one, Harsh, here, because, Quant, if I'm not wrong, has delivered better returns as compared to Bandhan. If I'm not wrong, I might be wrong here, so correct me if I'm wrong. But in terms of how, the portfolio churn stands, that's slightly higher in Quant, is that correct?
So yes, so I'll take both the parts. So first is about the performance. So if I have to meaningfully compare the returns, we have a time period of 5 to 6 years to compare. Correct. Because like I mentioned that, both the funds have a vintage of that duration. Now, there are two ways in which we can look at return. First is let's look at the trailing return. So both the schemes, if I look at that way, have comfortably outperformed their benchmark across all the meaningful trailing periods, starting from 1 year to 5 years. So irrespective of which fund an investor would have had in the portfolio, both have generated significant alpha over the benchmark for last 5 to 6 years. Now, within the category, Bandhan has emerged as one of the strongest performer over last 3 and 5 years period. Now, Quant also has ranked better, but it has not been as good as Bandhan for last 3 to 5 years period. If I look at last 1 year, and 1 year is a very short time period, in that time period, both the funds have not been in the top 7 or 8 funds, but Quant has outperformed Bandhan. Now let's look at the calendar year, which gives us a very, very interesting picture. Let's look at 2021 and 2022. These were the exceptional year for Quant, and this was a time when Quant became very, very popular. It was not just in quartile 1, it was the top performing small cap fund in this category, and the return was quite significant, whereas Bandhan was at the bottom of the pack. Now the narrative started changing in 2023. Coincidentally, that's also the time when the current CIO of Bandhan, Manish Gunwani, he moved to Bandhan and he started managing this fund. And the story changed meaningfully. From 2023 till 2025, Bandhan was in top quartile in all the 3 years. Quant, on the other hand, had a reversal of story. So it was in top quartile in 2021, 2022, and 2023, and it slipped to third quartile in 2024, which was its weakest relative performance in the recent year. However, it subsequently recovered because in 2025 and 2026, it's been in quartile 2. So, both have had different phases. Post-COVID, Quant did really well. But for last 2 to 3 years, when the market has been more of range bound, Bandhan has done well. Now, coming to the churn or the portfolio turnover ratio, you are right. Bandhan has a portfolio turnover ratio of around 0.22, while Quant has historically run a turnover ratio which is 2.5 to 3 times higher than that. I don't intend to say which strategy is better because these are two different styles of managing. But for somebody who's looking at more of a buy and hold portfolio, Bandhan ranks better. But for somebody who wants a little bit of momentum, little bit of sentiments to play in the portfolio, their Quant runs better because they are able to churn their portfolio at a much faster rate than what Bandhan would do.
Got it. Okay. Harsh, in terms of, just one last question, because small caps ideally are considered to be risky, right? So how much portfolio exposure should you have in small cap? That is one question. And the second is to whether somebody is taking, positions in small cap mutual funds, what are the risks that they need to watch out for sure?
So first thing first, in terms of how much allocation should be there. So I would purely rely on NSE 500. If I'm a growth investor and if I want to just replicate the broader market, which is NSE 500, the current ratio stands at 60% large cap, around 20 to 21% in mid cap, and 21 to 22% in small cap. So that should be the ratio in my portfolio also if I am just replicating the broader market. And this number has changed significantly in last 12 to 13 years. Large cap used to be 82 to 83% a decade or so back, and now it has come down to 60%. And the reasons are obvious because of earning growth, a post-COVID rally, and all these reasons. That is answer to part number one. Second, when somebody is looking at this category in terms of risk, one should be very, very clear about the time horizon one needs to give to this. Like we discussed that for last 18 years, if I look at the return has come in only a patch of 4.5 years. So if you are getting into this category, you should at least have 8 to 10 years of time frame. That is part number one. Second, the volatility of this category is inherently higher than large cap, hybrid, and other categories. So if you are a person who doesn't like too much of a volatility in the portfolio, then this is not the category for you. But if you are looking at a longer term time period and the volatility doesn't bother you, then I think you can look at this space. Third, and the most important tool here is that fund selection is very, very important. Now let's look at the universe. If you are a large cap fund manager, you have 100 companies. These are well-researched companies. Sell side cover these companies really well. So you can construct a portfolio with a good amount of ease. If you look at small cap, many of these companies are undiscovered. Many are not even covered by sell side. So you have to rely on the primary research. So I would strongly recommend to look at small cap only from the fund house, which has the ability to invest in research, Second, where the fund manager is more seasoned. And while we speak, among the top fund houses today, many of the small cap funds are managed by the CIO. If I look at HDFC managed by CIO, so is the case with SBI, so is the case with Bandhan, and so is the story with Quant. So give a credit to the fund manager who you are betting on. And lastly, don't try to over allocate basis the past return. You should go by your asset allocation, look at your profile. I said growth investors should look at 20-21% allocation in this. If you are a defensive investor, you can have 5 to 10% allocation, but maintain that.
Got it. Okay, Harsh, thank you so much, for taking out the time and helping us understand, of course, first the difference and then as to how much exposure should one take in small caps. And of course, taking out the time and speaking with us at NDTV Profit.
Thank you so much, Mahima. Pleasure is mine.
All right. With that, viewers, completely out of time on this edition of Your Money Matters, but do stay tuned in for more news and updates on the other side of the break.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. And we need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision and a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K.
Good evening, you're watching Profit 360 with me, Shreyansi Singh, and this is the show that's going to get you a highlight in terms of all of the earnings that have been reported today, as well as some of the other updates as well that you should keep in mind. And speaking of those updates, let's talk about the IPO market that is showing signs of life again. After months of being selective, investors seem willing to write checks. Once more, strong listings, healthy subscription numbers, and a steady pipeline of new issues that have lifted sentiment across the primary market. And it's not just the main board space IPOs that you're talking about SME IPOs as well, that are seeing some of that renewed interest really coming in. But we'll get you that update in a bit. Right now, we should be tuning in to ICICI Bank's con call that is currently underway.
ICICI Bank, our strategic focus continues to be on growing profit before tax, excluding treasury, through the 360-degree customer-centric approach and by serving opportunities across ecosystems and micro markets. We continue to operate within the framework of our values to strengthen our franchise. Maintaining high standards of governance deepening coverage and enhancing delivery capabilities with a focus on simplicity and operational resilience are key drivers for our risk-calibrated profitable growth. Our board has approved the financial results of ICICI Bank for the quarter ended June 30th, 2026. I would like to highlight some of the key numbers. First, moving on to profit and capital. 1. The net interest income grew by 12.7% year-on-year to 24,384 crore rupees in Q1 2027. Net interest margin was 4.36% in Q1 2027 compared to 4.32% in Q4 2026. Fee income grew by 23.5% year-on-year to 7,286 crore rupees in Q1 2026. Operating expenses grew by 10.4% year-on-year to 1,574 crore rupees in Q1 2027. Core operating profit grew by 15.6% year-on-year to 20,235 crore rupees in Q1 2027. Core operating profit excluding dividend from subsidiaries grew by 18.3% year-on-year to 19,125 crore rupees in Q1 2027. Provisions, excluding provision for tax, were 1,260 crore rupees in Q1 2027. Profit before tax, excluding treasury, grew by 20.9% year-on-year to 18,975 crore rupees in Q1 2027. Profit after tax grew by 15.9% year-on-year to 14,805 crore rupees in Q1 2027. Standalone ROE was 17.1% in Q1 2027. At June 30th, 2026, the bank had a net worth of about 3.5 lakh crore rupees. CET1 ratio was 16.19% and capital adequacy ratio was 16.84% at June 30th, 2026. Moving on to deposit growth. The total period end deposit increased by 14% year-on-year to 2.2% quarter-on-quarter at June 30th, 2026. Average deposits increased by 14% year-on-year and 6.1% sequentially during Q1 2027. Average current and savings account deposit increased by 12.1% year-on-year. Bank opened 97 branches during Q1 2027 and a network of 7,608 branches and 12,190 ATMs and cash recycling machines at June 30th, 2026. Moving on to loan growth. The total loan portfolio grew by 19.6% year-on-year and 5% quarter-on-quarter at June 30th, 2020. The retail loan portfolio grew by 12% year-on-year, including non-fund outstanding. The retail portfolio was 41.1% of the total portfolio. The mortgage portfolio grew by 14.6% year-on-year. The personal loan portfolio grew by 12.9% year-on-year. The credit card portfolio declined by 1.9% year-on-year. The rural portfolio grew by 35.4% year-on-year. The business banking portfolio grew by 28.2% year-on-year. Growth in the domestic corporate portfolio was 18.5% year-on-year at June 30th, 2026. About 71.9% of the corporate loan portfolio was rated A- and above as at June 30th, 2026. Now moving to asset quality. Net NPA ratio was 0.35% at June 30th, 2026 compared to 0.33% at March 31st, 2026 and 0.41% at June 30th, 2025. During Q1 2027, there were net additions to gross NPAs of 2,707 crore rupees. Gross NPA additions were 5,552 crore rupees in Q1 2020. Recoveries and upgrades of NPAs excluding write-offs and sale were 2,845 crore rupees in Q1 2020. Gross NPAs written off were 1,673 crore rupees in Q1 2027. There was sale of NPAs of 239 crore rupees for cash in the current quarter. Provision coverage ratio on non-performing loans was 74.7% at June 30th, 2026. Total fund-based outstanding to all borrowers under resolution as per various extant regulations was 1,363 crore rupees. Loans and non-fund based outstanding to performing corporate borrowers rated BB and below were 3,485 crore rupees at June 30th, 2026. The total provisions during Q1 2027 were 1,260 crore rupees or 6.2% of core operating profit and 0.32% of average advances. The bank continues to hold contingency provisions of 13,100 crore rupees at June 30th, 2026. At ICICI Bank, customers continue to remain at the heart of every initiative. I would like to share some of the latest updates on AI that we are making to make banking simpler, safer, and more convenient. ICICI Bank has established a structured and disciplined approach to scale AI with the focus on long-term value creation, risk management, and enterprise-wide adoption. The bank has invested in enterprise AI platform which serves as a secure environment for development, hosting and development of AI and generative AI use cases. The bank continues to invest in AI and generative AI use cases across areas such as portfolio monitoring, customer onboarding, fraud detection, document extraction and summarization, and customer servicing, amongst others. These capabilities empower the bank to enhance customer communication, improve efficiencies, achieve faster turnaround time, support decision-making across functions, and deliver seamless customer experience. Our approach places emphasis on information security, data privacy, and responsible AI. We have implemented a comprehensive framework of guardrails, including defining ring-fenced areas for AI usage, human-in-the-loop oversight, stringent data access control, and effective model governance protocols. Parallelly, the bank continues to invest in internal capability building with focused upskilling initiatives across businesses, digital and technology teams intended to strengthen enterprise-wide readiness and support sustainable scaling of AI capabilities across the organization. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The principles of fair to customer, fair to bank, one bank, one team, and return of capital will guide our operations. Focus on building a culture where every employee of the bank serves customers with humility and upholds the values of brand ICICI. We aim to be a trusted financial services provider of choice for our customers and deliver sustainable returns to our shareholders. This, I conclude my opening remarks, and I will be happy to take on your questions. Thank you.
Thank you. Thank you very much, sir. We will now begin the Q&A session with Mr. Batra and Mr. Banerjee. Anyone who wishes to ask a question may press star and 1 on their telephone. If you wish to remove yourself from the question queue, you may press star and 2. Today's announcement is on the bank's financial performance. Hence, we would like to request you to ask questions related to that. Please write to the corporate communications team separately for any other queries. Due to time constraints, I request all of you to ask 2 questions at a time. If you have additional queries, you may join the queue again if time permits. Thank you. We'll take our first question from Ritu Singh from CNBC TV 18. Please go ahead.
Good evening, Mr. Batra and Mr. Banerjee. First I wanted to start by asking about your margins that really stood out, especially compared to almost all other banks that have reported numbers today. This further expansion you've been able to achieve now at, almost 4.36%. Is this the normalized rate we should look at? How sustainable are these levels? Do you have levers to further expand? That was the first part. Second, this rise in slippages that we've seen, substantially in the quarter from about 4,200 odd crores to about 5,500 crores. How much of this is seasonal? And are you seeing any stress on account of what's happening in West Asia? Because this is the first quarter when we'll see some of that impact come through. And if I may add a question on loan growth as well, which has been pretty strong. Corporate also seems to be doing well. What are the segments, of course, within your risk calibrated, in your view, that you think are seeing higher credit demand that you believe will drive incremental credit growth for the bank?
Thank you, Ritu. There's lots of questions. I think, first of all, I'll start with the NIM question that you asked. As you're aware, as we have reported, the NIM increased by about 12.7% year-on-year and about 6.1% sequentially. This quarter, we had the benefit of income tax refunds, which helped in the margin improvement. This was about 8 basis points compared to about 5 basis points in the previous quarter and 7 bips in the Q1 of last year. The margins in Q1 are also reflective of the benefits due to repricing of term deposits, impact of higher interest refunds offset partially by higher interest on reversal of KCC portfolio. To your point on outlook, I think the NIM trajectory would depend on a number of factors, which includes, of course, the geopolitical developments, monetary policy, liquidity, loan growth, and loan pricing. Our expectations of NIM is that in FY27 it should be range bound, assuming no rate movements. Of course, there will be some impact on account of FCNRB deposit program and loans against FCNR deposits, which could be sort of slightly NIM dilutive. But overall, as a bank, we would continue to look at leveraging, growth, and as you rightly pointed out, risk-calibrated profits through optimizing various levers where NIM is clearly one of them. Coming to your point on slippage, I think it will be better if you compare that number over Q1 26 over Q1 27. I think there are seasonality impacts. If you look at that number, in Q1 2026, it was about 62 billion, which is now down to 55 billion. Moving on to loan growth, as you are aware, you're seeing loan growth across all the segments. In particular, corporate loans, we have seen some amount of sequentially pickup, which has been largely due to, from our point of view, we continue to have active engagements with our corporate clients, and we continue to seek opportunities whichever meet within our risk and reward thresholds. During the current quarter in particular, I think there was a little more demand on account of working capital, and also we have seen some kind of a moderation in the bond markets and equity markets, which has been an opportunity for us to capitalize.
Mr. Batra, if I may, you didn't answer, the reason why there was a sequential rise in slippages, and even on FCNR, since you bring it up, what's the target you think? How much could the bank raise, and what kind of leverage?
No, that is seasonal. The first one is seasonal, so I don't think so. I would like to call out anything specific on the quarter. So it's just a question of seasonality. If you have to look at, and most of it is, the difference is because of Kisan credit cards. So on FCNRB, since we are talking about the subject, I think we are. It's a great measure from a government point of view, and of course it is early stages yet, and this will evolve over the couple of months. And as you are aware, we are going to continue to focus. We will be tapping on the Indian diaspora. You are aware that we have got a large international presence, and we will leverage all our international branches, especially those in West Asia. We have also tied up with various partners for providing leverages. We'll be raising bonds. This amount we do expect the momentum to pick up as we go along. And of course, we are committed to make this initiative of RBI a success.
But no amount, Mr. Batra, you could share?
No, we can't. It's very difficult to say at this point of time.
All right. Thank you.
Thank you. Next question is from Siddhi Nayak from Bloomberg. Please go ahead.
Hi, sir. Am I audible?
Yes, please go ahead.
Yes. Hi. I just wanted to take some of Ritu's questions forward. The 20% loan growth that we have seen for you, I think it's among the highest in the last few quarters. I wanted to understand how sustainable is that, and if you could, are you foreseeing any risks that could hamper this kind of credit growth for ICICI and for the banking sector as well?
No, I think growth is reflective of the continuous momentum of economic activity, and also the impact of various policy initiatives which have been taken by the policymakers. From our point of view, we continue to see growth across segments, whether it is mortgages, rural portfolio, personal loans. We have also seen healthy growth in business banking, and for this quarter, as I already mentioned, there has been a good sequential pickup in corporate loans. So we continue to engage with the entire spectrum, and wherever we get opportunities which meet our risk thresholds and meet the pricing framework that we have, we are happy to lend. And from our perspective, it's not only about the loan growth. We look at customers on a 360 basis and the overall relationship with the customer, and within that framework, we take various calls. So this is. So we do have a strong balance sheet, and we will continue to look at various opportunities as they come along.
Understood. On the FCNR part, if I may ask, so what is the kind of leverage that you're offering, and what is the indicative demand looking like? I mean, there are some conflicting reports about inflows being very slow. Some say we have received a lot of inflows. You being the second largest private bank in the country, what is the demand on ground that you're seeing for FCNR flows? And if you could also share the leverage that you're offering, sir, through this product.
So we will offer leverage based on the customer profile and whatever leverage our partners are willing to offer. So we're not giving any specific numbers at this point of time. But rest assured, I think the customers will get a reasonable return. And from our point of view, we are, as I did mention, we are committed to making this scheme of the government and RBI a success, and we will continue to remain focused on it. I think the rates will evolve over a period of time. I mean, if you are reading various newspaper reports of various competitive activities, from our point of view, we look at, as I mentioned, we are looking both as leverage from our partner banks as well as raising bonds from our side, and which will help our customers. And we do expect a decent pickup to happen over the next couple of weeks and months.
So lastly, is there scope for you to raise? Do you see the need to raise these FCNR deposit rates because beyond 6%, that's on 5 years?
At this point of time, I don't think so there is any need. I mean, we will see how it goes along.
Sure. Thank you so much.
Thank you. Next question is from Sangeeta Mehta from Economic Times. Please go ahead.
Thank you, sir. Sir, wanted to know what is the estimated provision for ECL, and other thing is that what is the corporate pipeline looking like, because you've already had 20% in first quarter. So specifically corporate pipeline, and third is that what is the max leverage that ICICI would be willing to provide to the best rated customers?
No, ECL is effective from 1st of April next year.
So
I don't think there is anything specific. No, those are the numbers that we will start sharing from a next year basis. At this point of time, we do not see a material impact on an ongoing basis. As we mentioned in the last call, there would be some marginal impact during the transition period, for which we have got adequate provisions are already in place. We will see. That is as far as ECL is concerned. The second question was on
corporate pipeline.
As I mentioned, we have been engaging with our corporate customers over a long period of time, and whenever we get opportunities which meet our risk and reward thresholds, we are happy to lend to them. So there are adequate opportunities which are there, and this quarter did open up fairly good number of opportunities. So we will continue to engage with our corporate customers, and as I have always mentioned, it is not necessarily about the loan pipeline. We look at the overall 360 relationship with all customers, and in particular corporate customers, and look at the whole ecosystems and take a decision based on that.
And so what is the max leverage that you would be willing to offer?
We have not called that out at present.
Well, it will be, it will be quite calibrated, and it will be at calibrated levels, and we will look at whether what is the leverage that we will provide, as Sandeep mentioned, what partner banks may provide, and there will of course be some unleveraged inflows as well.
Have you tied up any line of credit or bilateral loans in the last 1 month? Or any plan to?
These are all evolving things, and this is an activity which has started effectively only towards the end of June, once all the FAQs, etc. had come out. So it will evolve over, the second quarter, and of course, when we do the second quarter results, we will have a full picture.
Okay. Just one last thing. Can you share how much you have raised so far in the last 1 month under FCNRB?
As I said, these details would be shared, in the second quarter, maybe at some point of time during the quarter as this evolves, because it is still very early days. Maybe some systemic numbers will start getting published, but from our perspective, it's a quarterly result item.
Okay, thank you.
Thank you. We'll take our next question from Shivam Killer from NDTV Profit. Please go ahead.
Yes, my question is on the corporate loan book growth target. So what could be the corporate loan book growth target going forward? As you have mentioned that the corporate lending has seen a better business due to the working capital requirements. So what could be the growth rate that the bank is targeting?
Shivam, as we have always said that we do not have any targets across any segment and in particular corporate loan as well. We look at opportunities and at the cost of repeating whenever we find opportunities which meet our risk thresholds and risk and reward and pricing thresholds, we are happy to lend, and we are focused on customer 360 and try to access the overall ecosystem.
And so my second question is regarding the margins trajectory going forward, as management was expecting that the margins could be in a range bound level previously, but recently the margins have been seen a slight improvement. So what could be the margin trajectory going forward from here on?
As I mentioned earlier, this is going to be range bound, and I think I've already responded to that question. So that the cost of repeating, I'll mention, we do expect to be range bound, and of course it's going to get impacted by many things like monetary policy, liquidity, etc. It could well be a little bit dilutive given the FCNR borrowing and deposits, which because of the FCNR deposits that we are going to be raising, but we will continue to leverage. As far as we are concerned, we are looking at increasing the risk calibrated profit and using all the levers which go into it, and in particular NIM is an important part of that.
Yes, sir. And sir, if I could squeeze one more question in regarding the cost of funds, do you see the cost of funds trajectory declining going forward?
It's very difficult to make that statement. It is again depends on all the things that I really talked about. At this point of time, we expect this to be range bound.
Thank you.
Thank you. Next question is from Mayur Shetty from Times of India. Please go ahead.
Thank you. I had a question on gold loans. Could you share the size of your gold loan book and also the year-on-year growth rate?
Mayur, we do not give specifically, but this is part of our rural portfolio. Substantial part of our rural portfolio is actually gold loan. This gold loan portfolio, the overall rural portfolio has grown by 35% year on year. And from our perspective, the loan product is just a product. Gold loan is just a product. We are focused more on the customer. And whenever we get opportunities to give loans to good customers, there are various products and options which are available. So this is part of that overall customer-centric approach that we have been talking about.
So it's not part of the personal loans segment?
No, it is part of the rural portfolio that we are giving, and a substantial portion of that you can attribute to gold.
Okay.
Alright, then there you go. So that's the commentary coming in from ICICI Bank in terms of their numbers and the path forward from here. It's time for a very quick break. More news and updates on the other side.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time. Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business hours? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You've got to be real in a world of reels. You've got to be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade. Spots the
Welcome back. Thank you so much for staying tuned in. Let's also talk about Kotak Bank that's reported a largely inline set of numbers. Now, when you talk about the net profit, that's largely jumped on the back of that lower provision number that you're looking at. Asset quality remained broadly stable, keeping in line with that trend as well when you talk about some of these other banks as well. So you're looking at the earnings quality that is largely good, driven by both the core income growth as well as the sharply lower credit costs as well. Like I mentioned, asset quality slightly improving, and some of those lower provisions and reduced fresh slippages are case in point here. When you talk about the growth as well, largely healthy and balanced. So you're looking at deposits almost keeping in pace with the advances as well. And when you talk about the entire provisions figure, that's coming in on a year-on-year basis at 668 crores versus 1,200 odd crores. When you talk about that on a quarter-on-quarter basis, you're comparing the 668 crores with 516 crores, and that's why it's in focus as well. When you talk about some of these other numbers as well, you do have the profit growth that was, like I mentioned, helped by the lower provision. So any commentary coming in from the management when it comes to the entire profit growth figure is something to really watch out for. investors are going to be monitoring whether the NII growth is going to be accelerating in the coming quarters as well. So any commentary really coming in when you talk about your NIIs is something to watch out for. All in all, when you talk about the NIIs, it is actually a healthy figure, just, bordering on double-digit NII growth as well, with that 9.2% uptick coming in with the NIIs as well. And when you talk about how this keeps in check with some of the broader trends as well, when you talk about some of these other banks as well, you did, of course, have ICICI Bank reporting double-digit NII growth as well. And when you talk about HDFC as well, in terms of the NII, 6.7%. So that should put it into context in terms of how that number really stacks up against some of its peers as well within private banking. But let's go across and listen in to that bit of commentary that we're really watching out for right now.
What is most heartening is that strategy is working and the results are steadily coming through. Quite simply, all our engines are firing. The one exception was our capital markets business, which felt the impact of the prevailing geopolitical situation. But even there, we have a very strong pipeline for the remainder of the year. Let me start with the bank, where our profits grew a healthy 26% year on year. Our focus on the 4 customer segments continues to deliver. Customer assets grew 16%, led by our SME and institutional franchisees. This quarter, we were also very encouraged to see the early sequential signs come through in our unsecured retail book in both credit cards and microfinance. Average deposits grew 14% year on year, driven by steady growth seen in the high net worth and core India segments. I had mentioned that driving efficiencies through automation and digitization would be a key priority for this year. In Q1, our cost base grew by 8% on a year-on-year basis, but cost to total assets has come down from 2.83 to 2.66 year on year. We will continue to drive this effort on an ongoing basis. With this, our operating profits grew by 10% on a year-on-year basis. Credit costs remained well under control at 46 basis points. As you would have seen, we also entered into definitive agreement to acquire Deutsche Bank's India retail, private banking and wealth management businesses for rupees 281 crores. This will bring in about 150,000 customers, along with 29,000 crores in advances, 16,000 crores in deposits, and about 10,500 crores in AUMs. It is a clean strategic fit with our affluent and SME franchise and is expected to be return accretive and opens up meaningful cross-sell activities. This is precisely the kind of disciplined bolt-on opportunity our inorganic philosophy is built around. Turning to our subsidiaries, profitability continues to be strong, with profits growing 20% year on year. With standout performance from Kotak Asset Management, Kotak Prime, Kotak Securities, and our alternative asset businesses. Kotak Life too had a great quarter. As I mentioned, geopolitical tensions did dampen the capital markets businesses and weighed on our investment bank, though we go into the coming quarters with a very robust pipeline. And this is where the real uniqueness of our conglomerate model comes to the fore. We own 100% of our subsidiaries, and this quarter they contributed 33% of our total profits. That is the power of owning the full suite of financial services and being able to move with the trends as they shift through cycles. With all of this coming together, our consolidated book value per share grew 14% year on year. The operating environment remains dynamic, with several factors still to play out, and that will continue to demand agility from us. But the strategy is clear, the results are coming through strongly, and from here on, it's all about relentless and consistent execution against our long-term goals. With that, Let me hand it over to Devang to take you through the financial numbers in greater detail.
Hi. Thank you, Ashok. Good afternoon, everyone. Let me start with key highlights of the bank standalone and consolidated performance for Q1 FY27. On standalone bank performance to start with, net advances grew 15% YOY to 5,21,249 crores for the quarter Q1 F25. Our customer assets grew by 16% YOY to 5,70,901 crores for the first quarter. Our total average deposit grew 14% YOY. In average CA and average fixed rate SA grew 15% and 16% respectively, taking CASA ratio to 40.33% as at 30th June. Average term deposit grew at 14% YOY. On a YOY basis, bank delivered a strong performance during the quarter with profit after tax growing 26% to rupees 4,123 crores, supported by a 10% YOY growth in operating profit of rupees 6,131 crores. The key contributor to profitability were net interest margin at 4.53% and cost of funds was stable at 4.46%. NII grew 9% on a YOY basis. Fee income growth was at 11% on a YOY basis. Consistent improvement in cost reduction resulted in cost to asset ratio reduced from 2.83 to 2.66% on a YOY basis. Significant improvement was noted in the asset quality, leading to reduction from the credit cost from 93 bips in Q1 FY26 to 46 bips in the current quarter. The gross NPA was at 1.18%, down from 1.48 in last year first quarter. And the net NPA ratio is 0.27 versus 0.34 in Q1 26. As a result of all of this, the ROA of the bank increased by 20 bips to 2.14%. Our capital position remains strong with a capital adequacy of 22.8%, with CET itself at 22.4%. At 30th June, the bank's net worth was 1,40,924 crores. Overall, the quarter was characterized by stable margins, continued improvement in operational efficiency, and normalization of credit cost. Let me now move to the consolidated results. On a consolidated basis, our customer assets are 6,45,812 crore, which grew 16% on a YOY basis. On a group, customer AUM increased to 8,05,531 crores, reflecting a 8% YOY growth. The consolidated net worth of the bank is at 1,88,214 crores at 30th June, with book value per share increased to 189 rupees per share, which is a 6-year CAGR of 17%. Capitalization at the group level also remains strong, with total capital adequacy at 22.9%, in which CET1 itself is 22.6%. For Q1 27, the consolidated ROE was 11.9%. And consolidated ROA was at 2.18%. The consolidated profit after tax for the group is 5,480 crores, which grew 23% on a YOY basis. Coming to the performance of select subsidiaries, the profit after tax for Kotak Security for this quarter was 533 crores, up 14% on a YOY basis. Kotak Security also gained market share and it's now at 13.8%. Kotak Mahindra Prime profit after tax is at 354 crores, which is up 30% on a YOY basis. Kotak Asset Management and Trusteeship Company PAT for the quarter was 399 crores, up 23%, whereas the average equity AUM was at 3,91,208 crores, which grew at 18% on a YOY basis. Coming to the Kotak Mahindra Life Insurance Company, the PAT for the insurance company was 336 crores, which is up 3% on a YOY basis. We continue to have a strong solvency ratio of 2.2 in the Kotak Mahindra Prime. With this, I hand back to Prasanna. Thank you.
Thank you, Devan. We will now first move into the Q&A session. Before we begin, questions will be taken on a first-come basis. Please use the raise hand feature before you ask over Zoom. Once called upon, unmute yourself to ask your question. Kindly state your name and the organization that you represent. Please mute yourself after your question. More importantly, please keep your questions brief and allow time for more participants to question. With that, we'll pass on to the first question, which comes from Ritu Singh from CNBC. Over to you, Ritu.
Hi, thank you so much, and good evening, all of you. Mr. Vaswani, if you will, I have to start by asking you about the announcement that you made about stepping away from the bank come end of December. It was a very, very brief note, which was a clarification to exchanges, and I believe the street is looking for some clarity on why the reason for you to move on and have some successors, at least internally, been identified, and how quickly would the bank move to submit that application to Reserve Bank of India? That was the first question. On the performance itself, margins have seen some pressure in the quarter that has continued. Despite you talking about, costs remaining stable, if not coming down. What's happening there? When do you see this picking back up? On your asset quality as well, was it largely seasonal, the impact, which is why we saw some sequential rise? And lastly, on FCNRB deposits, is there a target that the bank has set how much it could raise, and therefore would that reduce your reliance on bulk deposits, help with the cost going forward? Thank you.
Wow, Ritu, that's like a half an hour session. Anyway, let me try and do it. First thing is on margin, Ritu. Actually, our margins are been flat for 3 quarters, like literally a 1 basis points move for 3 quarters. So margins have been kind of flat. As far as credit costs are concerned, they're significantly down, as Devang mentioned, 93 basis points to 46 basis points. Yes, they're up from 39 basis points in Q4, but that is a seasonal trend that we normally see in the tractor business, where Q1 and Q3 are the highs, and then Q2 and Q4 are the lows. So there's nothing there which is unusual, and credit costs are well under control. FCNRB deposits, yes, it is something that is a very interesting opportunity. I think we will give it our best. Of course, the NRI customer demand is very strong because it's such an attractive opportunity. It's our ability to kind of get the supply side done, which is going to make the difference. But we feel pretty reasonably good about it, and we'll see how it kind of pans out over the next month or two. At a personal level, Ritu, there's never a good time to call it a day, but the last 3.5 years have been spent doing a lot of hard, heavy lifting, as you well know. You're aware of the technology embargo. You're well aware of rebuilding of the entire management team. You're well aware of how we've cleaned up the personal loan book, how we've cleaned up the credit card book, how we've cleaned up the microfinance book, how we've got our liability engines all cracking. So I think the bank and the group, we have a good unified strategy across the group. And I think that, we are very well set now to accelerate our journey. So, may not be a bad time to step away. At a personal front, also, Ritu, I became a grandfather. My daughter's in San Francisco. So San Francisco calling, daughter calling, made it all the more compelling.
Congratulations on that, sir. But, I'd still push on to ask if there's a timeline for when the bank would be submitting these names, and if there's any reason beyond, of course, you becoming a grandfather and for personal reasons, for you to step back, because you're the first non-founder, non-promoter CEO that the bank has had. So this is something the street was looking for clarity on.
Yeah, maybe second, because Deepak Gupta was the first for a short period. And from a timeline perspective, Ritu, there are clear regulatory guidelines, right? And the board and the NRC are very aware of are very conscious of the guidelines, and will make the applications entirely in line with those timelines.
Thank you very much. If there's time, I'll come back later. Thank you.
Sure.
Thanks, Ritu. We move on to the next question, which is from Hamsini Karthik from Money Control. Hamsini.
Hi, Hamsini.
Hi. Finally, Prasanna unmuted me. Thank you. So just wanted to ask you two important questions. Again, in line with what we're seeing as a trend with most of the banks, is that your corporate engine is also beginning to really rev up a lot. Does that give you more? Does that also mean that you guys are getting better pricing, better value for money from your corporate clients, more versus having to do a lot of drilling down in the retail portfolio? If you could help me with some color on this, I'll come back for my second question, sir.
Sure. Paritosh, you want to deal?
Yeah. So Hamsini, the last quarter gave us an opportunity to build on the corporate book, because the capital market started offering better spreads, and that is why you would see on the credit substitutes we grew 38% quarter on quarter, and it was purely opportunistic. Same was the case on the loan portfolio. Last quarter we had slowed down because the yields were not right enough for us to continue to lend money, and this quarter we saw an opportunity. So we have a small portfolio of short-term loans which we modulate and calibrate in line with the kind of pricing we get. So it was more opportunistic that we took advantage of the yield curve and built the corporate book just now.
Is it possible for you to turn this opportunistic moment into a strategically sustainable possibility, or are we stretching it too much?
See, on the credit substitute side, we look at the yield curve and our cost of fund, and if opportunities are right, we build it. For instance, if you look at the large amount of money which is likely to come in through FCNRB, we will see an opportunity that the investment book will grow from here.
All right. My second question is actually linked to FCNRB. What is the kind of portfolio that Kotak Bank has built on FCNRB thus far in the last 1 month? Is there any internal targets that you all can guide us? Are you partnering with foreign banks? How much are you exploiting GIFT City to ensure the inflows that you're targeting from this scheme? I would also be tempted to ask Ashok a question regarding the surprise he threw us on the 18th, but I'll come back for that. Yeah.
So answering on FCNRB, it is a very interesting opportunity for us, and it's obviously important for the country as well. We are going to do our part, and we'll do it out of GIFT City and the IFC, where we've got presence. It's early days as yet, and we don't really talk about goals other than internally. So let's see how this all kind of pans out. We will partner with banks in Asia and Middle East and other parts of the world to try and enhance our proposition. And we'll see how this plays out in the next month or so.
You're still in the process of partnering. There aren't firm commitments yet. Is that an understanding correct?
No, we are. It's pretty good, pretty advanced work in progress. Let's put it that way.
Okay. Ashok, was it something that was running in your mind that you were going to call it a quits on the in December this year for a while? Was it a sudden decision? As the previous question did put forth, it did take us all by surprise. And would your NRC also look at external candidates, because there isn't regulatory clarity whether an external name should also be provided or it's only internal? If you could help us understand all that a little, Ashok.
Yeah, so answering frankly, the NRC will do what is right for the group.
Right.
And obviously, they will look for the best talent there is available. I would say that internally we have a very strong bench, but I'm sure the NRC will look broader. And as far as I'm concerned, I mean, these decisions obviously are not taken overnight. These are kind of well thought through. And that's the way it should be. And I take it actually as a compliment that you thought of it as a surprise and that I was, working like nothing else was happening.
Thank you. It was a surprise. Yeah.
Thank you.
Googly well bowled.
Yeah. Thank you for remembering. Yeah.
Thank you. We move on to the next question. Before I jump into the call and the details, I have a couple of questions from our journalist friend from UNI, Bapu Narayankar, and I'll just read it out for Ashok and the team. He's got two questions. The first one is, what extent was the 26% increase in Q1 profit driven by the sharp decline in provisions rather than an improvement in the bank's underlying operating performance? And how sustainable is the trajectory? The second question is, your loan book expanded 15%, but NII grew only 9%, while NIM fell for the second straight quarter. Is Kotak sacrificing profitability to maintain growth? And how do you plan to reverse this trend?
Hi. Just to answer the question on this operating profit versus the provision. So I think if you look at it, while the profit did grow at 26%, even without the provisioning effect, the operating profit actually shown a growth of 10% on a YOY basis. So it's not just the credit cost coming down, which is contributing to 26%. Without that also, there is a 10% increase in YOY. And even that credit cost, if you see, has been consistently falling over last year, each and every quarter, right? So that's the first part. Second part, the question is on the NIM. I think we need to clarify, and we had clarified earlier that Q4 NIM of 4.67, every time in the last quarter of the year, because of the number of days, there is an anomaly. And actually, adjusted for that anomaly, the NIM is actually 4.54. So if I look at the adjusted 4.54 NIM of Q4, as Ashok mentioned, it is actually consistent with the NIM which was in Q3, Q4, and this Q1 is exactly same. There is a flat. So there is no as such a reduction in the NIM. It's just the anomaly created because of the number of days every year in the Q4. So basically the question was NII growth of 9% is effectively the asset growth multiplied by the NIM reduction is what the NII growth is. So obviously last year, because of the repo rate, the NIM was falling, which has now stabilized. So on a YOY basis, obviously you will see the reduction in NII largely due to the NIM reduction because of the repo rate.
Thank you, Devang. The next question is from Subrata Panda from Business Standard. Subrata.
Hi, thank you. Couple of questions. First, on the FCNR front, what is the leverage you're looking to offer NRI customers? Also, will the FCNR deposits be margin dilutive going forward? Additionally, are you looking to tap the overseas bond market to, under the RBI's concessional swap window? And if you could help us with your plans on the acquisition financing front.
Okay. So on the FCNR front, yes, we are going to offer leverage, but we offer leverage for deposits of over a certain size, and that depends upon the partner banks. It depends upon our capabilities and our raw material availability in GIFT and DIFC. So those things are kind of being worked through. The returns, actually, there are multiple perspectives to it. One is, of course, what are you going to do with 3 or 5 year fixed rate money. In our case, like I've mentioned before, our deposit book is relatively short tenor. So this will effectively help us elongate our deposit book to some extent and create a greater degree of stability, which is something that we were desirous of doing in any case. Paritosh, you want to take the question on acquisition finance?
No, acquisition financing, we have adopted the policy basis RBI guidelines on acquisition financing, and whenever the opportunity comes, we will kind of start building on that basis.
On the overseas bond market front, if you can help with that.
Yeah, we'll look at that kind of opportunity. That is an opportunity we are looking at. No final decision has been made as yet, but it's something that we are considering very seriously.
Sure. Thank you so much.
Thank you, Subrata. Before I move to the next one, I have a question from Mayur Shetty from Times of India. What is the size of the gold loan book and what is the growth rate?
Anup, you want to take that?
So, gold loan book for us is still very small. However, this is a focus segment for us and we are expanding our branch coverage on gold loan and it's growing quite healthy as against the overall book. But from a relative size, it still remains small and very profitable.
Thank you. We'll move to the next one, which is from Shrishti Sharma from ETBFSI. Shrishti.
Thank you. Good evening, everyone. You all have already discussed FCNRB deposits. Another aspect to it is UAE circular that came restricting the representative officers of Indian banks. Now, West Asia is also one of the hotspots of garnering NRI deposits. Is RBI or Ministry of Finance in talks with the UAE government to uplift some of the restrictions? That's one. Second question on the...
I didn't get it, but Anup, maybe you can answer that question.
Yeah, you can go ahead with the second question.
Okay, I'll complete my questions. Second question on the credit card portfolio of yours. It's finally seeing an uptick. Where do you see it going? You've also acquired the Deutsche Affluent banking portfolio. And in your annual report, one of the remarks was you'll be open to more of inorganic acquisitions. Now, what areas do you see yourself going about such acquisitions? Third point, you're also one of the private banks for whom the headcount has seen reduction in the previous fiscal. AI is also one of your focus areas. Do you see the headcount reduction trend ongoing? That ends my questions. Thank you.
So on your first question on FCNR and UAE, of course, we are watchful on the situation. As of now, we don't see a specific issue through our DIFC or GIFT. As Ashok said, things are looking very encouraging on FCNR. That's the first question. However, things remain volatile to that extent. Coming to the credit card point, yes, we have started finally growing the credit card book. Though, if you see the spend quarter on quarter is now positive in terms of the credit cost, it is significantly down. What we have done on the card is we have fully restacked the product from a right product for right customers. Basis our two core segment, which is the affluent HNI, which we call as the solitaire segment, and the core India proposition in terms of Air Plus and Air and cashback. So that's where it stands. We would grow it at a focused manner, and largely the focus is on existing customers. So from a credit quality standpoint, that remains robust. So that's the second one.
Headcount.
On the headcount, if I think about it, if you see employee cost has grown 7%, that also includes the retiral and annual increment. Otherwise, through the automation, digitization, and decongestion projects, which we have been driving as a bank, we do see significant productivity enhancement, which has started coming in. And that's a direction we have a lot of more work to do, and we do see great opportunity in quarters to come. So yes, we would remain largely flat on headcount. Unless we see specific area where we need to invest, we'll still invest. So it's not that we don't want to invest on headcounts.
And on credit cards, do you have some target for FY27 since you were starting to grow again?
So we don't give a forward guidance to it, but as I said clearly that it's a great product for the banking customers from a long-term relationship point of view. So we would give more and more cards to our existing customers, to their families, and ensure that the overall relationship value is enhanced and build a very profitable cards business.
All right. Another point I'd also added was Mr. Vaswani's message in the annual report to inorganic opportunities. Would you have some commentary to make on what kind of areas do you foresee, tapping onto?
Yeah, so look, our inorganic strategy and framework, I think I've spoken about it a lot. It comes down to 3 questions that we ask. We look at every single opportunity that comes along. 3 questions. Number 1, does it strategically make sense? Like, for example, Deutsche makes a lot of sense, right? 150,000 high net worth and SME customers, exactly the kind of customer segments that we're trying to go after. Number 2, is it financially accretive, financially attractive? Again, we bought that business for 281 crores. It clearly will be return accretive. So that's a good thing. So answer to question 1, yes. Answer to question 2, yes. And answer to question 3, which is really, will this create management distraction or require too much bandwidth? And with these kind of bolt-on tuck-in acquisitions, the management distraction is relatively speaking low. So if it's a yes, and no, it then becomes a very attractive thing to do. And we will try and do as many of these as we can. And we've been doing it. We did it with Sonata. We did it with Standard Chartered. We're now doing it with Deutsche. And we will continue to look for such opportunities in the marketplace.
Thank you.
Thank you, Subhana. We move on to the next one, which is we're moving on to Subhana Sheikh from NDTV. Mint, sorry. She's moved to Mint now.
Hi, sir. Good evening. Sir, on FCNR, you just said that, you're looking at a certain deposit size. It depends on that, your tie-ups and all of that. I wanted to ask, how cautious is the bank, in giving leverage and, giving that much exposure to certain clients? And also, sir, I wanted to ask, you said that this would elongate your, deposit book. Any idea as to how much this would contribute to your overall deposit book in Q2 probably? Given that you have your internal targets, I understand you don't want to share that, but how much it could contribute. And my second question, sir, is that while your asset quality has improved, sir, your credit costs have gone up sequentially. Slippages have also increased a bit. You said that, if I'm not wrong, you said that your investment banking business has suffered because of the situation in West Asia. So has the any impact you've seen on particular sectors because of the war, and are you still cautious going forward?
Wow, that's again a lot of ground to cover. Like I said, FCNR, look, the customer demand is very strong. It really is a matter of how much we can tie up with partner banks to provide the leverage. That's what will determine the quantum of leverage. That determines at what size we give leverage. It's still very, very early days. Let's see how it pans out. But like Anup also mentioned, we are quite encouraged by what we are seeing. And we'll see what happens. Obviously, the quantum of deposits we get will be in the 3 and 5 year kind of bucket, and that's what's going to help us elongate the deposit tenor. Today we have deposits worth about roughly 5 lakh crores. You add some amount to FCNR. It's not going to completely move the needle, but it will have some kind of impact. As far as the geopolitical situation is concerned, like we've kind of talked about it, supply chain disruption has happened and keeps happening. I mean, this is a very, very fluid situation, and suddenly, we are in ceasefire mode. Suddenly, we are on war on mode, affecting the traffic through the Strait of Hormuz. So clearly, supply chain disruption has happened. Now, generally speaking, industry has managed this very well because of the stocks they've had, because of the alternate supply chains that they've kind of established, but some level of supply chain disruption has definitely happened. Certain level of inflation has definitely come through, and you heard the RBI governor talk about that as well, right? So some impact of supply chain disruption and inflation will happen. We are obviously hoping it's not going to be severe, and we are constantly, very closely monitoring all our portfolios to see if we can see any sign of stress. As of now, we are seeing no sign of stress. But are we cautious? Yes, we are cautious. We don't want to be caught out and miss it. In fact, the fact that we're not seeing anything is a little more worrying, because you keep asking yourself, are you missing something? On the credit side, like I mentioned, the credit costs are purely gone up from 39 basis points to 46 basis points, which is just clearly the tractor kind of seasonality. It goes up in Q1, goes up in Q3, comes down in Q2, and comes down in Q4. So that's purely seasonality, nothing else. And on the investment banking side, capital markets, because of all of these certain things, a lot of IPOs have got postponed out, but we've got a very, very robust pipeline. And our investment banking business, as you know, is in many ways a jewel in the crown. We are number one on the league tables, and the team has done a fantastic job. And I'm very confident that the other quarters will play out very nicely.
Thank you. We move on to the next one from Piyush Shukla from NDTV Profit. Piyush?
Good evening. Hope I'm audible. Thank you for taking the question, Vaswani sir. I wanted to understand, towards the start of the conference, you mentioned how you've got on familiar personal reasons you took this decision. I just want to understand, how do things move ahead? You did mention the bank has internal talent and will get the best of the best, but in terms of timelines, what are we looking at? Because we're in July and your term ends in December. So can we expect an announcement in the next month or so? And secondly, I would also want to understand, would you be able to share the amount, the quantum of FCNRB inflows that the bank has got till now, if there is any target on that front? And lastly, on the margins, if you could give some guidance on, because we've seen some moderation in this quarter, both Q on Q, YOY. How do you see the margins going ahead? Any sort of guidance you have on that front?
Yeah, on the management succession, there is a timeline which, frankly, the RBI lays out, and the board and the NRC is very, very confident that they'll meet those deadlines. So there should be no issue on that front. On FCNR, like I said, it's early days. We find it very promising, but we don't share, internal targets. It's not appropriate to do so. But we are quite excited and quite encouraged by the opportunity. And as far as margins are concerned, like I mentioned, margin literally has been pretty flat, 1 basis point up or down for the last 3 quarters. And, honestly, with all of these kind of variables like FCNR, like ECGLS and all of that, giving guidance will not be appropriate.
On ECGLGS, if I can ask you, sir, how many loans have been sanctioned under the scheme or disbursed? And is there any, headline figure that you're looking at to disburse under this particular scheme?
So till as of 30th of June, we have disbursed about 3,000 odd crores. Number of loans, I don't recall. It's largely distributed given to our MSME and SME customers. So number of loans would be very large, but in terms of amount, it is about 3,000 crore. And there is no target. We are, addressing the requirement of our customers. Whosoever asks for ECLGS facility and they are eligible, we are going ahead and providing it to them.
Thank you, sir. Thank you so much.
Piyush, our next question is from Achishma Iyer from Money Control.
Hello, sir. I hope I'm audible.
Yeah.
Yes.
Sir, just wanted to understand. I just had two questions. So now that the your unsecured loan book is sort of looking much better what it was year ago, including MFIs, is the bank looking to target at least a 14 or 15% portfolio share from unsecured loans? And as a result, do you see this as a result of margins increasing again? My second question is about your IT spends. I just wanted to understand how much the bank is looking to invest in tech capabilities in FY27, considering that the bank has also been talking hugely about infusing AI into your workplace functions. Yes, sir. These are my two questions.
Yeah, the first question on unsecured, if you look at it, essentially four large products: credit cards, personal loan, unsecured business loans, and microfinance loans. I think we are very happy that we have started growing all of it now, and at a quarter on quarter and year on year, we'll see steady growth. Looking at the cards, business loan, and personal loan, the focus is to do more with our existing customer.
There you go. So that's the word coming in from Kotak Mahindra Bank, and they've talked about everything right from the succession and the change of guard and the timeline that they're expecting on that, the reasons for it, and when it comes to the numbers as well as the growth path going forward as well. But it's time for a very quick break. More news and updates on the other side.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move,
welcome. You're watching NDTV Profit. I'm Mahima Vachrajani, and today we thought of doing something interesting and exciting. We're going to talk about, of course, everybody knows that Odyssey has been released today, and there's a lot of interest coming in for this movie, and we'll try to understand as to what trends are looking like, what are theaters experiencing in terms of bookings, how has the booking flow been like, what is the pipeline going ahead in terms of where Bollywood stands. All of that we're going to talk about in this episode, and to talk about this and take this conversation ahead, we are now joined by Ashish Mishra, who's the head of commercialization at Cinepolis India, joining us now. Ashish, thank you so much for taking out the time. A pleasure speaking with you. I'll start with asking about Odyssey first, because that's where the interest is right now, right? How big is this? I mean, what is your expectations in terms of what box office could this hit, and what does this mean for theaters as a whole?
So of course, this is a big one, right? We're seeing that there's a lot of hype, there's a lot of chatter about this movie, and of course, this is directed by Nolan, right? So he, of course, comes in with his own, you can say, the things that he has done in the past, the movies that he has directed, and this seems to be just carrying forward that legacy of him. And it's already tracking as a big blockbuster. And these are the kind of movies which basically transcend from just being a movie to becoming something far more cultural, right? So what we are expecting is that this would be one of the biggest opening weekends for Hollywood in this year. We are expecting it to be opening at about close to about 20-22 crores.
Okay, all right. And do you think that this is the kind of movie that brings back people to theaters? Because nowadays we've been talking about this as to how
who's with us for opening remarks. We also have with us our Deputy Managing Director, Kaizad Barucha. After the opening remarks, we will straight go to a question and answer session. With that, Sashi, over to you, please.
Thank you, Srini, and thank you all for joining on this Saturday for the Q1 results. I would like to first thank the people and our stakeholders as we navigated over the last few quarters. Our people have kept steadfast focus and on customer needs and further build the franchise. I'm proud of them. A sincere gratitude to the board for their guidance through these quarters, and also to KK Mistry for standing in as the interim chairman of the board until now. A hearty welcome to our new chairman, Mr. Rajiv Kumar. Looking forward to taking the franchise to the next growth stage. With the appointment of Mr. Rajiv Kumar, there is a sense of stability and clear signal to minimize uncertainties in a very short time period. Coming back to some of the accomplishments, our deposit growth has been relatively higher to historical Q1 trends. We continue to gain market share both on a stock basis and also from an incremental deposit market share basis as well. Our branch productivity continues to be best in class, and over the next 2-3 years, we should sort of realize the benefits of all the investments in distribution we have done over the last 5-6 years. Advances, as we had envisioned, I think we are on the cusp of pressing the pedal. Opportunities do exist, and there is a fair amount of buoyancy in what we are doing at this stage. The environment continues to be very healthy. Liquidity augmentation through FCNR and swap window is an opportunity that we are focusing on. We were in the first month of June and this part of July. I think a large part of our work was towards building necessary product approvals and documentation, both internally and with counterparties as well. I think over the next couple of months, I think we should see the momentum picking up. As you know, the government had flagged off the ECLGS Scheme 5.0. And I think that's a great booster for us, and we will be a significant player in the mid-market as well. Competition continues to be very intense, both on the asset and liability side, but we are going to be here as we believe that we are at the cusp of offsetting some of these intense spreads through efficiencies that we will gain through better service turnaround time and also leveraging on technologies. Coming to the efficiencies, I think that is the most exciting part of what we are all endeavoring in terms of driving a certain sense of energy in the organization across length and breadth. Customer service continues to be top focus. It was always there, but now it is on a very heightened basis. Our first focus is to see how we can cut down and reduce turnaround times on product and service deliveries. We are trying to resequence our technologies to have better adoption of digital journeys. We are embedding AI in our digital journeys to be able to fast track some of these into a virtually frictionless back-end touch. This is going to provide not only a great customer experience, but also sort of translate into efficiencies, which we will start to see accruing over the next 2 to 3 years. Obviously, security is also one of the top of the charts in terms of focus, not just for us, but I'm sure at the country level and also globally, considering that we have seen a new set of AI-led attacks or potential attacks that may arise. I think we're also bolstering our security systems to be able to defend such AI-led attacks as well. Whilst the environment seems to be reasonably sanguine, we have seen a lot of macro challenges in the recent past, but I think the economy has been rather resilient to be able to withstand those kind of ups and downs in terms of liquidity, in terms of the West Asia conflict, in terms of the currency movements, in terms of the fuel movements. But I think the country has demonstrated, our macro fundamentals has demonstrated the resilience that we are very proud of. And so is in terms of the portfolio quality, not just for us, but also at a banking system level as well. So things remain reasonably healthy at a macro level, and at the institution level, and we are at the cusp of having a different kind of energy over the next couple of years. And that's what we are all focusing to the medium and long term. Short term gyrations will be there. It is not something that is our focus area. It's the medium to long term in providing or getting the efficiencies and driving stakeholder returns is what we are all looking forward to. And let me pause out here and we take on any questions from all of you. Thank you.
Thank you, Shashi. Neerav, we can open it up and build the queue for Q&A. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A request to all the participants, kindly limit yourself to 2 questions per participant and rejoin the queue for a follow-up question. First question is from the line of Ritu Singh from CNBC. Please go ahead.
Thank you very much for the opportunity. Mr. Jagadish, I could start with your comment. You're saying you're on the cusp of having a different kind of energy over the next few years. Of course, there may be some blips along the way, but 2 of these concerns that have remained with investors since the merger, in terms of synergy play out. 1, margins have not come back to the kind of levels we saw pre-merger, and 2, the loan deposit ratio continues to be very high. Even in this quarter, your margins, if I'm not wrong, are the lowest that the bank has ever reported at 3.26%, and the CD ratio, at as much as 96%. On both of those fronts, I mean, when do you see a turnaround? What's really, continuing to pain the bank? And FCNRB there as well. Since you have this large presence overseas, what kind of target have you set internally for the bank to raise in terms of FCNRB? What kind of leverage are you offering? What kind of, impact could that have on the margins as well as you go ahead and raise these? And finally, Mr. Jagdishan, before, I get back, on the CEO reappointment, we believe the bank was waiting for the new chairman to take over, which has happened. What seems to be causing a delay, and when is this expected to be cleared by the board?
So let me take on the CD ratio. Number 1 is, I think not just, you may have seen the monetary policy in the past. It's very amply clear. The CD ratio is not an indicator that is going to be focused on, at least in the near future. It's going to be the liquidity coverage ratio. So that is exactly what we are also focusing. We are reasonably comfortable from a liquidity coverage ratio, and that's a metric. So CD ratio is not something that we will be focusing for some time. And that's number 1. In terms of the margins, you want to...
let me take the margin. See, margin, there are 2 aspects of margin. 1, the current margin that you're talking about, we will urge you not to look at quarterly. We have mentioned that in the past. At the minimum, you should look at annually in terms of margin, because quarter to quarter, there are several customer needs that we will meet. If we start to focus on short term, we will not be able to meet the customer needs and appropriate franchise growth for the medium to long term. So we will not we will urge you not to bother with anything to do with quarter. That's 1. Second, you touched upon in terms of longer term, right? Whether the margin post-merger and from then when we will get to pre-merger and so on. So that aspect of it continues to remain an opportunity space that we pursue, both from a cost of funds as well as yield. Cost of funds is the mix of the borrowings and deposits as well as the CASA, depending on how the household savings move. Irrespective of what goes on in household savings, that is the kind of investment we saw through a few years ago and started to expand the distribution. We are in 4,100 towns and cities for a reason that we want to make the unit economics work, because you and I will maintain savings account balances only to certain level. We are not going to have disproportionate level of savings account balances. If we have, we will go and make other investments. And so the way to operate, which we have envisaged and we are executing to, is the unit economics, which means we need more kind of a base. We have a little more than 100 million, 102 million customers, and per branch we keep adding almost. Last quarter was 1.2, 1.3 million liability relationships. We keep plowing this to get that unit economics work. And when we do this, we're cognizant of the cost, because you know that once you play the unit economics, it could result in disproportionate cost increase, which is where we try to keep that lid for efficiency, both branch productivity and people productivity in our site to drive that. So that's from a liability side, from a mix of products on the liability side. On the asset side, the margin lift, the margin opportunity remains to be in the mix of products. Today we have 52% of our book is retail. Or long term, we have been at a 60%. We envisage to get there because India's GDP composition has got 60% of consumption spending. In order to be moving in tandem with how the economy is moving, we need to be 60%. And that's part of the journey, and it is not something that goes in a hurry, but that's part of our annual plan, and the strategic plan is to get that mix up over time. So these are the two play on the margin.
As Ritu Kaizad here, as regarding your question on the reappointment of the CEO, as you alluded to, the new chairman has just taken over, and which is, as recent as yesterday and today. The GNRC and the board is seized of the matter, and they have been, it's work in process. As soon as they are able to conclude, we will come out and inform all of you people and the exchanges as to the outcome of the exercise.
My questions on FCNRB has not been answered, and Mr. Jagdishan, if you could also add on in terms of loan growth, incremental loan growth, where that's coming from. Of course, we're seeing this, corporates coming back to banks, away from the bond markets. That's a trend we're seeing across banks. But for you in particular, where do you see the opportunity? And FCNRB, what's the target?
Okay, let me answer this FCNRB, and then Kaizad will answer on the loan part of it. Number one is there are three streams of FCNR that we are targeting. Number one, at 6% plus, is extremely attractive even for someone in different parts of the world who are probably getting a 4 to 4.5% as well. So there is, even without leverage, it is a very attractive, and you'll be surprised how small ticket NRI customers are also lining up to this kind of opportunity. So we are focusing on that. We have raised a substantial amount even in just the last few days. The numbers we don't want to declare at this juncture, but you will see over the next 3 months at the right time when the issue closes. I think we may put it up in the public domain. The number two is on the leverage part of it. There are two types of leverage. Number one is our own leverage, and number two is the leverage that our customers can take from foreign banks in certain jurisdictions. The own leverage is a function of how much we get in as an inflow through our borrowings. And as you know, we have already raised about 750 million, maybe the first to begin with. And we do have plans to raise further borrowings to be able to provide own leverage to our best set of customers. And that is a work in progress. And that is, in terms of leverage, obviously, since the amount is rationed, so we would want to provide, at this juncture, somewhere around 9 times leverage is what we're contemplating. If at all there is a need to step it up, we will re-examine and recalibrate it going forward. As regards the third stream, which is the customers going and taking leverage from our counterparty banks where we have tied up, obviously the leverage ranges between 9, 12, and 15 or 19, depending on the jurisdiction. And this is something that is dependent on the country regulations and also the counterparty banks, the thought processes, etc. Therefore, we had a fair amount of relationship which we are harnessing with counterparty banks to be able to provide this kind of leverage to our customers. And all in all, I think the momentum will start to pick up now. It is just a matter of time. I think we have time till September, and we should be, whilst I'm not going to disclose the number that we are aiming for, but I think it should be a very healthy number vis-a-vis what the system is going to be mobilizing over the next couple of months. Thank you.
Thank you very much. Ritu, may I request to kindly come back for a follow-up question, please? Thank you. Next question is from the line of Hansini from Money Control. Please go ahead.
Hi, good evening. A couple of questions. I'll start with the one on FCNRB. Dubai is turning out to be an important center for the entire Indian banking system. There is a ban on HDFC as far as new bookings are concerned from DIFC. How are you mitigating that aspect? How are the flows from Dubai particularly been? That's one, and I'll come back for my second question, sir.
No, absolutely right. I think we do have a little bit of a handicap there in that particular region. One is the kind of embargo that we are seeing from the UAE regulator. Two is there is a kind of advisory by the Central Bank of UAE on all the rep offices in the region itself. So these are some of the constraints, but we are not sort of necessarily waiting and for that. We have alternate strategies which we are deploying in terms of even sort of reaching out from India, which is allowed as product specialists, and that is what is happening today. And we may have other strategies as well to reach out to some of the customers within the realms of the regulations as well. You're absolutely right in terms of the restrictions and the constraints, but we do have Plan A, Plan B, and Plan C as well.
That's assuring. Now that Bank of Baroda has looked at settlement for one of its old pending litigations, what would HDFC Bank stand on be as far as the 81 issue is concerned? Would you be open to offering the bondholders some settlement? This is more as a continuation of the first question. Let me also put my second question here. Sashi, I'd like to understand from you how has it been between you and Mr. Kumar? I'm presuming this would have been the first board meeting, full-fledged board meeting that he sat through. Did the NRC meet ahead of today to discuss your reappointment? As we're getting closer and closer to October deadline, we're getting a little anxious whether it's going to be you unopposed or would your board recommend you plus as well? Some bit of color on that, Sashi, would be extremely helpful.
I'll do the first part, Sashi, in terms of the bonds or whatever, right? First, that's very hypothetical in terms of what is it, claim or settlement or whatever, because there is no established missell or anything of that sort, right? So let's be very clear. And so that question is very hypothetical, and let's not get into conversation of things that are up in the air or just theoretical. With that goes to the
okay. On the second question, you spoke about the fact that yesterday and today was the first day of Mr. Kumar chairing meetings and also sort of presiding his first ever board meeting today. I think I talk on behalf of the other board members. I think it was very well received, very refreshing. And he's done a lot of homework, and we're very eager to see a great partnership between the board and the management over the next years. We are very confident about the next stage of growth. As regards, it'll be unbecoming if I were to talk about myself in terms of whatever the questions that you asked. So it is much better that if I leave that question to Mr. Barucha.
Shashi, thanks. Himanji, as I already clarified in the response to Ritu earlier, the GNRC and board is completely seized of the matter, and this is work in process. Once we have a decision from them, we will certainly let all stakeholders know of the outcome of that decision. So, is it something that is been worked upon? Answer is yes, and we will come back to you shortly on it.
All I can tell you is that this being the first meeting, obviously, you need to give a little bit of a time. But my hunch and feeling, and I'm sure Kaizad here will also share or echo the similar thoughts, that his demeanor and his endeavor is to minimize uncertainties in a very short time period. So that is a signal that came about, and I'm sure, as Kaizad is mentioning, just give it a little bit of time for the NRC and the board to sort of conclude on some of the milestones that they have given themselves for all the necessary actions to be taken in the near future.
Thank you very much, Hamsing. Can I request to please come back for a follow-up question? Thank you. Next question is from the line of Piyush Shukla from NDTV. Please go ahead.
I wanted to ask you, Mr. Bharucha, if you can help me understand, basis your commentary till now, the feeling that we are getting is that the bank is yet to recommend to the RBI for the reappointment of Shashi sir. Is that right, or it already has applied? You're saying the NRC will meet and then decide, but we are in July now and terms end in October. The RBI norms say you should submit before 6 months or so.
Headed, and just one clarification, you had earlier maintained that in FY27 you would grow ahead of the system, but did that change anyhow due to the West Asia war? If you could clarify that. Thank you.
Yeah, so Saloni, I'll first take the second part of your question in terms of the retail growth. If we look at the retail growth on a year-on-year basis, I think, there has been a significant movement in the way we have approached it. To demonstrate in terms of numbers, if we look at first the mortgages book, we have seen a good increase in the book in terms of our annual disbursements. Our disbursements on a year-on-year basis has grown at approximately 14%. If I further drill down into the other core retail books, which is our wheels business, we've seen a very healthy growth out over there, again of about 20% in terms of our annual disbursements. If I further take it to the personal and business loan segment, we've seen a near equivalence of 20-21% in terms of our disbursement growth out over there. We also have, introduced certain new products in our bouquet of retail offerings. This includes, the gold loans as well as the micro loans, which we call as the Dukandar loans. And both of that has also seen very good traction. Though coming off a small base, we have seen, our gold loan book grow at about 35% on a year-on-year basis.
So could you give me the size of the gold loan book?
So we have put it out in the pack. It is roughly as it stands as of 30th June, about a little over 25,000 crores. Okay, so that should give you a quick flavor as to how the whole retail momentum has been growing year on year across a range of our core retail products. And we see that demand continuing, and the momentum is very much there. If you then move to the SME segment, of which business banking is the largest component, you would see that we have grown on a year-on-year basis at over 22% in business banking, and on the whole small and mid-market, we've been at roughly about 18.5% to 19%. This certainly is, continuing on the growth journey that we've had in our MSME business. in as much as, today we are number one in 15 states in MSME, and we are in the top 3 in the 25 states in the country. You would also recognize that the ECLGS 5.0 scheme, which has been launched, with us being a dominant player on the landscape in terms of MSME, we are amongst the largest in terms of our disbursements under the ECLGS scheme, amongst the top 2, at sometimes 1, but it's a dynamic movement until the scheme is available till 30th of September. Or in fact 31st March. So we see that business continuing to grow and perform at the coverage I have mentioned. Then coming to the corporate and other segments, we've also seen a good growth that you would have witnessed in the last quarter, and that continuing in the current quarter as well. The corporate and mid-market segments, along with other wholesale, has grown again at about 18.5%, 19%. So that should give you a good flavor about the growth that we are seeing in the consumption side, representing the retail growth, the mid-market, as well as corporate. So all the 3 segments continue to perform along the expected lines and along the positive path that we see it continuing.
Sir, on corporate, is it capex or general working capital demand, and which are the sectors?
Okay, so it's been a mix of both. So, because markets had been volatile, you had seen some amount of bond demand shift from the bond market to the corporate loan market. So that led to a little more of term coming in. It's also been a good amount of working capital given commodity prices had been elevated and people needed to draw on their working capital lines.
Alright, then there you go. So that's the commentary coming in from HDFC Bank as well. And you do have the management really flagging out that commentary coming in terms of commodity prices, working capital pressures as well, and largely strong headline numbers that you're looking at. Slight bit of core pressure that really remains, and that's the commentary coming in there. On that note, though, it's time for a very quick break. More news and updates on the other side.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The entrepreneurship in India is currently defined by innovation, technology, more customer orientation is something what is visible today. And those companies who innovate, collaborate more importantly, are the ones who are going to be more successful in the decade to come. And the formalization also had helped in terms of expanding the entrepreneurship across the geography of the country.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Let's try and understand from the management about a few other things. We've spoken to them earlier about the setup as it stood and the key performance of the margins. But I want to take a follow-up question to Aparna. And Aparna, my direct question is this. I understand you will try to optimize, but do margins stay stable? Do they inch higher, or do they have a potential of galloping ahead? Because a lot of peers are saying they will gallop ahead for them.
Our endeavor would be to keep improving it, through the quarters. But like I said, it'll be a function of the investments we need to make. These could come also in the way of deals that we are contesting, we are looking at winning. So, it's going to be a function of growth as well.
Okay. Saurabh, can I get you in on manpower requirements? How are you hiring talent right now? And considering that talent has to be less expensive, but if it's AI-enabled talent, it will be more expensive. How do you juxtapose all of these factors and do optimum hiring?
So Neeraj, all the forces are in play. We'll have to make sure that we take care of our existing employees. We'll have to invest. Aparna and Srini spoke about it in future talent. Some of the AI skills are rare, so they are coming at a premium. So all forces are at play. We'll have to invest, grow, and make sure we maintain our margins. I think that's the way we look at it. Our overall headcount and hiring will be linked more to the demand environment, which is right now a bit muted. But I don't see a headcount going up drastically. I see that the gains of productivity, which we were talking about, will have a play as we move forward.
Okay. Srini, the Q2 guidance is muted. What needs to happen for acceleration in H2? Beyond the OLAM and the acquisition tailwinds, what are the biggest organic growth drivers that you have which could facilitate growth in FY27, considering you said that the demand uncertainty is already baked into the current guidance?
Absolutely, Neeraj. We have baked in all those aspects when we give the guidance because we just give a quarterly guidance. Having said that, going back to your question, and if I were to look at the three markets in Americas, I think, we talked about BFSI. We're seeing a good momentum there. Consumer, we have won some deals, and that's another one. Healthcare is somewhere due to the government regulations, especially in the payer and provider segment. We are working with the client to client in terms of the changes that they are going through from their side, which will take a little bit of a time. And if I look at Europe, clearly, the momentum is building up in energy manufacturing resources, which was traditionally very soft sector for us, and we have seen some good deal wins there, and that should reflect in that. BFSI continues to be strong in Europe, and specifically in few countries that like UK and Nordics region. And if I look at APMEA, it's a more secular because it's a much broader market. But having said that, in addition to the OLAM deal that this market has won, they're also looking at country to country opportunities around AIDC, opportunities around sovereign AI, and so on and so forth, which is becoming more important for some of these clients in some of these countries as well, Neeraj. So overall, the deal pipeline is healthy, more skewed towards cost takeouts, including vendor consolidation. But there are a lot of deals on the AI side as well, which will be consulting-led and which will be more advisory and leading to data and cyber security and other aspects as well, which continues to create the momentum. Right now, they are much smaller deals, but as the client shifts to at an enterprise level, there will continue to be larger deals as well.
Okay. Srini, you emphasized the consulting-led AI-enabled approach. How much of that FY27 growth in pipeline is coming from AI, Gen AI deals versus traditional services? And, any update on this embedded AI engagements as well? Also, maybe just a comment on the token cost versus human cost, and how are you baking that in client conversations?
Sure. So the way I see it, Neeraj, in terms of AI, our approach is AI first. We are pivoted to AI. So you have three types of conversations with our client. One is, I call it as run and operate, right? There, it's a traditional application management, infrastructure management, business process management. Here, every solution that we do is AI first approach. And for that, we have built a platform, which is Wings, which gives us agents and agentification of the client's end-to-end process. So to me, you lead in with AI and you give in the productivity benefits for the client. And we bake that into our solution and our cost. The second part, Neeraj, is around software development lifecycle, especially the build AI, which we call it as that, which is also product engineering lifecycle and package implementation. There, I think the disruption is much higher because the productivity benefits that one can get in a software development lifecycle, specifically if it is a greenfield or a program like Python, you get a huge benefits in terms of productivity, right? Having said that, if the code is lot more complex, a lot of modernization that's required, how you deploy and take it to production, the complexity increases. There, the productivity is much lower. So that's how I see, because that's more of a brownfield. There are a lot of legacy applications. You got to be careful in terms of how you deploy. Now, both both the scenarios, Neeraj, it's going to be human plus AI, because human intervention will become very important. I'll tell you, if you look at software development's life cycle, I'll break it into 3 pieces. The one is testing and coding, which is in the center. A lot of productivity benefits you can get from AI. But if the target environment is legacy, and if deployment and production has to be there, a lot of human intervention one needs to do. Also, business requirement gathering, user stories becomes very critical, because only then you know what is the right tool to deploy. So the productivity and the way we come into picture for our clients is around telling them what's the right tool to use in that aspect. The last part you asked is on tokenization. So what is happening, Neeraj, is that you don't need to deploy a high-end LLM for a simple workflow, because the cost is going to be prohibitively high, but the return on investment for that workflow will be much higher. Second, when you have to get the real return on investment from AI, you got to really reimagine your process, redesign your process. Only then you get the benefit. But if you do a piecemeal approach, you have the AI cost, you get the benefits in that piece, but net you may not get the overall productivity. However, the token cost is sticking, right? So when do you use a large LLM, and when do you use an open source kind of an LLM? When do you think it's better to continue with the human? The balance between the human capital and the token capital will become very intense as we move forward. And that's where companies like us, we have the depth of expertise, we have deep tech knowledge, but we also have the business context, the client context. We are able to stitch that and articulate that to the client in terms of what it should be as part of our advisory and consulting, Neeraj.
Okay. All three of you, thank you so much for joining in today and giving us your thoughts.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report. The important thing to notice there is that these are quantifiable numbers which can be compared. So these are comparable, these are quantifiable. So that is the more important thing. So an investor now can know how a company is doing, and he can make comparison between one company and the other, and also over a period of time. So far as the other players are concerned, the proxy advisory firms, they are also helping the investors in evaluating the companies, how they are doing. And in doing this, India has reached at a level today where we can claim that we are one of the best in the world.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will learn in...
Well, Welcome back. Thank you so much for staying tuned in. It's time now to put the spotlight on the summation of all of the earnings, the gamut of earnings that we've received when it comes to the banking sector. And when you talk about the banking Q1 performance, largely you are looking at a mixed sort of set right now coming in terms of ICICI Bank leading with that strong growth as well, improving margins and stable asset quality. Kotak Bank, of course, delivering a strong recovery, supported by some of those lower provisions that you're looking at as well, in HDFC Bank that saw the profit growth that really stands out. When you talk about Axis Bank, a little bit of a challenge really coming in terms of the weak margins and CASA pressure, rising asset quality concerns as well, and PNB did continue to improve. Nonetheless, let's also get all of those highlights in greater detail when it comes to all of the banks that I've mentioned, and Piyush and Shivam are joining in with just that.
Yeah, that's right, Shreyansi. In fact, a whole host of banks, 6 odd banks have come out with the results today. We'll start off with HDFC Bank. They've had a decent set of quarter in Q1. The net profit is up 10%. Essentially driven by, lower provisions was one of the factors the bank was able to actually post higher profit. The provisions actually fell sharply by around 79% to 3,060 crore rupees in Q1, whereas the net interest income, the difference between interest earned and expended, was up 6% at 33,530 crore rupees. The other income of HDFC Bank, in line with other banks as well, has actually come down by 41% to 12,820 crore rupees. On the NIM side as well, the bank's NIM is down around 12 odd basis point to 3.26%, and going ahead, the management has said that considering the macros at play and market in current way it is, the NIM are likely to improve going ahead. Now, overall, HDFC Bank continues to grow its deposit at a faster pace of credit. Deposits are up 15% year on year, and advances are up 12%. Corporate growth has been, quite good in this quarter. Fresh slippages, however, we are seeing some of the major banks reporting slight uptick in the fresh slippages, especially from the agri portfolio. So, 8,000 crore odd rupees of fresh slippages in current quarter as against 6,200 crore of fresh slippages in the last quarter. But Shivam, you were covering ICICI Bank today. What are the key takeaways from the Q1 results?
So ICICI Bank has posted a strong Q1 results, and starting with the few highlights, the net interest income has grown on the back of a strong credit growth. In terms of the other income, that has also seen a strong growth, and that was due to on the trading income basis. And if talking about the margins has seen a slight improvement. And also, as I said, the treasury gains, that has also seen a turnaround in this quarter and has moved to a positive territory. In terms of asset quality, the asset quality has also remained stable, and ICICI Bank's cost of funds going forward will remain range bound. And in terms of margin, to the management has said that the management is still expecting that the margins will stay in a range bound manner going forward too.
Now, when we come to look at Axis Bank, Shivam, the bank's net profit has risen handsomely around 26% I believe. But one major thing that we observed was that the provisions were also very low, 2,200 odd crore some provision as against, almost 4,000 crore of provision that the bank made last year. Overall, the Q1 results were in line with the estimates. The bank saw modest growth in its net interest income. The operating profit was mostly flat, and the trading income for almost all the banks this quarter has been lower. So, it has affected a bit of profitability for all the banks. On the margin front, margin has continued to decline for the 5th straight quarter for Axis Bank, and the bank expects some recovery going ahead on the margin front at least. The asset quality, has declined. If we see YOY, the slippages are lower, but compared to last quarter, Axis reported higher slippages in Q1. And finally, the CASA, the perennial problem with some of the Indian banks continues. Axis Bank's CASA levels are going lower, and credit costs is, sustained. It's mostly stable and expected to remain low at least for the coming quarter, is what the management commentary said. Shivam, back to you. PNB early today, how do you see the results?
the numbers were in line with the expectations. And if we talk about the net interest income, that has at least given a modest growth in Q1. And in terms of loan growth, that was mainly led by the RAM segment, and we have seen a substantial improvement in retail and MSME segments too. In terms of margin, it was led by mainly the better funding cost, and cost of funds and deposits have also improved on a quarter-on-quarter basis. In terms of operational efficiency, that too has improved, and we have also seen a strong decline in operational expenses, which has led to this operating efficiency. In terms of growth in PAT, that was mainly supported by the lower provisions, as you said earlier, and asset quality has also improved, as there has been a decline in slippages by 26 basis points. Apart from that, the management has also said that they are targeting a $2.5 billion FCNR deposits till September 30th of 2026.
That is good. I mean, Shivam, I think private banks are a bit conservative in terms of sharing these FCNRB deposit mobilization figures. PSU banks, put out the targets. They don't think that it's an internal one. At least that is the term that some of the private banks say, that this is an internal thing we can't really share with you. But moving on to Kotak Mahindra Bank, strong set of results, Shivam. The PAT is up 26%, led by, stable growth in both core income, net interest income, and other income as well. The net interest income grew by around 9% YOY to 7,928 crore rupees. The other income, on other hand, also rose by around 8% year on year to 3,383 crore rupees, 38 crore rupees. Provisions helped Kotak Bank's, bottom line this quarter. Provisions were down 45% YOY to 668 crore in the reporting quarter, whereas the deposit growth remains strong around 14%. CASA continues to go lower, and the advances were up 15%. Again, the bank saw handsome growth in corporate loans. Now, fresh slippages, this is a good sign for Kotak. Both on YOY and Q1Q terms, the fresh slippages have come down to 1321 crore from 1812 crore, last year, similar quarter. So very interesting set of results, and it was a very heavy day for both of us today. Back to you, Shreyansi.
No, absolutely, and heavy day for me as well, Piyush. Thank you so much for joining in with that update also coming in terms of the summation as well. But let's also put all of this into context. In terms of the banking Q1 earnings, it's really highlighted a very clear divide coming in between growth leaders and banks also facing some of that margin pressure. You do have ICICI Bank that led with strong growth also coming in, stable asset quality. Kotak saw sharp recovery coming in. HDFC faced that margin pressure really coming through, and PNB continued improving. And Axis, of course, remained challenged with that margins and asset quality front as well, really being in focus. So key focus areas, margins, deposits, as well as credit costs. Let's also take the conversation forward and get you some more important insights. In fact, Parag Thakkar, Head Fund Manager, Fort Capital, joins us on the show right now. Thank you so much for taking time out and joining us. It is a very interesting day, and I'm sure that you've been glued to your screen as well, trying to pass through all of those numbers, and quite a lot of numbers to look at. Parag, first things first, just wanted to get your first cut in terms of what's the summation of earnings as well. Where are you seeing pressure, and where do you think on Monday markets are going to be looking at things quite a little bit positively?
Yeah, thanks a lot. So I would say that when this result season started and business update started, luckily I said that ICICI Bank will be a complete outperformer in terms of when you compare it with all other banks, and they proved it, right? And so all kudos goes to, and all my great regards goes to Bakshiji and the entire team. I would like to wish them through your media that they have done a phenomenal job. Quarter after quarter, I would say. So this year also, if you see, the most important thing which Mr. Bakshiji refers to, and which is very critical, it is PBT before X of treasury and X of dividend income. That has grown at 18.5% YOY for ICICI Bank. NII growth was 12.7%, right? So loan book growth was 20%. NIM actually improved quarter on quarter by 4 bips when other banks actually struggled. And in some of the banks, we saw double-digit NIM decline QOQ, right? So asset quality was stable. So nothing to complain about. Clear winner is ICICI Bank. You can say that stock has rallied from 1,225 to 1,440. And so there'll be some sellers always on Monday or Tuesday. They'll be doing profit booking who are traders. But from structural point of view, if you ask me, if you want to play India story, there is no other stock like ICICI Bank in the banking pack at least, and overall also, because it compounds your earnings at 18-19%. P multiple is just 12-13x. ROA is 2.49, by the way, 2.49% ROA. And if you exclude the subsidiary value, it is still available at 2 times book. So I would say that thumbs up to ICICI Bank. Of course, in the mid and small cap banks, we saw Federal Bank reported good numbers, but now the price has moved up too much for that. And in PSU banks, we saw Indian Bank reporting good numbers. So I would say ICICI Bank in large cap private sector banks, Indian Bank in PSU Bank, and Federal Bank in small cap banks, they have led the pack this quarter.
And Parag, you called it just about right? In terms of just, sort of penciling in what the numbers are possibly going to be looking like when it comes to something like an ICICI Bank. It was one of the few banks to see margin improvement also coming in. At the same time, when you talk about some of its peers as well, HDFC Bank, Axis Bank, faced that NIM pressure that was slightly reflecting through. So what is driving this sort of divergence in your view? And you've, of course, outlined that as well. But which are the banks that are positioned for some of that margin recovery? Anything that you're penciling in on the margin recovery front then going forward?
See, one thing was very clear. The cost of fund was going up. When you see the banks were raising deposits in the month of May at the rate at which they were raising deposits in the month of March, right? Generally, that is not the case. Generally, in May, the deposit rates go down. This time, deposit rates were up. So it was very clear that there was likely to be a margin pressure this time. Going ahead, definitely we'll have to check with the banks and we'll have to go through their earning calls. Axis Bank call is just going to start, and where I would like to definitely hear from them that whether the margins have bottomed out for them. Kotak at 4.53% was decent. Kotak, the other good things about Kotak was, one, credit cost improved significantly, and second, OPEX as a percentage of assets, cost to assets also improved significantly, which they are trying hard to do, and the valuations are very, very attractive. So one thing which I would like to ask, of course, HDFC call has already happened. I think from here on, HDFC Bank margins should improve logically, and Axis, let's see what they tell on the call. Definitely, they should signal at margin bottoming out, because remember, Axis Bank's guidance is that through the cycle, they want to maintain 3.8% NIM. Now, this quarter, they are at 3.46. So it is a long way to go. Unless RBI starts increasing repo rate and so that variable loan rates go up and so their margins recover. Otherwise, it looks difficult, but let's hear from them in the earning call.
No, absolutely. And, we'll very quickly just go across and listen into that bit of commentary that you've also mentioned in terms of Axis Bank as well, and them responding to our question wherein we asked them on the gross slippages increasing during the quarter and a breakdown of the segments contributing to the increase. And we'll come back to you with some of those questions as well. Lots of insights that still remain, Parag.
I think you're referencing Q1 versus Q4. There is seasonality for the agri portfolio in Q1 that doesn't exist in Q4. If you look at Q1 last year to Q1 this year, our performance on slippages has been significantly better than where we were. Our gross slippage ratio stands at 1.79% in the current quarter, and it's lower by 134 basis points compared to same period last year. So Q1 and Q1 are apples to apples comparison, and we have improved asset quality meaningfully from that period.
Hi, Parag, Piyush here. I just wanted to get your sense on HDFC, taking you back to the HDFC counter. Today, the management did allude to the fact that the margins will likely improve going ahead. But I wanted to understand from you, will the markets, read into this, the bank has not really announced anything with regard to the reappointment of their CEO or on, new CEO appointment. Will this be a hang for HDFC Bank on Monday? And I have few queries on their financials as well, because, the margin for HDFC Bank has gone down by 12 basis points quarter on quarter, and it is at a record low of 3.26%. How do you see these two factors, playing out on Monday?
See, I'll tell you, HDFC Bank, I have a huge respect for the management and the entire business. The point is that you have to, when one buys HDFC Bank, what is one buying? It is a huge proxy to Indian economy. they are careful and prudent lenders. They have a very strong deposit franchise, right? And these problems regarding margins and all these problems are because of various factors, external factors. Some of them are internal also, like merger. So I would say that logically, if I go by what they are saying, and the margins, this should be the bottom of the margins, and hence any negative reaction on Monday because of the 12 bips QOQ margin decline it should be used as a buying opportunity from long-term perspective. I'm not recommending anything from short-term perspective here. The reason, as I said, like ICICI Bank, my target is say 1750. According to me, the intrinsic value is 1750, which is simple. 600 rupees is a book value for FY28. Yeah, their ROI is 2.49. So you give them 2.5x. So 1500 rupees of core bank value, plus you have 250 rupees subsidiary value. But the point is that market is market, right? So market may everybody makes profit and they book profits also. So I'm saying that Monday what can happen, I cannot say. From medium to long term perspective, if HDFC Bank corrects by 2-3% on Monday because of this NIM decline, which was not expected, 12 bips was a little bit too high. If it corrects by 2-3%, definitely one can invest from a long term perspective. But it has to be really a medium to long term perspective, not very short term perspective. And regarding management changes and CEOs, so board recommending to RBI about Mr. Shashi Jagdishan's extension, I would not like to comment. It is up to board, but I would say that from governance perspective, I feel HDFC Bank is absolutely clean.
Right. The other thing that I wanted to ask you, because so many results have come out today, we have seen, across some banks, there has been an inching up of slippages, fresh slippages in this quarter, especially HDFC, for example, has seen fresh slippages rise to 80 billion or 8,000 odd crore from 62 odd billion last quarter. We did see Axis also on a Q1Q basis, there was some rise. Is this like Q1 has this seasonality sort of impact because of agri loans? Is this that effect, or there are like we saw adverse cycle in the unsecured credit? Is that the case here? How do you read into this?
No, it is purely seasonal. In Q1 and Q3 you see this, right? In every financial company you will see this, because there will be rural agri related slippages in Q1 and Q3. So whoever has a agricultural related, rural related portfolio, and definitely every large bank will have, we'll see some more slippages in Q1 and Q3. It's a seasonal phenomenon.
Parag bhai, one important thing, I mean, this debate has been going on for so long that CASA, banks are not able to gain CASA. Across banks, whether it is the large size ones, small size or mid size, the CASA continues to fall. Bankers are also now looking at, FCNRB deposits in a big manner. Do you feel that in just HDFC Bank's media call, the CEO said how the CD ratio is no longer important. There are LCR, there is NSFR, there are other liquidity metrics that are going to be playing an important role. Do you feel CASA banks will continue losing CASA, and what other sources will they tap then to raise liabilities and subsequently fund its loan growth?
No, so basically, see, CASA is a universal product. It is going to continue for sure, because all the investors who are depositing money in current account or saving account have options to gain higher interest rates, right? By just converting them in that saving money into term deposits or sweep in deposits, right? So I would say that CASA is on a structural decline in my view. It might rise at some point, and but I would say that one should not bank upon too much on CASA as a lever for margin expansion. I know that, for example, Kotak kind of bank is saying that CASA is one of the levers. We'll have to see how it figures out. I'm a shareholder of Kotak Bank in my PMS portfolio, so I would wish that that happens. But I feel that's a wishful thinking. CASA growth is very difficult now from here on. It is about, how you balance your portfolio. And definitely, once again, I'll tell you, ICICI Bank is doing it so brilliantly, right? So brilliantly. Like in this quarter, to expand your NIM by 4 bips QOQ, and to show such a high good 12.7% NII growth YOY, I think it is amazing. One has to learn from ICICI. Nothing else. CASA is not going to show significant improvement in my view.
Absolutely, and one more that really gives out some more earnings as well for some of its peers as well. Let's also talk about this one in terms of the asset quality trends that are diverging. You do, of course, have ICICI and Kotak that remain largely stable. HDFC Bank and Axis Bank seeing some of those higher slippages, like we've talked about earlier, right? So, is this, in your opinion, a little bit of a temporary movement that you're looking at, or which are the banks that really stand out to you in terms of this really indicating a trend going forward? Do you think that this could be a blip coming in for some of the banks where you have seen some of those higher slippages?
No, as I said, this slippage, I will not look too much into it because Q1 and Q3 are agri slippages, and HDFC Axis both might have seen that only. Of course, ICICI and Kotak has done brilliantly in this quarter also. But I would say that it is something which is seasonal. I would not read too much into it. See, I'll tell you, the asset quality problem right now is no longer there in at least the large cap banks. It might come if this West Asia war conflict lasts longer, if there is energy shortage in the country, or if crude oil spikes up above 100 again and stays there. That is where you have to start worrying about asset quality. Otherwise, up till now, see, during COVID also, for example, government gave that guarantee scheme, right? Where banks lended to SMEs 20% more than their working capital requirement, and it was guaranteed by government. At that time also, the slippages were very, very minimal. They were just 3% NPAs. While actually banks anticipated that they'll have to write off 30% and then they'll have to recover that from government. So even when everything was stopped, there was a lockdown, the NPAs did not spike up too much. So if energy prices go up, I don't think Indian SMEs will just, default. For them to default, it should be energy shortage, that they are not getting gas, they are now not getting oil, they are not getting power. And that situation lasts longer. And in that case also, government has come out with the guarantee scheme for 2.55 lakh crores. Right. So I would say that asset quality issues right now not there. It might come up, but if this West Asia war conflict lasts long, and if there is significant energy shortage, then only I anticipate asset quality issues to start.
And that's in line with some of the commentary that we've heard from the management as well. Let's also quickly recap the commentary coming in from Kotak Bank. That's one counter that's going to be standing out in Monday's trading session as well. Let's go across and listen into what the management had to say.
Vaswani sir, I wanted to understand, towards the start of the, conference, you mentioned how, you've got on familiar personal reasons you took this decision. I just want to understand how do things move ahead. You did mention the bank has internal talent and, will get the best of the best. But in terms of timelines, what are we looking at? Because we're in July and your term ends in December. So can we expect an announcement in the next month or so? And secondly, I would also want to understand, would you be able to share the amount, the quantum of FCNRB inflows that the bank has got till now, if there is any target on that front? And lastly, on the margins, if you could give some guidance on, because we've seen some moderation in this quarter, both Q on Q, YOY. How do you see the margins going ahead? Any sort of guidance you have on that front?
Yeah, on the management succession, there is a timeline which frankly the RBI lays out, and the board and the NRC is very, very confident that they'll meet those deadlines. So there should be no issue on that front. On FCNR, like I said, it's early days. We find it very promising, but we don't share, internal targets. It's not appropriate to do so. But we are quite excited and quite encouraged by the opportunity. And as far as margins are concerned, like I mentioned, margin literally has been pretty flat, 1 basis point up or down for the last 3 quarters. And, honestly, with all of these kind of variables like FCNR, like ECGLS and all of that, giving guidance will not be appropriate.
On ECGLGS, if I can ask you, sir, how many loans have been sanctioned under the scheme or disbursed? And is there any, headline figure that you're looking at to disburse under this particular scheme?
So till as of 30th of June, we have disbursed about 3,000 odd crores. Number of loans I don't recall. It's largely distributed given to our MSME and SME customers. So number of loans would be very large, but in terms of amount, it is about 3,000 crore. And there is no target. We are addressing the requirement of our customers. Whosoever asks for ECLGS facility and they are eligible, we are going ahead and providing it to them.
Right. Parag sir, moving back to you, we have discussed about growth, about margins. We have discussed about FCNR. One interesting segment or one interesting trend that I saw in this earnings season is that banks have started reporting very handsome growth in their corporate loan book. The metals, Yes Bank CEO saying metals, oil sector is showing higher appetite. Exactly, because the sense was that corporates had moved to the debt market to raise funds instead of banks. So how are they coming up? Are banks giving them, is there a very good sort of rates that they are offering? And how do you see, will this corporate credit growth trend continue? Will this trajectory, will banks be able to continue reporting in double digit the growth in corporate loan segment?
So it is, corporates want cheaper loans, right? So it is very simple. When the bond market rates, debt market rates went up and the gap between bank borrowing and debt borrowing reduced, they were shifted to banks, right? So if that phenomena continues, the corporate credit growth will continue to look good. Of course, and one has to also have a view that this year was actually disrupted by tariff tantrum and then this West Asia war conflict. So the animal spirits of India's private sector has taken a backseat for a while. Now, if this comes back, and hopefully if this West Asia war conflict ends, say within 1 month or so, and then you have an excellent combination in India where corporates are under-leveraged and banking balance sheets are absolutely strong. You might have seen Kotak Mahindra Bank's Tier 1 is about 22%, right? Now, which bank in the world has such a high capital base? 22% Tier 1 is just too much. They are sitting on a lot of capital. So they have a huge room to grow, right? If the private sector capex picks up. So I would say that from near-term perspective, till this gap remains narrow between the debt market borrowing and borrowing from banks, banks will continue to see good corporate credit growth.
And thank you so much for taking time out and joining us this evening to decode all of those numbers. Quite a lot of numbers to really pass through as well. And that's the entire trend that is clearly emerging, Piyush, when it comes to some of those banks as well that are very much in focus. It's a very, very heavy day that we had coming in terms of some of those banking earnings. Quite a big fraction of the Nifty Bank, a lot of constituents that reported numbers in terms of weightage especially. Yeah. And quite a lot of interesting, takeaways to take away from in today's session as well, in today's show as well, to take to Monday's session, but that's all the time that we have on the show. Thank you so much for tuning in.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. We are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation. The jury realizes that wealth creation is important. These are people who are creating wealth not only for their company but for the nation. But it has to be in a sustainable way, in a long-term way, without harming the environment and the climate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business.
Hello and welcome to The Big Question. I'm Vikram Oza. After years of those negotiations that have taken place, the India-UK trade deal finally going live. Today, the 15th of July 2026, it has come to life. So it is being billed as one of India's most ambitious trade agreements with a developed economy. And here is the big headline. 99% of Indian exports to the UK will now get duty-free access. 99%. That means a potential boost for Indian textiles, for apparel, for engineering as well, for marine products. Yes, footwear, also gems and jewelry. All of these get an impetus. The Indian government believes that this deal can help take bilateral trade between the two countries to $120 billion by the year 2030. But trade deals are all about give and take, aren't they? India has agreed to gradually cut tariffs on British products like Scotch whisky, like gin, also premium cars. So will consumers get cheaper imports here in India? Or will domestic industry face stiffer competition? Has India opened its market just enough to win big on exports while India protects those sensitive sectors like agriculture, like dairy? These are the sensitive sectors. The question also is, has Britain secured the bigger long-term prize, which is greater access to one of the world's fastest growing major economies? It's a big real win as far as UK is concerned when you consider the size of the Indian market. And then there is the bigger question, can this deal create jobs? Can it attract investments? Can it strengthen India's manufacturing ambitions and make India a stronger alternative to China in the global supply chains? Or will the non-tariff barriers, the compliance costs, the future carbon taxes, will these factors blunt the gains? Which is why tonight we're asking this question. Even as we see the trade deal between United Kingdom and India come alive today, now the bigger question is, who is the bigger winner? And that's why we're asking our panel tonight. Let's take it across to them and let me introduce you to our panel this evening. We have Lord Karan Villamoria joining us. He is the chair of the International Chamber of Commerce UK, also a member of the House of Lords, and he is co-chair of the India All-Party Parliamentary Group in the UK Parliament. And of course, we'll have him join us in just a few seconds. With him, of course, is Vijay Kalantri, President of the All India Association of Industries and Chairman of the World Trade Center here in Mumbai. Saurabh Sanyal also with us, Secretary General at industry body ASSOCHAM. Gulzar Didwania is partner at Deloitte India. He joins us on the panel along with Mr. R.K. Vij, President at the Textile Association of India. Gentlemen, so glad you could join us on The Big Question. It's a momentous occasion now that we're seeing this entire deal come alive. Lord Villamoria, let me come to you first since you're with us. Both governments are calling this a landmark victory. India gets duty-free access for 99% of our exports, and the UK gets unprecedented access to a $4 trillion economy. If you look at the deal in totality, who has negotiated the better deal? What would you say?
This is the biggest free trade agreement that the UK has conducted on its own since leaving the European Union. We have struck free trade agreements with Australia, with New Zealand, and now, apart from the 66 free trade agreements we rolled over from the European Union, which we now have in our own right, this is the big deal. And we started negotiating this deal in January 2022 when I was president of the Confederation of British Industry. It took 3.5 years for it to be concluded last summer, exactly a year ago in July, when Prime Minister Narendra Modi came over to the UK, to the UK Prime Minister's country residence, Chequers, and I flew across, I was abroad at the time, to be present for the signing of this agreement after 3.5 years of negotiation in my current role as chair of the International Chamber of Commerce in the UK. So this is really, really good news, but we've got to keep this in context. It's not about who's done better or who's got it. This is a deal that is beneficial to both countries. And we put this into perspective. At the moment, the trade between the UK and India in goods and services bilaterally is just under £50 billion, £50 billion. And India is only the 11th largest trading partner of the UK. How can India, the fastest growing major economy in the world, with the UK and India being the 5th and 6th largest economies in the world, have India as only the 11th largest trading partner. It should be one of the handful of largest trading partners of the United Kingdom. And I believe as a result of this free trade agreement, this comprehensive economic and trade agreement, trade between our two countries by 2030, within 5 years, will double to 100 billion pounds. That is the effect that this deal will have. And on top of the trade doubling, you will have an increase in investment bilaterally between both companies. You've got to remember the firm Grant Thornton provides a tracker report of Indian companies investing in the UK and UK companies investing in India. And you can see year by year the growth in number of companies, the growth in investment, the growth in number of jobs created as a result of the investment in each other's countries that the bilateral investment is creating. And on top of that, you have the educational links with Indian students making up the largest international students to UK universities, which are the best in the world, along with the United States of America. And on top of that, you have mobility of professionals, increasingly so with Indian services being provided in the UK, and UK services, and UK is the second biggest services exporter in the world, provided to India to the benefit of both countries. So, and on top of that, you have the Indian diaspora, of which I'm a proud member, nearly 2 million strong out of 70 million people in the UK, the most successful, and I say this with pride, ethnic minority community in the UK by far, reaching the very top in politics and business in every area.
So, Lord Bilimoria, when you say that 11th largest partner, trading partner for the United Kingdom, how quickly that changes with this trade agreement remains to be seen. But as a proud diaspora of India, right now, when we see the Indian industry perspective as well, and perhaps I can go across to Saurabh Sanyal for this, Mr. Sanyal, you think this is the first trade agreement in years where India is genuinely playing to its strengths? We are opening our markets for exports while we are protecting our sensitive sectors back home?
Thank you so much for inviting me. I think the time has come for a fresh momentum and commencing a new chapter in India-UK bilateral relations with the free trade agreement coming into effect today, that is the 15th of July 2026. It is in fact a historical and a momentous day for both the major economies, where both the GDPs are more than USD 4 trillion, and they have struck a chord for a broader horizon where India is aiming to be a developed economy by 2047, while the UK is looking positively for greater trade, lower tariffs, and strategic partnerships with India. Now, just to talk about the major things that are going to happen, as Lord Bilimoria has already pointed out, that from the USD, US dollars 58 billion in 2025-26, we will be going by 2030, our trade will increase to USD 120 billion, 100 to 120 US dollars. And this is ushering in a new era of economic cooperation between India and the UK. The 99% market access has been provided by India to UK. And similarly, 89.5% market has been provided to UK by India. So this itself goes to prove that both the trading partners are going to be in a win-win situation, and by 2030, we are going to increase our trade to $120 billion.
So $120 billion, if that is the kind of target that we are working towards, what about textiles and apparel? Those tariffs in the UK have fallen now, Mr. Vij. From 12%, they've fallen to 0 now. For a sector that employs millions of Indians, how does this deal help?
Thank you very much. I am first congratulate to the Piyush Goyalji, the Commerce Minister. From the last 3-4 years, they are working on the FTAs, and thank for our Honorable Prime Minister making the open economy. So I am just telling you that from now, as on today, the total market of UK market is around 21 to 22 billion. They export apparel and garment. Out of that, approximately 1.3 billion to 1.4 billion comes from India, and they export around 0.4 to 0.5 billion to India. Now, after coming this over the duty tariff was 8% to 12%. Now it becomes 0% on the 99%. Now, example, from a t-shirt, if from India a t-shirt is going at a $10 and there was a 12% of a duty, $1.2 was the duty, so $11.20 was there. Now it will be only $10 will be there. So this will be more benefited, and we hope that in next 3 years, over this $1.3 to $1.4 billion will become touch to $1.9 to $2 billion, and next 5 years it will be doubled. And
Yes. But Mr. Vij, I wanted to ask you, this is not about competition alone with local British producers for Indian apparel and textiles, but it's also against countries like China and Bangladesh and Vietnam. So I'm asking you if you think this deal is genuinely going to shift market share towards India.
No, I'm just telling you the major benefit will be there. As on today, we were not able to compete with Bangladesh, Vietnam and China. Now with the coming the duty down, it is a very open space will be there. Now we will be competitive to China, this Bangladesh and India. The major benefit will be there for the Indian industry. The Indian industry, because the man-made fiber will go, garment will go, over Tirupur unit will grow. Tirupur is the t-shirt, Panipat is home textile, Ludhiana is t-shirt fabric, Surat is fabric and garment is there, Coimbatore is the fiber filament is there. So our whole DTY, FDY unit will have a more export, than the unit will grow, and then main time, it is a very good thing. Or the Bharat Textile Fair has started only yesterday.
It has.
And with this 15th of July, people are coming to take or to see our product. There are a lot of product we will export to UK. This will be create more jobs. This we were hoping from the last 3 years, and this is the one of the
now
biggest.
It's finally happening. Now it's finally happening. On the 15th of July 2026, it's finally coming into motion. But Mr. Didwania, bilateral trade now projected to touch $120 billion by 2030. You think that's realistic, or do you think these projections, which are headline grabbing, do they often underestimate the kind of challenges when it comes to implementation after the signing ceremony is all done?
For asking a very relevant question. So I think we need to actually see what it takes for us to double the bilateral trade between the two countries. Indian exports and UK and India bilateral trade has been growing at a CAGR of around 6% in last 5 to 6 years, right? And therefore today we are at around $60 billion give and take. For us to reach to $120 billion, we at least require to grow this trade by over 15% CAGR year-on-year basis. So that's I would say 2.5 times increase in the bilateral trade. And therefore we first of all need to map it to different sectors, the sector by sector. So for example, we talked about the textile export and textile trade with UK. So we have to go sector by sector, and therefore every I would say sectoral representative trade chambers also need to work with the exporters as well as importers to make sure that how do we double the trade. Otherwise, it's very difficult to reach the ambitious plan of $120 billion. So that's one point I wanted to say.
Yes.
Second, on implementation, the beauty of this trade deal is self-certified origin declaration. So far, whether it is FTA with any other countries that we have right now, for us to get the benefit, whether on import or on export, we need to go to the government department for origin declaration. Now this is the first time India is implementing self-certified origin declaration in India-UK FTA, and therefore it is a very important step towards trade facilitation. So I'm hoping that this is going to also increase the utilization of the bilateral trade, because currently some reports suggest that the utilization of FTAs by India is nearly roughly around 50 to 60%, whereas in the developed countries like Europe, it is over 90%.
Correct.
And therefore, the utilization itself needs to increase. And the reason for that low utilization could have been the processes around it. And therefore, more awareness with all the trade associations, with exporters and importers, as well as the implementation is the key. So I'm hoping that this is a very, very, very important step.
So yes, absolutely. It's one thing to have a deal, but for businesses to make best utilization, like you say, of the opportunities that the deal presents itself with is going to be an important ask. But Lord Bilimoria, the critics are saying that India gave away too much on the premium imports. The supporters of the deal are saying that Britain gave far more by opening almost its entire market. So when you look at the balance sheet of concessions, who has given more?
You've got to look at these free trade agreements as being facilitators of markets opening up. And the more you open up to each other, the more you facilitate exports, imports, and investments both ways. And this cannot be a question of one country winning and another country losing. Both countries win in their own way from these. As you very correctly said, the UK has reduced duties on almost everything down to zero, 99% of items. India's reduced 90% of items down to zero. Even the high tax items like Scotch whiskey from 150% duty is going to gradually come down to 40%. The cars, 100% duty is going to eventually come down to 10%, albeit on a quota basis. These are huge differences that make items more affordable to the Indian consumer and to the UK consumer and make exports more competitive for both countries as well. And then you've got to look at the point of, look at the spectrum of this deal. It's a very comprehensive deal. You've got not only tariffs and reduction of trade barriers, but you've got movement of people, the movement of professionals.
You mentioned,
the ability
but on that point,
double pay taxes. But you've got also digital growth. You've got easier access for SMEs, for small and medium-sized enterprises. You've got science and technology.
Sure.
You've got financial and business services. You've got healthcare and life sciences. I mean, this is aerospace, manufacturing. It's absolutely fantastic, the range of areas covered by this deal, which benefits both countries.
But on that point that you were making about the reduction of duties on premium British cars from 110% to 10%, over a decade, of course, this will happen, but also the slashing of whiskey tariffs from 150 to 40% over a period of time. Mr. Didwania, you say this is a sensible trade-off, or do you think it could hurt domestic industry?
No, I think first of all, I don't think it could hurt the domestic industry because there is a quota. So on the import of the duty reduction benefit that is offered to CBUs, completely built unit cars, it is given based on a quota system, right? So first year, let's say around 20,000 cars, moving to 24,000 year two, and so on and so forth. So it's a gradual tariff quota based reduction. And again, premium segment cars. It is not going to impact the lower cars, which mostly, I would say 95% of the people in India use. So yes, luxury car market, this is definitely, even all the big automakers are eyeing this as an opportunity to enter the premium products into India. And once they test the market, they would start manufacturing them in India. So I would say that the offering of a reduced rate of customs duty on the cars is just, it will help open up the market for the luxury car, premium car segment in India. So that's on the car. On the again, the import of the reduction in custom duty on the alcoholic beverages. This is something that India needs to understand, that the benefit is right now offered on very premium brand or very premium and highly priced alcoholic beverages. And therefore, again, the market segment is very, very different, very, very limited. But there are companies who will then also make versus buy decision, that should we set up a facility in India altogether, or versus we continue to supply these from UK. So two different answers on two different sectors.
Yes.
But ultimately, it is the consumer who is going to drive the trend of whether the UK should invest into India, into manufacturing of all these products or not.
But also, when Lord Bilimoria was speaking, he spoke about the labor mobility factor. Could India have secured more on that count? You think this social security relief, should perhaps India have pushed further in easing movement for Indian professionals, you say?
No, it is one of its kind, right? We don't have similar clauses in any other deals so far, and therefore it is one of its kind. UK also is testing how it is going to take place, and I think it's a very welcome move, because they are trying to avoid the double social security paid in India versus social security paid in US, they're trying to offset the two and make sure that it is not a costlier affair. And therefore, it's a first of its kind move. One has to wait and watch how it unfolds, but definitely it is going to improve the mobility.
Saurabh, yes. I wanted to take that across, the point about social security exemption to Saurabh Sanyal as well. Do you think social security exemption alone is expected to save Indian professionals and companies more than 4,000 crore rupees? Is that a significant breakthrough, you think, or does it fall short of what Indian industry has been seeking?
So it is the preferential access which will improve, as I believe, and the India's competitiveness will strengthen the value chains and generate large-scale employment for the Indian labor force as well as for the MSMEs to do business there. So more importantly, India has secured a protection for a majority of its steel exports to the UK under the India-UK Free Trade Agreement, and with 85% of outbound shipments remaining outside UK's steel safeguard measures. So therefore, this free tariff access and preferential access of the Indian labor force going to UK will have definitely a great advantage for India.
What about the services? They account for a major part of India's competitive advantage when you consider what we do globally. But has India secured enough for IT, Mr. Didwania? For IT, for consulting, for professional services, or you think this agreement has still tilted towards goods more than services?
See, I think as Lord Bilimoria mentioned that this is just a mechanism to improve the bilateral trade between the two economies.
Sure.
Right now in UK, UK's FDI into India is just over $24 billion, right? Which is 1% of the total FDIs, outbound FDIs of UK. Now, UK is now looking into GCCs and also IT and ITES and financial services sectors related activities to be done out of India. So this is just a measure of a facilitation, increasing the trade between the two companies, since there are no taxes between the on services, and therefore mainly people talk about the duty, customs duty reduction, etc. on trade of goods. But including services comprehensively, whether it is mobility, whether it is IPR rights, is clearly a sign where it is going to increase the investment investment from UK into India as well as from India into UK. So I think it's a win-win for both the countries.
Vijay Kalantri is also joining us from the All India Association of Industries, the chairman of the World Trade Center in Mumbai. Good to have you as well, Mr. Kalantri. You know, India has kept agriculture and dairy. It has been largely kept outside the agreement, and we've included safeguards in sensitive sectors. So you think the negotiators have successfully protected the vulnerable domestic industries?
Yeah, this was the first thought which came to all of us while negotiating, that dairy products and our agricultural products should be safeguarded. And we should not get the dumping of those material into India at a cheaper rate, which is less than what we have. What happened, earlier imports when we were doing from China and all, because of non-anti-dumping duty, we suffered, and many of the MSME industries closed down. So this is a good deal, well negotiated, and very balanced deal. You will see that the trade and investment will grow 20 to 30% in next 3 to 5 years, because we are not looking at short term, but in long term, we are beneficial in the trade, and we have more opportunities. Then UK could also be used as a hub for European countries and America and other countries for exports. Because once we get the access to UK market, we can supply our goods and raw materials there, and we can pack it there and send it to various other countries. Those opportunities people have not seen, but that will be tremendous opportunity which will come across.
But Mr. Kalantri, a lot of excitement surrounds exports. Could the bigger story actually be investment, which is being spoken about? Will this agreement materially improve investor confidence, bring more British capital into India?
No, UK has been in forefront for financial center. After US, UK is the second financial center. And many of us have seen that the investment, any big deals has happened through UK. And in UK, and many of the Indians who are heading many of the funds, so they will look at India very seriously once we have good projects in place. And as you know, as India has been moving forward, ease of doing business, our PLI scheme, various Viksit Bharat. Many of these schemes have been well accepted by the investors. And under these schemes, we will see that the investment comes in technology, in AII, in innovation. We will defense, automobile. Today they are talking about exports.
Right.
Tomorrow we will think of setting up factories in India to manufacture, like others have done it.
Right.
BYD, MG, and all have come and they have set up a factory. So now they will also do a factory. So we'll get a lot of jobs for our employment to our workers and all. And many, we will again become a re-exporter to many countries out from here.
You think we will be able to re-export from here? But if I were to give you 6 parameters, and perhaps Lord Bilimoria, I can come to you first. Exports, jobs, investment, consumer benefit, and strategic influence. If these are the 6 parameters, that if you're looking at this deal 5 years from now, which one of these will determine whether we've had success with the FTA between India and UK?
Well, actually, every single one of them that you can measure. The good thing about what you've just said is you can measure all these things very precisely. I mean, look at the jobs, for example. If you look at the UK companies in India at the moment, there are almost 1,000 UK companies. Grant Thornton, the firm, produces a tracker report both ways. UK investment in India, India investment in the UK. You just look at the UK investments in India at the moment, almost 1,000 companies. These companies are growing at almost 50% a year. And they've created over 500,000 jobs. I mean, this is fantastic. And I think with the CETA, this is only going to grow. And if you look at it the other way around, Indian companies in the UK, there are almost 2,000 Indian companies invested in the UK. They have created over 200,000 jobs. So just the job creation as a result of investment both ways, you're talking in total approaching 1 million jobs. And that's only going to increase. You'll be able to measure exports. You'll be able to measure every one of these aspects.
So you think we'll be able to measure each and every one of these parameters going ahead from here? Since I'm running out of time, Gulzar Didwania, I want one word answer. Today, who emerges the bigger winner from the India-UK trade deal? Is it India? Is it the UK?
I think it's a win-win for both. You're asking it different time, but the answer is the same. It is a win-win for both the countries. Idea is to double the trade between both the economies, and I'm pretty sure the CAGR, aspirational CAGR of 15% can be achieved if we track each and every metric in a different way, in a minute manner.
Well, this deal is clearly it's far bigger than cheaper whiskey or luxury cars. That's a given. The real test is now whether India can convert unprecedented market access into exports, into jobs and investment as well. That agreement is done. Now the hard work of execution begins, and it's always about the implementation. My thanks to Lord Bilimoria, Vijay Kalantri, Saurabh Sanyal, Gulzar Didwania and RK Vij. Thank you very much for joining us with your insights. So, as we've said, trade deals by themselves, they don't deliver the results. What you really need is for businesses to find the opportunities and build on them. And that's what this FTA is all about. Will we be able to do that with the United States, with the European Union? That remains to be seen, but it's work in progress. I'm Vikram Oza with a big question. Thanks for joining us.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Welcome. You're watching the Editor's Cut, and we've already started all of our banter before we've hit roll, but we'd love to include you in it. We have Gautam Trivedi, co-founder and managing partner at Nepean Capital, joining the table today. Gautam, welcome. This is going to be exciting. So here's before we get to all of our questions and what you think about the market, just for our viewers, here's what we're going to do. We have 3 propositions that we are presenting. All of us will be presenting, and then we have a debate on it, on what you think one way or the other. But before we go to number 1, the bigger question is how markets have really ended this week and shown a real sense of faith in what India can do, isn't it?
Yeah. No, I agree. I think if you look at from the start of the war, 20th of February, and then up until the 30th of March, if I remember right, where the market actually, the drawdown was about 13.5%. If you look at that drawdown versus previous global accidents, if I can call them that, it's been the best. So in spite of, oil, as in Brent doubling, rupee crashing as the way it has, we've come out actually pretty strong. And the market's rebounded about 8 to 9% since, which I think has been a great outcome. Results are starting to come in, which are so far pretty good, including IT, which I'm sure we'll talk about later. But I think I'm pretty impressed with the way the markets handle this. And I think, and we'll get into this in more detail, but I've always sort of said that you've got one side, you've got the economy, the other side, the stock market. And sometimes for a very long period, the two are not connected. This is definitely one of them.
You're saying the economy is not going to do well, but
no,
the markets is doing well?
I think the economy, earnings growth for FY27 started off with about 15-16%, which they always start off high at the beginning of the fiscal year. But because of the war and the absolute impact on raw material costs, and this is across industries, they're now being pruned down to about 10 to 12%. I mean, we're a collateral damage from the war. We've got nothing to do with it, frankly. But it's unfortunate. Otherwise, this could have been a great year for us.
That's true.
Let's get started on the first topic, which I think is front and center, right? We've seen the headlines, a guardian of the Strait of Hormuz, a 20% charge to ensure protection. So the question that we're asking is, are Indian markets developing a little bit of a thick skin? Because through the week, you saw a little bit of resilience, didn't you? I think that is in fact the case. And the fulcrum, as we've been saying throughout this conflict, for Indian markets is crude, and crude at 85 is not a bad deal for India.
It is a bad deal for India.
It's not, relatively speaking, right?
No, so this is a continuation of what we were discussing last week, where
I knew she would say this.
Of course, because I said it last week also.
You like to say I told you so.
I'm not saying I told you so, but
Trump is very unpredictable. So we don't know how this particular war will really continue going forward.
But he's predictably unpredictable. I agree with you, but the fact that he's predictably unpredictable, here's the thesis that I want to present. The more you say weird things, the less people take you seriously. And so you look at what happened with that 20% fee that he talked about. First, everyone panicked, and then he came and said, okay, actually, I will not take a fee, I'll make you invest instead, and then became the Gulf states who are investing, and he says, I'm the guardian of the Hormuz. And Iranians say, we've always been the guardians of the Hormuz. It's like a bad superhero movie, because no one asked for a guardian. But then if you ask me that question, my contention is we're developing a thicker skin. I'm not saying it can't get worse. It can, just the tolerance levels have shifted higher.
You reckon?
Yeah, I think so. I think every week we have a new, or almost sometimes many times in a week, we have a new guidance from the White House of where they're positioned. From war, we've gone to ceasefire, back to war, which is obviously very unfortunate. So I think the markets have started to get a little bit tired about it. And they're putting money to work. And as are we, from our fund, irrespective of what's happening in the broader spectrum with respect to the war and global impact of that.
Right. So if I can, present one particular aspect, while you stated that the economy and the economic reality is because of this war, and the markets are a little decoupled, I would say that the economists had been penciling in $80 per barrel as an average for this particular fiscal year to come to all sorts of macro data. Now, till that is crossed, there won't be a mayhem, and therefore the markets will not react adversely. And the last few weeks where we got the crude oil prices below about $70 per barrel has given us a headroom of this 80 and above up to 90 for a short period of time. In my mind, that is the calculation that is playing on the market's mind.
Yeah, so let me just address the market part, which you said about decoupling. Let's understand who's playing in the market and what's driving the market per se. It's all fund flows. Let's get real. Okay, so FIs since the beginning of last year, since January 2025, have sold almost $50 billion worth of stock in India.
Yeah.
All right. Where does India stand today from an overall perspective? I think with relation to Asian peers, it's the worst performance on a relative basis in the last 30 years. Okay, of course, the two outliers there are Korea and Taiwan, so they've completely moved the average up. But the reality is that the domestic flows are just incessant, relentless. Okay, so we saw $88 billion of, I'm dollarizing everything, so we compare it to the FPI flows. $88 billion last year, $51 billion already this year, so far, as of, I think, yesterday's close. So if you look at the absolute numbers from the domestic side, they don't care. There's a war, there's inflation, crude going to 150. They seem to be just putting money into the market as if everything's hunky-dory. Now, what's causing that? Let's understand that. I've done some deep dive on that. Did you know this, that 5 states in India account for almost 48 to 49% of the 130 million or 13 crore unique investor base? I'm not counting demat accounts, I'm just counting the unique investors. So all 5 of us are unique investors. We may have multiple demat accounts. So I'm not counting those. The top 10 states account for 73% of total number of unique investors. What does that tell you? The equity penetration in this country has not even reached the halfway mark. Okay, and you'd be surprised if I look at the top 5. You'd be surprised with number 5. And I shouldn't say this. It's a BJP ruled state, but I want to say it.
Please say 1, 2, 3, 4, 5.
I'll say 1, 2, 3, 4, 5, and this is on the this data is in the NSE database. Number 1 is Maharashtra. That's not a surprise. Number 2 was Gujarat. Now it's Uttar Pradesh. Number 3 is Gujarat. Number 4 is Rajasthan. Number 5, I've given you a hint, which is it's now a BJP state. It's West Bengal. So my point really being, I mean, I'm not talking about West Bengal being number 5 as being important or not important, but the point is there's so much more money still to come. The 3 legs to the stool is the way I see it. FPIs, domestic flows, and the third leg, which is not counted in the domestic flows, are family offices, AIFs like myself, PMS, and investors who go directly into the market via discount brokerages. So that leg and that amount of money, I don't have data on that, how that's doing. But the FPI number, of course, is being usually negative. We just said 50 billion of selling since the start of last year.
I personally think that it's a great time for folks like Gautam, simply because the FI selling happening at the large cap end keeps the Nifty subdued. But the bottom-up identification of businesses, I mean, he grounds his shoes to go to the plants, etc., in remote India, which are small caps, and he's able to identify this is a business for the next 10 years, buys into that, and makes money. The FI can't do that. So I think it's a great time for people who are doing bottom-up.
And a lot of these companies are relatively insulated, right? One can argue that, yes, okay, to a certain extent, inputs in a lot of spaces do get affected. But equally, you have a situation where they're strong enough, or the system is strong enough to allow for a significant amount of pass-through as well.
What's the answer to the question? Gautam has answered, we have answered, both of you haven't.
Who is both of you?
Alex and Neeraj.
I said at the start, I think that
You
there
agree.
is really...
Gautam focused on the penetration bit, but
Yeah.
I would still say that we still need the FIIs to come back with rupee again depreciating so sharply in this particular week is a cause of worry. Therefore,
to the specific question about whether we're getting
Developing
more
a thick-
immune,
thick-
developing a thicker skin, you said only till crude is at that average of below 80.
So my view is at 85, we might be looking like that. If crude were to go to 100, if it does, then I think things will change.
Okay.
That's my view.
Okay, let's go to question number 2.
Okay. Question number 2, and it flows in beautifully with the point that Gautam was making, is the Korean market volatility a boon for India? Right? Now, I have some points to present here very, very quickly, right? If you saw two things that have happened. One, the 3x leverage SK Hynix ETF is down 90% from its peak just a month ago, 36 to now 4.5, 5, right? The 2x one is down 70%. And after being down 70%, the AUM in it is over $6 billion. This is serious leverage money out there, which is now getting eroded and eroding investor confidence. And two, volatility itself in the Korean markets. So the KOSPI volatility index or volatility number is some 80, 81.
It had a peak of 98.
98. Yeah. And the bottom was 28.
Or 23 or something like that.
28. And at least in Jan was 28. And last point here, the two stocks, which is SK Hynix and Samsung, at times account for 80% or 85% of the total trading volume in a single day.
Yep.
This is serious concentration. And if this is unraveling, maybe, just maybe, foreign investors might prefer slightly more benign markets like India. Maybe.
Yeah. Sorry, you want to take that?
No, please make a point.
So, here's the thing. Is there a case for FIs to come back to India, given how much they've been selling? September 2024 was really peak interest in India from FIs, and they've been selling, of course, non-stop, with the exception of the month of February. We saw about 2.4 billion of net buying that came in from FIs. So look at where we were in September 24, which was the peak. Our weightage in the MSCI emerging market index, which is obviously the benchmark for global mutual fund and asset allocators, was as high as 20.8%. We're now down to 11.3, so almost half. Okay, that's one. Two, foreign ownership of the Indian equity markets, and that mark-to-market number as of last week was $720 billion on a base of a denominator of 5 billion. So that number is now down to about 14.5%. Again, that's a 10-year low. So we've seen a lot of selling that's eroded the FI participation in this market. The hope is it doesn't get any worse than this. And to your point about whether it's Korea or Taiwan or even back in the States with respect to the tech, the dependence on tech for incremental capex, for incremental growth. So for the current quarter, i.e. the second quarter numbers which will come out in the US, for the S&P 500, the growth is supposed to be 22%, as high as 22%. But 60% of that 22% is AI hyperscaler capex and infra. So huge dependence on tech and AI. We don't have that because we don't have tech and AI. We have IT services, which is not strictly tech in that true sense. So yes, there is a case to come back to India, and I hope they're paying attention, listening, watching this show. Please make sure it goes global, and everybody from San Francisco to Hong Kong is watching this.
Very well mentioned, because all the foreign money is right now chasing AI. And today, as we speak, Xi Jinping has made an announcement in the AI conference, and he has said that we'll be the global leaders in artificial intelligence. We will beat the US. So there is this big momentum where India seems to be lagging behind. And also we have our import bill, which is a big worry for the FIIs. So putting both of these factors together, whether we'll benefit from any other emerging market being down, is a serious question.
So you don't agree?
I don't agree.
I second that in that sense, because even with everything that's happened with the KOSPI, I think from the start of the year, you're still 60% up on that index.
I think now, well, as of last Friday, it was 108% dollar return. This is in spite of the fact that FIIs out of Korea sold $100 billion worth of stock. So, obviously they were regretting it until last week, but this week's been a completely different story.
So you've not slid back entirely.
No, even 2025 is a banner year for KOSPI, right? Per se. So there's no taking away that fact. The question is only this, and I'm just hoping more than an assertion that what could be woes for the AI trade could actually be beneficial for an anti-AI trade like India.
No,
that's my assumption.
So the reason I'm making that point is I think the AI trade, people have gotten a little skeptical about it, but they've not gone off it yet.
Hopefully happens
that inverse correlation will take place only if serious investors start saying that, okay, this AI story is looking really flaky. I think we're ways away from that. Unless you have great corporate results which make valuations look more attractive in India, and then that's a different story. You have the SIP investor story that Gautam was talking about. That's still a wall of money that's going to keep valuations elevated. Maybe they'll stop selling as much, but I don't know if it's going to be a Korea versus India binary.
Yeah,
and people will come here.
It's not a binary. It's just an AI trade versus anti-AI trade. I'm hoping that turns out to be true.
I think our big IPOs will actually attract more, foreign money because it's locked in as anchor book and one company. I think they are doing, and the roadshows are also much more focused. So I think that will attract a lot of money for us. But overall, we'll be more self-sustaining with more domestic participants having much more faith in the Indian thing. And just one more thing, that AI thrust, the use of technology in manufacturing is slowly seeping in. And our big thrust is towards manufacturing. India is good at manufacturing, low-cost manufacturing. If AI technology is utilized there, that can be a tipping point for the next wave of investments to come into India. At least that's what I gather from a lot of investors.
No, so I'll quickly make my point, right? So a lot of the flows that come through, and we've spoken about this in the past, from the outside in, are not active, they're passive. And so therefore the view from the outside will be generally to look at valuations as a collective and not at individual stocks. And it's not reached the point where vis-a-vis other potential targets for foreign institutional investors, we've come out so substantially that it becomes lucrative enough for foreign institutions to say, I'm going to rebalance right now. Will that happen? I don't know. You could have a time-wise correction from this point. We've seen pretty much that take place for quite a while. What could also take place is an earnings re-rating, and I don't know if that's going to happen very quickly based on what we're seeing, right?
Just said 12%.
So therefore, if anything, I think that might have to be revised downwards if this conflict continues, because you will have certain pockets that will have to take a hammering, which they have not done in the first quarter. EBITDA margins to a certain extent might get scrimped a little bit, though you see the revenue uptick that takes place because consumption has been broadly okay. But in the second quarter, that is not going to happen.
So while we paid so much attention, Neeraj, you have something to wrap this discussion?
Gautam, if you can, 30 seconds. Do you think that's becoming India Inc.'s kind of response, that when pushed to the wall, they bring that best foot forward, show margin resilience? It happened in COVID. It's happened in quarter one as well.
It seems to be happening so far. We haven't seen the play out of the results as yet. But I think to the point about the AI trade, we've been playing AI in India through our fund, through power. Okay. And that's the only way to do it, because there aren't enough data center companies listed as yet. 2-3 years down the line, you'll see more companies getting listed. And, we produce 20% of the world's content, 3%, and we have only 3% of the world's compute power. So that's going to be a massive, and what I've said in the past is the entire ecosystem, the two ecosystems we're looking at right now, we've heavily invested. So power as a percentage of allocation is the highest for us. So we're 21% of our AUMs are in power. So we're taking a big bet. And the second highest is, I think, is definitely financials, which I think is about 16 or 17%. So that's how big. I mean, who would have thought 5 years ago somebody would be putting as much as 21% into a single sector?
But is it generators? Is it transmission companies? Is it equipment manufacturers?
I'm glad you asked that. So within the generation, transmission, and distribution, the weakest link actually is transmission. And component manufacturers within the transmission space. That's the big, big capex that's coming. Again, data center capex. You've got a bunch of small cap names which will become large caps over the next 3 to 5 years.
Right. I'm glad you mentioned about the artificial intelligence, because our next question that we are debating is the Indian IT services sector really living up to the AI challenge really coming in? What's your view on that?
I've been asked this question time and again, and we do discuss it every now and then, that I won't name the stocks, but the stocks have fallen as much as they have. Well, if I can talk of TCS, great company, ticks all the boxes, no debt, super management. Stocks down 55% since January of last year. The Indian IT index is down 40% in the last 2 years. So is now a good time. And TCS, I can keep going back to that, but TCS is now trading at 13 times FY28 PE. Wow. I mean, it used to be 3 years ago at about 26, 27 times. So So it's, halved from there as well. And yes, 55% correction. So math adds up.
So Gautam, enriched by the earnings season, and we have pretty much all the companies really doling out the numbers and also putting out good narrative on the artificial intelligence thrust. So how do you now assess after being enriched by the recent announcement? Because in the last quarterly result, they actually got a taste from the market that we need that AI thrust. And this time, a lot of that work is being done by the companies.
So if you look at the narrative that's coming from TCS, they've said their AI transformational work projects have the ARR is $2.6 billion, okay, which is about 8.5% of total revenues. But these are all short-term projects. They're not your traditional long duration projects. So that 3, 4, 6 months, or even 9 months, I think in some cases. So I think it's early days to start re-rating these stocks. Would I buy some of these stocks at this price if I had a large cap fund? The answer is probably yes, because I don't think you can get any worse from here. They're smart people. I mean, TCS, we don't own TCS for the record, just want to make that clear. But the fact is they, put $7 billion as a commitment to put money in the data center business. That's great news. At least they're pivoting in the right direction, which is where India needs capital. The others haven't really expressed or seen. HCL, I think HCL Tech announced something as well.
But 1,500 crores.
Yes. So, yes, it's a good step. It's not as big as TCS, but the fact is, if they start pivoting in this direction, it's the right place to start going into, given the amount of cash they're sitting on.
Just a quick question on that. So the tendency has been to look at these IT companies and judge them on a quarter-on-quarter basis. And you look very closely at their margins as well. So if they're pivoting from a services business to a data center business, then you're going to have to be okay as an investor to say, oh, the margins are not going to be what we're used to. There's going to be erosion.
That's one company.
I'm saying,
So if you look at the remit of the question, will Indian IT service sector live up to the AI challenge? My 2 bits would be yes. But would that make them as valuable and as interesting and as important in the Indian ecosystem as they've been? Perhaps not. Remember, everyone was excited about the Indian IT service sector, apart from an investor valuation metric, because these were the companies that flew our flag high. They created those high value jobs. It gave that pride of, India is sort of the data center for the world. All of that will also change. So the way you look at these companies will also change. They'll then be one of many trying to live up in that AI race. Will they fail at it? I don't think so, because I'm a little sentimental also about the ability of some of these companies.
They will live up to that challenge, is what
they will live up to the challenge, but will they then be as valuable as they are now? Because they were earlier able to provide something not everyone was.
Right.
That might change.
I think they'll be more valuable than they are now. They may not be as valuable as they were 3 years ago. Because the multiples have to expand from 12 times to...
from years they will recoup, basically.
That's clever answer.
Let me just, before Alex says something, let me add something to what you just said. The fact is, if Indian IT companies figure out a way to get more and more embedded within the AI space, even if it's 10 to 15%, but of revenues, they're not there yet, but I'm saying if they start showing that, and the ability to actually get to a higher number over the next 5 years, these stocks will get significantly re-rated. I can guarantee that. We have a small cap company, I don't want to get into the name, but that's until now it's still making hose pipes. But that hose pipe now has a completely different application, i.e. liquid cooling of the GPUs. The stock has ripped. Their revenues haven't even started as yet in the data center business, but the market's already foretelling what it's going to be. The management thinks in 3 years' time it'll be 50% of revenues. Okay, 50% is a high bar for some of these companies that have a pretty big base, but I would think there would be a significant re-rating of these stocks by the market if they start demonstrating more penetration in the AI space.
Alex, what's your verdict?
I think that there's going to be a separation of the wheat from the chaff. There's going to be a few winners in this story, and those that are going to get their bets right at this point in the next couple of quarters in terms of mobilization of funds and reorientation are going to win the fight.
There will be a segregation between winners and losers. There will be a change of pecking order, and I would say collaboration with already existing AI capabilities is the way to go. Those who are doing it like HCL Tech with Sarvam, and there is a buyout happening in several other companies also. If that collaboration happens, because the two scripts are totally different.
Commentary is getting definitively positive on AI, say in the last couple of weeks than it has been for a while. So that is something to go by. Before we wrap up, very quickly, quick poll. How much will you pay for first access to Trump Media and to Truth Social posts? Because this is the strangest story I have seen all week.
So I will pay whatever it takes so that they don't take away my US visa. Okay, so I'm a big fan of Trump.
That's what we'll end on. We've absolutely run out of time. Thank you so much for joining us in this edition of Editor's Cut. We'll be back same time, same place next week.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of the choice that we made.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Pick
Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page ad.
Across the globe, climate patterns are becoming more extreme. Erratic rainfall, prolonged monsoons, rising temperatures and warmer winters are reshaping ecosystems. And as the planet changes, so do the organisms that thrive in it. Viruses, bacteria, fungi and disease-carrying vectors are adapting, expanding their reach and altering long-established disease patterns. Diseases that were once seasonal are becoming less predictable. Outbreaks are lasting longer, appearing in new regions and recurring more frequently. From dengue to influenza, the rules are changing. Climate change is no longer just an environmental crisis. It's a growing public health emergency. The question is, are we prepared? The impact is already visible. Dengue, once largely associated with the monsoon season, is now being reported across longer periods of the year and in more regions than before. Globally, dengue cases have surged to record levels, with more than 14 million cases reported in 2024 alone. In India too, the rise has been dramatic, from around 28,000 reported cases in 2010 to nearly 289,000 in 2023. And dengue is not the only concern. Influenza viruses continue to evolve while changing weather patterns are influencing when and how respiratory infections spread. Today we look at what climate change means for infectious diseases, why dengue and influenza are becoming harder to predict, and what our Doc on Call suggests India must do to prepare for this new normal. With the monsoon now underway, health experts are on alert, warning of a potential surge in dengue cases. The disease map is shifting. From Kerala's extended rains and recurring spikes in Maharashtra to early cases in Delhi NCR and infections emerging in hill states, dengue is reaching new geographies. And it's not just dengue. Changing climate patterns are also disrupting flu seasons, leading to more unpredictable and sometimes intense outbreaks. Now the bottom line is that diseases are spreading further, lasting longer and appearing in places where they were rarely seen before. Now what's driving this surge? Rising temperatures are helping mosquitoes breathe faster, live longer and spread the virus more efficiently. Erratic rainfall and prolonged monsoons are creating more stagnant water, the ideal breeding ground for dengue-carrying mosquitoes. The Aedes mosquito is adapting, thriving in both urban and rural areas, breeding in tiny water collections and biting during the day. Dengue is expanding its footprint, with cases now appearing in regions that were once considered low risk. We have with us Dr. Sabine Kapasi, Global Strategy Advisor, UNDAC, UNDRR Emergency Response, also CEO and MD NERA Consulting and co-founder Ropan Integrated Care Private Limited. Thank you so much for joining us today.
Thanks a lot, Amrita, for having me.
Dr. Kapasi, what was earlier a seasonal issue, right? It was a phenomenon we used to see once in a while. The phenomena is now become like it's something which we can't predict. In your view, when we talk about in your clinical practice, do you see a shift on seasonal diseases change? That pattern, is that changing?
The easy answer is yes. Climate change is affecting disease patterns and drastically so. So not only have the occurrences changed, but the way diseases are presenting themselves have also fundamentally shifted. So, for example, now flu looks far more different than it used to 10 years ago or 20 years ago. Dengue is far more dangerous and far more, unfortunately, lethal than it used to be. So is malaria and so is cholera. A lot of these are either vector-borne or diseases which are impacted heavily by climate change and are infectious in nature. Similarly, the patterns of their occurrences have also changed. Earlier, we used to have seasonal patterns which were predictable, and hence preparedness for that was easier to be done by administration and people also. Today, those patterns have been disrupted. We see bursts of these diseases occur in different geographies where they never occurred earlier, and we see that happening far more erratically and far more outside of their normal schedule and normal routine. So unfortunately, we need to be far more cautious and far more vigilant today, and the preparedness needs to be far more perennial than year-round.
I mean, like, now that you've confirmed that yes, we are seeing a shift. Of course, we see the numbers of going up. Like, let's take dengue for example. You know, earlier it was few thousands, and now the cases are in lakhs, right? We also see the impact is more across, like you said, different geographies, different time periods, different patterns. How does one differentiate? You know, just for our viewers to understand between a viral fever, a flu, or something more serious like a dengue or a chikungunya.
So I'll just clarify for our viewers here. Flu is a virus, and most flus are caused by viruses, different kinds of them. Dengue and chikungunya are also viral fevers, right? And so there are different kinds of viral fevers that happen. There are fevers that also occur because of bacterial and other kind of infections as well. Now, in most cases, let's categorize them very quickly into two. One, if you have consistent low-grade fever, meaning fever which is less than 101 degrees Fahrenheit and happening not dependent on whether it's morning or night, but happening all day long, right? In that case, it's mostly the HN kind of flu, like H1N1, H1N2, H3N3, so on and so forth. If you have fever which is either spiking in the day or spiking in the night, and associated with, and it's still something which is low grade, as I said, less than 101, and in that case it could be dengue, malaria, chikungunya, one of those, and associated symptoms could be pain, associated symptoms could be change in dietary patterns, eating or defecation and so on, or associated symptoms like vomiting and so on. So those are generally more serious problems and should be addressed as soon as possible. So 3 days is your mark where you either see an improvement or go to the doctor immediately. Second kind of fever is high grade fever, which generally is either spiking 2 days and then going down, in which case it might be a different kind of virus which we haven't really categorized, or it could be bacterial in nature where it is spiking more than 101 and it's staying high, and it's only going down when you are taking something like a paracetamol or an ibuprofen. So in that case, again, 3 days is a mark. If the symptom do not go down in a high grade fever, then please go see a doctor. In most cases, that's bacterial in nature, bacterial or pathogenic in nature.
And now we are in July, right? Any preventive measures that you would like to share with our viewers?
So,
especially for dengue, I mean, that's where the season is. I know it's through the year, we've already spoken.
Yeah. So, a couple of things. Make sure that your immediate close surroundings, your home, your office are clean. Try to use natural remedies if you are in low risk areas. Like, for example, areas where mosquitoes are not very prominent are low risk areas. Southern India is an epicenter of mosquito bites and dengue, unfortunately, and that is a high risk area. So a low risk area is keeping your surroundings a little more pristine and making sure that you are infusing your surroundings with eucalyptus or a camphor can suffice. In can, you can always have a higher solution, which I'm talking about now. In southern part of India, using UV-based mosquito repellents or mosquito deterrents, sound-based mosquito deterrents, or even all-out and others are genuinely useful. And even though they have their own side effects, it's better to use them than risk getting bitten by a mosquito. And when you are outside, please ensure that you wear full clothing. And even though Odomos is not the best skincare routine, please ensure it's better to have, a dengue-free or a malaria-free life. So please ensure that you stay protected in both ways, and keep your family protected.
So the key here is, of course, protection from getting bitten from the mosquito.
Yeah.
But also, if I can ask you this about platelets, right? There's so much. That's the biggest fear one has if one gets dengue, right? Keep a watch on the platelets. Can you tell us a little bit about the platelets and what should people really watch out? When is it a red flag or an emergency situation when they need to rush to the hospital?
No, as we spoke right now, 3 days is the mark, right? If you have low-grade fever, day in, day out, and that is something which is lesser than 101 degree Fahrenheit, it's not going. It's not going on its own. So ensure that you go see a doctor, because dengue will affect your platelets, but it will only affect your platelets when the counts of the virus in your blood increases a lot. And for you to be able to prevent it is very much feasible by prevent from the counts increasing in your blood by a lot by adhering to the 3-day mark. So if you are able to monitor it and see that the fever is actually not going away and it's already 3 days, then please go to the doctor. It may be nothing, but if it is dengue, then that's the time that you catch it and solve it without any damage to yourself.
Okay, and there's an increasing conversation on vaccines for dengue, right? What really is the reality for India on that?
So, globally, Brazil and others have done successful launches. In India, Panacea has a very, very successful phase 3 trial, and Bangalore showed amazing results where both hospitalization cases and intensity of hospitalizations were reduced and almost no death in their trial data. And right now they are in regulatory, so fingers crossed we should have them in the market very, very soon.
So then that's the preventive angle. Quickly, if I can ask you about the natural remedies, what you hear of dengue, right? Papaya leaf juice, giloy, those bitter things which you're having, goat milk. How effective are these? Coconut water?
Coconut water is a good electrolyte, but it's not a cure for dengue.
And the other things?
Well, I would say stick to the normal course of treatment. Most of the natural things do not really have a hard, harmful situation, but they are not really
sure.
They are not something which is either a treatment or a management tool. To the best of our knowledge today, or the best of the data we have today. Tomorrow might be a different story, but today we know that that's not a cure. Secondly, when we come to dengue, please ensure you drink enough water. So be it coconut water, lemon water, howsoever it is. In any form of fever, please, your body is burning up. It is generating heat, and when it does that, it also consumes water, right? It basically evaporates a lot of water. You are dehydrated. At that time, please drink a lot of water, irrespective of what medication you are taking. That will always help.
So hydration. And lastly, if I can quickly ask you about influenza. Right, influenza, the different kinds. Are you also seeing a shift in patterns on different kinds of virals and influenzas? Because you hear that one is getting flu, cold. There's no fixed pattern again. Like earlier, it was closer to the winter we used to when we were growing up, right? But are you seeing that shift as well?
Yes, very much so. And we also see flu presenting in several more different ways than it used to earlier, right? So I think the number of strains that we see active today are far, far more. So the clinical presentation and the way it presents in your body is more. Sometimes it's headache, sometimes it's body ache, sometimes it's respiratory, sometimes it's gastro symptoms, sometimes it's urinary symptoms. So it is presenting in very, very varied different ways. And that is why it's better to have your immunity overall managed. Eating the right diet, eating clean food, eating a balanced diet, and ensure that your micronutrient proteins is in place, because that will make sure that whatever infection you get, you can fight it off effectively and bravely.
I think that's a really key, point which you've given us, an important advice that we need to ensure our immunity can fight against, the virus and the disease, of course. And together, I think we need to understand that how climate change is just not about the environment. Of course, it is a huge issue we all need to work towards, but it's leading to many medical issues as well. Thank you so much, Dr. Kapasi, for joining us today.
Thanks a lot, Ambika.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India.
Myth. Dengue happens all year round. It happens more during the monsoon. Myth. You can have mosquito bites from any other location also. Oh, definitely a myth. It could be chikungunya, it could be malaria, it could be so many other things. Please be more careful than that. No, myth. Dengue can be dangerous. Platelet count is just one of its markers. It can have other symptoms which can be very severe. So please see your doctor immediately. Myth. Papaya leaf juice actually is not known to add any benefit when it comes to dengue.
Now, when it comes to dengue, prevention is still the best cure. These lifeline hacks are simple, practical steps that can help protect you and your family. Hydrate smart, not just more, because dengue doesn't just drain fluids, it depletes vital electrolytes too. Hydration heroes are ORS, the gold standard, coconut water, natural electrolytes, clear soups, which is fluids as well as nutrition, fresh juices, vitamin-rich hydration, water, sip consistently. Please skip alcohol, excess caffeine, soft drinks and energy drinks. In dengue, the right hydration can be as important as the medicine. The next lifeline hack is stop the bite before it starts. Now the catch here is dengue mosquitoes bite during the day, especially in the early morning and late afternoon. So your protection toolkit should have repellent creams and roll-ons, liquid vaporizers, mosquito bats, bed nets for children, elderly and patients, repellent patches and bags. The next one is the 10-minute dengue audit. Spend just 10 minutes every week checking buckets, plant trays and flower pots, coolers, water tanks, pet bowls, old tires, construction sites. Well, our lifeline super hack is fight dengue with the 3P formula. Protect yourself from bites, prevent mosquito breeding, pump up hydration early. Because the easiest dengue case to treat is the one that never happens. The NDTV Lifeline prescription is to avoid self-medication, because taking any medicine without medical advice may increase bleeding risk in dengue. Test early if fever persists beyond a day or is accompanied by body ache, rash or severe headache. Hydrate well, ORS is your best friend. Prevent mosquito breeding by clearing stagnant water weekly. Protect yourself with repellents, vaporizers and full-sleeved, light-colored clothing. Seek urgent medical care if you have severe abdominal pain, persistent vomiting, bleeding, unusual drowsiness or difficulty in breathing. The message is clear. Climate change isn't a distant threat. It's already reshaping our disease landscape. From dengue and chikungunya to unpredictable flu outbreaks, the risks are cruel. Prevention starts at home, but the larger battle is one we all share, because protecting the environment is ultimately about protecting human health.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision, and have a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in.
You're watching NDTV Profit. I'm Mahima Vachrajani, and today we thought of doing something interesting and exciting. We're going to talk about, of course, everybody knows that Odyssey has been released today, and there's a lot of interest coming in for this movie, and we'll try to understand as to what trends are looking like, what are theatres experiencing in terms of bookings, how has the booking flow been like, what is the pipeline going ahead in terms of where Bollywood stands. All of that we're going to talk about in this episode, and to talk about this and take this conversation ahead, we are now joined by Ashish Mishra, who's the head of commercialization at Cinepolis India, joining us now. Ashish, thank you so much for taking out the time. A pleasure speaking with you. I'll start with asking about Odyssey first, because that's where the interest is right now, right? How big is this? I mean, what is your expectations in terms of what box office could this hit, and what does this mean for theatres as a whole?
So of course, this is a big one, right? We're seeing that there's a lot of hype, there's a lot of chatter about this movie, and of course, this is directed by Nolan, right? So he, of course, comes in with his own, you can say, the things that he has done in the past, the movies that he has directed, and this seems to be just carrying forward that legacy of him. And it's already tracking as a big blockbuster. And these are the kind of movies which basically transcend from just being a movie to becoming something far more cultural, right? So what we are expecting is that this would be one of the biggest opening weekends for Hollywood in this year. We are expecting it to be opening at about close to about 20-22 crores.
Okay, all right. And do you think that this is the kind of movie that brings back people to theaters? Because nowadays we've been talking about this as to how a lot of platforms like Netflix, etc., have kind of taken away that vibe, or taken away that joy of going to a theater and watching a movie. Do you think these are the movies? Because it is a movie that needs to be experienced in the most premium way possible, right?
Yeah, absolutely. It is that kind of a film, right? And one thing that I would like to point out that, of course, audiences have a lot of choices today, but there are certain movies which feel absolutely unmissable on the big screen. And today we have one of those kind of movies coming in and made for the big screen experiences. Nolan has been very vocal about how important the theatrical part of the business is, and how important that it is to him that he delivers a film for the big screen, and has come out again with a fantastic film. We've already seen the initial reviews come out, and all of them are glowing, and we do expect that this would be a movie which would be shattering all records here in India. One thing is that it's not just that Netflix's or the OTT platforms are impacting this cinema attendance. We have had many movies. I mean, Dhurandhar is a recent example where we saw of late we have seen Obsession in Hollywood do really well. We have seen Welcome to the Jungle, and even movies have been doing well recently. So what I feel is that the common thread which joins everything is not really the language or the genre. It's basically the promise of that experience that you can't just recreate at home or in a small space. So the films and the communal experience that the films bring is just another example which we are seeing today in form of Odyssey.
Got it. The other aspect, Ashish, was to understand as to how important are these, Hollywood tentpoles, because we've seen how, good Hollywood movies have come in, swept in and seen a lot of traction, right? So how important is it for the theatre business and for Cinepolis India as well?
So very important, right? Hollywood currently contributes about 10 to 15% of the overall box office for the country. For multiplexes, it's slightly higher than that percentage, but Hollywood is very critical, right? It has now, off late, what we have seen is that the reach of Hollywood has gone beyond just the metros and the tier 1 cities. And as India is becoming more and more contemporary, we do expect that this share will increase.
Okay. The other aspect, Ashish, is that, we've seen as to how things have fared so far. Just want to get a sense as to, if at all, if you can give us those numbers as to how you've done in FY26 and how you plan to grow in FY27. Anything in terms of where numbers go, top line, bottom line, margins, etc.
So we are a privately held company,
Correct.
so we're not... I'm not the right person to share any kind of public information, but we continue to grow. India is a key market for us, and we will continue to expand in India. It's something that I would like to say at this moment.
Got it. And what is competition looking like then? Do you think that, because it's ideally essentially a duopoly right now, right? So how is competition shaping up, and how is it that you are showing strength to us?
So I think like any industry, competition is healthy.
Absolutely.
Right? It motivates each and every player to do their best, and we don't see it any differently in this industry. We want to grow and grow profitably, and that's what I would like to say at this moment.
All right, just one last question, Ashish, from my end, and that's with regards to the release calendar. What is it that you're looking forward to? How strong is it going forward for the calendar year 2026?
So the release calendar looks pretty promising when we look at the kind of movies which we have seen right throughout the year, not just one genre, multiple genres performing, and that's something that really sets the ball rolling for us in this year. And going forward, what I do expect is that August is looking good with a couple of biopics in form of Prahar and Ita. Apart from that, we also have Batwara and Avarapan 2. In August, we also have Toxic, which is going to be a big release. So that's something that is setting the pace from August and going till December, where we would have King coming in, and in between of that we were going to have probably one of the biggest Indian films for the world, which is Ramayana, which we feel has the potential to be the biggest ever Bollywood film, which is releasing in this year.
All right. Yeah.
Talking from the Hollywood point of view, of course, we have Spider-Man come up, huge anticipation for this movie as well. And we have got a consistent lineup towards the end of the year. So we do expect that 2026 is on track to be a record year for the Indian box office.
For sure, and I look forward to speaking to you once all those box offices are hit and that your numbers fly. Thank you so much, Ashish, for taking out the time and speaking with us at NDTV Profit.
Thank you so much for having me. Thank you.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website.
access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
The National Pension Scheme. It's proving to be a fantastic investment, and it's not just because of the tax advantage, though that is a significant part of it. Especially now that you can cap your contribution to the Employee Provident Fund to 1,800 rupees and ask your employer to contribute to the NPS instead. The thing is, there are a lot of things that people don't understand about how it works. And that's what we're going to fix on this episode of MoneyWise. Joining me today is Nikhil Kothari, Director of Etika Wealth. Nikhil, thanks so much for taking the time.
Thank you, Alex.
And welcome back on MoneyWise. Let me start with asking you a very basic question, which is that if somebody is contemplating investing in the NPS, which is the National Pension Scheme, what should they be considering?
Okay, so first I'll say every salaried employee should look at NPS as their one of the first investment to be done for their retirement.
Okay.
Okay, so every salaried employee should talk to the employer that whether they can opt for NPS or not. First of all, it gives you tax benefit. Second is that it's a forced saving. And today, one of the most important goal for every one of us is our retirement.
Right.
And that helps you to save for your retirement. Otherwise, most of the time, we don't save for long term. But this is by default, it's planned in such a way that you save for long term. And the third advantage is that major part of your money can be in equity-oriented funds. Right, with the active allocation, you can select up to 75%, or even if your life stage thing, when you're young, you can start with 75% of your equity exposure. So it gives you compounding benefit. And last and most important is the very least cost. So all the benefits, if you look at it, it's a great investment tool for every person who is looking for creating a kitty for retirement.
Okay, so that's excellent, and we'll delve a little deeper into each of the points that you've just mentioned. But Nikhil, from what I remember about the launch of the National Pension Scheme, it was introduced for people who could not contribute to the EPF, right? Because the Employee Provident Fund, which is run by the EPFO,
was primarily for salaried employees. And this was created for people who were professionals, who were not employed by anybody, so that they could also save for their retirement. But now you're saying that all salaried individuals should consider doing the NPS.
Exactly. So as you rightly said that earlier there was the EPF option.
Yeah.
So they created that, okay, professionals who want to invest for their long-term retirement kitty, they can look at NPS. That's why they started with a very low fees on the management of the NPS account. But over a period of time, they've given so many tax benefits that it has become extremely beneficial for salaried employee that apart from EPF, they should offer NPS also, okay, to plan for their retirement.
If I remember, I can't remember if it was Arun Jaitley who started the 80CCD, which is the additional 50,000 benefit. But anyway, it was many years back in the old tax regime, right? So let's start with the absolute basics of the NPS, which is there's an account 1 and account 2, tier 1 account, tier 2 account.
Right.
What does that mean?
Okay, so tier 1 account is the main NPS account.
Okay.
Where basically if you are a salaried employee, okay, and you want...
Or any other individual.
Any other individual who wants to plan for the retirement, who wants to hold their money till the age of 60, okay, and want to contribute every month on month or every year on year, and also want to get the tax benefits, right? So they all invest in tier 1 account. Tier 2 account is basically a self-contribution that I want to save for my retirement apart from tax benefit. So there's no tax benefit in tier 2 account. In tier 1 account, you have a lot of tax benefits which you can discuss in detail about it. So tier 2 account is basically again for individual who wants to invest for long term, okay, want an investment which is like a where you can be auto selection, where you can say X amount should go to equity and remaining in debt based on my age bracket, so that you can select an option and you can continue investing in that part of it. Again, the fees are very low. And in tier 2 account, you can withdraw whenever you want to do it. There's no restriction in terms of withdrawal. Whereas in tier 1 account, you have a restriction in terms of withdrawal.
Okay.
Okay, you can only withdraw X amount of money. You have to hold till maturity, which is or 15 years or 60, age of 60. You need to hold on that. And after that, there's you can only withdraw up to 60%. Okay, remaining you need to take an annuity. So all this
isn't it 80% now?
Now it's allowed to 80%, but again 60% is tax free. 20% is that you have to pay taxes on that income, so that doesn't make sense. And remaining 20% you have to take a mandatory annuity.
I just want to be absolutely clear with this, right? So the tier 1 account you're saying is where you get all the tax benefits, and what you're essentially saying is now in the old tax regime, if I remember correctly, there is an option available. Is it part of ATC? It's not part of ATC.
It's not part of ATC. It is the ATCCD,
which is 50,000 rupees.
50,000 rupees additional contribution, where you get tax benefit.
That is in tier 1.
That is in tier 1. But the new tax regime doesn't give you that benefit of ATCCD.
Yeah.
Right. But it gives you benefit of employer contribution.
Employer contribution, right. So up to 14% of basic.
Up to 14% of the basic. So basically, what happens is that if you are a salaried employee, okay, you can offer EPF. Where the employer contributes 12% and you also contribute 12%. So the employer contribution of 12% reduces the tax liability because that's not considered as your income.
Yeah.
Over and above this one, what you can opt for is says up to 14% of my basic plus DA can be contributed to NPS, and that whole amount becomes tax free.
Interesting.
In terms of investment.
So potentially as much as 26% of your...
No, so 14... Yeah, so if you combine EPF as well as NPS, yes, it's going to be 26% of your basic plus DA. You can contribute for long-term investments and the whole money is not taxed in your hands.
So that's very interesting. There's also a limit to that, right? There's 7.5 lakh.
7.5 lakh rupees overall. So that's something. It's basically meant for people... it's not for people who have got a very high salary.
Sure.
Right? Because in that case, your EPF contribution itself contributes more than 7.5 lakh rupees, then it becomes taxable.
Yeah.
But for those people whose salary is not, so I'm just giving, if your basic salary is only up to a lakh of rupees.
Yeah.
Okay. So if effectively in that case, 12% goes to EPF, which is 12,000 rupees, and another 14% can go to NPS, which is another 14,000, all 26,000 rupees. 26,000 into 12. Right, so effectively 3,10,000 rupees, 12,000 rupees is completely tax free in your hands.
Interesting,
right?
So and now and we spoke about this, I must tell you, in the previous episode of MoneyWise, which is that the EPFO or rather the government has come out with a gazetted notification to say that you can now cap your EPF contribution to 1,800 rupees. Of course, that was already there in the amendments. They've clarified that.
That's true.
And so as a result of which your employer also contributes lower.
Right.
If you don't ask them to contribute to the NPS instead, there is a tax implication.
There's
of
a
that,
tax implication,
right?
because they're only saving 800 rupees.
Yes.
So that's something you should make sure that the 7.5 lakh capping,
yeah,
that where your EPF contribution, your NPS contribution, as well as superannuation contribution,
Yeah.
which is very rare now. So combine all three, cannot be more than 7.5 lakh rupees.
Yeah.
Till the time you're not breaching that 7.5 lakh rupees, every salaried employee should offer both EPF and NPS.
Okay.
So
Okay.
it gives you a lot of tax benefit to that.
The only drawback to that, though, Nikhil, is that it brings down your in-hand significantly, and people, particularly in your metro cities, are they're counting every rupee, right? Ultimately, so if you're saving for your future, of course, it's important, but at what cost? You got to feed your family right now.
Yeah. So I'll put it slightly different, Alex. One of the most important goal for every one of us is our own retirement.
Yes.
Right. So if you're not contributing for retirement, then it's going to have a huge dent in your financial life future.
Sure.
So of your basic contribution, basic plus DA, 26% of that. So if you look at overall CTC, that will be roughly around 15% of your, because normally of your CTC 50% is a basic.
Yeah.
So of that contribution, if you're contributing 26%, that means of your overall CTC is around 13-14%.
Sure.
That of the part of the money should be ideally set for retirement.
Okay. So there's a strong argument to make. Let me ask you this though. So you're saying that the ideal situation is where 26% of basic plus dearness allowance gets put into both the EPF as well as the NPS.
That's right.
That is if it's below 7.5 lakh rupees, right? A second option, of course, is to cap your contribution to the EPF to 1800 rupees. Thereby, your employer's contribution also drops to 1800 rupees. And you can, to that extent, the delta of that 12%. So effectively, you're saying the remainder, because it's within that overarching limit,
right,
you can ask them to put into the NPS. And so there's no tax implication of that because you're shifting one to the other.
Yeah. So,
and you're contributing.
So coming to both the things, it
Yeah.
depends on what your employer is giving you as a salary structure.
Okay.
If they follow a CTC structure where employer contribution is also part of a CTC,
Yeah.
then you can offer this one.
Yeah.
But there may be few companies who may say that, okay, employer contribution which I'm doing in EPF is over and above your CTC.
Yeah.
In that case, that may not hold true because that's an additional inflow which is coming in, right? In that case, but most of the companies, if they follow CTC structure,
Yeah.
what you're saying is perfectly right.
Yeah.
Now, it depends on what type of risk appetite I have. Now, EPF and NPS are two different products.
Yes.
EPF is a guaranteed scheme, where EPFO gives you rate of interest every
8+%.
year, 8+%, and you get guaranteed return of 8%. Whereas NPS is not a guaranteed scheme because here the returns depend on the market. If you're, what is your contribution in equity and what is your contribution in debt, based on what is your weighted average return, you get on that. So someone who is looking at guaranteed return and very, very conservative, then I say they will still opt for EPF because that's a guaranteed return.
Yeah.
Where someone who is aggressive and someone who is willing, who understand that over a long period of time, equity can give me better return than debt, then NPS is a great contributor. So in my case, I use NPS as a primary tool because I believe that equity will give me far better return over debt over a long period of time. And we have seen historically that if you look at last 7 years, 8 years, NPS contribution, the return is higher than the EPF return.
So I'm glad that you brought that up, which brings us to the conversation on NPS, right? You said that the tier 1 account is where the tax advantage can take place. We've described the ways in which that tax advantage is there at the contribution stage,
That's
right? Now, when and we'll talk about the options available, but I want to make this absolutely clear, right? In the tier 1 account, there are restrictions, as you pointed out, to withdrawal. What are they?
Okay. So if you're withdrawing in maturity, okay, then or after completing 15 years of your contribution. Okay.
So either 15 years
either 15
or
years or at maturity, right? So when you're withdrawing that money, okay, then what happens is that only up to 60% when you withdraw, that becomes tax free.
Yeah.
You have an option to withdraw another 20%.
Yeah.
But that will be added to a tax slab.
Right.
So that's in terms of contribution, in terms of taxation, will be far, far higher. Okay. And the remaining 20%, you have to take compulsory annuity.
Annuity.
And the annuity rate is very, very low in the country. Your effective return is only 5 to 6% at max.
Sure.
So you have to take compulsory 20% annuity, and 20% is taxable tax slab. So in that, the 40% is not at all flexible nor tax friendly.
Yeah.
The 60% you can withdraw at any point of time. The second inflexibility in NPS is that if you want money in between, then you have a restriction in terms of partial withdrawals. You can only withdraw up to 25% of your contribution, and you can withdraw, first withdrawal can happen only after 3 years, and then between first withdrawal and second withdrawal, there has to be a gap of 4 years.
Okay.
So it's not flexibility in terms of your long term, like if you're looking for all your goals can be met by NPS, the answer is no.
Yeah.
It's only meant for your retirement.
Sure.
Right?
And the tier 2 account, what is it different in terms of contribution, in terms of withdrawal?
In tier 2 account, you can withdraw after 3 years, any point of time. There's no restriction.
With the same tax advantage?
No, there's no tax advantage. That's it.
On withdrawal?
On withdrawal.
There's no tax advantage?
There's no tax advantage on withdrawal. That's what I'm saying. So in tier 2 is not friendly to you, right? It's only tier 1. So they
you pay capital gains tax on it?
On the tier 2 account, right?
Yeah.
Again, that depends on your what exactly the asset class you have selected in.
Yeah.
So in tier 2 is not tax friendly, whereas tier 1 is completely tax friendly in terms of contribution.
Okay.
So tier 2 is not picked up so much, right? Because then you have other options.
Sure. You have the mutual fund industry.
You have mutual fund industry to invest in. So why I should offer a tier 2 account where I have again the same restriction of annuity, taking annuity up to a certain amount.
I'm glad. So basically for most people when they're contemplating the NPS, they're only talking about tier 1 accounts.
That's right.
Okay, so we're clear on that. Let's talk about how to choose, because at this point we've talked about the tax advantages, we've talked about what the breakup is, and we'll come to withdrawal in just a bit. I just want to make clear how all of this works. There are various options available, but the first 2 options available is auto choice and active choice. Can you describe this?
Okay, so auto choice basically means that based on your, you have 3 selections, 75, 50 as well as 25. So basically what you say is that they will do an allocation based on your age bracket, and then you start with that. When you're young, they'll do 75% in equity.
Why don't you give examples of age?
Okay, say for example, if you are at the age of 25 and you start contributing NPS, okay, and you opt for auto selection, initially your 75% of the money will go in equity oriented scheme and 25% in your debt. As you come closer to your retirement, or say 50 years of age, then the contribution will change, right, to 50-50. And when you're closer to like 55 or something, that contribution comes down to 25 and 75 in debt. So that's an auto selection where the equity and debt allocation keeps on changing based on your age brackets. Okay. Whereas in active selection, you have a choice to select. So you have four schemes there. You have equity oriented scheme, you have corporate bond scheme, you have government security scheme, and you have alternative investment funds. So as per your contribution, the maximum allocation, right, can go up to 75% in equity. So you have a choice, even you are at 50 years of age, right, and you say, I want to have an active allocation, I can contribute up to 75% in equities. And remaining allocation, I can contribute in corporate bonds, government securities, and AIF, whereas AIF has a limit of up to 5%. The alternative investment fund, you can have maximum of 5%.
Oh, you can't have more.
You can't have more than 5%.
And then you can determine what the contribution in the remaining asset classes is.
Yeah, so then 75, if you are selected active allocation, you can select 67 also, whatever number you want, maximum to 75. Over and above that, they've now introduced a new scheme. It's called multi-scheme thing, where there are few schemes allowed which can go up to 100% in equities also.
Oh, how does that work?
Okay, so same like your NPS contribution, you contribute in that. So it's called the traditional NPS, and it's called the overlatching of one NPS.
Right.
There's another scheme.
Right.
So where you can contribute in that scheme, then you can have up to 100% of the money in that scheme. But the problem in that scheme is that you can't change inter-scheme. Like in active selection, tomorrow you feel that, okay, markets are overheated, I want to move my additional investment to debt.
Right.
And then to corporate bonds, or you can change your allocation. In episode 1, you've selected the scheme, you can't change inter-schemes.
Okay.
Right? You can come back to traditional NPS.
Okay.
Right? You can come back to traditional thing, so that
without a tax implication.
Without a tax implication, it's all, you're not withdrawing the money. So that option is allowed. So if someone is young today, he can select the managed schemes account where he can contribute up to 100% in equities also.
Okay.
Right? But I'll say most of the people, they normally opt for active, where I can choose 75% equity, or I can choose as per my risk appetite. Or if you don't have a knowledge, or if you don't have a time, just select the auto allocation based on age bracket. They'll keep on doing the asset allocation changes.
Okay, so you would say that if you have a long enough time horizon, you should opt for the active and you should opt for higher equity allocation, right? Just to clarify, now you've obviously seen the way that these schemes are managed, and you've looked at the track record over a period of time. Can you describe that when you compare it to a similar product? And which would that product be? It would essentially be a hybrid mutual fund, right?
Yeah,
effectively.
Effectively be a hybrid mutual fund.
Right? And so therefore, if you're talking about a 75%, it would be an equity savings scheme in all probability, right? If you're talking about...
No, it will be aggressive hybrid equity
or
fund.
aggressive hybrid.
Equity fund.
Right? Aggressive hybrid, or maybe even a balanced advantage that is more oriented towards equity.
That's more oriented because, but the problem in balanced advantage fund is that if you look at the average holding period of balanced advantage fund in terms of equity allocation, it normally ranges between 50 to 55. It normally not go.
It doesn't cross. It doesn't
right?
cross.
Because from the market.
So aggressive hybrid is what
is the right allocation.
So therefore, and I'm trying to understand, in an aggressive hybrid, you would be able to look at the fact sheet and you would be able to see what equity they're investing in. When you're trying to determine, and there are various managers of these NPS accounts, right? How do you choose who will manage your account, and what is the stipulation or the rule about the kind of equity that these managers or fund managers would put money into?
See, primarily they invest in index oriented.
Oh, they invest in passive.
Primarily they invest in passive only. I think they have a liberty to leave a little bit amount of change, but major part of the money in equity oriented has to be like a index fund itself. Okay. Right. So that's where the contribution comes in.
And is it only Nifty 50?
I think it's Nifty 100.
Nifty 100, okay.
Right? So they have that contribution.
Sure.
And they manage in that part of it. But they have some leeway in terms of the government bonds and the corporate bonds where they can take active duration slightly and then change that allocation. If the best part in this one is that the management fee is very, very low.
Okay.
Right. And the new scheme which they've launched, the management fee is up to 30 basis point. Where the fund can contribute up to 80 to 100% in equity. These schemes are very new right now, so you won't have a good track record to evaluate how they've done. But if you look at broader NPS schemes, if you look at equity-oriented scheme, they've done slightly better than index, in line with index, right? So this is more for people that's showing you that if you're looking at passive as investments in mutual funds, right? And you want looking for retirement portfolio, then you can offer the NPS schemes because it gives you flexibility to move around debt and equity allocation if you're selecting active allocation, and you're looking very, very low in terms of fees also, right? And reasonably,
what is the fee on the active side?
I think maximum they can charge is up, like the individual scheme they can charge up to 15 to 20 basis point as a management fee, whereas in the new scheme which they have launched, they can charge you 30 basis point as a management fee.
Wow, that's incredible. So if you think about it, and if you're going direct in an index fund right now, you're paying about 30-35 basis points, right?
Yeah. So usually. So in effectively, it's in terms of comparable, in terms of fees, NPS is a very, very low in terms of fees.
Yeah.
Okay. But as I told you, you lose the flexibility in terms of, because it's only retirement.
Yeah.
Right. So you cannot compare. It's not like to like comparison, because
it's not like to like comparison. But for example, a hypothetical example, right? You're talking about if you're looking at an equity allocation, a lot of people will say that the base or the core of your portfolio should be large cap oriented, and if you're going large cap, passive is a great way to do it. And from that perspective, if you're anyway putting in a Nifty 50, Nifty Next 50 or a Nifty 100, then why not do it through the NPS?
But you lose out the flexibility in terms of withdrawals.
Sure.
Because you have to wait till the age of 16,
15 years.
15 years, right? And then you can only withdraw, tax free is only 60%. Right, and remaining when you withdraw, you have to pay as per tax bracket. So that can be as high as 36-37%.
Sure.
Right, so that's not a flexibility part of it. And then 20% you have to take an annuity.
What would that work out to? So 60% is tax free. Suppose you pull out. I mean, I'm not great in mental math, which is why I'm asking the expert. Right? So suppose I've managed to save 50 lakh rupees. Right. You have, and so therefore you withdraw 60% free.
Right.
Of tax, 20% additional you do withdraw as well,
right?
But you're paying the full tax, which is 30+%.
Yeah. So if you belong to 35% tax bracket, so you're paying on the 20%, you're paying 35% tax. So effectively you will be paying 7% tax on that amount. Right. So on your 80%, your effective tax has come to 7 rupees.
Yeah. Okay.
Right. So which is roughly around approximately 10% of your overall thing,
which is still less than
less
than what you would pay on a capital gains tax.
But you can only withdraw up to 80%. Then remaining 20% you have to take an annuity.
Sure.
Which is very, very low in terms of return. So if you adjust that part of it, the taxation differential takes care of that part of it. So it's more friendly from a contribution perspective. Because when you're contributing in equity oriented mutual funds, you'll be contributing after paying taxes, whereas in NPS you'll be paying pre-tax. Right.
So it makes sense because as soon as you're able to club the contribution deduction, when you're contributing, you're deducting from your taxable income,
right,
and you're pulling it out, you get that 60% benefit, and you're choosing if you have the risk appetite and equity orientation. All of those things put together, then NPS becomes a great product.
Great product, exactly, and that's for only salaried employees.
Okay.
Because the tax benefit of that 14% contribution is only for salaried employees.
Right.
Right. So that's why you get that benefit.
Okay. It's not for a professional, etc.
It's not so from your professional income.
You can't, right? Obviously, you can't because you need to have your employer contribute on your behalf.
So employer contributing on your behalf. Yeah. Right. But it's deducted from your salary only.
Sure. Yeah. So therefore, it's only for salaried employees. Okay, that makes sense. I do want to ask you about choosing of annuity, right? Oh,
and actually, in case of government employees, you can't withdraw up to 80%. You can only withdraw up to 60%.
Interesting.
40% is a mandatory annuity.
So before we get into annuity, I do want to ask about the return, right? If you say that there is a leeway for fund managers to choose government bonds, I guess you can play on duration.
Right.
You can choose which duration you want to have, or corporate bonds to a certain extent. You can choose which corporate bonds to invest in. True. Right. So to that extent, there's a little bit of alpha that you can generate on the yields.
Right.
Yes. But if you're saying that you only invest in the Nifty 100, so
but again in equity, I think up to certain amount they have to invest in index, and they have again leeway of some part to choose which you overweight or a little bit underweight on that part.
So therefore, from that perspective, what is the differential in each of these offerings that you have? So, for example, different fund managers, there are 10 or 12
10 or 12. So as of now, the differential is not substantial.
No.
Is that sometimes some fund houses are doing good, sometimes some fund houses are doing good.
Yeah.
So differential is not substantial. Obviously, look at track record.
What has it been?
It's been like more than 7-8 years now. Or I think when you look at track record, you'll have 7-8 years of track record.
What is the kind of XIRR or not? I mean,
so I think broadly, I think if I'm not wrong, last I saw it was around 10% CAG on the equity, 11% CAG on the equity. Overall NPS part of it was my fund return was 10.5% return on the overall NPS part of it.
Which is not a lot, right?
Which is not so. But again, what I'm trying to it's a compared to hybrid funds. It's not compared to pure equity because only 75% was equities and 25% was debt.
And also the last 2 years have not been
not been that great from the market perspective. So you need to look at it. But again, when you look at corporate
5, 4, 3, 2, 1, 0. Lift off.
Good evening and welcome to this special coverage. Today will be remembered as a watershed moment for India's space journey. Skyroot Aerospace has made history today with Vikram 1, the country's first privately built orbital class rocket, signaling that India's private space industry has truly come of age. Let's talk to the man of the moment now. Pawan Kumar Chandana, CEO and co-founder Skyroot Aerospace, joins us to talk about this historic feat. Not just any historic feat, the one that he painstakingly created brick by brick. Thank you so much, Mr. Chandana, for taking time out and joining us this evening. Today is not just Skyroot's success, it's a defining moment really for India's private space journey, and a company that you've said in some of your previous conversation with the channel as well that it transforms lives. You've done that for perhaps every space entrepreneur and even kid who hopes to be one someday. You showed them today that it was possible. What does this milestone mean to you personally then?
I think so. To me, it signals the potential of an Indian company which can go to a global scale in a very deep tech field like space. So today milestone is where we have launched India's first private orbital rocket successfully in the maiden attempt to orbit. This puts India among the three countries in the world who have the capability where a private company can put a satellite into orbit. So it's more of going global from India.
No, absolutely. And in terms of what this moment means right now, right? From your first pitch on LinkedIn to this moment where you put your tribute to your inspiration, Vikram Sarabhai, in space now, it's a culmination of efforts really, but also a new beginning that you're looking at, right? Mission Agaman also marks the beginning in some ways to India's space sector. It redefines it also right now. What should India then be expecting next from Skyroot? higher launch cadence, reusable rockets, or a bigger role when it comes to the global space economy then?
So this mission is our first test flight to orbit, and we're happy that the first test flight itself succeeded in reaching orbit. Typically, it would take more test flights, and so now we are getting to the next. So we'll be getting into commercial flights going forward, and the second flight we're targeting later this year, and we'll be doing more and more flights next year. So we'll be getting into commercial launching going forward, and our target is to get to one launch a month by sometime next year. We already have a factory which can produce one rocket a month. We are yet to reach that capacity. Now that the first launch gives us a lot of data, we utilize this success to be able to start mass producing the rockets, so that we can get to a high cadence of maybe by next year at one point of time to get to one launch a month is the target. And beyond that, we have a bigger rocket called Vikram 2, which has higher payload capacity, almost more than a ton, which is 3 times of Vikram 1's capacity. That will help us address even wider customer requirements. And also we have plans for building a reusable vehicle. A large reusable vehicle as well, of which progress is going on. So there are a lot of things on the table right now. So, but our core focus in the next 2 years will remain in increasing the cadence of Vikram 1 and introducing Vikram 2 into the market.
No, absolutely, and history has been created in more ways than one, just as you recapped as well. So for decades, though, space was synonymous with ISRO. So today, a private Indian company has successfully reached the orbit, like you mentioned, on its very first attempt, that too. Has India truly entered a new era of commercial space as well? How are you looking at this really being India's moment as well?
Absolutely. In fact, putting a satellite into orbit is, one of the toughest feats in engineering, and very few companies in the world are able to achieve it. And today Skyroot has achieved it and became one of the very few companies in the world, and also made India the third country where a private company is able to put a satellite into orbit. So I think that way it's we can call it as a new beginning of commercial space flight in India, where so far it's only the government agency which is doing launches, but their core focus is into meeting the government requirements or the national requirements. So I think with Vikram 1 coming into picture, we have a dedicated commercial launcher to space, which is global. Not only, more than 70% of our market is global. So we're building a truly built in India, designed in India rocket, which will serve the global space market.
No, absolutely, and you've accomplished it today with Mission Agaman as well. It's India's arrival as well when it comes to the global space sector. So one checkbox ticked, one dream accomplished. What is your most ambitious dream right now? Where to next?
Next is to get to consistent successful launches, and beyond that get to at least a rocket a month, a launch a month. That will be like a
right. No, absolutely, and that is a very big feat that he's talked about as well. Just to recap, when you talk about some of the things that have happened here, it is, unimaginable to be talking about this as well. You're talking about India's private space pioneer as well. You're talking about a very big mission, Mission Agaman as well. We were talking about how the ambitious dream, the checkbox is really ticked, Mr. Chandana. Just to recap for our viewers, just wanted to know where to next, and that's the bit that you were answering.
Yeah, so next would be, to do more launches with consistent successes, and then get to like a rocket a month. And also down the line, we'll also be operating bigger reusable rockets over the coming years. So I think it's a very exciting program where we target to become one of the leading launch service providers for satellites globally.
Absolutely, and I hate to play the devil's advocate on a day as important as this, but just wanted to quickly squeeze in this question as well. The global space race is increasingly being shaped by the US and China, and that is one reality that we're really sort of battling against. Those are the odds that are stacked against us as well. So what do you think this really means for India as well in terms of some of the challenges or maybe some of the hurdles that you're looking at?
So with Vikram 1 launch today, now India joins the club, So now we have US, China, and India also like getting into commercial space flight. And that's a good place to be in. In fact, like Skybase is just an 8-year-old company. And then we already have a factory which can build 1 rocket a month. We successfully launched the first rocket to orbit in the maiden attempt. So it's a early phase, but it's a great beginning, and we'll do more and more launches. And then, in fact, a good portion of our customers also come from US, Europe, and other regions. So I think we'll be building globally competitive solutions from India for the world, competing with the best in the world.
No, absolutely. And just a few years ago, of course, private participation in India's space sector was almost unthinkable, right? What were some of the technological or perhaps regulatory hurdles that you're looking at that you've overcome to get to this moment? It is a very, very important moment that you're looking at. It's going to be reshaping the way that we look at the space sector in the country.
Right. When Skyroot started in 2018, there was no policy backing for launches, doing launches, commercial launches in India. And just recently, 4 years ago, Government of India has formalized new space policy reforms where private companies can, get into the space sector, and then that has enabled us in a big way. And the government has formed an agency called InSpace, which authorizes private companies to do launches and launch satellites, launch rockets, etc. And in fact, today's launch was also authorized by InSpace, and it is a very, very efficient and a very streamlined regulatory process as of now, one of the best regulatory agencies, space agencies globally. So that way, I think the regulatory challenges has been overcome by the government opening up the sector a few years ago. And in fact, the government is making a big push so that India can become, from 2% of the global market to as close to 10% of the global market and become a $44 billion space market by 2033 from India.
No, absolutely, and you've answered this question perhaps with Mission Agman as well in some ways, but just wanted to also ask you, how does Vikram 1 really change the global perception of India's private space capabilities? Do you believe that this is the moment that India can be emerging as a serious player in the global launch market as well? And we've touched upon that in some sense, but just in terms of the global perception as well, really shifting in a very substantial manner.
I think this is a very large global milestone. Hardly any company without prior heritage, has succeeded in the first orbital attempt. That itself is unprecedented globally, and we Skyroot have achieved it. I think that's a big milestone in the global space sector in itself. And then as we get to more cadence, that will also be very unique in the global space segment. And also, will be, as I mentioned, most of the market is also global. So I think we'll be hopefully, as we do more launches, will be a strong contender on a global landscape.
No, absolutely. And taking a leaf of what you've just said, right, in terms of how this places you in that race as well, let's talk about the alternate race as well. Do you think that Indian startups are now competing with the world's leading commercial launch companies with Mission Agman in place?
Absolutely. I mean, as I mentioned, we're going to become the third country in the world where a private company can launch a satellite into orbit. And also we're enabled by really, really excellent cost efficiency and great ecosystem built in India. For example, Mission Agman, we utilize the spaceport of India, which is one of the best spaceports in the world. And the launch pad is the first launch pad. The PSLV launch pad has been used for the launch. So the infrastructure is being made available right now. So, we use the world-class infrastructure, in building our vehicles, in launching our vehicles and building our vehicles and testing our vehicles. And you have an ecosystem of over, for example, today's mission had suppliers from over 400, vendors across India with such a strong ecosystem exists in India. So strong cost dynamics, a great ecosystem, very competitive once we get into commercial global market. And also, if you see internationally, there are only 2 companies regularly operating to orbit. So there's a lot of scope and opportunity to grow into a good player for launch services. However, I mean, this is just a first mission. We have more missions to go, and we'll have more opportunities to prove ourselves in the international market.
No, absolutely. And just a few years ago, maybe this would have been something that you would be second-guessing yourself about, or other people would be doubting you, right? Just quickly wanted to try and get a snapshot in terms of what is up next that you think is perhaps really ambitious. You've mentioned some of your goals, and we've got that just right. We're truly looking forward to you accomplishing them as well. But something that's really ambitious, really out of the box for you right now, that you think you'd like to really strive towards.
No, I think the clear next milestone would be to get to one rocket launch a month. So that is hardly very, very few companies in the world do it. So that's a great commercial cadence to get into.
No, absolutely. And lastly, just wanted to ask you, beyond the headlines, right? You've got a young team as well. 28 is the average age, like you've said. Could this be the inflection point that really attracts talent into the sector as well? How are you looking at that aspect as well?
Yes. So this is, in fact, like this is proved that young talent can achieve great things. And then the Mission Agavan is a proof that it can be done. And in fact, we achieved it and made an attempt itself, right? So that showcases the capability. But as I mentioned, we'll do more and more missions going forward. So I need to get going now.
Absolutely, and thank you so much for taking time out and joining us as well and helping us understand what is the path from here on as well. So one rocket launch a month, that is the ambitious milestone that Skyroot Aerospace is looking at as well. Thank you so much for joining us on this special coverage. It's been a leap of faith for Skyroot Aerospace, right from one pitch on LinkedIn to this landmark moment that's going to be reshaping India's space history.
5, 4, 3, 2, 1, 0. Liftoff.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide. And we need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate.
You're watching NDTV Profit. I'm Mahima Vachrajani, and today we thought of doing something interesting and exciting. We're going to talk about, of course, everybody knows that Odyssey has been released today, and there's a lot of interest coming in for this movie, and we'll try to understand as to what trends are looking like, what are theatres experiencing in terms of bookings, how has the booking flow been like, what is the pipeline going ahead in terms of where Bollywood stands. All of that we're going to talk about in this episode, and to talk about about this and take this conversation ahead. We are now joined by Ashish Mishra, who's the head of commercialization at Cinepolis India, joining us now. Ashish, thank you so much for taking out the time. A pleasure speaking with you. I'll start with asking about Odyssey first, because that's where the interest is right now, right? How big is this? I mean, what is your expectations in terms of what box office could this hit, and what does this mean for theatres as a whole?
So of course, this is a big one, right? We're seeing that there's a lot of hype, there's a lot of chatter about this movie, and of course, this is directed by Nolan, right? So he, of course, comes in with his own, you can say, the things that he has done in the past, the movies that he has directed, and this seems to be just carrying forward that legacy of him. And it's already tracking as a big blockbuster. And these are the kind of movies which basically transcend from just being a movie to becoming something far more cultural, right? So what we are expecting is that this would be one of the biggest opening weekends for Hollywood in this year. We are expecting it to be opening at about close to about 20-22 crores.
Okay, all right. And do you think that this is the kind of movie that brings back people to theatres? Because, nowadays we've been talking about this as to how, a lot of, platforms like Netflix, etc. have kind of taken away that vibe, or taken away that joy of going to a theatre and watching a movie. Do you think these are the movies? Because it is a movie that needs to be experienced in the most premium way possible, right?
Yeah, absolutely. It is that kind of a film, right? And one thing that I would like to point out that, of course, audiences have a lot of choices today, but there are certain movies which feel absolutely unmissable on the big screen. And today we have one of those kind of movies coming in and made for the big screen experiences. Nolan has been very vocal about how important the theatrical part of the business is, and how important that it is to him that he delivers a film for the big screen, and has come out again with a fantastic film. We've already seen the initial reviews come out, and all of them are glowing, and we do expect that this would be a movie which would be shattering all records here in India. One thing is that it's not just that Netflix's or the OTT platforms are impacting this cinema attendance. We have had many movies. I mean, Durandar is a recent example where we saw off late. We have seen Obsession in Hollywood do really well. We have seen Welcome to the Jungle, and even movies have been doing well recently. So what I feel is that the common thread which joins everything is not really the language or the genre. It's basically the promise of that experience that you can't just recreate at home or in a small space. So the films and the communal experience that the films bring is just another example which we are seeing today in form of Odyssey.
Got it. The other aspect, Ashish, was to understand as to how important are these, Hollywood tentpoles, because we've seen how, good Hollywood movies have come in, swept in, and seen a lot of traction, right? So how important is it for the theatre business and for Cinepolis India as well?
So very important, right? Hollywood currently contributes about 10 to 15% of the overall box office for the country. For multiplexes, it's slightly higher than that percentage, but Hollywood is very critical, right? It has now, off late, what we have seen is that the reach of Hollywood has gone beyond just the metros and the tier 1 cities. And as India is becoming more and more contemporary, we do expect that this share will increase.
Okay. The other aspect, Ashish, is that, we've seen as to how things have fared so far. Just want to get a sense as to, if at all, if you can give us those numbers as to how you've done in FY26 and how you plan to grow in FY27. Anything in terms of where numbers go, top line, bottom line, margins, etc.
So we are a privately held company. Correct. So we're not... I'm not the right person to share any kind of public information, but we we continue to grow. India is a key market for us, and we will continue to expand in India. It's something that I would like to say at this moment.
Got it. And what is competition looking like then? Do you think that, because it's ideally essentially a duopoly right now, right? So how is competition shaping up, and how is it that you are showing strength to us?
So I think like any industry, competition is healthy, right? It motivates each and every player to do their best, and we don't see it any differently in this industry. We want to grow and grow profitably, and that's what I would like to say at this moment.
All right, just one last question, Ashish, from my end, and that's with regards to the release calendar. What is it that you're looking forward to? How strong is it going forward for the calendar year 2026?
So the release calendar looks pretty promising when we look at the kind of movies which we have seen right throughout the year, not just one genre, multiple genres performing, and that's something that really sets the ball rolling for us in this year. And going forward, what I do expect is that August is looking good with a couple of biopics in form of Prahar and Ita. Apart from that, we also have Batwara and Avarapan 2. In August, we also have Toxic, which is going to be a big release. So that's something that is setting the pace from August and going till December, where we would have King coming in, and in between of that, we were going to have probably one of the biggest Indian films for the world, which is Ramayana, which we feel has the potential to be the biggest ever Bollywood film, which is releasing in this year.
All right. Yeah.
Talking from the Hollywood point of view, of course, we have Spider-Man come up, huge anticipation for this movie as well. And we have got a consistent lineup towards the end of the year. So we do expect that 2026 is on track to be a record year for the Indian box office.
For sure, and I look forward to speaking to you once all those box offices are hit and that your numbers fly. Thank you so much, Ashish, for taking all the time and speaking with us at NDTV Profit.
Thank you so much for having me. Thank you.
Let's try and understand from the management about a few other things. We've spoken to them earlier about the setup as it stood and the key performance of the margins. But I want to take a follow-up question to Aparna. And Aparna, my direct question is this. I understand you will try to optimize, but do margins stay stable? Do they inch higher, or do they have a potential of galloping ahead? Because a lot of peers are saying they will gallop ahead for them.
Our endeavor would be to keep improving it, through the quarters. But like I said, it'll be a function of the investments we need to make. These could come also in the way of deals that we are contesting, we are looking at winning. So, it's going to be a function of growth as well.
Okay. Saurabh, can I get you in on manpower requirements? How are you hiring talent right now? And considering that talent has to be less expensive, but if it's AI-enabled talent, it will be more expensive. How do you juxtapose all of these factors and do optimum hiring?
So all the forces are in play. We will have to make sure that we take care of our existing employees. We'll have to invest. Aparna and Srini spoke about it in future talent. Some of the AI skills are rare, so they are coming at a premium. So all forces are at play. We'll have to invest, grow, and make sure we maintain our margins. I think that's the way we look at it. Our overall headcount and hiring will be linked more to the demand environment, which is right now a bit muted. But I don't see a headcount going up drastically. I see that the gains of productivity, which we were talking about, will have a play as we move forward.
Okay. Srini, the Q2 guidance is muted. What needs to happen for acceleration in H2? Beyond the OLAM and the acquisition tailwinds, what are the biggest organic growth drivers that you have which could facilitate growth in FY27, considering you said that the demand uncertainty is already baked into the current guidance?
Absolutely, Neeraj. We have baked in all those aspects when we give the guidance because we just give a quarterly guidance. Having said that, going back to your question, and if I were to look at the three markets in Americas, I think, we talked about BFSI, we're seeing a good momentum there. Consumer, we have won some deals, and that's another one. Healthcare is somewhere due to the government regulations, especially in the payer and provider segment. We are working with the client to client in terms of the changes that they are going through from their side, which will take a little bit of a time. And if I look at Europe, clearly, the momentum is building up in energy manufacturing resources, which was traditionally very soft sector for us, and we have seen some good deal wins there, and that should reflect in that. BFSI continues to be strong in Europe, and specifically in few countries that like UK and Nordics region. And if I look at APMEA, it's a more secular because it's a much broader market. But having said that, in addition to the OLAM deal that this market has won, they're also looking at country to country opportunities around AIDC, opportunities around sovereign AI, and so on and so forth, which is becoming more important for some of these clients in some of these countries as well, Neeraj. So overall, the deal pipeline is healthy, more skewed towards cost takeouts, including vendor consolidation. But there are a lot of deals on the AI side as well, which will be consulting led, which will be more advisory, leading to data and cybersecurity and other aspects as well, which continues to create the momentum. Right now, they are much smaller deals, but as the client shifts to at an enterprise level, there will continue to be larger deals as well.
Okay. Srini, you emphasized a consulting-led AI-enabled approach. How much of that FY27 growth in pipeline is coming from AI, Gen AI deals versus traditional services? And, any update on this embedded AI engagements as well? Also, maybe just a comment on the token cost versus human cost, and how are you baking that in client conversations?
Sure. So the way I see it, Neeraj, in terms of AI, our approach is AI first. We are pivoted to AI. So you have three types of conversations with our client. One is, I call it as run and operate, right? There, it's a traditional application management, infrastructure management, business process management. Here, every solution that we do is AI first approach. And for that, we have built a platform which is Wings, which gives us agents and agentification of the client's end-to-end process. So to me, you lead in with AI and you give in the productivity benefits for the client. And we bake that into our solution and our cost. The second part, Neeraj, is around software development lifecycle, especially the build AI, which we call it as that, which is also product engineering lifecycle and package implementation. There, I think the disruption is much higher because the productivity benefits that one can get in a software development lifecycle, specifically if it is a greenfield or a program like Python, you get a huge benefits in terms of productivity, right? Having said that, if the code is lot more complex, a lot of modernization that's required, how you deploy and take it to production, the complexity increases. There, the productivity is much lower. So that's how I see, because that's more of a brownfield. There are a lot of legacy applications. You got to be careful in terms of how you deploy. Now, both in both the scenarios, Neeraj, it's going to be human plus AI, because human intervention will become very important. I'll tell you, if you look at software development life cycle, I'll break it into three pieces. The one is testing and coding, which is in the center. A lot of productivity benefits you can get from AI. But if the target environment is legacy and if deployment and production has to be there, a lot of human intervention one needs to do. Also, business requirement gathering, user stories becomes very critical, because only then you know what is the right tool to deploy. So the productivity and the way we come into picture for our clients is around telling them what's the right tool to use in that aspect. The last part you asked is on tokenization. So what is happening, Neeraj, is that you don't need to deploy a high-end LLM for a simple workflow, because the cost is going to be prohibitively high, but the return on investment for that workflow will be much higher. Second, when you have to get the real return on investment from AI, you got to really reimagine your process, redesign your process. Only then you get the benefit. But if you do a piecemeal approach, you have the AI cost, you get the benefits in that piece but net you may not get the overall productivity. However, the token cost is sticking, right? So when do you use a large LLM and when do you use an open source kind of an LLM? When do you think it better to continue with the human? The balance between the human capital and the token capital will become very intense as we move forward. And that's where companies like us, we have the depth of expertise, we have deep tech knowledge, but we also have the business context, the client context. We are able to stitch that and articulate that to the client in terms of what it should be as part of our advisory and consulting, Neeraj.
Okay. All three of you, thank you so much for joining in today and giving us your thoughts.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news.
Welcome to what is going to be a very exciting show. The Business Leadership Awards are back after a 13-year hiatus on NDTV Profit, and on the 26th of July, we will honor India's finest business minds. They will all come together to choose the leaders who are shaping the country's future. Guys, you know what's so exciting about the Business Leadership Awards and the way we managed to put it all together is the stellar jury who's come on board. And in the jury rounds that we had with Sunil Bharti Mittal, Noel Tata, and that exemplary jury, it was clear that their attention to detail is so focused. The questions they asked us, it's amazing.
Give us a snippet of that though. What are some of the questions that you got?
So, for example, on methodology, for example, on are there any past reputational risks for the nominees, all of that. But this is going to be an exciting show because we're going to hear for the first time who the nominees are.
Yes, indeed. And we are going to hear the nominees, but also just the other aspect that the nature of the jury and the combination of the jury, Tamanna, spans across business experience, nation building experience, and so much more. So in some sense...
And
markets. Yeah. So fairly power packed.
Yeah, so let us tell you a bit about the Business Leadership Awards before we unveil who the nominees are in all the categories, because this is going to be truly exciting. The Business Leadership Awards, of course, felicitates the brightest minds in business in India, those who've really moved the needle over the last year. And chairing our jury is Sunil Bharti Mittal, founder and chairman of Bharti Enterprises, the man who built a telecom empire that connected 1 billion Indians. It's not just him. Noel Tata, chairman of Tata Trusts, is on the jury. Cyril Shroff, managing partner at Cyril Amarchand Mangaldas. Kiran Mazumdar-Shaw, chairperson at Biocon Group. UK Sinha, former chairman at SEBI. Jayant Sinha, president at Everstone Group and visiting professor at the London School of Economics. He's also, of course, former union minister in finance and civil aviation. Ramesh Damani, value investor and member of BSE. C.S. Sethi, chairman of State Bank of India, was also there. Our partners and non-voting member was Sanjeev Krishan, chairperson PwC India. They've been our partners in everything that we've done. And of course, Rahul Kaval, CEO and Editor-in-Chief, NDTV Group. Just, to your question about some of the kind of questions we got, first of all, what was amazing is to get that kind of a jury and sync their calendars. Some of them were in different parts of the globe. They came on, and very pertinently, why this one, why not that one? Why this kind of a methodology, why not that? And it was after agreement that we came to this, which is why it's so important to understand how we've done this in a transparent manner to really honor the best of the best.
Sachi, just before we get to the nominations, what is the one defining factor of these awards for each of us? And Tamanna, let me start with you. What is that one defining factor that makes the original Business Leadership Awards truly different?
So, for me, it is that we removed subjective opinion out of it as much as possible, because that's what happens with these awards, right? You wonder, why has someone been given an award? It is based on data. There's credible data. We've gone back, we've looked at the data, we've crunched it that way, and we've had a partner with the caliber of PwC who's put their stamp on it. So the last thing that should come to mind is why this one and why that one. Is just the data doing all the talking.
And for me, it was all kind of categories: contemporary, traditional, as well as what is futuristic. So in some sense, I think we've been able to cover almost all aspects, if not all aspects, of what business leadership should be about.
And you're trying to award someone who really deserves it, because as Tamanna was mentioning, the methodology where it's given weightage to what really deserves it. I mean, it's not a methodology that has fitted all the categories together. Every category has a different kind of a methodology that has been used.
Yeah, and for me, I think more than anything else, at a time when we're talking about AI adoption, one of the categories captures that in a very interesting manner, and what went into the selection of these people actually stood out to me.
Should we get to the awards then?
Yes.
Should we get to the nominations?
Yes, we should. This is the exciting thing. People have been asking, who are the nominees? Well, why don't you start it off, Neeraj?
Yeah, let me unveil. And it's apt that the first category is the business leader, who is the AI champion, a category that goes beyond numbers, because this is a qualitative call on the most impactful AI players today, from large language models to the infrastructure powering AI and companies scaling real world applications. We capture the full stack. The idea is simple: who is building, who is enabling, and who is delivering AI at scale. These are the names defining the next phase of the AI revolution. And the nominees are Sarvam AI, building India's answer to global AI giants; NESA, creating the critical GPU infrastructure powering the nation's next generation of AI innovation; Fractal Analytics helps place Indian AI expertise on the global map through innovation-led problem solving; Cure AI, using AI to detect disease before symptoms become fatal; and Karya, building an ethical model that empowers underserved communities while creating high-quality AI training datasets. And Emergent, redefining how applications are built in the era of autonomous AI. Well, guys, you need look no further.
How exciting was this? I must say, this is one place where the jury really did a lot of deliberation and discussion, and it was eye-opening for us to see that those at the top of the ladder of corporate India are so clued in to what is going on in the world of AI, to be able to differentiate between claims of AI and actually doing something.
That is the point, and that's what I want to know, because you've been part of this as well. You heard some of that deliberation. I'm most curious to understand, a lot of companies are trying to rubber stamp AI and saying we're also doing AI. So what were the kind of questions that were asked to say these are the guys that need to be in that room and in contention?
So a lot of scrutiny, and in this one category, I must say, something that went into it is also looking at the impact of that innovation. AI is right now over the world being looked at through the lens of profitability, and that's important. But impact, Atmanirbharta, what it's doing for the country was also definitely in play.
And it's not directly that it's all our LLMs only, right?
Yeah.
There are a couple of companies who are looking at AI, which could be an overlap on the LLM, which is more beneficial as well. And that's what India is all about right now in terms of the addition, the third wheel, you could say right now, that in terms of AI that India becomes.
Slice of the cake,
Which
right?
slice
As
of the
called.
cake? Yeah, absolutely. And again, it's more qualitative right now in terms of where AI as a category goes. But the next one is very interesting. We're talking about the next category, which is all about Atmanirbharta. It's awarded to an enterprise that has strengthened India's self-reliance by building indigenous manufacturing, deep tech capability, healthcare, or industrial independence. In fact, reducing import dependence is also one of the criteria here, and establishing a globally competitive Made in India excellence brand. And the nominees for these are, the first one, ONGC, Tata Electronics, HAL, Dr. Reddy's, and Wockhardt from the pharmaceutical space.
You know, this is, I just want to say a word about this category, because Neeraj, you asked in the beginning that what sets this apart. And when the NDTV team came together to think about what is differentiating in the Business Leadership Awards, it is to underline this, the need of the hour for this nation and those that have served that need. So which is why this becomes a very, very important category.
Yeah, particularly what is happening in defense and otherwise. But it's not just defense. That's the one that everyone focuses on, but what's beyond that is
but even
important.
in pharmaceuticals, the fact
we are innovating.
The fact that we have those who have crossed new bridges and broken ceilings in innovations in pharmaceuticals, that makes it so exciting.
Yeah, and that story that has emerged over the course of the year to say that India is not just the manufacturer of pharmaceuticals, it's actually at the cutting edge of developing new formulations that is changing the landscape for how India is viewed in the pharmaceutical industry. But moving on to the next category, this is the Business Leader of the Year in the public sector space. The evaluation begins with a top 100 companies by market capitalization as of the 30th of April 2026. Forming the screening universe is, of course, from each of those, you have companies that are assessed on 5 equally weighted parameters. You're ensuring a balanced view on growth, scale, market performance, and these include revenue compounded annual growth rate, profit growth rate, price performance, along with average revenue and average profit, with each metric carrying a 20% weight. And all those calculations are based on a 3-year period. And the framework actually ensures that we recognize consistent performers in the public sector that are delivering both financial strength and shareholder value. And these are the nominees. From strengthening India's maritime capabilities to building a globally respected shipbuilding enterprise, this nominee has steered a strategic national champion to new heights. Captain Jagmohan, the Chairman and Managing Director of Mazgon Dock Shipbuilders. The next one is equally interesting, leading one of India's energy giants through a period of transformation, growth, and evolving consumer demands. This nominee has balanced scale with strategic vision. Manoj Jain, the Chairman and Managing Director of BEL. Revitalizing cornerstone of India's industrial ecosystem. This nominee has championed execution excellence as well as renewed growth. K. Sadasivan Murthy, the Chairman and Managing Director of BHEL. Driving the transition from power generation leader to energy transition champion. This latest nominee is helping shape India's energy future. Gurdeep Singh, the Chairman and Managing Director of NTPC. At the helm of India's energy exploration, this nominee has led with resilience, scale, and strategic foresight in a rapidly challenging and changing global landscape. Arun Kumar Singh, the Chairman and Chief Executive Officer of ONGC. What a lineup.
Just want to talk a bit about why we have a separate category of business leaders for public sector and for private sector, because we have a specific methodology, right? And market cap is a big part of it. We also have to recognize the role of public sector enterprises and what they've done, not just for investors, but for the economy and how they've zoomed ahead. So which is why we have those two categories. A lot of exciting ones coming up. And the next one which I'm talking about and revealing the economies is one which has been hitting the headlines. This category of leaders have been hitting the headlines more often than not. This is the new economy leaders category. For this, we pick companies that were listed between April 1st, 2021 and March 31st, 2023. The new age names that have been tested in public markets is how we have raised that bar. The evaluation uses a balanced, data-driven framework with equal weight across 5 parameters, which are revenue growth, profit growth, stock price performance, average revenue and average profit, each accounting for 20%. All metrics are calculated over 2024, 2025 and 2026. Now just look at what you're seeing on your screen. 2026 has been given the most weightage, then 2025 and then 2024. The reason for this is to also identify leaders or companies that have performed well more recently. So it's not just debut momentum, but sustained performance across growth scale and market returns that we've taken into consideration. Now, having said that, here are the nominees for this category, which is a very exciting one. The first nominee is Eternal, pioneered food delivery and building a multi-vertical consumer internet powerhouse. Policy Bazaar brings transparency to one of India's most complex industries, transforming insurance from a product sold to a decision informed. Nykaa, a category-defining consumer brand, reshaping how millions of Indians discover, shop and engage with lifestyle products. Car Trade, tech-streamlined vehicle discovery, transactions and ownership across the automotive ecosystem. Delivery redefined supply chain efficiency through technology, scale and relentless execution. This is clearly an exciting category and also recognizes the big change in the way consumers are going out and looking at various services and products.
And a category that took advantage of the Jam Trinity to the fullest, right? I mean, they built out products which are now almost on all of our phones, the apps.
Yes. The post-COVID boost also gave them this huge tailwind coming in.
And it's across sectors. It's not only consumption, which is, okay, you can talk about FMCG, you're talking about the financial side of it as well. You can talk about auto. Every sector has started to build that new age economy now.
And it's also amazing how the behavioral changes of how consumers are consuming all of this is coded into the way that they're doing business.
But tell you what, guys, nothing happens without finance, right? And that's why the next category is so important, right? Onto the financial powerhouse category, the term is perfect. This award recognizes top performers across the BFSI space with a clear split between public and private sector players and rankings determined within each segment. The evaluation follows uniform data-led framework with equal weight across 5 key parameters. These include revenue compounded annual growth rate, profit compounded annual growth rate, and the stock price performance, along with average revenue and average profit, each contributing 20% to the overall score. The framework ensures fair comparison, identifying institutions that deliver consistent growth, strong profitability, and sustained market performance within their respective segments. Now, having looked at the evaluation methodology, here are the nominees. Punjab National Bank, a banking institution woven into India's economic fabric for more than a century. Indian Bank, combining a strong legacy with disciplined execution. Union Bank of India, with a nationwide footprint and a growing digital presence. Power Finance Corporation, financing the infrastructure behind India's growth story. Canara Bank, one of India's most enduring financial institutions. And you can never take State Bank of India out of the equation, the backbone of India's financial system. Of course, following it is Bank of Baroda, blending global presence with domestic strength. And the nominees for the Financial Powerhouse of the Year in the non-PSU category are Shriram Finance, built on deep customer understanding and an unmatched presence beyond India's metros. BSE, the institution that helped curate India's equity culture. ICICI Bank, a pioneer in modern banking, combining innovation, digital leadership, and financial performance to stay ahead of the curve. Axis Bank strengthens its position as one of India's most dynamic and customer-focused financial institutions. Cholamandalam Investment and Finance built one of India's most respected NBFC franchises, and there is no doubt around that. And Bajaj Finance, redefining consumer finance through innovation, execution, and most importantly, scale. And you can never leave out HDFC Bank, a benchmark for excellence in Indian banking.
So here, once again, just to underline the point that there are two segments to this, PSU and non-PSU, to recognize and highlight the role that PSU wealth creators and financial institutions have come in with, which have just zoomed and are at the forefront. Gone are the days when PSU financial institutions were looked at as laggards in any way.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The entrepreneurship in India is currently defined by innovation, technology, more customer orientation is something what is visible today. And those companies who innovate, collaborate more importantly, are the ones who are going to be more successful in the decade to come. And the formalization also had helped in terms of expanding the entrepreneurship across the geography of the country.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report. The important thing to notice there is that these are
You cannot really ignore the investors here, right? I mean, this is a category which is actually something which will be watched out by investors because these are the wealth creators. Yes, the next category is the wealth creators category. This one actually tracks companies that have consistently delivered both growth and shareholder returns. We've actually filtered for businesses with a minimum 5-year listing track record, revenues above 2,000 crores, and the ranking is balanced but clearly market-driven, with price performance carrying the highest weight at 50%, while your revenue and profit growth each get 25%. Now, the evaluation period runs from FY22 to FY26, capturing sustained wealth creation over time. So all you long-time investors, wait for the nomination. BSE enables capital formation to create wealth for generations of investors. Transformers and Rectifiers, the company which has transformed engineering expertise into one of the most compelling growth stories. MCX India transformed market participation while delivering exceptional value creation. Himadri Specialty Chemicals, the company has actually leveraged innovation in specialty chemicals and advanced materials. Gallant Ispat, a story of manufacturing scale and disciplined execution that has transformed industrial capability into sustained growth. We have Garden Reach Shipbuilders. They've come ahead and combined strategic national importance with operational excellence. Newland Laboratories built a differentiated pharmaceutical business, creating lasting investor value. This also is very interesting because you're seeing multiple companies from different sectors that have actually created value,
and we
right?
haven't just done, 5-year return and then that's it.
Yeah.
We have added the kind of methodology which makes it an extremely interesting category to see.
Yeah.
I'm excited to see who will.
All right, so those are, and quite a few of them have been listed for quite some time. But what about the relatively new kids on the block? How much wealth creation have they had? That's up next, the IPO of the year category. That spotlights the most impactful listings of the recent cycle. We're looking at companies that hit the markets between January 1st of 2024 and December 31st of 2025. The evaluation blends both the demand and the delivery, with offer size at 20%, institutional and retail appetite accounting for 30%, and market performance taking the center stage. In fact, annualized returns since listing till March 31st, 2026 carries the largest weightage at 50%, making this a true test of post-listing wealth creation. Now, you're probably wondering which of those IPOs that you subscribe to make it to the list. Let's talk about the nominees in this category. Meesho, a listing that showcased the strength of India's digital consumption story and the growing maturity of its startup ecosystem. Grow, bringing one of India's most recognized fintech brands to public markets. This nominee captured the imagination of a new generation of investors. ICICI Prudential AMC, a landmark listing that heightened the rapid evolution and growing importance of India's asset management industry. LG Electronics India, one of the year's most anticipated public offerings, combining global brand with a deep consumer trust in India. Lenskart, a category creator that successfully translated consumer leadership and innovation into a compelling public market debut. HDB Financial, one of the most anticipated public offerings in the financial sector, which brought a scaled lending franchise and deep retail reach to public markets. Tata Capital, a landmark listing from one of India's most trusted business groups. This nominee captured investor attention with its diversified financial services platform and strong growth potential. Exciting, right?
Yeah, completely. You know, what is also exciting about these awards is the differentiated kind of categories that we have seen, right? You've had the Atmanirbhar category. The next one, I think, is such a crucial one from the perspective of a responsibility we all as humans hold, which is to be green champions. And we want to recognize those businesses that have been green champions. This category recognizes companies that are setting the benchmark on sustainability. These are Indian corporates that rank in the top 1% globally in the S&P Global Corporate Sustainability Assessment for 2026. In other words, businesses that are not just delivering growth, but doing it with global leading environmental, social, and governance standards and are environmentally responsible at their very core. So let's take a look at the nominees for this year's Business Leadership Awards. For Green Champion, Lupin has demonstrated that healthcare leadership and environmental responsibility can advance together through measurable, sustainable outcomes. Kotak Mahindra, embedding sustainability into every layer of its business while driving responsible growth across global technology markets. Godrej Consumer Products, combining purpose with performance. This nominee has emerged as a leader in responsible consumer goods manufacturing. Godrej Properties, setting new benchmarks for sustainable urban development while reshaping India's real estate landscape. First Source Solutions, integrating ESG principles into business strategy and proving that responsible growth can also drive long-term value creation. And the Mahindra Group, a pioneer in sustainable business practices. This nominee continues to lead through innovation, climate action, and measurable impact.
You know why I think this category is as difficult to choose as an AI thing? Because every company is going AI way, every company is going the green way as well. So everybody is doing it and everybody believes they are doing the right thing. To choose from amongst that is such a difficult task. So I love the nominations that have come up.
Yeah, and exciting ones that have come up as well, again, across sectors.
Yeah.
And this is the next category, that is Philanthropist of the Year. This award honors an individual or family house whose philanthropic contribution has delivered measurable, transformative impact across education, healthcare, climate action, civil society, public welfare, and actually demonstrating leadership beyond just profits. Our nominations are Shiv Nadar, donated 2,700 crores and he's topped the Hurun list for the 4th time in 5 years. Azim Premji, donated 147 crore rupees through Azim Premji Foundation in FY25. Nandan Nilekani and Rohini Nilekani, they've jointly contributed over 500 crores towards climate, education and civil society. And the young kids on the block, Nitin and Nikhil Kamath, frequently recognized as the youngest philanthropists for their 147 crore rupees contribution through Rain Matter Foundation. Sushmita Bakchi, she gave away 90 crore rupees to healthcare in Odisha. You know, at this category as well, it's interesting to see you just don't have the ones who've been there, right? All your new kids on the block who have been earning that quantum have started contributing, which is a very good sign.
It is. And this is certainly a category to watch out for. And the next category is equally interesting from the perspective of what they've done and the promise that they have going forward. Women leaders who have shaped major sectors of the economy through scale, innovation, and sustained commercial success. And the nominees are Gitanjali Kirloskar, CMD of Kirloskar Systems, a pioneering industrial leader advancing the legacy and future of one of India's great engineering institutions. Roshni Nadar, the chairperson of HCL Tech, represents a new generation of Indian business leadership that combines technological scale, strategic national relevance, and institution building with long-term vision. Falguni Nair, the Chief Executive Officer of Nykaa, a founder who built a multi-billion-dollar consumer brand from the ground up. Malika Srinivasan, CMD of TAFE, a manufacturing leader powering India's agricultural and industrial growth. Vibha Padalkar, the Managing Director and Chief Executive Officer of HDFC Life, a financial services leader expanding insurance access and strengthening financial security for millions of Indians. Prabha Narasimhan, MD and Chief Executive Officer of Colgate-Palmolive, a trailblazing leader redefining growth and innovation in India's fast-moving consumer goods industry. So it's such a beautiful panel, right? In terms of just the work that they've done, and I think the excitement, like I said at the start, is what they will bring to the table going forward.
Oh, a lot of them have already, been at the top of their game, and it's a recognition that deserves to be there. All right, let's go for the big one. You know, this feels like one of those award functions, and you want to hear the big reveal right at the end.
Where's the drum roll? Cue it.
I think we'll have to do it ourselves. That's the drum roll coming in. Okay, this is the big one. Moving on to the Business Leader of the Year in the private sector. We looked at the top 100 companies by market cap as of April 30th, 2026 as our screening universe. Each company was then evaluated across 5 equally weighted parameters at 20% each, which ensures a balanced view of scale, growth, and market performance. So what are those 5 parameters? Revenue growth, profit growth, stock market performance, along with average revenue and average profit. So each of those parameters holds 20% in those categories. So here you are recognizing the leaders who have taken it forward. Transforming a legacy conglomerate with sharper focus, stronger returns and disciplined growth. And the nominees for Business Leader of the Year in the private sector are a man who's transformed a legacy conglomerate with sharper focus, stronger returns and disciplined growth, Dr. Anish Shah of the Mahindra Group. He's driven innovation, global expansion and EV leadership. K.N. Radhakrishnan has accelerated TVS Motors' growth journey. The architect behind India's retail success story, scaling brands and delivering exceptional growth at Trent, P. Venkatasalu is our next nominee. From cables to electrical leadership, Inder Jaisangani has powered Polycab's rise into an industry powerhouse. And advancing global healthcare through innovation and execution, Vinita Gupta continues to strengthen Lupin's international footprint. He's a visionary who has transformed a homegrown manufacturer into a global mobility powerhouse, Rajiv Bajaj of Bajaj Auto. And steering India's largest car maker through a new era of growth, innovation and mobility transformation, Hisashi Takuchi of Maruti Suzuki. Leading India's engineering giant with scale, ambition and execution excellence, S.N. Subramanian of Larsen & Toubro. This is the big one and the exciting one. Can't wait to see who wins.
And so difficult to choose. All of them exemplary leaders.
That's the jury's job. They had to ponder over this, so that made our work easy.
Well guys, I can't wait for July 26th. It promises to be an evening of spectacular business glamour.
So let me just, as we wrap up this nominee reveal show, let me just leave you with one more reveal which is going to come in the next few days about all of the luminaries who will be attending the show. This is really an exciting one.
Okay.
So wait and watch for that. There are more reveals
somebody that we know?
I think you will.
Yeah, okay.
I think you will.
Okay. That's something to look
And what's
look
interesting is, I think the quantum of market cap that's going to be, the diaspora that's going to be present there
in that room.
Yeah.
No, it's also exciting because, you know, I think it's about time we recognize the value that this cohort of people bring to the table.
Absolutely.
The passion they have for improving lives and improving what's happening to the nation that they are in. It's truly inspiring to see. So this is just a curtain raiser. There is going to be so much to come over the next few days across the NDTV network. You will see more details about the nominees and the categories that we've laid out for you. Stay tuned to this space for so much more.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
movies. When do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Welcome, you're watching NDTV Profit. I'm Mahima Vachrajani, and today we thought of doing something interesting and exciting. We're going to talk about, of course, everybody knows that Odyssey has been released today, and there's a lot of interest coming in for this movie, and we'll try to understand as to what trends are looking like, what are theatres experiencing in terms of bookings, how has the booking flow been like, what is the pipeline going ahead in terms of where Bollywood stands. All of that we're going to talk about in this episode, and to talk about this and take this conversation ahead, we are now joined by Ashish Mishra, who's the head of commercialization at Cinepolis India, joining us now. Ashish, thank you so much for taking out the time. A pleasure speaking with you. I'll start with asking about Odyssey first, because that's where the interest is right now, right? How big is this? I mean, what is your expectations in terms of what box office could this hit, and what does this mean for theatres as a whole?
So, of course, this is a big one, right? We're seeing that there's a lot of hype, there's a lot of chatter about this movie. And of course, this is directed by Nolan, right? So he, of course, comes in with his own, you can say, the things that he has done in the past, the movies that he has directed. And this seems to be just carrying forward that legacy of him. And it's already tracking as a big blockbuster. And these are the kind of movies which basically transcend from just being a movie to becoming something far more cultural, right? So what we are expecting is that this would be one of the biggest opening weekends for Hollywood in this year. We are expecting it to be opening at about close to about 20-22 crores.
Okay, all right. And do you think that this is the kind of movie that brings back people to theatres? Because, nowadays we've been talking about this as to how, a lot of, platforms like Netflix, etc., have kind of taken away that vibe or taken away that joy of going to a theatre and watching a movie. Do you think these are the movies? Because it is a movie that needs to be experienced in the most premium way possible, right?
Yeah, absolutely. It is that kind of a film, right? And one thing that I would like to point out that, of course, audiences have a lot of choices today, but there are certain movies which feel absolutely unmissable on the big screen. And today we have one of those kind of movies coming in and made for the big screen experiences. Nolan has been very vocal about how important the theatrical part of the business is, and how important that it is to him that he delivers a film for the big screen. And he's come out again with a fantastic film. We've already seen the initial reviews come out, and all of them are glowing. And we do expect that this would be a movie which would be shattering all records here in India. One thing is that it's not just that Netflix's or the OTT platforms are impacting this cinema attendance. We have had many movies. I mean, Durandar is a recent example where we saw of late we have seen Obsession in Hollywood do really well. We have seen Welcome to the Jungle, and even movies have been doing well recently. So what I feel is that the common thread which joins everything is not really the language or the genre. It's basically the promise of that experience that you can't just recreate at home or in a small space. So the films and the communal experience that the films bring is just another example which we are seeing today in form of Odyssey.
Got it. The other aspect, Ashish, was to understand as to how important are these, Hollywood tentpoles, because we've seen how, good Hollywood movies have come in, swept in and seen a lot of traction, right? So how important is it for the theatre business and for Cinepolis India as well?
So very important, right? Hollywood currently contributes about 10 to 15% of the overall box office for the country. For multiplexes, it's slightly higher than that percentage, but Hollywood is very critical, right? It has now, of late, what we have seen is that the reach of Hollywood has gone beyond just the metros and the tier 1 cities. And as India is becoming more and more contemporary, we do expect that this share will increase.
Okay. The other aspect, Ashish, is that, we've seen as to how things have fared so far. Just want to get a sense as to, if at all, if you can give us those numbers as to how you've done in FY26 and how you plan to grow in FY27. Anything in terms of where numbers go, top line, bottom line, margins, etc.
So we are a privately held company, so we're not... I'm not the right person to share any kind of public information, but we continue to grow. India is a key market for us, and we will continue to expand in India. It's something that I would like to say at this moment.
Got it. And what is competition looking like then? Do you think that, because it's ideally essentially a duopoly right now, right? So how is competition shaping up, and how is it that you are showing strength to us?
So I think like any industry, competition is healthy.
Absolutely.
Right? It motivates each and every player to do their best, and we don't see it any differently in this industry. We want to grow and grow profitably, and that's what I would like to say at this moment.
All right, just one last question, Ashish, from my end, and that's with regards to the release calendar. What is it that you're looking forward to? How strong is it going forward for the calendar year 2026?
So the release calendar looks pretty promising when we look at the kind of movies which we have seen right throughout the year, not just one genre, multiple genres performing, and that's something that really sets the ball rolling for us in this year. And going forward, what I do expect is that August is looking good with a couple of biopics in form of Prahar and Ita. Apart from that, we also have Batwara and Avarapan 2. In August, we also have Toxic, which is going to be a big release. So that's something that is setting the pace from August and going till December, where we would have King coming in, and in between of that we were going to have probably one of the biggest Indian films for the world, which is Ramayana, which we feel has the potential to be the biggest ever Bollywood film, which is releasing in this year.
All right. Yeah.
Talking from the Hollywood point of view, of course, we have Spider-Man come up, huge anticipation for this movie as well. And we have got a consistent lineup towards the end of the year. So we do expect that 2026 is on track to be a record year for the Indian box office.
For sure, and I look forward to speaking to you once all those box offices are hit and that your numbers fly. Thank you so much, Ashish, for taking all the time and speaking with us at NDTV Profit.
Thank you so much for having me. Thank you.
I got to learn a lot because to get a point of view as to how different jury members were looking at various participants, and the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered on it. They had thought about change, they had thought about resilience in their own businesses. So the soft factors that they eventually chose the winners with is something that stood out for me. In fact, when we were actually doing the work, if there was a governance concern or any of the nominees, they were struck down. Or if there was something which was potentially in the grey zone, the jury was notified of it, etc., etc. In many cases, the jury themselves, very knowledgeable jury, themselves were very, very aware of some of those situations.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Let's try and understand from the management about a few other things. We've spoken to them earlier about the setup as it stood and the key performance of the margins. But I want to take a follow-up question to Aparna. And Aparna, my direct question is this. I understand you will try to optimize, but do margins stay stable? Do they inch higher? Or do they have a potential of galloping ahead? Because a lot of peers are saying they will gallop ahead for them.
Our endeavor would be to keep improving it, through the quarters. But like I said, it'll be a function of the investments we need to make. These could come also in the way of deals that we are contesting, we are looking at winning. So, it's going to be a function of growth as well.
Okay. Saurabh, can I get you in on manpower requirements? How are you hiring talent right now? And considering that talent has to be less expensive, but if it's AI-enabled talent, it will be more expensive. How do you juxtapose all of these factors and do optimum hiring?
So Neeraj, all the forces are in play. We'll have to make sure that we take care of our existing employees. We'll have to invest. Aparna and Srini spoke about it in future talent. Some of the AI skills are rare, so they are coming at a premium. So all forces are at play. We'll have to invest, grow, and make sure we maintain our margins. I think that's the way we look at it. Our overall headcount and hiring will be linked more to the demand environment, which is right now a bit muted. But I don't see a headcount going up drastically. I see that the gains of productivity, which we were talking about, will have a play as we move forward.
Okay. Srini, the Q2 guidance is muted. What needs to happen for acceleration in H2? Beyond the OLAM and the acquisition tailwinds, what are the biggest organic growth drivers that you have which could facilitate growth in FY27, considering you said that the demand uncertainty is already baked into the current guidance?
Absolutely, Neeraj. We have baked in all those aspects when we give the guidance because we just give a quarterly guidance. Having said that, going back to your question, and if I were to look at the three markets in Americas, I think, we talked about BFSI. We're seeing a good momentum there. Consumer, we have won some deals, and that's another one. Healthcare is somewhere due to the government regulations, especially in the payer and provider segment. We are working with the client to client in terms of the changes that they are going through from their side, which will take a little bit of a time. And if I look at Europe, clearly, the momentum is building up in energy manufacturing resources, which was traditionally very soft sector for us. and we have seen some good deal wins there, and that should reflect in that. BFSI continues to be strong in Europe, and specifically in few countries that like UK and Nordics region. And if you look at APMEA, it's a more secular because it's a much broader market. But having said that, in addition to the OLAM deal that this market has won, they're also looking at country to country opportunities around AIDC, opportunities around sovereign AI, and so on and so forth, which is becoming more important for some of these clients in some of these countries as well, Neeraj. So overall, the deal pipeline is healthy, more skewed towards cost takeouts, including vendor consolidation. But there are a lot of deals on the AI side as well, which will be consulting led, which will be more advisory, leading to data and cybersecurity and other aspects as well, which continues to create the momentum. Right now, they are much smaller deals, but as the client shifts to at an enterprise level, there will continue to be larger deals as well.
Okay. Srini, you emphasized a consulting-led AI-enabled approach. How much of that FY27 growth in pipeline is coming from AI, Gen AI deals versus traditional services? And any update on this embedded AI engagements as well? Also, maybe just a comment on the token cost versus human cost, and how are you baking that in client conversations?
Sure. So the way I see it, Neeraj, in terms of AI, our approach is AI first. We are pivoted to AI. So you have three types of conversations with our client. One is, I call it as run and operate, right? There, it's a traditional application management, infrastructure management, business process management. Here, every solution that we do is AI first approach. And for that, we have built a platform which is Wings, which gives us agents and agentification of the client's end-to-end process. So to me, you lead in with AI and you give in the productivity benefits for the client. And we bake that into our solution and our cost. The second part, Neeraj, is around software development lifecycle, especially the build AI, which we call it as that, which is also product engineering lifecycle and package implementation. There, I think the disruption is much higher because the productivity benefits that one can get in a software development lifecycle, specifically if it is a greenfield or a program like Python, you get a huge benefits in terms of productivity, right? Having said that, if the code is lot more complex, a lot of modernization that's required, how you deploy and take it to production, the complexity increases. There, the productivity is much lower. So that's how I see, because that's more of a brownfield. There are a lot of legacy applications. You got to be careful in terms of how you deploy. Now, both in both the scenarios, Neeraj, it's going to be human plus AI, because human intervention will become very important. I'll tell you, if you look at software development life cycle, I'll break it into three pieces. The one is testing and coding, which is in the center. A lot of productivity benefits you can get from AI. But if the target environment is legacy and if deployment and production has to be there, a lot of human intervention one needs to do. Also, business requirement gathering, user stories becomes very critical, because only then you know what is the right tool to deploy. So the productivity and the way we come into picture for our clients is around telling them what's the right tool to use in that aspect. The last part you asked is on tokenization. So what is happening, Neeraj, is that you don't need to deploy a high-end LLM for a simple workflow, because the cost is going to be prohibitively high, but the return on investment for that workflow will be much higher. Second, when you have to get the real return on investment from AI, you got to really reimagine your process, redesign your process. Only then you get the benefit. But if you do a piecemeal approach, you have the AI cost, you get the benefits in that piece, but net you may not get the overall productivity. However, the token cost is sticking, right? So when do you use a large LLM and when do you use an open source kind of an LLM? When do you think it better to continue with the human? The balance between the human capital and the token capital will become very intense as we move forward. And that's where companies like us, we have the depth of expertise, we have deep tech knowledge, but we also have the business context, the client context. We are able to stitch that and articulate that to the client in terms of what it should be as part of our advisory and consulting, Neeraj.
Okay, okay. All three of you, thank you so much for joining in today and giving us your thoughts.
I got to learn a lot because, to just get a point of view as to how different jury members were looking at various participants, and, the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered on it. They had thought about change, they had thought about resilience in their own businesses. So the soft factors that they eventually chose the winners with is something that stood out for me. In fact, when we were actually doing the work, if there was a governance concern on any of the nominees, they were struck down. Or if there was something which was potentially in the grey zone, the jury was notified of it, etc., etc. In many cases, the jury themselves, very knowledgeable jury, themselves were very, very aware of some of those situations.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Hello and welcome to the show. I'm Nisha Poddar. I'm here at Biocon campus in the city of Bengaluru, here to catch up with Kiran Mazumdar-Shaw. Now, when we talk about Biocon, Kiran Mazumdar-Shaw has really built it from scratch over the years as a first-generation entrepreneur. And it's very critical to really take a look at this particular company at this juncture, as it's at an inflection point with the years of R&D development as well as investments and the restructuring behind the company. It's time to reap the benefits for the shareholders. Let's find out more from the founder herself on the roadmap ahead. Hi Kiran, how are you? It's always a pleasure to meet you. Kiran, what an important juncture that I am meeting you at this particular time. For several years, you had been talking about how India's vision should be to become a top leader globally, to innovate something, to have breakthroughs. Today, you stand vindicated.
Thank you, Nisha. Always a pleasure to meet you. And you're right. I think, finally people, I hope, are beginning to understand what I have tried to do for the last 2 decades.
Biosimilars business amongst the top companies in the world. So that's an achievement not just for you, Kiran, but it's an honor for the country as well. And that was your vision. But from now on, what's your next dream and vision? Because you are a dreamer, I know.
Well, I think, we are at a very important inflection point.
Yes.
We've just, undertaken a huge merger between our 2 businesses.
Yes.
I think the future is very, very exciting because, we have a growing portfolio of biosimilars. We are beginning to really start making a mark in biosimilars globally.
Yes.
And of course, we have a lot of synergistic portfolio plays. You know, obviously the insulins and GLP-1s,
Yes.
the cancer chemotherapy drugs, and of course the cancer immunotherapy drugs.
Yes.
And of course, in general, you know, the synergy between generics and biosimilars in every disease segment.
That's
so
right.
I think, you know, having now a global footprint
Yes.
with a global presence is allowing us to really grow the business very robustly and predictably.
All right, so we'll have to talk about each of these businesses and what you're going to do. And you have a lovely campus. Why don't you show me around? Let's go.
With pleasure.
So Kiran, there is a roadmap that the market also expects to know. The world as well as the pharma industry also is looking at. When we talk about Biocon, what is required to now make it a $20 billion company?
You mean market cap?
Yes.
So I think we have all that it takes to get there. First and foremost, we are now on a high growth trajectory.
Yes.
We expect to double our business over the next 5 fiscals.
Yes.
We believe that we have a very, very well differentiated portfolio of products because, as you just rightly said, we are the only biosimilars company out of India.
Yes.
But in that, we also have, you know, the very unique combination of insulins and GLP-1s.
Yes.
Of the cancer drugs, both generics and biosimilars. And of course, we have many new launches waiting to happen.
Yes.
And many new products under development in both generics and biosimilars. And then, of course, when you talk about Syngene, I think we are really doubling down on the CDMO business.
Yes.
So I think we have high growth opportunities in every one of our businesses. And now, of course, I don't even want to talk about generics and biosimilars as a separate business. This is a combined business. So if you look at it, it's a products and services company, which both have got very exciting growth opportunities. So the way I look at it is that our EBITDA is growing. Our profitability is growing because, you know, we've retired a lot of the structured debt.
Yes.
You know, we raised almost $1 billion through our two QIPs.
Yes.
And that has actually taken away the overhang of the huge interest provisioning that used to go on.
Yes.
And the overhang of the debt that was payable at any given point in time.
So finance charges, yes, reduction of that. But what the expectation is also that you are in a phase of deleveraging momentum. What is your roadmap and vision towards that? What is the timeline that we are looking at in terms of debt reduction?
I think debt reduction has already started, Nisha. So it's not like we have to wait for anything to happen. The beauty of our business, you know, inflection point right now is the fact that CapEx is behind us.
Yes.
Right?
Yes.
R&D spends are reduced because of the new regulatory pathways.
Yes.
And of course, the deleveraging that has already happened.
Yes.
Okay. And we continue to retire debt every quarter. But I think that actually now makes for a very profitable business, a growing EBITDA. And obviously, free cash flow is going to start showing up from this fiscal.
All right. When we talk about the GLP-1 opportunity, Kiran, everybody in the pharma space is now really looking at that particular pie and a share in that pie. What's your vision? Of course, your company has been at the top of the line when it comes to GLP-1 opportunity. What's in store and what is the outlook towards that? Even